Good morning. Yes, online. Confirm once before I begin. All good? Yes. Thank you. Right. So, students who are writing in May, welcome. There's some prerequisite before I start this marathon. Prerequisite number one, I hope at least one entire reading is done of the book. Whichever book you're referring, could be ICA, could be reference material, could be any other reference material. One full reading should have been done, and at least one revision post that should have been done, right? Because when I say marathon, it is not an in-depth, detailed discussion, right? Third thing, what am I going to cover in this particular marathon? It's not possible to cover all 11 chapters in depth. Okay? Why I am saying this? Some people will understand, some people will not understand. Right? So you can't expect everything to be covered in marathon, but the priority will be conceptual clarity of all the standards that we are going to have. Right? It could be SA 500 series, SA 700 series. Mic. Should move the mic up. Which side? Hello? 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 Are you Yeah, I moved it. I moved it. Right. So SA 500, SA 700, those conceptually, I will be definitely covering it. Right. But everything text by text, word by word, definitely not possible. Right. So whatever doubts you have, you put it online, you put it in the chat box, you can ask, no issues with respect to that. Clear? So our priority will be on conceptual clarity as to what is there in audit, why this standard is there, purpose, procedures, and ultimately we'll end up with disclosures. Clear? Right? Okay, sir. So what are we going to cover today? Today we'll be covering our first chapter, that is Introduction to Audit, with some more basics. Some more basics which we are going to cover in some other standard we'll be covering here itself. That's the first thing. Second thing we'll be covering right after this is ethics. Reason? Conceptually this was first part only, but they have separated and put in the last part, but technically it comes under first part itself. Clear? There is no point in studying after everything you go and study how to accept audit. Because in the syllabus, if you see introduction of audit, planning, evidence, procedure, everything they have given, and at the end they're telling agreeing to the terms of engagement. And there's no point in doing it at the end, so we will be merging that with chapter number 1 itself. Right? Then we will be talking about bank audit, which is a separate independent topic. It is not any standard related. It is not any particular concept related. It's a separate concept called bank audit that we'll be doing, because I think one question will be asked from bank audit. And there also we will be covering most important things like advances, NPA, reversal, computation of drawing power, and so on, so things. Clear? We'll not be talking about what will RBI do, what are the functions of RBI. Of course, we'll touch upon it. Right? So I hope you're getting the expectation from this marathon is just conceptual clarity and not covering each and every word that is there in the material. Right? Wherever possible, handwritten notes will be displayed. It won't be shared. Those who are watching on YouTube, do not ask, where will I get this? You will not get it. You can just note it down. Okay. So this is how we'll be starting. Shall we begin? Yes. Let's talk about audit. Let's talk about audit. What is audit? What is audit? Yeah, I knew the definition would come. It's an independent examination, etc. But if you go by the basics, let's try to keep it simple. In simple language, what is audit? What is audit? Where do we see audit? Do we see audit anywhere? Before you enter into articleship, do you see audit anywhere? Yes, you do. Yes, you do. You definitely see audit. Where? You go to a mall, you go to a superstore. Yes or no? You go to a supermarket, you buy something, he'll give you an invoice. Won't you check the invoice before you make the payment? Yes, you do. After you make the payment, won't you check the invoice? Yes, you do. What is that? Audit itself. Yes, when your father gives you pocket money and he asks for the accounts, where have you spent it? It's an audit. When mother gives you money, she asks, where is it? Audit. Audit is there everywhere in life, but we are not covering audit in life. We are talking about audit in financial statements. So don't assume audit is there only in auditing subject or in CA. Audit is there everywhere. Clear? Audit is there everywhere, but the concept of audit is nothing but examination. Examination. In simpler language, nothing but checking. Simple to simple language, if I have to put it, it is nothing but checking. We're not doing anything great here. But when we come to financial statement audit, it is not just checking. It is checking with verification. It is checking with verification. Now, checking means whatever is given to us, we will check it. But in audit, it is not just whatever is given to us. We are going to check it. We are going to verify that. Is there any document behind that? Or is it just a bogus entry you're putting? For example, imagine in the books of account, I just write in P&L credit side, sales is there of 10 crores. Sales is there of 10 crores. My question to you, do you believe this sales as 10 crore? Will you take this figure? I am the management, you are the auditor. If I tell you sales is there 10 crore on the credit side of P&L, will you accept this right away? Why not? Why are you not accepting it? Without any proper evidence, we cannot accept it. So what evidence we require here to accept this? Evidence number one, yes ma'am, GST records we need. Source documents we need. Now what are source documents for sale? What are the different source documents for sale? Invoice is there. Contract could be there in case of a bigger sale. Yes or no? Now if I am Mintra and you are a manufacturer of garment, you and I enter into a contract, but the contract size will be bigger. Where is the price set in the contract? Where is the terms and conditions set in the contract? What price you have to give? When should I pay you? What are the installments to pay? Where is it written? Contract. And we all know in our childhood, we have studied Indian Contract Act and Sale of Goods Act. Whatever is there in your contract, please follow. Otherwise, breach of contract. Yes. Now, if you have breach there, it will affect my business as well. Yes or no? Yes. So just going by what is given, we cannot accept it. We have to check it. Why are we checking? Do we have doubt in management's integrity? Do we doubt management's integrity? Number one, students try to understand this. Take it from here itself, from point number one itself. We never doubt management prima facie. On the face of it, we never doubt management. For us, management is good boy. Management is always good boy. But when will we get a doubt that management is not a good boy? When they start lying to us. When they start hiding facts from us. When they give fake documents. When they don't give us information within time. When they torture us. When they annoy us. That is when we get a doubt. Yes or no? You were never a bad boy to your parents. But when you started lying, they started doubting you. Yes or no? So it's the same logic we are using in audit also. That is why in audit, we call something called as, you know that auditor has to give opinion. Correct? Yes or no? That is why we say, sir, if you're giving best opinion, we call it unmodified opinion. Why? Modifications will happen when you have an opinion. When we say unmodified, what is it? It means this is our default opinion. This is our default opinion. What is our default opinion? That management, whatever information they have given, is good. That is our default opinion. When we go and get distracted from this and diverted from this, that is when we say we are going to give modified opinion or modifications to our opinion. Understood? So by default, is management bad for us? No. By default, is information bad? No. But if there is an evidence which says information is bad, that is when we start modifying our opinion. Correct? So let's continue this. You said audit. Audit is an examination, sir. Now, the entire syllabus of audit will be covered in one particular cycle, which we have done it in the regular class as well. What is this? Sir, audit starts from what? Data. Audit starts from data. From data, we pick information. Yes or no? Now, what is the difference between data and information? Useful information and data is useless. Yes, data is a raw material. Information is finished goods for us. Right? Management will give us so many things, but out of that, we have to pick what is for us. So I will say information, by definition, information is a processed data. Right? Information is what? Processed data. So whatever is given to us, we process, and then whatever we get is called information. Sugarcane is data. Sugarcane juice is information. So they give us everything that they have. Bank statement, sir, for one bank balance, they'll give us bank statement, they'll give us passbook, they'll give us payment proof, everything they'll give. But what do we need? They will also give bank confirmation certificate. Out of that, it is a data for us. Out of that, what we are picking for us is what we call as information. Now, what information we have to pick, sir? What if management gives their personal data? Director has bought a car, director has bought a house, director has invested in some other business of his own. Do we need all such information? But they will give in data. It could be included in the data. So what information we want? We want something called as financial information only. We do not want anything else. We do not want how many wives you have, how many husbands you have. We do not want your assets. We do not want your personal assets. We want only financial information. Understood? Clear? Yes. Now, when you're talking to your management might tell, I went on a vacation, sir, last April. That is also data for us. But is it information for us? Not relevant for us. Clear? So, from the data, yes, ma'am?
Whether the amount spent by company.
Now, yes. If the amount is spent by company, then it forms a part of my information. Yes. But now, if I have to raise that query, by default, what is my opinion? They spent by their money only, but not from company's money. But when we check company's accounts and we get to know, okay, in April month, there is a huge amount. Now that data matches, now that data will become information for us. So can I say on day one only, not all data will become information? Going forward, some data might turn into information. Today, it might be only data, not relevant for us. Tomorrow, it might be information for us. Yes or no? So from data, we pick up financial information. What do we do with this financial information, sir? We try and examine this. We try and examine this information. So whatever information we have at our disposal, we try to examine. How do we examine, sir? We examine through applying procedures. We examine through applying procedures. What procedures? That is covered in audit evidence concept. Like analytical procedure is there, sampling is there, yes or no, physical inventory counting is there, external confirmation is there. So there are a lot of procedures we are going to touch upon. After this procedures, what do we get? After finishing the procedure, what do we get? Data we have, information we have, examination we have done, procedures we have done. After doing procedure, what do we get? We get something called as evidence. Now, there is a huge difference between evidence and audit evidence. Moreover, even bigger difference between audit evidence and sufficient and appropriate audit evidence. So, we don't want just evidence. We want SAAE. We are just talking about E here. Why? To reach to SAAE, we need E. So, just like how from data we picked information, from evidence we sought further and we reach to SAAE, and that SAAE is what we call as conclusive evidence for us. Based on that, now what we do, we evaluate the evidence and we form a conclusion. We evaluate the evidence and we come to a conclusion. Now, is a conclusion itself the opinion? Think about it. Is conclusion is equal to opinion? Never. Conclusion is equal to not opinion. Conclusion is our perspective. Based on our evidence, we reach a conclusion. I conclude that. Now what you are supposed to do, you are supposed to evaluate the conclusion as well. Clear? When you evaluate evidence, you come to conclusion. When you evaluate conclusion, you come to an opinion. In both the cases, evaluation is necessary. When you evaluate your conclusion, you reach to a point where you have an opinion now, a more informed opinion. And this opinion is what we will be giving in form of report. Now my question to you, can you give oral opinion? Can you give oral opinion? You cannot. Why? Think practically. No. If you are auditing Reliance Industries, how do you give oral opinion? To how many members? Where all you will go and give? Not possible. That's why they have told opinion, whatever you are giving should be in a report, and that report should be in writing, or we call it written report. And this is what we call as audit report. Audit report. Here ends your audit concept actually. It starts from here and it ends here. So you take any concept in the syllabus, you take any standard in the syllabus, you take anything out of a book, it should come under this cycle only. If you pick up evidence, it comes under SA 500 comes under audit evidence. SA 700 series comes here, forming a conclusion and opinion. Yes or no? 700, 705, 701 reporting. It comes under opinion and reporting. If you see SA 520, it comes under procedures, audit sampling, analytical procedures, risk assessment procedures, further audit procedures. Yes or no? Initial audit engagement, subsequent events, everything comes under procedure. Yes. So in this particular cycle, if you miss any of the link, then you won't be able to reach your conclusions properly. Yes, you will be reaching conclusion, but it may not be more informed conclusions. Imagine a judge giving judgment without evidence. Will it affect? And in the current era of social media, they will not even spare the judge also. Yes, which is why in the court, they always say that before giving judgment, based on the evidences submitted to the court. Why? Evidence could be there outside the court. Chief Justice or judge is not astrologer. He will not understand, okay, there is an evidence. Right? So evidence should be given. Which is where now some of the students might have one confusion. Sir, what if management does not give us required information? Will we be liable? Is auditor liable for management not giving information? Generally, no. But there is one hidden concept in that. That does not mean you work negligently and blame management. You put your efforts as an ordinary auditor. What you should do, you do. Despite doing what you're supposed to do, you don't get information, then you won't be liable. But if you work negligently, then of course you will also be liable. Right? Now comes the most important concept in audit. Sir, should we give correct and accurate opinion? No? Reasonable? Why can't I give? There's a term called reasonable assurance. There's a term called reasonable assurance. My question to you, why are they talking about reasonable assurance? Such a huge process you go through. Data, information, examination, procedure, such a huge process. Why can't you give absolute inherent? What are those? What are limitations? Why do we have limitations? Sir, I'll ask you simple question. Forget about limitations, sir. Basic concept. Who gives you the data? There only lies the first point here. Who is giving us the data? Management is giving us the data, and we are talking about the management only. So from the source only, if it is hidden, how will you be able to tell this company is absolutely good? Yes or no? Yes or no? So when management is giving us the data, there could be true information, There could be complete information. It could be incomplete information. Now you may have a question. What if management is super, sir? They'll give everything. Still, why can't you give absolute assurance?
Maybe intentionally or unintentionally.
No. What if management is absolutely true? They give all the information that is there. Why can't you still give absolute assurance? Because of your second reason now. Do you have that much time to do 100% checking? You can't. So you end up doing less than 100%. I will not tell the technique here. Less than 100%. Now less than 100% could be sampling also, could be not checking 100% also. Right? So it is less than 100% when I check. How can you give absolute assurance? Clear? When I started the class only, you told how much ever we study, it is feeling like we have not studied. That is reasonable assurance only. How many ever books you study in CA intermediate, you feel like, oh, I think something I left out. So when you tell your opinion, no, whenever somebody asks, did you study everything? You will not ever say everything you have studied. You will tell, I have studied something. That is reasonable assurance because there are some practical limitations on us. There are practical limitations. There are legal limitations. Now in your examination, no, they can ask you, it could be mock test, it could be RTP. Give one example for practical limitation. Give one example for legal limitation. They'll ask. Now students who know only limitations, they'll go and write nature of financial procedure, nature of audit procedure, nature of financial reporting, future events. Sir, think logically, they're asking specifically about two things. One is practically, why are you not able to give absolute assurance? Second, legally, why are you not able to give absolute assurance? Correct? Because, sir, audit is an audit, not investigation. We are not inspectors. We do not have the power to arrest them. We do not have the power to detain them. We do not have the power to seize also. Maximum we are complaint box. Means what? Report. If management is not giving information, report. Management is troubling you, report. Management is bad, report. I am not able to work properly, report. So ultimately you'll end up doing what? Just report. Now that is a legal limitation for us. If that limitation was not there, if you see in investigation, you can't give reasonable assurance. You have to give absolute assurance. Reason, I have given you there, I've given you powers. I've given you legal powers to inspect the document, ask him, take oath. Where do you take where do you take oath from management? Do you take book and stand in front of management? Promise on this, whatever you're telling is truth. You don't. But in investigation, you can take them to the court, no? Yes or no? Yes. So there you have to give. Absolutely. There is no room for reasonable. Whereas here, there is no room for absolute. A practical limitation I told you about, less than 100% time is not enough. Because it's only one client you have. You'll be having only one client in your entire lifetime. No. You'll have multiple clients. And you have to do this for everyone. So there is a practical limitation there where there is time constraint, resources constraint. I do not have that many people. Yes or no? Now, for all these reasons, we won't be able to give absolute assurance. There are future events also. What are future events? Can you predict how, sir, forget about other future events. Did you predict that? Didn't you predict that exams will be postponed? Lot of intermediate students said, Pakka elections exam will be postponed. Now what happened to your prediction? I say, told moyo only, no? Right? So we can't predict what is going to happen in future. That is one of the reasons why we are going to give absolute assurance. If I say this company, Pakka, my promise, this company will not die. Next moment only company died. Understood? Which is exactly why we always stick on to one particular concept called as reasonable assurance. Why, sir? In financial statements only, futuristic amounts are involved. Like provisions, like going concern assumption. The entire business is based on an assumption that I will leave tomorrow. Understood? Clear? So very important concept are these basic concepts which are covered in chapter number 1 and chapter number 2, which will set link for your future chapters. Clear? So we know what is audit. Audit is nothing but independent examination of what? Financial information. So what does independent examination mean? We should perform in such a manner that we should not be influenced from management. We should not listen to them. Yes, we should listen to them, but don't decide what they want you to decide. So when we say independent examination, the report name only is independent auditor's report. So here only they are telling you have to be independent. You have to give your opinion. You should not say their opinion. You should not be Chatur from Three Idiots, where the speech is written by someone else and you are talking that. So you should give your opinion and not someone else's opinion. Of financial information. Sir, what is financial information? Is there a difference between financial information and financial statements? Yes, sir. Is there a difference? What is the difference? Financial statement means those 5 things: balance sheet, P&L, notes to accounts, cash flow statements, and statement of changes in equity. Correct? Financial information is a broader term where it includes financial statements as well. So your books of accounts, your contracts, your deed, your agreement, everything comes under financial information, including financial statements. But when we talk about specifically financial statements, we are just talking about Panchabhutas: balance sheet, P&L, notes, cash flow statement, SOSI, statement of changes in equity. Yes or no? So very important term here is financial information and not financial statement of any entity. Sir, what is this any entity? Could be proprietor, could be partnership, could be trust, could be society, could be companies, could be LLP, could be even unregistered firms. Sir, is firm required to be registered? No. We are studied in our childhood. You can do anything you want in partnership. Partnership Act only says, do whatever you want in your deed. Yes, but when it comes to other entities, you have to get it registered company. Should you register? Mandatorily? LLP? Mandatorily? Yes. Proprietor? No. Partnership only? No registration. Proprietor, we don't have a proprietorship act. Yes. So we are not bothering about whether you're a registered entity or unregistered entity, whether you're a solo entity or a partnership entity. We are not bothered about it. We will still cover you. Right? So audit definition is a bigger term of any entity throughout, whether profit oriented or not. Sir, for Section 8 company, should we audit? Why should we audit? What is the purpose of auditing non-profit entities? Profit entities, I understand. We have to tell users profit is correct. They are not overstated. They are not understated. Why should we audit non-profit entity? Huh? Donations. Public funds are involved. Sir, when we talk about non-profit, first thing that comes to your mind is charity. We are doing it for the people. Yes or no? We are doing it for the society, for the benefit of the society, for the betterment of the society, or maybe for a particular community, for a particular group of people, or for a particular cause. That cause should be served. For that, sir, from you would have seen Shivaji movie, no? So many donations come from outside. That should be used. That should be used in a proper manner. Otherwise, in the name of donation, if audit was not applicable to them, trust me, there would be a lot of not-profit organization would be circling around your life. Why? In India, we believe two things work: emotions and emotions. Because of these emotions, a lot of people will give money. If somebody comes and just cries and say, I have not eaten from 4 days, you will at least buy them 1 cup of tea. And that will cost 10 rupee. 10 rupee into 1 lakh people. Simple math, 10 lakh. I know you'll tell, sir, that's piche, no? For them, it is donation. No? Understood? So when people donate, it is for free. Donation, in return, they're not asking anything. No consideration given, only consideration taken. And that consideration, what you take, should not be only for you, should be for the purpose of your entity as well. If you are telling this is for Cancer Institute, then you have to use it there. If you say this is for slum development, you have to use it there. If this is for education, you have to use it there. But who will tell whether they have used or no? Auditors. Which means we are the link between development and people. Because these give money and forget. Those take money and forget. So we have to remind both of them. See, you have given money, see, you have taken money. Use it properly, give it properly. Both sides. So we are that particular rope between these two things to balance it out. Right? So whether you are a profit entity, whether you are not for profit entity, we still have to audit you. Irrespective of size or legal form. What do you mean by irrespective of size? Small company covered, small firm covered, big firm covered. We are not here to discriminate based on your size of the firm or size of the entity. Or legal form. What do you mean by legal form? It could be registered, it could be unregistered. Are we bothered about it? No. Why? We are not regulators. We are not regulators. See, why your subjects like accounting standards or law will be understandable easily, because they have given you one framework and they have told within this only you're supposed to do everything. Right? They have told, for example, they have told these are the businesses where you have to pass ordinary resolution. Apart from this, whichever business you do, special resolution. And they have given the formula also how to pass special resolution, how to pass ordinary resolution. Correct? Whereas in audit, they will tell you, do. What to do, your call. How to do, your call. What to report, your call. How do I ask questions, your call. Which procedure I have to put, auditor's judgment. How should I conclude, auditor's judgment. They will just tell you these are the options. Now 4 options you have given. Which one to select, your call. It is like in hotel you go, they are not written in the menu, but there is buffet. Which one to eat, you take a call. But if you eat everything, indigestion only. So you have to choose and see which combination is better to fill my hunger. That is the beauty of this subject, where there is a lot of application of mind and thinking as to which procedure I have to go through. Which is why in subjects like audit, case study based questions will be tricky for you to answer it, and theory questions, direct theory questions will be easier for you to answer. Because you know exactly they're asking this, I'll write this. But if they give you a case and then tell, now analyze which procedure I have to apply, that's where your application of mind should come into the picture. Understood? Clear? Yes. So why am I doing this independent examination? When such an examination is conducted with a view to express an opinion. Sir, in my cycle that I gave you, it started with examination. Of course, information will come. Yes, and ended with opinion. If you understand this entire audit meaning, you have understood. This is the nucleus of audit. Independent examination is there, of financial information is there, could be any entity, right? And what is my ultimate goal? To express my opinion, right? Okay, sir. Now, to express my opinion correct, what are the different types of opinion we have? I'll be covering some of the concepts as and when we go through it. Clear? I'll not wait for the chapter to come, right? Because it's not the first time you're studying this subject, so I'm very sure you know what is this. What are the different types of opinion we have? We have modified opinion, we have unmodified opinion. What does unmodified opinion means? Unmodified opinion means we are telling the users that the financial statements that we have audited, these are free from material misstatements. What is now material misstatement, sir? Let's understand the concept here. Here only let's understand what is material misstatement. Sir, we have two things here. One is called material, one is called misstatement. First of all, let's try to understand what is misstatement. What is misstatement here? Misstatement is nothing but, there is a definition for misstatement given. What is misstatement? It is nothing but difference, or we can call it variance between two things, A and B. Difference between two things, A and B. Now, what is A and what is B? A is information required to be disclosed, accounted, or presented. Information required to be disclosed, accounted, or presented. B is information disclosed, accounted, or presented. Meaning what? What you are supposed to do, what you have done. If there is a difference, we call that misstatement. So can I say if A is not equal to B, there is misstatement involved? Yes or no? Yes, sir. Misstatement is involved. Sir, if you say A and B, we don't understand. Example, sir. No problem. Example. Let us say, for example, I'll give you a transaction. You tell me how much you're going to record. Okay. Now, transaction is your employee went to an audit. Okay, to an audit where he spent on hotel, he spent, let us say 10,000 rupees. Okay. On food, he spent, let us say 2,000 rupees. On travel, I'll give you bifurcation of travel now. Okay. Number one, sir, he went in flight where ticket costed 5,534. 5,534.67. Then he went in rickshaw where he spent 150 rupees. Right? Then he took a bus. Where the ticket cost was 30. Clear? Now, what is the total here? 180. 5,534.67 plus 180. How much it is? 5,000? 7? 8, 4, 6, 11. 5,714? Yes? 5,714.67. Now, when he will come to office, he came back to office. And submitted all the bill. Okay? What of the bill? 10,000 is submitted, 2,000 is submitted, 5,714.67 he submitted. Sir, now my question to you. This is the employee and this is you who is the manager. Okay. Now, how much will you give the employee? Will you give 10,000 flight ticket? Not flight ticket, sorry. Hotel? Yes, sir. Will you give? Yes. Then we have next is food. 2,000 worth of food. He's given all the invoices. Will you give? Yes, sir. Flight ticket will you give? Yes, sir. How much will you give, sir? How much will you give? Tell this amount to me. How much will you give now? Huh? 5,720. Papa, fellow is very rich. He'll give more amount also. Now 5,020 you'll give. Yes or no? My question to you. What is the actual amount? 5,714.67. How much did you give? 5,720. Sir, in the books of accounts, 10,000 will be recorded as 10,000. Yes. 2,000 will be recorded as 2,000. 5,174 will be recorded as 5,720. Actual transaction is 5,710. Recorded transaction is 5,720. Is there a misstatement? Yes. There is a misstatement. What you are supposed to record and what you have recorded, if there is a difference, there is a misstatement, sir. Now the question is this material? What is material? Is it so big? Is this so big? What is the difference? 5.33 rupees, sir. Rupees 5.33. Sir, because of 5.33 rupees, investors will pull out their investment. They will tell 5 rupee fraud I'll go out of the entity. No. Will government pull out their financial assistance? No. Will creators say from today will not support you, 5 rupees fraud you have done? No. But sir, isn't it practical for me to do it? Do I have 0.67 to give? No, but it is more practical if you say, sir, closest is 5,715. But you don't have that much also. What will you do? 5,720 will do. Yes or no? Now the question is, who will know? Who will know? Flight ticket bill is there. Therefore, we can understand, okay, which is where one more concept will come as round off. You will consider it as rounding off as an expense now. Yes or no? Yes, sir. So what is needed to be done and what you have done. This is practically possible, which is why I gave this example. Let us talk about practically you were supposed to record something actually, but you did something else. That also is misstatement. Second example, let us say you are an employer where you are selling microphones. Okay, microphone will cost you, let us say rupees 500 rupees sale price. Okay, my question to you, is microphone your inventory? Is microphone your inventory, sir? Yes, because you are dealing in microphone, so microphone is your inventory. Now, inventory should be valued at the end of the period. Yes, what is the valuation rule? Valuation rule is cost or net realizable value, whichever is lower as per accounting standard 2. Correct? Yes, sir. Now, let us say the cost of this microphone is 350 rupees. The cost of this microphone is 350 rupees. And what is the realizable value, net realizable value? Let us say rupees 500 only we will take. Yes, and at the end of the period, that is 31st March, you have around 10,000 microphones unsold. Clear? Now, what is the inventory valuation here? What is the inventory valuation? 10,000 units pending as on 31st March. What should be the inventory valuation? 35 lakhs. Correct? So can I say as per accounting standard 2, your inventory valuation comes up to 35 lakhs? Yes, sir. Now I will open trading account for you. Okay. Sales is there here. Opening stock is there. Purchase is there. Direct expenses is there. Okay. Now then comes your closing stock. My question to you, sir, 35 lakhs if I put here. Yes or no? This is closing stock. It should come here as 35 lakhs. Sir, let us say 10 lakhs is opening stock. Okay. 1,000 is purchase. Direct expenses is, let us say 20. Yes. And let us say 3,000 is your sales. Not units. I'm talking about just a random amount. Now tell me, what is your GP? You need calculators in audit exams, because calculation of drawing power and all you can't do mentally. Right? What could be the gross profit here? 3,035 minus 1,030. 2,000? 3035 minus 1030. 2005. Right. Now this is your GP, correct? As per what? Accounting standard 2, if you value, your GP is 2005. Now, since you want to show your investors that we are not just doing good profits, we are doing great profits, you will tell, we'll do one thing, we'll value inventory based on 500 rupees. Now, evaluate based on 500. 10,000 into 500 would be 50 lakhs. Yes, your closing inventory now you evaluate by 50 lakhs. Yes or no? Plus 15, which means here it will be plus 15, which will be 2020. My question to you, is this misstatement? Is this misstatement? Yes or no? Yes. Why? What you were supposed to do? Cost or NRV, whichever is lower, and as per that you were supposed to record 35. But what did you record? 50. Is there a difference? Yes, misstatement. So what is misstatement? What simple, what you are supposed to do versus what you have done. If there is a difference, it will be called as misstatement. Now my question to you, Can misstatement be due to error? By mistake? Yes. Can misstatement be due to fraud? Pakka. In this example, this was what? Error or fraud? This was error or fraud? Huh? This is where nature of financial transactions come into the picture. Clear? Now imagine you have bank transferred the amount. Okay? You will definitely transfer so much. Possibility is there. Decimal also you can transfer. Yes, sir. But you transferred so much, but you ended up writing 5720. Error. Now it is an error. But here, the 15 lakh difference is due to what? This 15 lakh difference is due to what? In my example, it is due to what? It is due to fraud, sir, because I told you I want to show more profits. I don't want 2005, I want more profits, so that when people see more profits, they will give us more money, saying this is a profit-making entity. So misstatement could be due to fraud, misstatement could be due to error. Yeah, right. I'll repeat it again. So yeah, you're saying inventory? What are you saying? Accountant has no idea about AS2. Okay, fine. Management has. So if accountant has prepared, management should supervise that. Did you monitor? I'll ask management. Did you monitor? No. Now a kid makes mistake. Won't parent monitor that? Or will you let kid make mistakes? Oh, so cute. Slap one more. No. That kid, you have to monitor it. So if your kid does not know, you have to monitor it. Now comes to the point, do you also know about it or no? If you don't know, then I don't think you deserve a management. Yes or no? That's second way of looking at it. Third way, sir, I am auditing. When I'm auditing, I'll see, hey, what is this? Where is cost? Where is NRV? What valuation you have done? I'll go to management and tell, see, sir, this is what you have done. Your inventory should be valued at cost or NRV, whichever is less. Correct it. I found a mistake. It is a misstatement for sure. I found it. I will go to management. Management will correct it. I will audit it again. Clear? Understood? Then I will also tell, how do you appoint people in your entity? I want to know. Because basic mistake if you are doing, imagine provisions, what will you do? Contingencies, how will you value? Yes or no? Sir, financial instruments, India's concept, how will you apply AS concept only if you're not able to apply? Which means my knowledge about management, now I'm trying to lose confidence in management now. So whatever information you're giving, boss, I don't know whether I should trust now or no. Understood? So that is how it works. Possible, there are some accountants who might fool management saying, I know everything, sir, don't worry. And they'll take the job. I'm not blaming the management. Could be. Management also might be wrong. See, I am modifying opinion based on the information. Clear? Now, if they have corrected it, it is good for me. I can't say financial statements are wrong. In my opinion, what I say, whether financial statements are free from material misstatements or no. I never talk about whether management is free from material misstatement or no. You may have misstatement in your head. I am not bothered about that. In financials, you correct it and give me. Clear? There are many entities where accountants are not up to the mark. They will, income taxes, you are not supposed to give cash more than 10,000 for an expense. I have seen entries where 1 lakh, 1 lakh 50, 2 lakh cash has been spent in my articleship days. So there will be people like that. We can't do it. What we can do is we can just find out the misstatement, go to management, ask them to correct it and give it back to us. Clear? Right. So this is what your misstatement is all about. What is misstatement? The information that is needed to be covered and it is not covered. See, the questions they give you is based on the case. So they'll have answer ready. So it's like they know the problem, they know the solution. So that solution should match your judgment. Right. So misstatement is whatever information you're supposed to give and what you have given. If there is a difference, we call it misstatement. This misstatement could be due to error, could be due to fraud. What is the difference between error and fraud? Simple. Only one thing, intention. Unintentional if you do it is called error. Intentional if you do it is called fraud. Clear? Effect is going to be the same. At the end, effect is same, but your behavior is very, very important here, right? So in unmodified opinion, what we say? Financial statements are free from material misstatement. Here also, if you see, our words are very, very selective. We say they are free from material misstatement. We never say they are free from misstatements, which means there will be misstatements. But it is not material. Now, what is material? Which will influence users to take economic decisions on the company or on the entity, whether I have to invest or no, should I continue with this client or no, all that is important here. Now then we come to modified opinion. What do you mean by modified? Which is not unmodified, which is nothing but here we are telling financial statements are not free from material misstatements. Which means leave alone misstatements. Even material misstatements are present in these financial statements. That is when we tend to modify our opinion. Clear? Yes. So this is our main topic of audit definition and other things. Let's move on to the next concept. Sir, should I prepare financial statements first or books of accounts first? I have to prepare books of accounts first, no? Or financial statements? It's always books of accounts. Sir, we don't work reverse method where we prepare financial statements first and then we go to books of accounts. We prepare books of accounts first, then we prepare financials. My next question, in case of books of accounts, how we have to put entries? Should we imagine and put entries? Or should we go through our evidence and then put entries? Evidence is very important. Sir, what if in some of the transaction evidence is not there? Could there be any transactions where evidences are not there? Further audit procedures, what audit procedures you will take up? My question is recording in the books of accounts. In the books of accounts, if I don't have enough evidence, how will I record? For example, you traveled by rickshaw. Where is the evidence? Rickshaw will not give bill. I understand Uber, Ola, you get receipt. But not everywhere Uber, Ola works, no. In Goa, Uber, Ola does not work. Yes, in many tourist places, they don't allow. Now, in those cases, you pay cash. Where is the proof that whatever you paid is the hiring charges or rent? Based on management's approval. Again, management is coming into the picture. So if management's integrity is not fine, if management is not trustable source for us, we will start doubting everything that is there. Yes, in other cases wherever evidence is there, I can still trust the evidence and go ahead. But wherever evidence is not there, that is where management's integrity comes into the picture. If you don't trust the management, you won't trust the entries as well. Refreshment expenses, right? Puja expenses you take. No. Every year if you do puja in your office, what bill you have? Will the Pandit or Purohit give you a bill? No. How do you record these transactions now? Which is where we have something called as vouchers. Cash voucher book is there, no? So you sign the voucher. Now that itself is our evidence. We don't have any other reliable evidence. That's the maximum evidence available for us. Understood? Which is also, after that we will talk to management, sir, do you have budgets in your entity? They put budgets for this particular aspect, only this much we will spend. For this particular aspect, this much we will spend. You see in many entities, they have these budgets. For traveling, this much only we will be giving allowance. More than that, your cost. Yes or no? So that also will help us in identifying, okay, whether the expense was reasonable or no. Because if the expense is unreasonable, where I do not have any other evidence except voucher, they could eat money in that. Now, rickshaw expenses, correct, sir. There is no bill. What if every day I'm charging 30 rupees more, 40 rupees more? Will it affect? Yes. Every employee 40 rupees more if you charge. And you have 1000 employees. Correct? 40 rupees into 1000 employees. 40,000 per day. Into 12 you do. Correct? Sorry. Sorry. No. Per day, correct. Into 365. 1 crore. What is this? See the 40 rupees per employee. Misstatement, material, fraud. Yeah, where is the evidence now? We do not know, which is where budgets will come into the picture. Policies will come into the picture. What if they say, we are not giving you more than 30 rupees? Anything more than that, your pocket. So you spend 70, you spend 80, how much will give you? 30 only. Now you know why policies becomes important in the management's perspective side. Otherwise, you might fool them also. There are many transactions where you can fool. Snacks. You go out. Yes, not every shop will give you bill, no. Petty shop. Small canteens, still mobile canteens. Where will they give you bill? You just pay cash, you eat and you go. What if you simply say, I went and ate in the course of work? So slowly, small things, if you start accumulating, it will become huge. Individually, that is not a material misstatement for me. But when it accumulates, it will become a big misstatement for me. Yes, understood? Right, sir. Next, what are the objectives? What are the main objectives of audit? Our objective of audit is very simple. To obtain reasonable assurance and to report, which you have already discussed in detail. Why reasonable assurance and why, yes, what type of report we are going to give. We are always giving written report. We are always giving written report. And why are we giving reasonable assurance? Because there are certain limitations which we cannot do anything about. That's the reason we are going to give reasonable assurance. What is reasonable assurance? That financial statements are free from material misstatements. Clear? In all material respects, financial statements are prepared as per the requirement. Now the question is, you will tell, sir, what is this applicable financial reporting framework? What is applicable financial reporting framework means? Try to understand framework first, reporting framework. What does reporting framework mean? How we have to report financials? What type of rules and regulations are applicable to us? For example, accounting standard says you have to report it in such manner. Yes or no? Some of the statute says you have to report it like this. Example, Companies Act. Companies Act says you have to prepare financial statements based on accounting standard. Yes, based on Schedule 3. Yes or no? Isn't this framework only then? Aren't they telling you how to prepare financials? For proprietor, do you prepare based on Schedule 3? You know Schedule 3 vertical balance sheet. For proprietor, do you prepare based on this? No. So for them, framework is different. For company, the framework is different. Here, for trust also the framework is different. You don't call P&L balance sheet there. You call income and expenditure and balance sheet there. So for them, the framework is different. For cooperative society, framework is different. For banking, your framework is different. So for every entity, we have to see what framework you are supposed to follow. Not everything is applicable to everyone. Yes, understood, right? For partnership, is Companies Act applicable? No. So they need not follow Schedule 3. Clear? So whatever is applicable for us, not everything is applicable. Whatever is applicable is what we call as applicable financial reporting. Sir, here financial reporting means what? Presentation and disclosure of financials. Presentation and disclosure of financials. Right? And that how you are supposed to disclose, how you are supposed to give, that is what we call as financial reporting framework. Report, give it to people, report it, whatever amount you have spent, whatever finances you have done, whatever business you have done, report it to the users. But in a framework, I tell you. However, I ask you to report, you have to report it in that manner only. Second example, property, plant and equipment. They have told you all the cost and all you should add as per AS10. Whatever cost we give you, you have to add that and capitalize and show it in the balance sheet. Report it in that manner only. Sir, useful life of every asset is given under Companies Act for them. You have to report it under similar circumstances. So that is what we call as applicable financial reporting framework. Right? So our main objective is two things only. This is, remember this is objectives of audit. Entire audit objective is only two: reasonable assurance and reporting. Scope. Sir, what do you mean by scope here? Boundary. How much we should cover? How much we should cover? Everything? No, only relevant to finance only. See here. Adequately all aspects relevant to the financial statements only. Anything beyond the financial statements, none of our business. Only those things that are affecting our financial statements should be covered in the scope. Next, sir, to form an opinion, we have to see accounting records or other source data, and it should be reliable and sufficient. What is accounting records? Books of accounts. Yes or no? Books of accounts, subsidiary books, general ledger, everything we will be covering here. And what is other source data? Other source data means bank confirmation certificate, external party confirmation, anything in writing given by management or an outsider. It's source data for us. Yes, bank passbook is not books of account, it is a source data. Contract entered into a copy, sale deed, purchase deed is not books of account, but is a source data, right? Management representation letter is a source data. So everything is coming a part of source data. So we have to merge both, and then we have to see whether the transactions give us true and fair view or no, right? So for that, what we have to do, study the accounting system and ICS. What is accounting system? How you record the amount in your books of accounts. What system do you have? Do you have authorization system? Do you have segregation of duties? Who is responsible for what? And then we'll be checking internal control system. What is internal control system? System, a process that is designed, implemented, maintained to achieve an objective of our entity. What is our entity's objective? Operation should be good. Financial reporting should be reliable. Yes, safeguarding of assets, prevention of fraud and errors. Prevention, no elimination. We can't eliminate. We can't eliminate. We will reduce as much as possible. But when we say prevent, we are not letting it happen only. Prevention is better than cure. So internal control system will let you do that. So that we have to go and evaluate, right? Next, in forming the opinion, again, decide whether relevant information is properly disclosed. Disclosed where? In the financial statements, as per the requirements. Whatever law says, have you put it? For example, going concern. If there is any problem in going concern, should you tell users? Should you tell users that there is a problem? Yes, you have to tell that there is a problem. Who tells us? SA 570. And we have to disclose it as per SA 570 only. Right? Then, the auditor determines whether relevant information is properly disclosed. How? By comparing the financial statements with the records. As per the books of accounts, your financial statement should match. Not the other way around. Why? Financial statement is an end result. Books of account is a process. Right? Okay. Sir, can I say in financial statement there is judgment involved? Is there judgment involved? Pakka. Judgment is pakka involved here. So, if judgment is involved, can I say it is fraudulent? Can I say it is fraudulent? No. That's the beauty of judgment. You have to prove it. It could be fraudulent, but what if he portrays it as an error? Right? Considering the judgments that management has made, sir, judgment, no, should we go and check that? Yes. Example, give one example for judgment. Going concern, yes, going concern also is a judgment. Provision created for bad debts. That's a classic example for judgment because you are feeling that this fellow may not be paying. That fellow did not say. Your debtor never said, I will not pay. But based on his behavior, when you give money to your friend, he will tell, I'll give you next week. Next week is not giving. In your head, you have created provision already. Understood? That is your perspective. Did your friend say, I will not give? No. You are telling that he will not give. So for your safety, for your benefit, you create provision in your financials. So that I think this debtor will not pay. Sir, you want to suffer the loss slowly and not as a shock. That is the concept of provision. Why do you create provision slowly? You increase next year, in the next year, in the next year, so that whenever this fellow becomes bad, I should not get heart attack. Slowly, mini heart attacks I will suffer every year, 10%, 20%, 30%, but okay, no problem. Because when he becomes bad, I will be immune to that. Suddenly, when a person becomes bad debt, you can't take it. That's why you create provisions so that part by part I will suffer that loss and not once for all. Understood? Clear? Yes, right, sir. So you should not do anything that falls outside your scope of audit. Constraint should be considered properly. What is constraint means? Hurdles on the scope. Meaning people who, let us say there is one person in the management who is not letting you work. One person in the management who is not letting you work. Should we go and discuss with him? Yes, we should. Why? Constraints on the scope. He is not letting me do my job. That also is my area only. He can't say, you can't talk to me. I will, because you're putting a constraint on my scope. It could be any transaction, it could be any person. I have the right to audit those things as well. I have the right to examine those things as well. Right? Okay, sir. Aspects to be covered, a simple, whatever is the scope only is coming under the aspect accounting system, ICS, reviewing their system and procedures. Whether are there any weakness in the systems? Arithmetical accuracy is your calculator job. Depreciation, interest, to check and see whether they are recorded properly or no. Verification of authenticity and validity. This is what I explained with respect to that bill. Authenticity. With the bill, if you have authenticity, yes, and it is valid, right? Distinction between capital and revenue nature. Sir, asset. You purchased an asset. Entry should be bank account debit to asset account. Then asset account debit to bank account, which means asset will come in balance sheet. But if you go and write P&L account to bank, your profit will drastically reduce. Imagine 5 crore worth of asset you put in P&L. Company loss. It could be loss of company, but up to what amount now? Huh? What is the amount of loss increased now? Huh? 5 crore rupees I debited in P&L. So what is my differential loss or profit? Difference in profit or loss? No, that is the problem. It is not 5 crores. It is 5 crore minus depreciation. Because we still charge depreciation in P&L. So from P&L you will not pick up completely. You will pick up only cost minus depreciation. The depreciation will keep there. Rest of the things will pick and put it in balance sheet. Clear? Yes. So we have to understand that as well. Comparison of balance sheet and P&L with books of accounts. It should match. Right? Verification of assets. Verification of liabilities. Whether asset is mine only or no. Clear? Liabilities will be ours only. Valuation of asset and valuation of liability will differ. Clear? Do we value liabilities? Do we value liabilities? Sir, valuation is there everywhere. Valuation is there everywhere. But we value it at actual price only. Whatever is the remaining, that only will put in balance sheet. That's why we call it as known liabilities. We never put unknown liabilities. Where do we put unknown liabilities? Contingencies. Whereas in balance sheet, whatever liability is there, that liability is known. We know what exactly we are going to pay. Clear? Yes? Right. Checking the result shown by P&L is true and fair. Sir, what is this true and fair? Why can't we give true and correct? Why we have to give true and fair? Judgments are involved. Not only judgments are involved, sir. There is something called as fair presentation framework. Heard of this term? Fair presentation framework and compliance framework. Heard? Heard? Fair presentation and compliance framework. Where, sir, in SA 700 series, SA 700, when we talk about audit report, there you would have seen fair presentation framework, general presentation framework, and compliance framework. What is compliance framework? I will cover the concept here itself. Compliance framework means, as per the requirement, what you are supposed to do, you are doing only that. Not a thing more, not a thing less. What has been told, that is what I am doing. Nothing more, nothing less. But in fair presentation, compliance plus, anyway we will comply. That is anyway there. Plus beyond compliance we will be doing. Beyond what is required we are doing. Sir, what is beyond what is required we are doing? Sir, I'm going to suffer loss. I'm going to suffer loss. I want to tell my users that in the next 2 quarters, I might suffer loss. Because I feel that is fair enough to tell them. Yes, compliance will not tell me to do it, but I still want to tell them so that they are my users and I know that it will affect them later on. Now only if I tell, they can take more informed decision. So beyond compliance, if you have, we do fair presentation framework. That is what most of the people in India follow. Because when we use the word true and fair, they never use true and correct. They use true and fair. So whatever is fair also we have to do, no? Let's take an example. Sir, let us say your Companies Act clearly says you have to follow yes, and you have to prepare as per schedule number 3. Okay, sir. Let's talk about debtors. Or let's talk about sales and sales return. Sir, 10 crore worth of sales are there. Entry for sales. Give me one entry for sales. Debtors or cash to sales. Sir, when this return happens, what is the entry? Sales return to debtors or cash. If you give cash back, yes or no? Clear? My question to you, when the same inventory is going out and when the same inventory is coming back, it should be, when debtors to sale is happening, it should be sale to debtor, no? Shouldn't be sales to debtor, but it's happening as sales return to debtors. Okay, sir, I will accept it. Let us go to P&L. Sales will come here. Yes, where is sales return? Should be the debit side. No, why? What is the ledger balance here? Sales return to debtors. So sales return will have a debit balance. So technically it should come here. Yes or no? But how do we show it? Deduct it from and give them a net amount, so that they understand this is the net amount that we are having. Clear? Yes. So when we talk about true and fair view, it is not just what has been told we are supposed to do. We have to do something more than that, which will give the users, okay, it is fair enough that company is telling us this, or entity is telling us these things. Right? Same thing with, there are many things where we are talking about, sir, is it fair? We don't have to do that. No, none of the law, none of the accounting standard, none of the section is asking us to do it. But why are you doing it, sir? They will tell it is fair enough. They have to understand that. So the difference between compliance framework and fair presentation framework is, in compliance we just do what has been told to us. Nothing more, nothing less. Whereas in fair presentation framework, we go beyond what has been told to us. Clear? There is one more example. Let us take inventory valuation. Sir, inventory valuation, what happens? What type of valuation we have to do? Cost valuation or NRV, whichever is lower. Leave NRV for now. We don't want NRV discussion. We want cost discussion. My question to you, when we do cost discussion, sir, how do we arrive at the cost? How do we arrive at the cost? Purchase price? Closing stock into purchase price. What are the different methodologies to arrive at the cost? FIFO is there. LIFO mention is there. Weighted average is there. Okay. LIFO we do not use. Correct? We use FIFO. We use weighted average. FIFO is allowed? No. Yes, sir. Now let us say I am into petroleum selling. Okay, I'm into petroleum selling. My question to you, what valuation I should use? What valuation I should use? Huh? I can use FIFO also, no? I can use FIFO, no? What is fair? Weighted average. Standard tells you can follow FIFO also. But what is fair enough to follow here? Weighted average. Because it makes more sense. Yes or no? Clear. So we have to see, sometimes law will tell us. Sometimes framework will tell us. Should we follow that? Can we divert and follow what is fair enough? If yes, no problem. Because depreciation method, the second example, SLM also is allowed. WDV also is allowed. Which one do you use? Which one do you use now? Let us take example only, sir. WDV will use, let's say machinery is there. Machinery cost is 100 crore rupees. Machinery cost is 100 crore rupees. Sir, which methodology will follow to depreciate this now? SLM and WDV? Let's say, let's take it easy, sir. Both are allowed. Both are allowed. Let us take SLM. How many years you will take? 10 years. Easy. 10 years I'll take. So every year, how much depreciation you charge? 10 crore, 10 crore, 10 crore, 10 crore, like that you will keep on charging. Good, sir. What if the machinery you're using for 15 years now? 20 years you're using machinery. There are many machinery which are old machineries. People use it. Still in factories it is used. How do you charge depreciation? SLM? So can I say, even though SLM is allowed, it is not fair enough for you to use? Yes or no? Which methodology you use now? WDV makes more sense now. WDV makes more sense. Based on whatever is the balance, we keep on charging it. In your depreciation chapter, there is one more, many methods which they have given. Sum of digits method, machine hour method, yes or no, printers, yes or no. Some people will follow WDV for printers. You can follow for machine hours also. How many hours I'm using it for? Based on that I will use, because depreciation meaning is reduction in the value due to usage. Reduction in the value due to wear and tear, passage of time, usage of this particular asset. So I can also choose for machine hours method. Absolutely no issues with that. It is fair enough. Although statute or requirement says you can follow others, we are following something which is not followed by general people. It is okay for us. It is fair enough. That type of framework is called as fair presentation framework. Got a clear ideas to compliance and fair presentation framework. Compliance means what has been told, I'm doing that. I'm not even thinking of anything else. Fair presentation means, is it logical for me? They have told correct, is it logical for me? If it is not logical, follow what is logical. And your AS1, accounting standard 1, will let you do that. Some of the policies, if you are changing for better presentation, accounting standard 1, do you remember? Yes, sir. You can change the accounting policy in 2 cases. If law is asking you to do it, or for better presentation, if you want to do it, you can do it. Yes, clear? This is your scope and aspects to be covered. Advantages, sir. Advantages of audit. Easy. You don't need any conceptual explanation there. Okay. Moral check means employee will be taking care of the financials because they know that it is getting checked later on. Clear? Settling liability, settling trade dispute, settlement of accounts, partnership. Detection of wastages and losses. Since we check, we get to know where loss is more and where there is wastage, we can fill that particular gap. Clear? Not priority for us in marathon. Limitations. Very good concept called limitations. Inherent limitations. Sir, what is inherent limitations? Can we skip this? In audit, not in class, yeah. In audit, can we skip this? No. Should we consider this? You don't have to consider it, is inbuilt. It is inbuilt. You can't do anything about it. Nature of financial reporting. Judgment involved by management. Can you do anything about it? No. Provision is judgment. Estimation is judgment. There is one accounting standard AS22. Yes, deferred tax asset, deferred tax liability. Judgment. Accounting estimate, judgment. Sir, how many years I'll be using this machinery? Judgment. Clear? So everything is based on judgment. Budget is based on judgment. Last year we have used so much. Next year we may use so much. Clear? So judgments are involved in business itself. We can't do anything. Nature of audit procedures. Sir, point number 1 and point number 2, we are talking about practical and legal limitations here. Management or others may not provide complete information, which is nothing but practical limitation. Clear? Practical limitation. Fraud. Practical limitation. What if they intentionally hide things? Error we can find. Sir, if employee does the fraud, we can find. If employer only is doing fraud, how will we know? We will not know. So this is again a practical limitation for us. It is not an official investigation, and this is our legal limitation. Legally, we can't do anything, and that is what we call it legal limitation. Timeliness of financial reporting and decrease in relevance of information. Information which is relevant today will be losing its relevance tomorrow. And that is again a limitation for me. So many information I have, so much of information I have. Which information I should consider, when I should consider. Clear? Future events, going concern. We can't vouch for it. Company might go into liquidation. Byju's was running very good. All of a sudden net worth is zero. How come? How come? Can you blame the auditor? No. Can you blame the auditor? No. You can't blame the auditor. There was a basic fundamental error of revenue recognition in Byju's. They used to recognize revenue which is of next year and the current year only. So when some basic fundamental problems are there, we can't do anything. Of course, we can go and talk to management, but who should rectify? Whose primary responsibility is to prepare financial statements? It is management's. It is not auditors. Auditor is just to check the financials, not to prepare the financials. Clear? Yes. Is audit mandatory or voluntary? Depends on the statute. If the statute asks you to do it, mandatory for you. If you want to do it, voluntary for you. Clear? Who appoints an auditor? In case of firm, proprietor, partnership firm, partners, company, government company, CAG, non-government company, board or members depending on what type of auditor you are. If it is the first auditor, board, subsequent auditor, members. Clear? Right, sir. To whom should we submit the report? To the users. Clear? To the users. In case of companies, who appoints us? Member. So we are giving it to members. If CAG appoints us, we give it to CAG. If partners appoint us, we give it to partners. If proprietor appoints, we'll give it to proprietor. Clear? Okay. Then we come to assurance engagement. What does assurance means? Assurance means confidence. Assurance means basically confidence. So here it's a three-party arrangement. Three people are there here. One is called user, specific user. One is called practitioner, and one is called responsible party. So if I have to name it, management, users, and auditor. So responsible party is management. Users are an outside user for us. Practitioner is us. So any engagement where the objective is to increase the level of confidence of the users, that type of engagement is called as assurance engagement. Elements, it's a three-party relationship. Subject matter should be there. Some suitable criteria should be there. Evidence, what evidence? SAE, sufficient appropriate evidence we need, and it is a written report in the appropriate form. Sir, is there a difference between review and audit? Is there a difference between review and audit? Yes. Sir, audit is a reasonable assurance engagement. Review is limited assurance. We will not give you full confidence. For example, quarterly reports. Quarterly reports requires either limited review or audit in listed companies. You either have to do limited review or audit. Now, in that case, we just see what is required, and that is what we call as limited review. There, reasonable assurance is not there. Limited assurance is there. Clear? Right? In case of audit, we do elaborate procedures. In case of limited review, less procedures we do. Right? So, have an understanding of what is review, what is audit. Sir, do we have information related to future? There is one information which is related to past, and we call it historical financial information. And the information, if it is related to future, we call it prospective financial information. Clear? Right? Budgets, what type of information it is? Historical or prospective? prospective. Cash flow forecast, prospective. Clear? Right? Financial statement, historical. Clear? Be very careful. Financial statement is based on past events and not on future. See, having no assurance is good or limited assurance is good. Limited assurance is good. So rather than having no assurance, at least limited review you do, right? So this limitation is like every quarter I can't do audit, but at least if the CA says these areas you check and tell me whether it is good or no, that's better, no? Okay. Now, sir, where SA is applicable, where SA is and all is applicable, SA is applicable in audit of historical information. SA is applicable of audit of historical information. SRE, review of historical information. Clear? SAE is about assurance engagement. This is assurance engagement other than audits and review of historical information. SRS is on related service, agreed upon procedures. Sir, what is agreed upon procedures? You appointed me as auditor. Now, I am actually a certified valuer also. Okay, you need some valuation of goodwill or valuation of business or some valuation you need. I am a certified valuer also. You appoint me separately for that. We agree on to it. There, if I'm doing, I have to not follow SA, I have to follow SRS, standards on related service. Understood? Then we have SQC. SQC is, I will just highlight one thing that you have to understand. Firm. In all other previous things, it is applicable for audit. SQC is applicable for the entire firm. Whatever firm does, SQC will cover. So SQC is like that umbrella. Clear? Under umbrella, you will have audit, review, assurance. Clear? So firm does everything. SQC is applicable on the entire firm. This division is important going forward in ethics. Clear? Right? Okay. So this is your chapter number 1, basics of audit, where we have not only just covered of these things, we are also covering, we have covered modifications, meaning of modifications, unmodified, material misstatements, reasonable assurance, opinion, etc. Clear? Let's move on to the next topic called ethics here. Right. Is ethics important? What is ethics actually? Ethics is morals, or ethics and morals are different? Ethics means what is right, what is wrong, according to me. According to me means what I think is right for me is my ethics. What you think is right for you is your ethics. So ethics can be subjective in nature. But in this chapter, no, we are not talking about those ethics. Yes, ethics is subjective, which is why ICA told we don't want subjective ethics. We will tell you what you should follow, what you should not. And that is what we call as professional ethics. You know, Todel Dharmam, you say, professional ethics. Meaning, we will tell you what is right, what is wrong. You just follow that. Don't apply more. Right? Why if we give you to apply more, no, you will tell, sir, I am accepting bribe. For me, it is ethics. I will lie to my client. For me, it is ethics. That's why they say, no problem. From today onwards, we will tell you what you are supposed to follow because you are representing us. When you go out, people talk about ICA. You are the face of ICA. You represent us. So ICA should take care of what you follow outside among the people. So they are telling fundamental principle is IPCCO. That is integrity. You should have integrity. What does integrity means? Honesty. If it is wrong, tell the client it is wrong. If client has done something wrong, tell it. If you are not able to do it, tell it. If the solution is simple, sir, be honest with that. Don't tell him the longest solution because you want revenue. Clear? Give him. It is not like, let us say now you have fever. You will tell, come to medical camp. You will go to medical camp, check there, and you will tell, imagine now you are a doctor. Okay, you will tell, you have BP, you have sugar, you have this heart attack problem might come, this might come, that might come. Okay, actually nothing is there. Yes or no? When you tell someone normally only, You have these things. Obviously, blood pressure will increase, heartbeat will increase. Yes or no? So you should be honest with your client. With your profession, you should be honest. Fair dealing and truthfulness. Knowingly do not get, sir, unknowingly we can't do anything. Knowingly don't get associated with lies, with fraud. Next is objectivity. What does objectivity means? You should be able to give your judgment no matter what. Do not get influenced. Do not put their interest apart from your interest. Like, don't put their interest first. Sir, this is the case, you have to do it. For example, I'll ask you one question, answer honestly. If your close relative is on the management's side, is in the board and has done fraud, what will you do? Now you'll be thinking, which relative? If I put relatives designation, if I say your father is there in the board, what will you do? What will you do now? Immediately, father is there in the management only. The question is, will you inform management? Will you inform the government? That is a big question. That's a big question. Clear? When your close relative is there on the board and you know that they have done fraud, you have evidence, what will you do? Very difficult for you now to take decision. That is where they say objectivity is compromised now. Clear? Which is exactly why if there are relatives on the management, no, we should not take up the audit. We should stay away from it. Sorry? Familiarity. Threats are there, but will you take it or no? That's the question. Which is why in Companies Act, they've clearly told if it is your relative who is there in the management, you are disqualified from auditing. You can't be a company auditor. But there is no rule as such in partnerships, no. There is no rule as such in small firms. That's why apply ethics and say, I am not going to take it because there is a conflict of interest. Clear? Because I won't be able to give unbiased opinion. In the class, we'll tell, we'll report. Practically, when it comes, it is very difficult because there are a lot of practical factors. Your mother will come and request you. What will you do? That too, that request is not a simple request. It's an emotional request. All these years, your father, so much he toiled. Now you are reporting him. You are only sending him to jail. What type of, what type of kid you are? Yes or no? Yes or no, sir? Jilla movie. Emotional blackmail. Yes or no? So that's why, boss, don't take up such audit only, no. Why fall into that trap? Clear? Next, professional competence and due care. What does professional competence and due care mean? Sir, when you're doing your work, diligently do your work. Take care. Do your homework. Don't negligently work. That is why we say professional competence means you should have knowledge and skill. If you don't have knowledge and skill, don't take up such audits, sir. For example, there are many people who are expert in direct tax, but not at company compliances. Of course, they know company compliances, but there is a difference between knowing and expertise. They're expert in direct tax. Now imagine you're expert in direct tax. I am a client who wants company compliances. What will you tell me? I am expert in direct tax, boss, but I have someone, if you want, I can refer. Will you tell the client, I know everything, don't worry, you come. And then you take the client, take the fees, but you don't have professional skill to do it. And you mess it up. Where is ethics? Ethics is not there. Clear? Next. Professional behavior, no confidentiality, very important thing. Confidentiality, don't go out and tell, my client this much big transaction, yes. When you become CA, no. First people who will not give you clients or files are relatives. Why? Because they will think that you don't have confidentiality. You will go and tell everything to your parents. How much money uncle is making, how much money auntie is making, how much color money we have. Everything will go and tell your parents. So they'll tell, no, we don't want. But it is actually because somewhere it would have happened and that's why they're thinking like that. Yes or no? You see, you talk to doctors, you talk to professionals, they will tell you the case, but they will never tell you the name. They will also not tell you exact amount at times. They'll tell you approximately. Confidentiality. One of my client was there. One of my patients was there. They will tell like that. Why? Because they are professionals and they know that we have to keep it secret. In your case, if you go to the doctor, imagine your doctor tells others about your health issues. Will you like it? No. You have shared with him, keeping confidentiality in the mind. Sir, how you share about your physical and mental health with your doctor, your client shares financial health with you. You should not share that with outsiders. Next, professional behavior. Sir, what does this professional behavior means? Compliance. Do not, sir, why do we study law and standards and all? To follow it or to break it? Huh? At least let us stick to in class to follow it. Yes or no? Right? Practically, we do not know. Right? We do it to follow it and not to break it. That is what we call it as professional behavior. As per law and regulation, what you're supposed to, you tell us. No problem. If you don't do, suddenly from somewhere they'll come. Raid. Why? You're not complied with it. No. Where is professional behavior now? Right? So knowingly do not get into trouble. Knowingly. Unknowingly, you never know. Knowingly don't get into trouble. Next concept is independence. What is independence? Independence means give your opinion. Don't worry about other things. Sir, should we? Don't worry about other things, correct. Will other things worry us? Will other things worry us? Yes, they will. Like, for example, when they say independence, there are two things. Independence of mind. What do you mean by independence of mind? Your thinking should be independent. The way you take decisions should be independent. Independence in appearance means what? Behavior wise. The way you behave in front of people, people should get confidence in you, saying, okay, this fellow we can approach. He's not biased. He's not for management. Right? It's like your parents. Your parents, usually middle class family parents, or even high class family parents also, if their kid has done something wrong, and if actually they have done wrong, they will hit their kid only first. Even in front of people. That is independence in appearance. When they do that, opposite party will know that, okay, this parent is honest and true. Even if their kid has done wrong, she has shouted or he has shouted. But if you still defend that, where is independence? Clear? If you still defend that, there is no independence, and therefore it will affect your work. So independence in you should appear to be independent, you should think independently. When both matches, your opinion will be independent. Clear? Right? If threats to independence, what threats will be having? 5 types of threats we are having: self-interest, self-review, advocacy, familiarity, intimidation. What is self-interest threats? Where we have our interest in that engagement. Like we are getting money from the client, we are getting financial help from the client, we are getting some benefit from the client. Self-interest, our stake is there in that. That type of threat is self-interested, where client says, do this work for me, I'll give you extra money. Self-interest. You're talking about your interest now. Right? You're seeing your benefit more than the entity's benefit or the user's benefit. You have to work for the users. Yes, sir. Shares will not come under this. If you're asking, shares means company only, I'm assuming. In case of company, if an auditor has share, he's disqualified. Because 141.3 clearly says if you have securities, you're disqualified except relative. The exception is only for relatives. So even 1 rupee share you have, you're disqualified. Okay? All because of 1956 only. Right? Then, next. Sir, having a business with the client. See, let's say you are my client. I file your income tax return. I am a business partner. There is a self-interest threat. Why? If I am doing your income tax return, it will affect your business. If it is affecting your business, it will affect me also. Sorry?
Is that not a familiarity threat also?
No. It is not a familiarity threat. Familiarity we are associating with a very close family relative. When we say here self-interest threat, partner will fall under this. Partner will have 2 threats now. One is this and one is that. Clear? Now partnership with the family also will fall under familiarity threats. Clear? So here you have to focus on this word called interest. My benefit is there here. And for my benefit, I am not giving opinion. Because if I say this company is bad, I will stop getting benefit from that company. And if I see that first and not the opinion, then that type of threat is self-interest threat, where direct financial interest is there, right? But Direct is not there. Significant material indirect interest is there. Loan or guarantee to the client from the client. I am taking loan from the client or I am giving loan to the client and I am auditing that client only. Obviously, it will affect me also. Then we have self-review threats. What is self-review threats? I am only reviewing my judgment. Will you tell your judgment was wrong? You will not tell. Why? Now, as a student, you might tell because an opportunity to learn. But as a professional, will you admit it in front of users? My judgment was wrong. No, you will not. Clear? So during a review of any judgment or conclusion, it will occur, and that type of threat is self-review threats. Example, when a member of the team was previously a director of the client. Now imagine I was working in one company, I'm the director there. I left that, I joined your firm. Now your firm is auditing that client. Worse, what is happening here is I am reviewing my own work there. Will I tell you that I have done wrong? No, I will hide things. So that type of threat is self-review threat. Advocacy threat. Sir, what does an advocate do? Defend their client. And here you are defending your client. Whether it is wrong or right, you are defending. If it is right, I understand. But when you're defending when your client is wrong and you're not admitting, right, what will people think? What will people think? You're biased. You're biased. You're taking sides now. If you're taking sides, how is it independent? It's not an independent opinion anymore. Then, familiarity threats where, sir, you tend to form relationships with the client. Clear? You tend to form relationship and you become too sympathetic. It could be friend. It could be any other relation also. Clear? When you form relationships with your client, you should first have a line. Client and professional, you should have a line. Sir, in developed countries, if you see, you can't have a relationship with your client. And if it is there, it is considered as non-compliance. And probably your license might be cancelled. Clear? Whereas in our country, we will not tell only anyone. Secretly, we will do it. Right? But at the end, no, when you are taking decisions, will you take the right decision? No. You will think, no, it is going to affect that person. Right? On familiarity threats, one question is asked in MTP 1, series number 1. When you read the case, no, you will see, oh, nice. And they have asked, what type of threat is this? It's a familiarity threat where you end up being too sympathetic. Client is sponsoring your vacation. Client is sponsoring your stay, food, everything. Now, tell me, when reporting comes, what will you do? What will you do? You will have one thought, no, all these they have sponsored. We should not talk bad about them. That's called familiarity threat. And in audit, client will ask you. Client will give as many facilities as possible to you. Don't accept it. Even after you refusing, they give. You don't have any threats. You give your opinion. They try to influence you. Don't get influenced. You give your opinion. Clear? Then we have intimidation threat. What do you mean by intimidation threat? What is intimidating? Threatening. You reduce the fees, otherwise I'll give this work to someone. Don't budge for such threats. Tell him, give it to someone there. Give independent opinion or don't give only. Clear? It could be from higher authority, political pressure, local pressure. Many pressures will be there. You don't give into that pressure. If you're not able to do it, don't take it. But don't budge into this intimidation and go and give your dependent opinion. You should always be independent. What safeguards I should do, sir? Nothing. If you can feel that I can manage this, then you manage it. If you feel, sir, there is no way I can manage, do not accept such assignments only. Leave it. Clear? Right. Then we have professional skepticism. What is professional skepticism? Professional skepticism has 3 legs. 3 pillars is what we call. Number 1, questioning mind. Number 2, being alert to conditions. Number 3, critical assessment of evidence. So 3 pillars of professional skepticism, sir. Questioning mind, clear? Being alert to condition, mind should be alert, right? Your vision also should be alert on body language, how they change when they talk. Yes, and third one, critical assessment, not just assessment. Critical means what? Seriously sit and evaluate the evidence. Like for example, let us say I am talking to two people now. I am an auditor. I am talking to two people. One is manager and one is director. Okay. And there is one person who is employed in the firm, in the entity. His salary is 16 lakhs. His salary is 25 lakhs. Okay, per annum. Now, I am asking both of them, who manager as well as director. Okay, I'll ask, who is that person? Okay, is he relative of any director? I am asking this to whom? Two people, manager and director. Manager says yes, director says no. Now, in this case, should I be alert? Yes, sir. Why? One question, two answers contradicting each other. One is saying yes, one is saying no. Now, in that case, I should ask more question. Questioning mind will come. When they said yes or no, evidence I got, which is contradicting to each other, critically assess it, evaluate it. Right? And right after that, be alert to conditions. Be alert to conditions means what? After that, check where are they going? What are they talking? With whom are they talking? Are they meeting directly to the next person? Be very alert in those conditions. Clear? Because there is a saying, when you say the truth, you don't have to remember. When you lie, you have to remember what you have told. So what you do, same question you ask after a few days and see what they answer. Because they'll not remember what they have told. That is one of the way to assess the evidence. Clear? Body language, you will know whether that person has lied or no. Some people will think they are confident when they are lying. On their face only you can make out whether they are lying or no. Clear? So all these things comes from attitude, from the body language. That is why three pillars, I say, three brain you have to have in professional skepticism. One is questioning mind. One is your critical assessment of evidence. And last one would be being alert to condition. Slightest doubt you have, don't take it lightly. Ask more questions on it. Which is why we ask more questions. The reason why we are asking more questions is we don't think everything is right. We think something is wrong. So we want evidence with respect to that. Clear? Now that could be for these evidence that contradicts. And these are the situations where they're telling you have to be alert. Clear? Could be a probable question. Could be a probable question. Two types of question can be asked in professional skepticism. One is the way they say what are the conditions where we have to be alert. Clear? Second thing, they'll give you one of the condition and then they'll ask you to tell what is professional skepticism. Right? Now, for your understanding, what students will consider is, sir, these 9 points are there. No, these are about professional skepticism. Correct? Till now, you were also thinking like that only? Yes, 9 points is about professional skepticism. Sorry to burst the myth. 9 points are not about professional skepticism. It is about one of the pillars in the professional skepticism. What are the three pillars? Questioning mind, being alert to condition, critical assessment of. These 9 situations are second pillar's question. Being alert to conditions. In these conditions, you have to be alert. Understood? Clear? So it includes being alert in the following conditions as well, and they have given you 9 conditions. Right? Sir, what are these different conditions? Evidence is not matching. Something is suspicious. Yes, every time they say about judgment, wherever judgments are involved, they say it is like this only, sir. It is like this only, sir. It is wrong for me. I am getting a slight doubt in this. How is it everything is like this? Right? Cash transactions, be alert. Now, sir, apart from these 9 instances, what if there is a 10th instance? Should I be alert there? Should I be alert there? Boss, yes, because the word used is includes. Professional skepticism includes these things, meaning apart from this, there are many situations where you have to be alert. Clear? Yes, sir, every day you are in the entity, Mr. A logs in. Mr. A logs in and comes. There is one pattern followed. One day, Mr. A is not coming. Mr. B is coming in place of Mr. A. Should you be alert now? Yes, sir. Who are you? Who are you? What type of information you are giving? Why are you giving this information to me? So be alert. Every condition, if you feel something is not right, you have to be alert. And that type of attitude is called professional skepticism for us. Clear? Right. Next is SA 210 talking about agreeing to the terms of engagement. Which one, ma? Over generalizing while drawing conclusions about audit observations. Let us say now, see when we say generalizing, let us say we have an industry. Okay, in an industry we have a entity. That entity prepares a particular amount based on judgment. Okay, and when we ask on what basis you prepared this provision, generally we do that, sir. Generally we do that. Now, generally you don't do it. I know generally you don't do it. Let us say generally 10% you create. Okay. Now, you created more than that. You create 20%, 25%. What happens when you create more provision? Profit reduces. What is the net effect of reduction of profit? You can save dividends. You can save bonus because bonus is paid on profits. You can save tax. I would say saving and evading are two different things, but misunderstood as same. You don't save tax. You save tax by planning, not by evading. Right? Now, in these three scenarios, generally 10% people follow. Why are you following 20%? And when I ask, they are generalizing everything. They're saying, generally we do this, sir. No. Tell me exactly why. You have to be alert. Right? I'm not saying 20% is wrong. I'm absolutely okay, but give me reasoning for that. You can't put it on general things. Generally I do this, generally I do that. Generally let you do. Why are you doing this here? Give me proper reason. That reasoning will give me confidence. If you simply say, Summa sir, then I have a problem now. I have to be alert. So that is called, you generalize, no issues. Over generalizing, you should not do it. Clear? Okay. SA 210, agreeing to the terms of engagement. Sir, should I do this before or after? SA 210, should I follow before auditing, accepting the audit or after? Before. But where is it placed in the syllabus? 11th chapter, which is at the end, after finishing everything. I'll tell you, this particular thing, students will miss out, you know why? This is reflecting in your chapter number 2, audit planning. In audit planning, if you go and see, there is a concept called as preliminary engagement activity. There, exact same thing is repeated. And trust me, you don't do this. Directly go and do in planning. You have no idea what you're studying. You will skip chapter 2 also. You will skip chapter 2, not everything. You will do audit program. You will do benefits. That easy questions you will do. And that preliminary expenses, what is that? I don't understand. Leave it. That's the reason. Do this first. If you do this, automatically you're finishing chapter 2. Clear? So this we have to do, we are supposed to do before we accept the engagement. Why, sir? Why there is a standard for this? Why there is a standard for this? Tell me, why there is a standard for this? Because there could be a risk of auditor accepting without agreeing. Later on, hey, we had spoken, no. Sir, in USA and all, no problem. It's a developed country. Oral things, if you say, it is valid there. It is valid. In fact, they'll sue you for that. And in the court of law, you will think twice before lying. But we are not in USA, no. We are in India. In fact, even in writing after that, you will tear and say, where did I write? Yes or no? In the court of law, you stand in that witness box, you take oath. I will tell the truth and nothing but the truth. Right after you take the hand, I didn't do it. So, we need evidence to prove that this was agreed long back. For that, SA 210 will tell, boss, don't worry, I will put certain points here, you follow that. Clear? Now, sir, which standard to apply where, in what case, if you have a question? Try to understand, visualization concept is important here. I have told this in the class as well, but for the benefit of others, I'm telling it again. Which is standard to apply in what scenario? Because there are so many standards. Which is standard to apply, sir? Simple. Do you have so many outfits in your wardrobe, but do you wear everything at once? No, you have certain functions, certain events, only during those you take those out. Similarly, we don't apply all the standards everywhere. Wherever we need. For example, now I have to accept a new client has come. A new client is sitting in front of me. If a new client is sitting in front of me, how should I accept, sir? Experienced auditor will know what questions to ask. Should he take it in writing or no? But if a new auditor is sitting, who will guide him? No one. If there is no one, don't worry. Standard says, Jiska koi nahi kuda, I am only kuda here. I will tell you what to do. And open your wardrobe. When you go for wedding, you take your outfit. No, new client has come, open the wardrobe, take SA 210 and keep it and see what SA 210 is saying. So in each and every scenario in practical life of audit, standards are important. It is kept in your drawer. Which standard to take depends on what situation you are in. Clear? Basically, standard is giving you like a guideline as to how you should go ahead. Understood? Clear? Yes, it is like in traffic junction, they will tell you, go straight. If you go straight this place, you take right this place, you take left this place. Nobody will tell you take right only. It is your decision to take right. We will give you signboards. The standard is like signboard. These are the options available for you. Which option to take, standard will not tell that. Then it will not become a standard. It will become a law. Understood? It will become a law. Now you're following what has been told. You're not deviating from that. But in audit, you can deviate from standard also, provided you have apt reasoning. Understood? You have apt reasoning there. Right, sir. So what I should do in SA 210? Preconditions we have to check. Two things we have to check here. Whether preconditions are present or no, and is there agreement between client and auditor. Only two things in SA 210, boss. Only two things. What is that? Preconditions are there or no? Second one is whether there is a common understanding or no. If there is misunderstanding, we won't be able to work. What I tell and what you perceive, if there is a difference, we won't be able to work. So what are these preconditions? So very important concept. Whose responsibility is to prepare financials? Management. So first of all, we have to see whether whatever framework is there, is it acceptable for me? Client will come. Client has a company. He wants companies at compliance. Is it acceptable for me? What if I'm not an expert in company compliances? Should I take it? No. So first point only is not relevant for us. Clear? Now, let us say I am expert in direct tax and the client wants direct tax advice or consultation. Is it acceptable for me? Yes. Take it. Yes, I am not expert in trust, sir. One client has come and told, sir, do audit of trust. Is it acceptable for me? No, sir. Clear? Second, obtain the agreement of management. Obtain the agreement, not just ask. In writing, you take that it acknowledges. What do you mean by acknowledge? Accepts and understands its responsibility. What responsibility? Preparation of financials. Internal control is their responsibility, and they will provide us all information, additional information, unrestricted access. Very important point. Unrestricted access where? To persons within the entity. That means for employees, I don't have to ask management permission if I'm asking questions to employees. You have managers in your firm, you have employees in your firm, security guard you have. I can ask him without management's permission because you have given it in writing. I will give you unrestricted access. But if I have to talk to debtor, if I have to talk to bank manager, should I take management's permission? Yes, because they are not internal entity people. They are external people. They are not within the entity. They are outside the entity. Creditor permission I want to take. Management's permission is required. Debtor I want to talk. Management permission required. Bank I want to talk. Management permission required. Unsecured loan. Unsecured creditor. Management permission. Without their permission, you should not do it. Understood? But within the people, within the entity, if management comes and said, you didn't ask me, I don't have to ask you. Why? You have given it in writing only. Clear? One conceptual question, if they ask in the exam here, no. Students will go and write, management's responsibility is to give us unrestricted access. They remember only unrestricted access. And they'll mess up. Unrestricted access only for internal people and not for external people. External people, you still have to ask permission. And this is reflected where, sir? Where? Sir, written representation is there. External confirmation, SA 505, there they have told, if management refuses to give you permission, there's a topic. Reasonable justification should be given. If justification is not there, you consider your reporting responsibility. Understood? Why that reference is there? Because of this one. Connection. Understood? Yes? Okay. Next, agreement on audit engagement terms. So there should be a letter called as AEL. What is AEL? Audit engagement letter. In this, there should be some contents. What are the contents? Objective and scope of whom? Audit. What is my objective? Reasonable assurance and reporting, and put your scope. Then, auditor's responsibility, management's responsibility. Clear? Then, identification of AFRF. Which framework is applicable here? Clear? Is it Companies Act? Is it GST? Is it income tax? In income tax, what is applicable? So write it. And then reference to expected form and content. Sir, the word expected is very important. The why am I using this expected is actual may be differing. Today, what I tell you, and after 1 month, whatever report I'm giving, there will be a difference. Why? In that 1 month, information can change. I might get to know a lot about you. Yes or no? So there will be a lot of chip and chop of information and behavioral patterns where I may not be able to give you exactly what I told you. So that is why expected form and content you tell, and also tell them it will differ. It may differ from its expected form and content depending on the circumstances. Clear? Because some client will come and ask you, sir, so you will give report pakka, proper report you will give? I will give you everything, sir. All the books of accounts, everything I'll give you. You will give me good report? This is a question of a client. What will you answer now? Huh? If the documents are good. Sir, you should tell the client, I will not assure you that good report will come. But depends on the circumstances, depends on what I find. If everything is fine, I can give you that. Clear? Now, you know what a client will tell? Sir, pakka information I have. Full, no lies only, sir. You will tell. You will tell. I should know, no. I should get to know. Yes or no? Only then I can tell. Because ethics for you is different, ethics for me is different. Ethics is subjective. Clear? Right. Sir, what happens if preconditions are not there? Discuss the matter with the management. Why? Why are you not giving me in writing? Why are you not giving me access? Why don't you want to give me information? Discuss with them. Clear? If possible, do not accept. If it is not present, sir, if you feel justification is not there, don't accept it. Clear? Right. When will you not accept? That's a question. Number one, if auditor has determined that FRF is unacceptable for me. Sir, if FRF is not acceptable, don't accept the client. Meaning, I am a company compliance expert. You come with a direct tax. You want direct tax matters. I am company compliance matter expert. Should I take up your audit? No. Why? FRF is not acceptable to me. If you have a dental problem, you don't go to cardiologist. Yes or no? Logic. Next. If the agreement of the management is not obtained on matters relating to responsibility of management, don't accept. Sir, they are telling, we will not give you a responsibility in writing, but we will tell. We are responsible for it. Now you ask them, give it in writing, no? And if they say, sir, writing, don't want. But I'll tell you, what will you do? Don't take only. I had a client like that. I had a client where they told, sir, don't worry, sir, everything will give. I told, give it in writing. Sir, writing and all, why, sir, you don't trust? No. You will not trust. Why? Tomorrow if something happens, blame is on me. Where is the proof? Tomorrow you can turn your side and tell, who are you? I didn't tell you only. That's why take it in writing. If they don't give it in writing, don't accept. Clear? You don't want such clients. Now clients will ask, sir, you don't trust me. These type of dialogues they will put. You be very careful. You be very sure. I want it in writing for my record purpose at least. Clear? For my now there also they will tell, no sir, I have given word. My word means word. Your word is word, sir, but I want it in writing. Clear? In these two situations, don't accept it. Right. Sir, limitation on scope prior to audit engagement acceptance. Very good. Before I accept only, you're putting limitation on my scope. Don't do this, don't do that. Should you accept? Should you accept? No, do not accept such limited engagement. Why? Why? Reasoning, you are an independent auditor. Nobody should put a restriction on your scope. They can't tell, don't talk to debtor. Don't talk to my employee. Do only what I say. Boss, I am not a servant. I am not your servant. You didn't employ me. I am a professional. You give me my fees. I will do what I want in my audit. Did I come and tell you how you should prepare books of accounts? No. Did I interfere in your responsibilities? No. Don't interfere in my scope. Let me do my work. If you're not letting me do my work, no problem. I will not do only. You appoint someone who will do things for you. Clear? Right. Acceptance of a change in engagement. Sir, sometimes management will come and tell, sir, can you please change the engagement or the approach you are working? Can you please change it? Should you change? The answer is, don't tell directly no. Ask them why. What happened? There could be reason, sir, I actually misunderstood what you told and then I told yes. So I didn't understand what you told. Now can you change? Now can you change if your client has misunderstood your words? Yes, sir. Because what you talk, what they understand could be different, right? So if they ask you to change, what is the situation, sir? Before completion of the engagement, management is requesting the auditor to change to an engagement which provides a lower level of assurance. If it is going to give higher level of assurance, I will accept happily. But if it is giving lower level of assurance, I should think now. So what is the reason for such things, sir? Number one, change in the circumstances affecting the need of the service. Law got changed. Business got changed. Sir, suddenly Corona came. Yes or no? Corona is a circumstance. No, I was thinking I will take up physical audit of inventory, and therefore I will come to a conclusion. Corona happened, lockdown happened. Can you travel? No. Now the management is saying, sir, because of Corona, traveling is not possible. So I will give you only these documents, sir. Can you please give opinion on these? Now, opinion on inventory, when you go and watch the inventory versus opinion on inventory with papers, which is more confident? Physical verification. But due to the circumstance, can you go there? No. Now you should accept the change of engagement which provides a lower level of assurance. Is it valid? Yes, it is valid because of the circumstance. Number two, misunderstanding as to nature of audit or related services. I told something, they understood something. Now I'm working, they got to know that, and now they're telling, oh, sorry, sir, I misunderstood. Please don't do this, do that only, other things. Now, when there is a misunderstanding, it is a reasonable basis for you to change. Because there is no point in forcing someone. Clear? If they have misunderstood your scope and now you're supposed to do something else which provides lower level of assurance, absolutely reasonable. Third one is not reasonable, the restriction on the scope, whether imposed by management or caused by circumstances. Sir, if management is imposing restriction, should you accept such engagement? No. Why? It is a limited engagement. Those things don't say. Sir, management side, they are coming and telling, don't do physical verification of inventory. Why? Because management said so. Boss, I will not do it. I will not do whatever your management says. This is what I'm supposed to do. No, sir, we will not give you information. What will you do now? Don't accept such engagements. Don't accept such engagement. Leave it. Withdraw it from that day itself. Don't give any opinion. But what if I have to give opinion, sir? Give disclaimer. Tell, I am not responsible for inventory evaluation. Outrightly tell and come. Clear? Next, should I accept or no? If there is a reasonable justification, you accept. If there is no reasonable justification, don't accept. Now my question to you, listen. Under old terms, you worked under old terms. No. Report is under what terms? Old terms. Now you're changing your term. Your procedure will change. Examination type will change. Report will change. So now you have to give a new report. But be careful, in the new report, do not talk about old reports. Do not talk about old procedures. To remember this, remember it like this. With your future, don't talk about your past. What you have done in the past, don't talk. Clear? What you have accepted before, don't talk. Because it's a new thing. New engagement for you. So you should not confuse people. Now imagine you both to people. You will understand, management will understand. What will people do? They're telling what is this old engagement, new engagement, here you have done this, there you have done that. So to remove the confusion, don't mention anything about, don't give reference only. Don't even utter anything. Give only about new things. Clear? Yes. Agreement on new terms. Since I have agreed on new terms, now should I have a new engagement letter? Should I have a new engagement letter now? Old engagement letter was based on old terms. Now the terms are changed. New engagement letter. Right? Recurring audits. What does recurring audit mean? Same auditor, I am continuing in the next year. Every year I am only doing the audit. Meaning 2024-2025. Financial year 24-25, Mr. K was auditor. Financial year 25-26, Mr. K was the auditor. 26-27, still K is the auditor. My question to you, 24-25, there was one agreement. Engagement letter was there, where scope, terms, remuneration, everything was fixed. Every year should we give this? Every year should we have this? Is a question. Answer. If there is a change in the terms, it makes sense. Yes or no? For example, now in the class, if I say every day, first day of the class, I come and tell 7:30 to 1:30 is a session. If I say this, first day only I told, every day should I come and tell? No. But if there is a change in the timetable, yes. There is a change in the timings, yes. Clear? So in the recurring audits, do not change the terms or do not have new letters unless there is factor here. See, the following factors may make the grounds for you to revise the terms. Where, sir? Indication that entity has misunderstood, revised or special terms, change in the management. Sir, old management gave me different rights. Now the management is different. Their ideology will be different. So they will change the terms now. Third, fourth, ownership changed. Sir, is there a difference between management and ownership? Is there a difference between management and ownership? Of course, there is. There is difference between management and ownership, sir. So sometimes it could be same, but sometimes it could be different. Owner would be different. He's not interested in managing. So he'll appoint someone and give them certain rights. Clear? Significant change in nature or size of business. More branch offices you have put. You had only one office now. Now you have put more than one. Sir, I need to audit everything. Terms will change. Will remuneration be same? Never, sir. Clear? More branches, different types of businesses you are putting. You are scaling your business now. Clear? Earlier you used to teach only, let's say now you are running an academy, Loose Tools Pro. You are running an academy. Sir, initially you used to give only CA coaching. Now you are giving CS, ACCA, CPA, CFA. You are scaling your business. Now in those cases, my work also will increase. So terms should be different. Change in legal or regulatory requirements. Sir, from VAT and excise, we got GST. Yes or no? From AS, we got Ind AS. Suddenly law changed. Yes or no? So we have to revise our terms because the companies Act 1956 to 2013. Terms are different now. Reporting requirements will be different. Clear? Change in the financial reporting framework adopted. AS to Ind AS. Because Ind AS says you have to follow like this. Now I'm supposed to change my reporting requirements. Change in other reporting requirements, like for example, CARO. From CARO 2016 to CARO 2020, reporting requirements is different. Clear? Right? Okay, sir. Now come to audit quality. Now here we are doing only one thing which is applicable for another thing. Clear? In audit quality, we have two things to discuss. Two standards we are yet to discuss here. SQC1 and SA 220. Both talk about same. Both talk about same thing, but coverage area is different. What is this coverage area, sir? Both talk about leadership quality, monitoring, engagement performance. Everything is same. But when SQC1 talks, SQC1 is talking for the entire firm. SA 220 talks only for one particular engagement. For example, if I tell 7:30 to 1:30, I am specifically talking only about this batch. But if management says 7:30 to 1:30, they are talking for the entire academy. So they are SQC1, I am SA 220. I am talking about specific engagement. They are talking about firm engagement. Whatever firm takes up, SQC1 is applicable. Clear? Yes or no? Okay. So SQC1 is applicable for firm. The word used is firm. Firm means which firm? Auditor's firm. Engagement means what? Whichever specific engagement you are taking up, that partner should be liable. Here firm is liable for quality, right? Which is why in SQC1 they use the word firm. In SA220 they use the word engagement partner. You may have 20 partners, but in SA220 not all 20 is liable. Mr. K, who is the engagement partner, only that fellow should take care of the quality of that engagement. Understood? Now let's say in your academy, Loose Tools Pro, you may have 20 teachers, but one batch I am teaching, no. That one batch I am teaching, I am responsible for the quality of that. But for the quality of academy, am I liable? Including me, there are other people also who will be liable for that. Understood the clarity on it? Difference, did you understand why SQC1 and SA220 is there? Basic idea of basic confusion students will have here is, sir, both talk about the same thing. They are also talking about engagement performance. Here also they are talking about engagement performance. In fact, content is very similar. In that paragraph also content is very similar, but where it is applicable, that is the difference here. SQC1 applicable for audit firm, SA220 applicable for a specific engagement. Right, sir. Leadership responsibilities in case of SQC1. Then I will talk about SA220. Okay, in SQC1, who should take up the leadership responsibility, sir? Firm's CEO or firms we call managing partners. Those who watch Suits, no, they will understand managing partner term. Managing partner is the one who is supposed to take all decisions. Clear? Right? In LLP, we call them designated partners. Yes, because all partners can't take all decisions, no. So there will be that boss. He is liable for quality. Whereas in SA220, who is liable? Engagement partner alone is liable. Clear? Right. Next is ethical requirements. Sir, what is ethical requirements? Integrity, IPCCO, integrity, professional competence, confidentiality, professional behavior, objectivity. These things firm also should have. In SA220, partner as well as team. Clear? Partner as well as team in SA220. In SQC1, firm as well as people in the firm. Okay? Right. So what should you train them? You should tell them in both the cases. You should tell them if there is any threat to independence, report it to us. If you have any threats to independence, report it to us, because client may not come to us, but you are working. Client may come to you and tell, sir, you want something? Come, we'll give you. You want loan, we'll give you. You want employment, we'll give you. If there is any threats to independence, report it to us. Clear? What you do, take appropriate action to eliminate them. If elimination is not possible, withdraw. Don't take up such work only. Clear? Right. Acceptance and continuance of client relationship. Yes, sir. You're talking about normal partnership or LLP? In LLP, designated partners will be there, no? You're telling they're absent. Absent means won't they come only? In case of death or insolvency, your LLP Act clearly says you need to have designated partners for sure. Yes. So in case of death or insolvency, you will appoint someone else. That fellow will be liable. You are talking about, sir, today he expired. Now they are taking some time to appoint him. In that place, who is liable? There will be one designated partner at least. Yes, that fellow will be liable. There is a minimum 2 designated partners needed. Clear? Now I will put more complication in your head. What if both of them dies? Possibility is there. No. What if both of them dies? Sir, in LLP also they have told, if you don't mention who will become designated partners, every partner in the LLP, they'll take turns. They'll have their terms. They'll take turns and become designated partners. At that time, whoever is DP, he will be liable for us. Clear? We can't leave that blank. Because in that case, no, it is easier for us. Understood? Clear? Good question, but next. So here, 2 things we have. One is to accept the client. One is to continue with the client. So accept means new client. Continue means I have a client. Should I continue or no? Existing client only. So in that case, these points are important. Integrity we have to evaluate. Sir, what is integrity? Honesty of the management. Are they lying? Are they giving us wrong information? What is their reputation? Clear? How do I know about integrity? These are the points. Outside, sir, goodwill. People talk about them, no? About the client, people will talk. Imagine I got to know I have a client. I told one of my friend, hey, I got this client. That client you got, gone. Reputation. Now, because of reputation, I'm getting to know their integrity. Yes or no? Now, when I ask him why, what happened? No, 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 nothing, nothing. Good client. Now, tell you what, fraud. He will not give information properly. He'll tell you everything. I have this much business. I have that. Nothing is there. Simply fraud. Trail. That time, am I not getting to know his integrity outside? Reputation, yes, sir. Nature of client's operation. His business will tell me whether he's truthful, honest, or no. Understood? Clear. Information concerning the attitude of owners. Sir, what if their attitude is negligence? Any mistake they get to know, I won't care, sir. For me, my attitude is this only. Behavioral aspect will tell you how they are. Clear? So here again, observation becomes very, very important. Clear? Whether client is aggressively concerned with maintaining the firm's fees as low as possible. Sir, there is nothing called as cheap and best. If you are good and you're charging more, nothing wrong in that. But if they are asking you to charge less, now you will tell, sir, you're actually, I'm charging for my time. I have to work. Don't worry, sir, work less. Now, if you're asking me to work less, what type of client you are? Talks about your integrity, Whereas there are some people, sir, money is not a problem, but I want quality. There I get, these people will give me whatever I want. Understood? Imagine now I as a teacher, if I want to go and teach somewhere. Now, you will ask me, how many hours do you need to teach audit, sir? Right? Now I tell, sir, regular class, I take around 100 to 110 hours. 60 hours. 60 hours you finish. 60 hours what to finish? Right? In fact, I will not finish audit. Audit will finish you. Yes or no? Now that is it talks about integrity of the management. Clear? If they are trying to keep as low number of hours as possible, what does that mean? What is the meaning of this? Do they want quality classes or do they want to finish off classes? Finish off as soon as possible. Clear? Quality who wants, sir? Quality who wants? Clear? Now what if, sir, attitude of them? What if they say, don't worry, if you say, I won't take it up. Don't worry, sir. People like you, a lot of people will come. No problem. Now that talks about attitude. Should you accept that engagement? No, you take a call. That's what subject is about. Subject will tell you these are the indicators. You take a call whether you want to accept or no. Indications of an inappropriate limitation on the scope. Appropriate limitation, I understand. Inappropriate limitation is what I don't want. For example, I want to talk to debtor. Management will tell, sir, don't talk. Why, sir? Please, sir, don't talk. Why, sir? Sir, debtor is in coma. I understand. Now it is appropriate limitation. Yes, select some other debtor. Second situation, don't talk. Why? Because I'm telling you. Appropriate limitation, inappropriate limitation. Inappropriate limitation. Appropriate limitation, I understand. Sir, we are not in talking terms. Please don't talk to them. Appropriate limitation. If they say simply, sir, I am telling you why you want to select some other debtor, inappropriate limitation. Clear? Yes. Indications that the client might be involved in money laundering. What is money laundering? Changing colors. Clear? Changing colors. But we have only two colors here. Black into white into black. If you are involved in money laundering and criminal activities, sir, don't accept such engagements. Why? You might be also involved in that. Because CA, when demonetization happened, people were looking at CAs as if they have done big crime. Because they know that, they are considering everyone that 2000 money note is gone, black money is gone. CAs are responsible. CA knows where is black money, how much black money they have, what they have done, everything. In fact, how will they know our limitation? Management doesn't tell us everything. Yes or no? They will not tell us. Sir, even in movies, that particular character has been portrayed. In Shivaji movie, when he says, call all auditors, they will know. Auditors, accountants, drivers, they will know. Yes or no? So don't get involved only now. If you know that these fellows are involved in money laundering, don't involve. Okay. Now don't ask me questions that, sir, how do I make money if I don't take up all clients? Boss, we are dealing with ethics here. We are dealing, I can't tell you accept and do whatever you want. Your call. Subject says don't involve. You want to involve, you involve. That is your call. Clear? Ultimately, you will be both beneficial as well as aggrieved party. Right, sir. Next, competence of the team. Your team should be competent enough. You take the assignment, but your team is not good enough. Clear? You take the assignment, your team is not good enough. Imagine you buy a team where it is not competent enough to go and play cricket. What will happen? Gone. Embarrassment. Yes, you go and stand in front of the client. Your team, sir, go and check TDS. TDS now. What do you mean by TDS? In front of the client, it is an embarrassment. Clear? Yes or no? Go and check books of accounts. Books of accounts means competency should be there. Ability to audit should be there. Clear? Sorry? No, we are talking about competence of the team. Competence means capability of the team. Whether they're able to do the work or not. Time is secondary. Knowledge is important. See, for example, audit marathon. Okay, let us say now student said we want marathon. You called some person who is not competent to take marathon. Now you tell take marathon. Okay, I will take. Imagine management gave. He'll come here and audit means 1 minute. Okay, I will see what is audit. Tell me, 5 minutes will sit. 6 minutes. What will you do? Honestly, tell me what will you do? Huh?
Raise ticket.
Raise ticket. Ticket you will raise. But what is the reason? What will you put there? Won't you go out of the class? You will not just go out of the class. You will tell outside also. No, don't go there. It's or no. Who is getting embarrassed now? Not the faculty. Management. Clear? So when choosing, management should choose, is he competent? That's exactly why you have interviews. That's exactly why you have aptitude test. With influence, if you go, no, competency is not shown there. Clear? And when the job comes, boss, I have a team. I have a team. It's like memes and all, no? You recently it happened. Recently I saw a meme. Yesterday or day before yesterday, up there was a tiger. Below there was a dog painted as tiger. Clear? If I name the player and the team, no, there will be one riots. So I will not name it. Clear? This person in national team, this person in franchise team. Clear? Now in that case, imagine you have some competency in your particular team and that team is not performing, sir. He is not competent enough. Your team member is not able to audit. What is the point of having such team? You won't be able to perform. Excuse, even quality is not there only. Clear? That's exactly why in firms, in Big Four or in any firm when you go, no, they evaluate your competency. Influence is there, but still you have to give interview. They'll tell, they can tell, no, at least one round, I need to know who you are, what you know. Imagine you don't know GST only and I put you in GST audit. You don't know direct tax only, I put in direct tax audit. Who's getting embarrassed now? Whose quality is gone? They'll not talk about you, they'll talk about firm. Clear? Compliance with ethical requirements. My team member is, sir, for him, there's no familiarity threat and all. If anybody calls, imagine he's a drunkard. Okay? Now, personal life, I can't do anything. Now, client will come and tell, you want anything? And I tell, okay, we'll go. My team member during audit, he is getting compromised. Do I need such assets in my team? No. Clear? So, before accepting, you should consider these things. Clear? Either before accepting with the new client, so this is new client. Second, whether to continue with the existing client, and when considering of a new client, new engagement with an existing client. What do you mean by this? First point, client is absolutely new. Second point, client is there, business also same, but I'm continuing. Third point, same client, new business. Yeah. First time, Loose Tools Pro came to me, new client. First year. Second year, continuance. Third year, Loose Tools Pro from CA, they are putting CS also, they are putting CFA also. New engagements. Clear? In all three cases, you have to follow SQC 1. Clear? Is there any conflict of interest between the firm and the client? What do you mean by conflict of interest? Sir, I have stake in that particular client. Should I accept it? Resolve it. Properly resolve before accepting the engagement. If you want to accept it, leave away your interest and then accept it. Clear? Next. Human resource. What do you mean by human resource? Staff, articles, experts, employees. If you are appointing them, have proper policies and procedure where recruitment, performance evaluation, competence, career development, for all these things have particular policy and procedure. Yes. How does this affect the financial information? Because of this only competency will be affected. Because of competency, my quality will be affected. So if I don't hire right people, I will not be able to deliver quality. And to hire right people, I have a department. Those are called HR. So I have to evaluate them properly. What if you have a good competent person, but you are not giving him promotion? You are not giving him the right value there. What will he do? He will go to competitor. Now you have to settle for less competent person, which will affect your quality. So have these type of things. And performance evaluation means, sir, there could be one new talent coming up. He's a new talent, extremely good. You appoint him, but initially he does mistakes. Will you throw him out? No, you will not replace him. So what you will do? Evaluate his performance, train him, develop him. Automatically he will become good. Because of course you should know his talent. Randomly you can't do for everyone. Clear? Then we have engagement performance. What do you mean by engagement performance? Actually performing. In that, what am I supposed to do? Brief the team. What do you mean by brief the team? Sir, in cricket, before playing, there is a huddle. Yes or no? That's called briefing. At the end moment, they'll tell, don't do this, these are the things you have to do. So before you enter the audit, just tell them, see, this is what you're supposed to do. Give a brief about it. Don't sit and talk hours and hours together. Give a briefing as to what is our responsibility, what we're supposed to do. Process for complying with standards. What is our process? Supervision and training. What do you mean by supervision and training? My employees, I should train them. Clear? I should train them. I should monitor them, what they are doing. Time to time meetings, hold meetings, check their reports. Methods of reviewing their work. How should I review, sir? Face to face should I review? Online should I review? Communication, how should I make it? What type of review should I have? Should I have 3 people? Should I only do it? In our office, that is where I used to do articleship, our review was senior article will check, manager will check, boss will check. That was the process. Clear? Appropriate documentation. Documentation means proof. Have the right documentation. Clear? Sir, what if there is a conflict? Confusing matter, difficult matter is there. Should I take expert opinion? The answer is yes. You have to take expert opinion on what matters. Difficult or argumentative matters. So that expert could be inside the firm or outside the firm, not an issue. Within the firm or outside the firm, not an issue. Significant judgments should be reviewed by, very important topic, engagement quality control reviewer. We call it EQCR. Engagement quality control reviewer. Sir, it is mandatory for all listed entities. EQCR is mandatory for all listed companies. For other engagements, firm should devise criteria to determine which cases requiring performance of engagement QC review. Meaning, for listed entities, mandatory. For others, see, as a firm, I am an audit firm. Okay. Now, you are a listed entity. For you, I have to appoint a QC reviewer and have to check it. Now, others, let us say these are unlisted entity. Now, for them, it is not mandatory. Now, in my firm, I have to devise one policy wherein which type of clients should I do quality control review. Firms should devise. Okay, not the clients. Clear? Assembly, sir. Important point here again. Assembly. What do you mean by assembly? Arrangement. Arrangement of audit files should be done within 60 days from the date of auditor's report. Clear? Then, in case of audit engagement and in case of other engagement, as appropriate. Now, engagement documentation is whose property? Always auditor's property. Can he share it with others? Can he share it with others? Never say no. In audit, never say no directly. It is his discretion. It is his choice. Like how Neha Dupia said, it's her choice. Auditor will tell, it's my choice. Clear? If I want, I can. Reason, it is my property. I have the right on it. But if you're sharing, SQC1 says, ensure that it is not going to compromise your quality. It should not undermine your work. It should not make your work invalid. Imagine you give original copy to your client and client loses it. What will you do? How will you prove quality now? Gone. So share it, no problem. But when you're sharing, ensure the quality is not compromised. Clear? And next one, so retention period. How long I should retain this documentation? Minimum 7 years. From where? Audit report date. Right? And finally, we have monitoring. What is the purpose of monitoring, sir? Professional standards and requirements should be met. That's why we monitor. Whatever quality control requirements is there, we have to meet that. Whether the system has been designed effectively and implemented. Design is different, implementation is different. You having timetable is different, following the timetable is different. Clear? Timetable is a monitor. You check where you reached, how much you have studied and all. Clear? Where the firm's quality control policies and procedures have been applied, the reports should be appropriate. So 3 things I see in monitoring. Number 1, requirement should be met. Number 2, should be implemented properly. Number 3, report should be appropriate. Same thing is applicable for SA 220 quality control. There it is firm, here it is engagement partner. See here, actions of engagement partner. There it was actions of firm. Ethical requirements, engagement partner. There it is firm and the team. Right? Then acceptance also is same. You know here what they could have done. Here they find, I feel here when they came and wrote this content, no, they were lazy. Because they said same is on lines of SQC1. Technically everything is SQC1 only. Just terms are different. Right? Assignment of teams, which team? There it is not team. There it is firm only. Clear? Here engagement performance. It is whose responsibility? Engagement partner's responsibility. And here also for listed entries, quality control reviewer is applicable. Clear? Whether he has been properly appointed, right? Whether any significant matters you get to know, have you discussed it with the reviewer? This is important. Till the review is over, you should not put any date in your audit report. After quality control reviewers report only, you have to date your audit report. That means reviewer's date comes first, then comes your audit report, not the other way around. Don't finish off your audit report and then ask for review. Clear? Sir, if there is any difference of opinion between the both of us, should we solve it? Of course, sir, you should solve it. If there is any difference of opinion, you should solve it. And then comes monitoring. Point number 2, put a star mark here. Could be asked as a question here. What should you document, sir? Engagement partner should document the following matters. Number 1, issues identified with what? Compliance. Was it resolved or no? Number 2, conclusions on compliance with independence requirement threats. Whether have you solved it or no? Third, regarding acceptance and continuance, whether preconditions are present, letter was given properly or no, the nature, scope and conclusions resulting from consultations in difficult and your confusing matters, complex matters, you should take consultation. What is the result of that? That should be documented. Clear? Listen, what confusion you will face here is they might ask you monitoring aspect of SA 220. Monitoring aspect of SA 220, but in the monitoring aspect, they are asking about documentation. Clear? But when you are reading the question, you have to read question in such a manner that you are talking about what? SA 220 is the crux point for us. If they are asking question on this. SA 220 and under SA 220, they are asking about documentation. Don't focus just on the documentation word, because student will focus on documentation. Go to SA 230 chapter number 6 and directly write documentation answer. Focus on SA 220. If there is any word or any line that they're hinting at SA 220 monitoring aspect, then these are the 4 points that you have to write. Understood? Clear? Yes. With this, your ethics chapter also is done. So our target today is chapter 1, which is done, chapter 11, chapter 6, bank audit, we have chapter number 10, clear? And one more, Caro. Caro we have to finish. We'll take a 5 minutes break and then we'll continue with Caro. We'll be finishing Karo. 2 chapters are done. 1 is done. 11 done. Karo will be doing. 6 will be doing. And then we'll be doing bank audit. Now, last priority in marathon would be your different entities and items of financial statements. Clear? My first priority goes to standards. Only if I finish standards, I'll be touching upon those things. Clear? Some of the cases I'll be covering, your cooperative society will be covered, government audit will be covered separately. So that 9th chapter, different entities, I am dividing it into 3. 9A, 9B, 9C. Cooperative society, government audit, other entities. So government audit and cooperative society separately will be covering. Other entities, I'll give you a general framework as to how you have to think if you're writing your answer. Right? But other things, standard wise, will be covering the important ones. Clear? Cool. Right, let's start. Essay 230, documentation, small standard we have to finish. Definition of documentation. See, we knew what is documentation. What is documentation? Keeping a record of it. Correct? You have to keep a record of it. What is documentation? Refers to record of what? 3 things. Procedures performed, evidence obtained, conclusions reached. Again, 3 pillars. Documentation has 3 things. Number 1, procedures performed. Whatever audit procedures we have performed, we'll keep a record of it. Why? We'll talk about it later. Number 2, evidence obtained. And third one, conclusions reached. Now we'll talk about why. Why we have to keep a record of these 3 things? What is the purpose of keeping a record of these 3 things? Huh? Tomorrow if someone asks, who is that someone? Users will not ask us. Authorities. How have you performed your work? Show me. Where is the evidence? How did you reach this conclusion? On what basis? What is the evidence that you have to reach this conclusion? Based on that, we'll have to have this. If this is not there, you won't be able to prove yourself on what basis you have reached your conclusions and what is the evidence. For that evidence, we need procedures. So if you remember the cycle, procedure, evidence, conclusion. Yes or no? All those 3 things will come under Essay 230 as documentation. Right? So objective is sufficient evidence or record for my report. On what basis I have given that report? For that, Essay 230 comes into the picture. And evidence that audit was planned and performed as per essay. So I have not done anything wrong. I have done everything right. To prove that, Essay 230 is important. What is the purpose? I have to assist my team in performing what? The audit. So that when I am not there, the team is performing. Clear? Now imagine you work everything and you don't tell anyone. Suddenly you left the team. How will they manage now? Not know. So for that purpose, documentation becomes important. Assisting the members of the team to direct and supervise and discharge review responsibilities. Direct means guide them. Supervise, monitor them. Just don't give and go. Clear? Sir, accountable. We can hold them liable. Because of documentation, we know who did what. So we can hold them liable so that in case tomorrow if anything goes wrong, we can call them and ask what happened. You did this, right? You did this work, what happened? Where is the proof? And if there is no documentation, proof is not there, it will be difficult to hold people liable. And then blame game starts. I did not do it, someone else did it. He did not do it, someone else did it. So if you have a documentation, it is clear-cut definition that this fellow was responsible for this type of or specific type of work. Clear? Then retaining record of matters of significance to future audits. In future, not only for the team, anybody who is doing this audit, it will be helpful for them. Enabling the conduct of quality control reviews and inspection as per SQC1. SQC1, where is it applicable? SQC1 is applicable for whom? Firm. So whenever firm wants to inspect, can I say in case of internal inspection? In case of internal inspection, it will be helpful. Yes. Last one, external inspection. Sir, what is this external inspection? Internal we got to know. External inspection means there is something called as peer review or regulatory inspection. What if SEBI says, show me your work. NFRA says, show me your work. ICA says, prove me that you have worked it. So external inspection, whenever they come, it will be easier for me here, right? Form, content and extent. FCE, most important topic in Essay 230, form, content and extent. Why do we need to prepare documentation, sir? We got to know these are the advantages, but why do we need to prepare? Sir, if an experienced auditor also, if he checks this, he should be able to have connection, understand what I have done, NTE of procedures, what I have done, nature of procedures, timing of procedures, extent. Nature means what are the type of procedures. Timing means when did I do it. Extent means how much did I do it. An experienced auditor should be able to understand my work. Results of procedures performed and the evidence obtained. What results I got from those procedures and what evidence I obtained. Significant matters arising during the audit and conclusions reached. Sir, in the audit, I will have so many things to handle, but I can't write everything. So whatever is significant for me, I will keep a record of it so that when the auditor reads this, okay, these are significant matters. Now, next, when I am auditing, these have to be very, very careful. For example, client putting limitation on the scope with unreasonable justification. Clear? Keep a note of it so that they'll know next time when they're going, these type of things they will face. Clear? Right. Further, in documenting nature, timing of and extent of procedures, record. Meaning for this point. For first point, record what? Characteristics of items and matters tested. Which matter you tested? Is it expense, income, asset, liability? What are the characteristics? Is it a judgmental based one or is it factual based one? Right? Who performed the work? Who reviewed the work? Performed by, reviewed by. Work done by, work reviewed by. In many firms, they have this policy only. Before they sign off, they will write who performed the work, who reviewed the work, who approved the work. So that tomorrow, work was done properly, review was done wrong, filing was done wrong. Who do we hold liable? If you don't have documentation, we can't make them accountable. Right? So document discussion of significant matters with management and nature of such matters discussed. What have you discussed with the management and what type of matters? Sir, do you remember there's a standard called SA 260? Communication of key audit matters to the management. Yes, we should document. No, if you don't document, how will you go and communicate later on? Okay, and document how the auditor addressed inconsistency. If you have found any inconsistency, remember that you gave an example. You asked me a doubt. What if accountant has no knowledge about it? It is an inconsistency. How did I address it? I have to document it. Because, see, are you sure that client will remove that accountant now? Are you sure? No. Whether they'll remove or no, we do not know. What if they keep him? Next year also they will follow the same thing. But I am not auditing. Next year someone else will audit. Now in that case, if you document and keep, see, this was the inconsistency I found and how I addressed is like this. That way, it will help the other team members or the next member also to understand this is the complication you faced and this is how you addressed it. I will also do it. Clear? Right. Now, this is what in a form of the question you can expect. What are the factors which are going to influence form, content and extent of audit documentation? What type of documentation? Content, what should be, how much should be there, right? Those things will be influenced by these. Number one, size and complexity of the entity. If the entity is small, documentation will be required too much? No. But if the entity is small, but the business is very complex, not able to understand easily, do you need more explanation? Yes. Do you need more documentation? Yes. Nature of procedures to be performed. Sir, if the nature of procedure is easy and general, we don't usually document things. But if it is specifically only for this audit, I'm supposed to document and keep. Identified risk. Whatever risk you have identified, jot it down. Why? Any risk can be materialized. Any risk can affect. So note it down. So that next year also it will help. Significance of evidence obtained. Whether any evidence you obtain, is it important? What do you mean by significance here? Having value. It is going to affect my audit. Clear? Nature and extent of exceptions identified. Sir, what is this exception? Remember I gave you just now example of during lockdown, that COVID example, inventory valuation was not proper. Yes. Is that an exception? I did everything. Assets I checked physically. Fixed assets, tangible assets I checked physically. But before I checked inventory, lockdown happened. Exceptions? Yes, I will note it down. This year or this particular audit, I was not able to verify inventory because of COVID-19. Exception. Whatever exception you identify, note it down so that it will help you as well to form a conclusion. Clear? Need to document a conclusion where it is not readily determinable. In this case, explanation is more important than the text. Meaning, just I can't form a conclusion just on the basis of paper. You have a document, but just by looking at the document and reading the document, I won't be able to come to a conclusion. There, I need to put working in that, understanding I have to put. Like document A and document B, two documents are there. But just by reading that, I won't be able to reach to a conclusion. Now, I have to write in document A, this point is mentioned, and in document B, this point is mentioned. If I relate to that, it means so and so. Now, that readily it is not determinable. You have to explain it. Those type of explanation, write and keep. So that what if I face it again? Understood? Yes, sir. Clear? Okay. Audit methodology and tools used. What type of tools? Tools means methodology, techniques that you've used. Sampling technique. In analytical procedure, what tools you have used? There are 4 types: ratio analysis, trend analysis. What have you used it? Next. Audit file and assembly. We have to refer SQC1. I told you, you do that. This also is easy. There, 60 days is there, no? You have to assemble the files within 60 days. Same thing here, within 60 days of audit report. Retention period is 7 years. Same retention period is mentioned here as well. Right. So, documentation of 2 things: significant matters, significant judgment. Right. Now, should I document both? Significant matters, yes. Why should I document judgment? Why should I document judgment? Because judgment is yours alone. You thought of it. And that thought, if you don't write it, how will I judge? You have given me one answer sheet. Okay? You have reached an answer. Directly you have written one answer. Where are the steps? That is there in my mindset. Why will I give you marks for that? Document it. I should know how you have reached this conclusion. Whether it is a significant matter, whether it is a professional judgment, both you have to document it. Clear? So what are those matters which will give rise to significant risk? Number 1, results of procedures indicating financial statements could be misstated. Any procedure which is giving you a hint that I think financial statements are wrong. Like for example, you went and checked a voucher. Vouching you did. What did you do? Vouching. What is vouching? Checking voucher with the books of accounts. Now you did. There you found one error. That voucher is telling one thing. Books of accounts, it is recorded some other thing. Isn't it giving an indication that financial statements are materially misstated? No. Yes. Document that. This is a risk. So document that voucher is not fine, or vouching, in vouching, I found that the entry of this is not proper or improperly entered. Circumstances that caused the auditor significant difficulty in applying necessary audit procedures. Meaning what? Sir, I am supposed to do this procedure anyway, but the situation was so difficult for me to perform. I was not able to do it properly. So I took a lot of time to do it. That situation you have to record. Reason. For example, sir, debtor confirmation I am supposed to ask. One debtor confirmation I am supposed to ask. This is a big debtor. Now, with whom should I ask the confirmation? Debtor confirmation, from whom should I take? Debtor only. Now, I went to management. I found it so difficult to get permission from them. They were telling, come today, come tomorrow, do this, do that. So that difficulty noted down, because if it has happened to you, it will happen to your team also tomorrow. And they will be prepared now. When you document and keep, okay, for this debtor, when we ask, this is how they do it. We'll be prepared for it. Clear? Understood? It is like a teacher telling you, this is a trap in the exam. Be careful. That's something but documentation. What you write here is documentation. Clear? Findings that could result in modification to the opinion or inclusion of EOM paragraph. Now, EOM you will not understand now. Right? If you have read, you will understand. What is EOM? Emphasis of matter paragraph. What is emphasis of matter paragraph? What details you put in that? Details which are details which are already there, information which is already there in the financial statements, we put it in EOM paragraph. Information which is relevant to our audit but not in the financial statements, we put it in OM paragraph. In EOM paragraph, what do we put? Those matters which are already disclosed in the financials, we put it in EOM paragraph. Right. Next, documentation of professional judgment. Should I keep a documentation of judgment? Yes. What type of, sir? The rationale for the conclusions when the auditor considers certain information or factors considered as significant. Meaning here more than the text, try to understand the explanation here. What do you mean by rationale? My basis. My basis of my conclusion as to which information is important. Now, let us say I, CA Karthik, now I will tell this information is important. How do you know? You will come and ask me, how did you come to a conclusion that this information is important? Sir, this is the conclusion. Document and keep, sir. Why? The way you see, we want others also to see. So document and keep. That will be helpful for others as well. Okay, sir, look like this now, sir. Sir's perspective was like this. We can also think like that. Clear? Next, basis for auditor's conclusion on reasonableness of subjective judgments. Very good point. Management has put some judgment in the financials. Whether that judgment is reasonable or no, who should tell? I should tell. On what basis I have told whether management judgment is reasonable, that I should document. For example, let us say provision for doubtful debts, not bad debts. Provision for doubtful debts, usually they put 10%. They put what? 10%. Now, in the current period, they put 20%. I will go to management. I will ask, on what basis you have put 20%? Management will tell, on this basis we have put, sir. Now, if I find that reasonable, how will I explain next year? Yes or no? Because next year, imagine now you are auditing, you see last year 20%. Before that, it was 10%. But sir did not mention anything about it. On what basis sir would have not mentioned about it? Sir would have considered reasonable, but on what basis? Where is it written? Nowhere it is written. So in a documentation, if you maintain that and tell others, I found it reasonable because of these factors. Next time when you evaluate, you will also be understanding these are the factors I have to consider. Clear? Next. The basis of conclusion about authenticity of document. What do you mean by authenticity? The originality of the document. Whether I can rely on the document or no. On what basis you are relying? Document and keep it. Right. Completion memorandum is like summary. Whatever has happened in your entire audit, I can't maintain everything, so I'll maintain something called as completion memorandum or audit documentation summary we'll call. You can maintain it. What will you put in that? Significant matters identified and how they were addressed. What are the matters I identified and how did I address them? Okay, sir. Sir, ownership of the document, same. Remember SQC1 we studied? It is the property of the auditor. Can he make it available to others? Huh? No? Under? Our means? Under his discretion, he can make it available, but he has to keep one thing in the mind. He should not let his quality compromise. Clear? Yes? Okay, sir. This is your essay 260 audit documentation. Sorry? 230. Next, we're done with 1.11.6. Right. Let's talk about Caro. Company's audit report order. Caro 2020. Pakka important. Clear? One question I am expecting of 4 marks from Caro. Consists on an average 4 marks you can expect, but if you are getting more than that, wonderful. Wonderful. But read the question properly. Don't mess up Caro questions. Caro questions are relatively easier because it's more of one framework is there for you. If this is there, report. If this is not there, don't report. So don't miss out on these questions. Clear? Company's order report 2020, sir. Company's order report 2020, we have to report. Correct, sir. On what basis we are supposed to report? Sir, we have something called as audit report. We have something called as audit report. But in audit report, apart from our SA 700 series, we have something called as other reporting responsibilities. Have you heard? Other reporting responsibilities. Sir, if you have seen the original class, we had actually compared this with an actual audit report. We had taken one company's actual audit report and we had seen Caro there under other reporting responsibilities. Clear? We'll do that again so that it will be helpful for you to, for others also to understand. Let's take this is Hindustan Unilever's audit report. Okay, this is for financial year 22-23. Now here, if we go to contents, we will be seeing here statutory reports, financial statements, standalone financial statements. Right, we have independent auditors report here. Now in this, if we scroll below, audit report ends here. These are annexes, right? This is where we need annex number A. Now, in annex number A, if you see, refer to in paragraph 1 under report on other legal and regulatory requirements section. Now they are reporting Caro here. This is how your Caro reporting is done, right? What is the first clause, sir, or where is it applicable? Applicability is the one first you have to check. To whom it is applicable? Applicability is very easy. They will not ask question on applicability. They'll ask question on non-applicability. Because applicability says every company, including foreign company. Now, what is foreign company? Huh? Registered outside? Yes. Foreign company means registered outside. Business? Incorporated outside India, but having a place of business in India and doing business activity in India. Could be physical mode, could be electronic mode, could be any business, right? The moment you are incorporated outside India and doing business in India, you are a foreign company, and that also we are covering here. But there are certain exceptions. Exception number 1, banking company. Why? They have their own reporting responsibilities, so we will not be bothering about it. Second is insurance company. Same logic as banking company. Third, Section 8 company. Why? Why Caro is not applicable to them? Not for profit, charity. So definitely there is no profits involved here. Clear? Next is one person company. You run the business, that is good enough for us. Clear? For you, exempted. For one person company, many things are exempted. Like for example, AGM, annual general meeting. What will you do? Only one member. Minimum also one, maximum also one. Every day if he talks to himself, it is meeting only, no. So why we have to put a separate concept called AGM for him? So if AGM is not there, notice is not applicable. Many things are not applicable for him. One of them is Caro. Then we have small company. What is small company? 2 clause 85 says paid up capital and turnover limit is there. Yes, sir. 4 and 40. Paid up capital is 4 crore. Turnover is 40 crore. For them also, it is not applicable. Sir, a small company, can it be a public company? Can a small company be a public company? No way. Small companies other than public company. So it is always a private company. Clear? Right? Is one person a public company? No, one person also is private, private, private. But for the last one, there are additional conditions. What is that additional condition, sir? For every private company who is not a subsidiary or holding of a public company, condition number 1. Condition number 2, paid up capital and reserves and surplus should be less than or equal to 1 crore. 1 crore is 100 lakhs. And total borrowing should be less than or equal to 1 crore from banks or financial institution. Last criteria for them, revenue. Here add equal to symbol. Revenue less than or equal to 1 crore if 10 crore if it is there. Caro is not applicable for you. All condition if you satisfy, for that type of private company also Caro is not applicable. Sir, what if it is a public company? Should I check public company having paid up capital of less than 1 crore? Turnover, total borrowings less than 1 crore, revenue less than 10 crore, not a subsidiary or holding of any other public company also. Is Caro applicable? Is Caro applicable? Is Caro applicable? Question. Caro, is it applicable for a public company whose paid up capital reserves and surplus less than 1 crore, borrowing less than 1 crore, your revenue less than 10 crore, not a holding, not a subsidiary? Is Caro applicable for them? Easy question. Yes or no? Yes. Why?
It's not explicitly stated.
No, it is not a private company. The moment it is public company, we are not bothering how small you are, how big you are. Applicable. Clear? Reason is public's money is involved. So auditor has to go and tell whether the money is utilized properly or no. So what are the requirements under paragraph 3, sir? Yes.
For the private company conditions, should all of them be satisfied?
Yes, all of them should be satisfied. Because if one of them is exceeded, let us say your paid up capital, total borrowings is less, but your revenue is more, applicability will come into the picture. So a general rule, you can remember it like this: if they want to exempt you from compliance, rules are stricter, right? So all you have to follow so that you will be under purview, or Caro is not applicable for you. But if you don't follow any one of them, applicability will come on your head. Clear? So in this particular order, 21 clauses are there. Clear? How many clauses? 21 clauses are there. Clause number 1 talks about property, plant and equipment. First clause is about property, plant and equipment. Sir, in that we have 5 subclauses. What should we mention in that? If it is about PPE, tangible assets, then have you maintained proper records? Have you maintained proper records, including quantitative details and situation? What do you mean by quantitative details? How many assets you have? What do you mean by situation? Huh? Situation means location. Huh? Location. Also, is it scrapped? Condition. Clear? Situation, location also is needed. Condition also you can report. Then intangible asset. If it is intangible asset, have you maintained proper records? Sir, can we go and check intangible asset? Can we go and check intangible asset? How will you check goodwill? Physically can you verify? No. That's exactly why they have told records only. Clear? Sir, trademark, how will you review? License, that's it. Document. You can't go and physically inspect trademark. You can see the logo, but that's why we call those as intellectual property, which comes under intangibles. Right? Second clause. Are these physically verified? When at reasonable intervals. My question to you, what is reasonable intervals? Quarterly, half yearly, yearly, what is reasonable? Sir, do whatever you want. Do whatever you want. It is not given in the order, but guidelines say that at least once in a year. At least once in a year. Sir, can I check daily? Nice for me. Can I check half yearly? Good for me. 15 months in a 15 days? No problem. But at least once in a year, you have to go and physically verify it. Clear? Next, any material discrepancies were noticed on such verification, and if yes, whether the same has been properly dealt where? In the books of accounts. Example, sir, sale, scrap, destroy, all these things, if you have done it, have you properly recorded it in the books of accounts? Clear? Right? Next, third one, whether title deeds of immovable property held in the name of company. What do you mean by title deeds? For movable property, we say invoice. For immovable property, we don't have any bill, so we say title deeds, purchase deed, sale deed. These are all will tell us whether we are selling it or we are buying it, whether the property is in our name or no. Clear? So in that, what we have to check? What do you have to report? Description of property, gross carrying value, held in the name of, whether that person is a promoter, director, relative or employee. Period held, indicate the range, wherever appropriate, reasons for not being held in the name of company. And in case of leased assets, title deeds need not be in company name because it will be with the lessor. The title deeds will be with the lessor. So if I go and check here, first is about PPE. A, maintain proper records. Clear? Including quantitative details and situation. Company has maintained proper records. right? And point number B, physical verification was done, right? Point number C, title deeds of immovable property and except for the following which are not held in the name of company. So what they have given? They have given number 1. See, description of the property. Yes, gross carrying value held in the name of, whether this is a promoter, director, relative, employee, period held, reasons for not being. See here, they have given one by one. Freehold land, gross carrying value 0, building carrying value 34 CR, held in the name of HMM Limited. Whether he is a promoter, director, relative, or employee, no. Period held 3 years. Reason for not being litigation, dispute. This will tell users that, okay, information you have given, understood, so they can read. Look at this. 27, 23, 24, 29, they have given clearly, right? Understood? Yes. Sir, leasehold property also? Yes. For leasehold property, title deeds need not be there. Understood? But it is still your property only, you're still paying for it, right? Okay, sir. Next. Whether the company has revalued its PPE or intangible asset or both. PPE, intangible asset or both during the year, and whether revaluation is based on valuation of registered valuer by registered valuer, amount of change, if it is more than 10%, you have to report. If the amount of change is less than 10%, don't have to report. More than 10%, report. Sir, equal to 10%, should I report or no? No? Yes, 10% or more. So more than or equal to 10%, reporting should be there. Then, any proceedings initiated or pending against company for holding any Benami property. What do you mean by Benami? In someone else's name. I don't know whether the person is existing or not. Clear? Non-existent person also name will be there. We will put it in his name. That person is called as Benami. Clear? Next. Whether during any point of time, very important when it comes to inventory now, second clause, physical inventory of verification, physical verification of inventory. Have you done it? Yes or no, we have to answer. Clear? Sir, when should we do physical verification, sir? Reasonable intervals. Again, what is reasonable intervals? At least 1 year. Once in a year. Clear? Right. And if there is any discrepancy of 10% or more, you should have reported. Next. Sir, this is very important. This will reflect in our bank audit as well. Meaning, if you have sanctioned working capital limits in excess of 5 crores. So if you have any working capital limit of more than 5 CR in aggregate from banks, financial institutions on the basis of security of current assets, whether the quarterly returns of or statements filed by the company are in agreement with the books of accounts, if not give details. Meaning, if you have taken working capital loan, once in 3 months you are supposed to submit stock statement to the bank. Current asset, stock is a current asset. If you have not given, bank should actually ask you. From this point of view, what I am saying is, from company's point of view, have you given? If not, I will report. There, bank auditor will report. Here, company auditor will report. Clear? Next. Clause number 3 talks about LIGS, loans, investment, guarantee, and security. 4 things. So, first clause talks about whether have you made any investment, whether have you given any guarantee, whether have you given any security or granted any loans and advances in the nature of loans to whom? Companies, firms, LLP or other parties. Sir, what are they trying to tell? Basically, have you given any loan to anyone? If yes, I will report. Number 2, what should I report, sir? Aggregate amount during the year and balance outstanding. What do you mean by aggregate amount? From April to March, how much you have given? And as on 31st March, what is the balance? Because what happens, sir? I might be giving you loan on 1st April or 10th April, and I might be asking the loan on 20th April. Clear? Let's take one example. 23-24, 1st April 23 to 31st March 24. My question to you, 1st April 23 to 31st March 24, 10th April, I gave you 1 CR loan. 20th April 23, I took back 1 CR loan. Tell me what is the balance as on 31st March 24? From to A I had given, from A I had taken. What is the balance as on 31st March of A? Nil balance, which means it will not come in balance sheet only. Yes or no? Does that mean they have not made any loans? They have made. When did they make? 10th April. But on 31st March, it is not seen. Clear? They would have taken and repaid also. So that's why they're telling, I want to know the aggregate, meaning in the entire year, what are the total transactions and what is the balance as on 31st March. So in this case, I will report 1 crore and balance outstanding as nil. Clear? Next. Aggregate amount during the year and the balance outstanding. Sir, both are same? No. Yes, sir. But here, 2 subsidiaries, joint ventures and associates, 2 parties other than subsidiaries, joint venture and associate. Basically, 2 everyone. Clear? Yes.
Suppose one private limited company giving the loan to other subsidiary.
Okay. Huh.
The same loan amount reflected in their books also.
Correct.
If they are not mentioning in their books,
Huh.
what will happen?
Okay, let us take I am a company, you are a subsidiary. I gave loan, you took loan. Right? For you it will be liability,
Yes.
for me it will be assets. Correct? Huh? Now you are telling in your books you have not mentioned it as liability.
Yes.
Now, will I check your bank account?
Suppose cash transaction.
Cash transaction is not allowed, no. Because if cash transaction, I give cash loan, then my auditor will have a problem. Because in income tax, if you see, cash loan if you give, they'll have a problem there.
If it is a bank, means it will tell you.
If it is bank, then obviously in your bank it will be reflecting. Clear? And you'll be paying interest also not to me. Now I'll take, let's see, interest loan I have given. Principal only, repayment will be there. Won't you repay principal? How will you pay? Through bank only. Because if you do cash, you will only be affected. For you, it is not, you will not be allowed it as, they will not give you the allowance. It will be disallowed. It will be added to your PGBP calculation. Clear? And here if they give loan under 269 SS NT in income tax, they'll have a problem. So cash loan generally won't be entertained. Okay. Next, whether investments made, guarantees provided, security given, and terms and conditions of grant of all loans and advances in the nature of loans are not prejudicial, meaning whatever loan was given should not be affecting negatively to the company. Logic is simple. You give loan, no problem, but it should not affect company. Giving loan at a less interest rate, it will affect the company. Clear? RBI interest rate, no problem, because everyone gives at the same rate. Clear? Next, whether the schedule of repayment of principal and payment of interest and whether the repayments are regular. Have you given them the schedule? Every year, how much they have to pay? Have you given them the schedule? Are the repayments regular? Are you getting money regularly on time? Right? Next, if the amount is overdue for more than 90 days, what steps have you taken for recovery? Now, don't confuse this with NPA. Don't confuse this with bank audit NPA. Sir, that is different NPA we are talking about. Here we are talking about different NPA. Clear? Here it is not non-performing asset for us. Of course, it is an asset, but that is not our banking NPA. It is a different asset for us which is not working for us. Next, is there any amount which is fallen due during the year and instead of asking for money, you have renewed the loan, extended the loan, or you have given fresh loan to settle the existing loan? China, Pakistan. Right? Pakistan had taken loan from China. To settle that loan, they took another loan from China and settled the old loan to China. Clear? So China gave one loan, China gave another loan, Pakistan gave one loan to settle the old loan. Like that, if you have done anything, I have to report. Clear? Why do they do that? What could be the reason? Here, companies, what could be the reason? Sir, I don't have money, so I will take more loan from you. Currently, it is overdue. No, if I don't pay, it will be overdue. So I will take loan, I will repay the old loan, create a new loan. I'll get more time to pay. Clear? Next. Sir, whether any amount of dues, give me percentage in your total loans given, how many percentage of loans are related to such loans where you have renewed? So out of 100 loans, how many loans you have renewed or extended? Give me a percentage of it. Clear? Then, if you have granted any loans and advances which is repayable on demand or without any terms and conditions, we call it hand loan. Clear? Not handloom, hand loan, where we pay based on demand. There is a specific terms and conditions here. Whenever you ask, I'll be paying. Have you given such loans? We have to report. If yes, what is the proportionate in the total loan available? So out of 100 loans you have given, what is the proportion of such loans? Give me a percentage of it. Next, compliance of section 185 and 186. This is loans given to the directors and loans and investments made by the company. Logic is simple. If you have done something like this, follow section 185, 186. If you have not followed, I will report in Caro. Deposits. In company law, there is one chapter called Chapter 5 Deposits. Section 73 to 76 EA. Whether you have accepted deposits as per that section or no. If no, you are supposed to report it here. Whether you have repaid the deposit as per that section. If no, I will report it under Caro. Clear? Next is cost records under section 148. So if you remember cost audit and cost records, you have to maintain. Central government will prescribe which class of companies should maintain cost record. Right? That companies, have they maintained or no? That is what I am supposed to check. Clear? Under section 148 subsection 1. Next is statutory dues. What do you mean by statutory dues? Example, GST, income tax, right? Customs, etc. You're supposed to pay. But if there is a dispute going on, you do not have to pay the undisputed amount. The disputed amount at least should be deposited within the prescribed time period, within the due date. If not, I will be reporting. Clear? What should I report, sir, in case of disputed? Let's talk about here. Take a look at here. Sorry? This one, no? Yeah. This is your third loans, investments and guarantee clause, where subsidiaries, how much they have given? 493. Others, how much they have given? 6. Balance outstanding as on 31st March. See, this is balance and this is aggregate. So both they have given. What is my total balance? What is my aggregate? So this is aggregate and this is balance. Clear? Similarly, this is for your 185, 186. This is for deposits and this is for cost records. Now this is for your statutory loan or statutory dues. See here, this is undisputed. This is disputed. Where are they given? See, name of the statute, nature of the dues, amount demanded, amount paid. Clear? And period, forum where it is pending. This is how you are supposed to give them the details in Caro. If there is a dispute. If it is undisputed, you have to repay it within the specified time period. You specify within the time period, matter is done. Clear? Right. Then comes your undisclosed income. Sir, what does this undisclosed income mean, sir? Remember, you have money, but you have not accounted for it. Unaccounted money, right? And long back one scheme had come where you disclose black money, whatever money you have, pay tax to us at the prescribed rate, take the remaining amount home. We will not ask you questions, right? Now, imagine you went and disclosed it there. Sir, I'll give you an example. Financial year 16-17 income. You have never disclosed it. But you disclosed it in the financial year 23-24. Should you pay tax now? Yes, sir. As per income tax, you will pay tax. My question to you, you will pay tax amount, correct. But when you pay tax amount, aren't you also telling that it is your income? Aren't you telling it is your income? If it is your income, shouldn't be recorded in the books of accounts? Yes, sir. I have to check that. Whether have you recorded it in the books of accounts or no? 100 crore you have not disclosed in 16-17, but you have disclosed in 23-24. You went to income tax center to take. I am disclosing my undisclosed income now. They will take their tax and give it back. Come and record in your books of accounts. Clear? Right, sir. Next is repayment of loan. What do you mean by repayment of loan? Not statutory dues. Normal due. Clear? Normal due. If you have taken loan from someone, have you defaulted in loans or other borrowing in payment? If yes, what is the period and what is the amount of default? And in what format? This format only. Nature of borrowing, name of the lender, amount paid on due date, whether it is principal or interest, and number of days of delay. Clear? Yes. Then, whether the company is declared as willful defaulter. What do you mean by willful defaulter concept, sir? Intentionally, I am telling the bank I will not pay. What you will do? Understood? For example, Malya, king of bad times. Clear? Willful defaulter. Modi, Nirav Modi, willful defaulter. What bank will do? Bank will create a list of willful defaulter, forward it to RBI. Understood? What RBI will do? Compile everything and prepare one list of willful defaulter. And the moment they compile and you are in the name of willful defaulter list, you can't do business in India anymore. Understood? Yes or no? Why do you think they can't do business in India? Because of this only. They are not allowed to do business in India. Clear? So, if you are named as willful defaulter, where you will intentionally go and tell, I have money, I will not pay, what you will do? You will be declared as a willful defaulter. Willfully, you are defaulting it. Clear? In such cases, I will report in my report order saying, yes, this company has been declared as willful defaulter. Whether the term loans were applied for the purpose for which loans were obtained. Sir, you took loan for business purpose. Have you applied for business is what I am supposed to check and report. Sir, short-term loan applied in long-term purpose. Not allowed. Not allowed means what? Purpose is different. No. So don't put it in long-term, put it in short-term. See, short-term interest rate is usually high than long-term. So obviously, if you put it on long-term basis, recovery also will be long-term. No. So much interest you are paying simply. Clear? Have you taken any funds to meet the obligation of your subsidiaries, your associates, your joint ventures? If yes, report it. Meaning, I have taken loan in my name, but not for me, for my subsidiary. Whose liability now? Whose liability? Parent company has taken loan for subsidiary. Whose liability? Parent company only. Understood? It will come in my balance sheet only, because if the loan is in my name, it should come in my balance sheet, report it. But it is not for my purpose. It is for my subsidiary's purpose. Your father taking loan for your education. Whose liability? Father's liability. Who is supposed to pay? He is supposed to pay. Understood? Next.
So what if the company decides to use that short-term loan for long term due to some answer?
I will report. See, in Caro, I am not going to tell anything. If you have done this, I will report it. Simple. My job here ends when I report. If you have used it for long-term purpose, I will come and tell you have used it for long-term purpose. That's it. I am not going to ask you to reverse it all. It won't be a misstatement. See, if you have taken same short-term loan and you have applied for long-term loan, I will ask why. Okay, I will ask why. Now, it is not a misstatement, because what is going to happen? It is not a misstatement with respect to amount. It is a misstatement with respect to disclosure. Okay, it is a misstatement only, but not with respect to amount, but with respect to disclosure. Why? Purpose is different, presentation is different. Short-term loan, you are applying for long-term. And what is short-term? Within 1 year, you are so going to pay. No, this is there for more than 1 year. It should be termed as long-term loan. Clear? Right. Whether the company has raised loan during the year on pledge of securities held in subsidiaries, JV or associate companies. Or promoter pledging is what we call. Heard? Promoter shareholding. Yes, if they pledge, if the promoter goes and pledges his shares and then takes loan, I will have to report it in Caro to members, saying, see, their share, they have pledged it. It's a risky factor actually. It's a risky business to pledge your shares. If you see, people will not invest in such companies where promoter shares are pledged, because you never know whether ownership will change or not. Clear? Next, whether money is raised by way of IPO or FPO were applied for purpose for which those were raised. Sir, what is IPO? Initial public offer. You go to public and tell, give me money for this purpose. Have you used it for that purpose or no? That I'm supposed to check. Then, preferential allotment private placement, section number 62 1C and section number 42. Further issue and private placement. If you have you made it as per the relevant section? Have you followed some rules and regulations of Companies Act? Clear? Next is fraud reporting, sir. Section number 143 subsection 12 talks about reporting of fraud. Have you reported fraud? Less than 1 crore to board, more than 1 crore to central government. Have you reported your fraud in such manner? If not, I will report it under Karo. Clear? That is about fraud reporting. Nidhi companies. For Nidhi companies, there is a specific rules called as Nidhi rules. Clear? And they have to follow Nidhi rules. Have you followed the Nidhi rules or no? Two most important criteria here I am supposed to check is net owned funds to deposit ratio should be 1:20. Have you maintained that ratio or no? To maintain liquidity. Clear? Number two, have you maintained 10% unencumbered term deposit? What is unencumbered term deposit? Deposits on which you cannot create any charge, nor you can give this deposit as security to anyone else. Nobody should be able to touch this. Clear? That also I am supposed to check. Is there any default in payment of interest or repayment of principal? If yes, report it. Related party transaction, section number 177 and 188 should be followed. 177 talks about audit committee. Have you taken approval from audit committee before entering into RPTs? And under 188, have you taken authorization, respective authorization, and have you maintained a register for RPT? Next, internal audit. Section number 138 talks about applicability of internal audit. Right? For all listed company it is applicable. For all public company whose turnover is 200 crores or loan is 100 crore or paid up capital is 50 crore or deposit is 25 crore. If it is there, internal audit is applicable for you. For a private company, if your turnover is 200 crore or more, if your loan is 100 crore or more, internal audit is applicable for you. Clear? Yes. Next we have non-cash transactions. Sir, in internal audit, additionally what we have to report? We have to report saying whether the internal audit is matching with your requirements of the company. If it is not necessary, why do you have internal audit department? That is number one. Number two, who is the giving report there? Internal auditor is going to give report. Has the statutory auditor considered the report of internal auditors? That I am supposed to report. Non-cash transactions with the director. Non-cash transactions with the director, have you entered into? If yes, section number 192 have you followed? There's a section 192, don't worry about it, they're not going to ask too many questions on this. Have you followed this or no? RBI registrations for NBFCs and all, you need RBI registration. Housing financing companies, NBFC, non-banking financial companies, for all these things you need RBI registration. Have you taken RBI registration for these? Clear? And if it is a core investment company, what is core investment company? Many rules are there. One of the rules is your net assets, 90% of your net asset should be in form of investments. Clear? If you are having such investments, you are called as a core investment company. Clear? And in the group means what? What do you mean a group of CAC? What do you mean a group of CAC? Sir, holding, subsidiary, we have a group. In that, how many, this is a group of industries. In that, how many CACs are there? I'm supposed to report if more than one CACs are there. Clear? Next, cash loss. Sir, what do you mean by cash loss? Do you know what is cash loss? Heard about cash loss? Now, what is cash loss is, sir, in your financial statement, you will see something called as net profit or net loss. Yes. Now, this net profit or this net loss is due to various factors. One of the factors is non-cash expense, meaning depreciation. Isn't depreciation an expense? Yes. Where will it come? After net profit or before net profit? Before net profit. So your net profit has an effect of non-cash expense as well. So in cash loss, what we see, let us take one example. Let us say the net loss is 1 lakh. Net loss is how much? 1 lakh. And the depreciation claimed in the P&L is 3 lakh. Okay. What is the depreciation? 3 lakh. What is net loss? 1 lakh. What is cash loss here? Cash loss means net loss is 1 lakh. No. Add depreciation to it. 3 lakh. How much is my cash loss? Huh? How much is my cash loss? Simple. Do minus 1 lakh plus 3 lakh. There is no cash loss. Cash loss is 0. I have cash profit. I have cash profit of 2 lakhs. Sir, really, sir, I didn't understand. Logic is simple, boss. That 1 lakh net loss you got, is it because of only cash items or non-cash items? Non-cash items. So I have to check what is your actual loss. This is your including non-cash. I want to know excluding your non-cash, what is your loss? And that is what we see as cash loss. Clear? Do we have cash loss here? We don't have a cash loss. Why? The 3 lakh depreciation, did you spend? Did you spend? Did the money go out? Was there an outflow? It was not there. So this is called ascertainment of cash profit or cash loss. Like this, we have many non-cash expenses. Amortization of intangible assets. Like, yes or no? Impairment of assets also we are charging to P&L. Sir, P&L is like dustbin, no? Everything goes and sits there. All possible loss, cash loss, non-cash loss, everything will come and sit there. Cash expense, non-cash expense. I want to know in your P&L, if I take profit, this includes non-cash items. Remove that and tell me what is my actual loss. So technically, I have not lost money. I have earned 2 lakhs. Why? Sir, depreciation you will tell. My question to you, logically tell me, did 3 lakh go out of your pocket? No. Understood. On the other hand, sir, my net loss is 4 lakh. My net loss is 4 lakh. Same depreciation. Tell me what is my cash loss. Add depreciation. Add depreciation of 3 lakhs. Net loss means minus figure. Tell me. Huh? How much is my cash loss or cash profit? 4 lakhs? How? Huh? Correct.
Before that, it's already 4 lakhs.
No, net loss is after depreciation, no. 1 lakh. Net loss is 4 lakh. Correct, huh? See, if I take P&L here, depreciation comes here 3 lakh. Net loss comes here 1 lakh. Clear? So, 4 lakh. Now, 4 lakh I took here. 4 lakh I took here. Now, depreciation if I add, what is my net effect? Minus 1 lakh. Nothing. I am just removing this depreciation effect. This depreciation effect is there. No. I am removing this effect. If I remove this effect, what will happen? Net loss will reduce. To what extent? 3 lakh. So what is my cash loss? So it will give you a picture that in my company, I did not lose 4 lakh. I lost how much? 1 lakh only. On this case, in this case, which one? Previous case. Did I lose 1 lakh? Financial statement says 1 lakh. Net loss is 1 lakh. How much did I lose actually? In reality, how much did I lose? Nothing. I earned profit. Understood? This is what is called as cash loss or cash profit. If you eliminate non-cash elements, what you are going to get is what we call as non-cash items. Understood? Clear? Cash not necessarily mean hard cash. Realizable I am talking about. Clear? Yes, sir, that we have to check. Next. Resignation of stat auditor. Sir, if stat auditor resigns, is it a small thing or a big thing? Very big thing. If he has resigned, sir, ask him why. What are the issues, objections and concerns? Next, financial asset and liability. Sir, whenever we talk about financial asset and liability, we have to talk about ratios, aging, dates of realization. When are we going to realize? And payment of liabilities. And whether there is no material uncertainty when it comes to meeting the liability. Company should not have uncertainty about paying liabilities. They should know that, yes, I am capable of meeting the liability. But which liability? Very important. Which liability? Which liability? Existing, meaning only for current financial year?
No, any.
Any financial year? No, that is where you have to understand. Existing at the date of balance sheet, and when they fall due, when will they fall due? Within a period of 1 year. So, current financial year plus 12 months. If I am auditing financial year 23-24, I should be able to ask the company, are you able to pay liabilities of financial year 23-24 plus financial year 24-25? Understood? Clear? Sir, one logic I will link here. This is nothing but also assessing going concern assumption. Because if you remember in going concern assumption in SA 570, there in SA 570 they have told period of assessment should be of a minimum 12 months. Yes or no? And that is what it is. No. Apart from the current financial year, for the next 1 year, are you able to sustain? Will you live? Understood? Company can't have cancer and all. It can't die so soon. It can't get some disease and all. Correct? So, obviously, right away it will not die. At least, are you able to meet your liabilities is what I'm supposed to check. Next, CSR expenditure. Section number 135. Have you spent money? If you remember in CSR law, if you have studied law, in CSR, they have told there are two things, ongoing projects, other than ongoing projects. If it is other than ongoing projects, technically you are supposed to spend how much? Minimum 2% of your profits, net profits, average net profits of last 3 years. My question, 2% if you spend, good. 2% if you don't spend, now you have to transfer it to a fund. Correct? Which fund you have to transfer it?
Governments.
Now there are two things. If it is related to ongoing project, separate fund is there. If it is not related to ongoing project, schedule 7. Schedule 7, that eradication of hunger, PMNRF, yes or no. So under schedule 7, you transfer it to a fund. But if it is related to ongoing project, create a separate account called as unspent CSR account. Unspent CSR account. Put that money there. In unspent CSR account, 3 years it will stay, and within 3 years you have to spend. If you do not spend within 3 years, you have to transfer it to schedule 7. So to understand this, I'll give you a quick chart. CSR expense should be minimum 2% of average profits of that year. Yes. Now, two things here. You spend, you don't spend. If you spend, we are happy. There's no problem with this, correct? But if you don't spend, transfer it to a fund. Now this fund is divided into two. Which fund we have to transfer, sir? If it relates to ongoing projects, does not relate to ongoing projects, If it is not related to ongoing projects, transfer to a fund in schedule 7. And if it is related to ongoing projects, transfer to unspent CSR. And in unspent CSR, it will be there for 3 years. Used, not used. If it is used, very well. If it is not used, it will go and sit in Schedule 7 again. Understood? This is how your entire CSR flow works. Clear? Previous to this, this was an amendment what after Companies Act 2013 came into existence. Previous to this, these rules were not there. You spend, you don't spend, just put it in board report that you have not spent. But now we want you to spend. So either you do it or government will do it. Which is why that Schedule 7 is government's fund. So if you don't do it, you transfer it to us, we will do it. Clear? Now, if you see convenience point of view, that is much easier for me. Why should I simply put up a trust, employ people, take care of them, put it on my head, rather than that, calculate 2%, put it in the fund, matter over. You do your business. Clear? So this is for them. But there are companies where like Tata, they will do CSR on their own. Apart from that, if country asks them to do it, they'll do it anyway. But apart from that, they also want to do it. Clear? Yes. Last one. Auditor's opinion in CFS. Sir, what is CFS here? Not cash flow statement. Consolidated financial statements. Clear? Consolidated financial statements. Auditors report on CFS. Sir, specifically, CFS means what is consolidated financial statements? One holding company, multiple subsidiary companies. Correct? When all come together and put one particular financial statement, we call it consolidated. Now, in that, we will have, let us say, 3 subsidiaries are there. In 3 subsidiaries, separately 3 CARO would have been given. CARO 1, CARO 2, CARO 3. Yes or no? Now, in each of the CAROs, if there is any negative comments or negative or any disqualifications given or any observations given, I have to report it in CFS audit report. Clear? I'll show you one practical audit report which you'll understand. Clear? There you'll have to mention, is there any negative remarks put in individual CAROs of subsidiaries or associates? Let's take an example. Because if you read the text, you won't be able to relate to it. Now, if you see, I actually clicked on standalone financial statements. Yes or no? See here. Here they are written standalone financial statements. Correct? That means, how many clauses are there in standalone financial statements, sir? They will put only 20 clauses. They will put only 20 clauses. 21st clause won't come here. 21st clause won't come here. 21st clause will come here. If I go to consolidated financial statements, can you see here? Audit of consolidated financial statements. In this, if I go to the annexure, annexure A, here, see here, other legal and regulatory requirements, clause number 21 alone. Now, read this so that you'll get a clear insight as to what. According to the information and explanations given to us, following companies incorporated in India and included in the CFS have certain remarks included in their reports. Whose reports? Their reports means who? Subsidiaries, associates, joint ventures. In their report, these remarks are there. So, in that, what are you supposed to do? Name of the entity you have to tell. Clear? Their SIN. What do you mean by their SIN? Corporate identity number. Clear? How do you read this corporate identity number? L means listed. U means unlisted. Clear? 15140, 51900, 15200. These are industry code for them. Clear? MH, state, Maharashtra. 1933, year of incorporation. 1963, year of incorporation. 2004, year of incorporation. PLC, PTC, public company, private company. And this is their SIN. This is unique. Clear? This is unique. 149035. Clear? So they have given their SIN. What is the relation here? Holding company, subsidiary. Clause 1C, clause 1C, clause 1C. In these clauses, they have given adverse remarks, sir, and that is what we are going to Go and read in that. Now, if I tell this to users, as a user, are you not curious to go here and read what remarks they have put? Yes or no? If I had not put this, users would not have known what it is. Understood? Clear. So technically, in standalone financial statements, in Caro, how many clauses will be mentioned? 20. Whereas in case of CFS, only 21st clause is mentioned. Clear? Understood? Yes. So we are done with Caro. We'll take lunch break and then we'll come back, finish off. I think today's target is one more chapter to go, no? One more, huh? Chapter 10, no? Where have I written? Chapter 1 done, chapter 6 done, chapter 11 done, Caro done. Okay? Today I think one more is pending, that is your bank audit. Let's start with bank audit. A bank audit is a huge topic. We understand that. But from the examination point of view, maximum two questions. But one question you can expect. Now, when we have so many concepts, probably institute would want you to test in advances, right? Basically, that is the most important part of a bank, right? When you go to articleship, when you do bank audit, you'll understand where you'll be focusing more on, right? So, nonetheless, we'll be touching upon the other concepts like types of banks. First bank is commercial bank. What is a commercial bank? Whatever you see in the recent cases, daily we transact with them. Yes, these are commercial banks like HDFC, right? ICICI, Axis banks, where the business is to accept deposit and grant loans, giving advances. Then we have regional rural banks where it is set up in the rural areas of our country, right? Grameen banks, heard of Grameen banks? These are all RRBs. Then we have cooperative banks, which is in line of cooperative society, right? Payments bank, development bank, and small finance bank. Development bank is specifically targeting a particular sector, industrial development bank, right? And then we have these small finance banks for small people, small business people. For them, from small finance bank, you get loan. Who is our regulator? Our regulator is RBI, right? Now, what does RBI, what power does RBI have? They are regulating the banks. Who is issuing currency notes? RBI. Clear? Can we issue currency notes? No, we cannot issue currency notes. It's only RBI. If we issue, imprisonment. Clear? So, regulatory framework followed by bank is these things. These many framework. This is what is called as applicable financial reporting framework also for them. Under these things only we are supposed to report. Right? What are the audit reports generally issued in bank audit? Generally. Now, why that generally word is important is specifically we'll give different reports depending on the type of branches. Clear? In bank, you have many branches you have. It is not just one particular branch. You can have retail branch, you can have corporate branch, you can have MSME branch, that is medium, small, and micro, right? Then you have asset recovery management branch, then you have foreign currency branch. So many branches are there. So for every branch, specifically different reports are given. But apart from this, generally what type of reports are given? Report on adequacy and efficiency of internal controls, whether it is operating effectively or no. Clear? Then we have LFAR, long form audit report, where in regular class I had shown the format of LFAR. LFAR 1, LFAR 2, different formats will be there. You have to provide this within 30th of June. Do you remember the date? 30th of June. Report on compliance with SLR, statutory liquidity ratio requirements. RBI will put some requirements we have to meet and we have to report saying whether these requirements have been met or no. Report on whether treasury operations of the bank have been conducted. What is this treasury operations? Entering into contracts, entering into agreements, clear? Credibility, credit feasibility, everything we will be seeing in treasury operations, including your foreign exchange transactions. Okay. Income recognition, asset classification, and provisioning, the NPA provisioning, whether it has been done properly or no. Serious irregularity was noticed in the working, meaning beyond the limits you are giving credit without any security. Have you done anything like that? Status of the compliance with respect to implementation of Ghosh Committee and Jinani Committee, adverse credit deposit ratio, adverse ratio. If it is a, give a report on that. If it is a positive, give a nil report. Okay. Now, bank audit approach, we will do little later. Come to directly to our main part, advances. What are the different types of advances we have? Funded advances and non-funded advances. What is funded advances here? Funded advances means where money has been transferred to the borrower. Non-funded means facility is given, money is not given to you. For example, for funded example, we can talk about cash credit overdraft. Clear? Demand loans. Sir, bills discounted and purchased also is funded advances only. Meaning what? Meaning what? Bill of exchange, I buy, I give you money. Yes or no? I purchase the bill, discount it, give you money. So that is fund, I'm giving you the money. Right? Non-funded means what? Home loan, car loan. You are getting the car. Who is getting the money? The dealer is getting the money. Clear? Letter of guarantee. You're getting the facility, but you're not getting the money. Clear? So all these come under non-funded facility. In the exam, in MCQ, they can ask. In a case study based MCQ, they can give you that this bank has taken money from, this borrower has taken money from this bank, and so is the case. Which type of advance this is? So you have to see concept here. Funded means money has been given to the borrower. Non-funded means facility is given. Money has not been given to you directly. Clear? Now, sector-wise, agriculture sector, education sector, priority sector, non-priority sector will be there. Clear? Security wise, we have primary security and collateral security. What is primary security? What is primary security? Principal, primary, based on which I am going to give you money. Collateral means supporting. In case my primary security does not work, I have collateral security with me. Mode of creation of security, mortgage. What is mortgage? Is it applicable for movable or immovable? It is usually for immovable property. Clear? What is pledge? In mortgage, does a possession gets transferred? In mortgage, no. Immovable property, how possession gets transferred? Only document. Whereas in case of pledge, gold loan, possession gets transferred. Clear? Hypothecation. What is hypothecation here? Hypothecation, possession also is not getting transferred. Document also is not getting transferred. But in hypothecation, you are acting like an agent of the bank. Clear? So you are using the property, but on behalf of them now. Meaning you can't do anything. You can't sell it. Clear? And if you don't pay your dues, they will come and seize it. For example, vehicle loan is usually an hypothecation. Clear? Housing loan is usually a hypothecation. Where you're using it, document of title is in your name. Clear? Possession is in your name. But if you don't pay your money, bank can seize it. Clear? So basically, you are like an agent of the bank. Clear? Next, assignment. What do you mean by assignment? Assigning the rights, transferring your right to someone else. Clear? So you can, let us say for example now, somebody has to pay me, I am supposed to pay the bank. I will tell the bank, do one thing, take money from somebody directly. I am assigning my right to bank to take that money from someone. Can I assign everything? No sir, only actionable claims such as book debt and LIC, that is life insurance policy, are accepted by the bank by way of assignment. This can be asked in MCQ. Only two things are allowed: actionable claims. What do you mean by actionable claims? Your sale of goods, that definition. Actionable claims, meaning on which I can sue and then get the money. Actionable claims. I can claim by taking an action. Clear? Set off. What is set off? I am supposed to pay you. You are supposed to pay me. We set it off and differential amount we will be settling. Then we have lien. What do you mean by lien? With the consent of the owner, we take possession of the goods. Clear? Remember unpaid seller concept? Yes, similar concept here. We can call it, if you want, we can call it unpaid banker. Clear? That time your concept will be sharp, right? So with the consent of the owner only, we are taking the goods, possession of the goods, seizure. Clear? Seizing the car, seizing the house. These are all taking into lien, right? Okay. Now comes the most important chart here for advances purpose. Prudential norms. So what is this prudential norms? Prudential norms means according to RBI's norms, how we have to classify the asset. Number one, we classify the asset based on standard loans, and then we have NPA loans. Now, in standard loans, we have two types. One is called regular. What is this regular? Very good boy. Meaning what? Dues are paid properly, no defaults at all, at most good person. Then we have mischievous people called SMA. special mention accounts, SEMA accounts, special mention accounts. What do these people do? These people will keep overdue, but not NPA. So these are between standard, regular, and between NPA. So if it is SMA 0, it means it is overdue from 0 to 30 days, meaning up to 30 days we'll call them SMA 0, 31 to 60 we call them SMA 1, 61 to 90 we call them SMA 2. After 90, where will they go and sit? NPA. Clear? Yes. So till SMA, do not go to exam until SMA is NPA. SMA is standard. Clear? They become NPA after 90 days. So till 90 days, they are standard only. They are performing asset only. But these SMA 0, 1 and 2, we call them as stress signals. What do we call them? Stress signals. That means they are giving us a sign that they are going to become NPA. Clear? Sir, in mock test one question they have asked. Sir, this type of indications when you are getting, are they downgrading or are they upgrading? Are they downgrading or upgrading? If they are giving SMA 0, 1 and 2 as stress signal, an account, a borrower is giving you this signal. Is the asset downgrading or upgrading? Downgrading. From where? From standard to NPA. Can I say from standard they are traveling towards NPA? So they are on their way to become NPA. Yes or no? Keep this concept in the mind. Clear? It is not NPA, but it has the potential to become NPA. Clear? So in NPA we have substandard, we have D1, D2, D3. That is called doubtful asset, and then we have loss asset. For all these things, we have to create something called as provisions. Now, what is substandard? What is substandard? Substandard means it is sitting in NPA for 12 months. Sir, at the end of the chapter, we have one table for provisions. Yes, substandard means what? Would be the one which has remained in NPA for less than 12 months. So it is there in NPA category only. Up to 12 months, 15% provision. The moment it comes to doubtful debts, D1, how much percentage? 25 for a secured, unsecured always 100. If it is D2, what is the percentage? 40%. If it is D3, 100%. And loss asset, 100%. So if it is doubtful up to 1 year, this one. Doubtful 1 to 3 years, this one. More than 3 years, it is D3 and it is 100%. It means 3 years it has been stayed in doubtful state, you write it off. If you receive, you recognize that time, otherwise don't recognize. Clear? Remove from or de-recognize is what we can say. Right, sir. So this is with respect to that. Next, when will an asset become NPA? Now onwards, important concept starts. Clear? When will an asset become NPA? When it ceases to give revenue, when it stops to give revenue. But stops to give revenue means what? Today is the due date, tomorrow I am still not getting NPA directly. No, I have some time limit. Sir, an asset will become an NPA when it ceases to generate income. But when do we consider them as NPA in bank? This is a concept of NPA, which is right. Clear? But when do we call them as NPA in bank's term? Where interest or principal remains overdue for a period of more than 90 days. In what case, sir? Term loan. For term loan, interest, your installment has two components. One is interest, one is principal. Either of it, if it is not paid for 90 days or both not paid for 90 days, we will call you NPA. This is for term loan. Clear? What do you mean by term loan? You have a fixed term, 10-year loan, 20-year loan, right? Then in case of overdraft and cash credit, if it is remaining out of order, if you get a tag called out of order, what is out of order? We'll talk about it later, right? Then in case of bill remains overdue for a period more than 90 days, in case of bills purchased and discounted. What do you mean by bills purchased and discounted? Bill of exchange, if someone comes and gives me, I purchase it, I discount and I pay. Now I am supposed to recover it. Yes or no? Now after due date, let us say today is the due date, I did not receive, I will wait for 90 days. And if I don't receive, I will consider it as NPA. Clear? So in case of term loan 90 days, bills purchased and discounted 90 days, overdraft cash credit is out of order. Right? Classification is based on the record of recovery, meaning When we recover, that is very important for us, not accrual here. Clear? When we recover is what we need to understand, right? So NPA is facility wise or borrower wise. Very important concept. Facility wise or borrower wise. It's always borrower wise because in the bank you are tagged to one customer ID. Clear? It's always borrower wise and not facility wise. I may have one housing loan, one vehicle loan, one home loan. If I create any one as NPA, my entire name is NPA. They don't consider facility as NPA, entire borrower only will become NPA, right? So asset classification would be borrower wise and not facility wise, sir. Now, what is out of order, sir? For overdraft and cash credit, we have seen what is out of order. Now, they have mentioned out of order. Then what is out of order? The outstanding balance remains continuously in excess of sanctioned limit or drawing power. Now, what is sanctioned limit? Maximum limit that is allowed for you to withdraw from the account. Yeah. Now, if let us say sanction limit is 50 lakhs, your outstanding balance is 60 lakhs. Now, in this case, is it out of order? Is it out of order? Sanction limit is 50 lakhs, outstanding balance is 60 lakhs. Is it out of order? Yes. Why? I sanctioned the 50, now interest and all I added and now it is 60 lakhs, out of order, sir. Number two, in case where outstanding balance is less than the sanction limit, but no credits continuously for 90 days. Sir, sanction limit 50 lakhs, outstanding limit for balance 40 lakh, but there is no sign of an amount coming. No credits to the account. Credits means bank is not getting any amount, out of order. If it is not getting for 90 days, consider it as out of order. Next one, credits are there, sir, but it is not covering the interest only. Whatever interest I have debited in the bank account, in your account, if you see debit side, interest should be minus. Yes, but now when you pay, that will be set off. But you're not paying only, or you're paying. I debited interest how much? Let us say 1 lakh I debited as interest payable. You give money 40,000. Is it covering interest part at least? No, we will call it as out of order. Clear? Overdue. Any amount due to the bank under any credit facility is overdue if it is not paid on the due date. On the due date you don't pay, we will call it as overdue. You don't need concept for this. Next, accounts regularized near balance sheet date, meaning 31st March is our balance sheet date, right? In the month of March, they're regularizing it. Why? Because if you don't regularize as on 31st March, I should have considered it as non-performing asset, and it's a black mark. If you create non-performing asset, no, it's a black mark. So what you do, you call the borrower, boss, please do one thing, pay today. Pay today. After 31st March, you take your amount if you want. So if you have such arrangements and all, no. Logically, really tell me, is that account functioning? Not functioning. That is what you have to see. Just before balance sheet date, if you regularize, it is telling me that previously you have not regularized then. It was unpaid only, no. Right? So they will show it as a performing asset, but in real life it is not performing. Just for showcasing, just for reporting purpose, they are missing it. See, so you have to be very careful when you're checking. Let us say few credits are there near the year end or balance sheet date. Check properly. Take more cognizance. Be more alert there, because December, November and all you have not paid. Suddenly from February, March you are paying. Why? Ask more questions. Clear? Government guaranteed advances, meaning loan is given to borrower, but that loan is supported by whom? Government. Guaranteed advances. Government is saying you give loan to them. If they don't pay, I will pay. Contract of guarantee. Clear? So government is surety here. So here they're telling, in case of central government advances, who CG has guaranteed you, it will not become NPA till CG has revoked it. Why? In case of guarantee, you don't pay, I have a surety to recover from. NPA will become when that fellow says no. Clear? So till his central government's promise is there, it is not an NPA for me asset wise, but income wise, I will regard it as NPA, because whenever I receive, I will consider it as my income. This is only for central government advance. Exception in the bank rules, this is an exception only for CG advances, asset wise PA, income wise NPA. So what do you mean by asset wise PA? Asset classification is performing asset. Income recognition is cash basis. Understood? Generally, asset and income both should be same. Performing means accrual. But here, asset recognition is performing, income recognition is cash basis. NP means cash basis. When we get money, we will be recording it. Clear? State government guaranteed advances. The advance is guaranteed by where advance is to be considered NPA if it remains overdue for more than 90 days. Meaning, logically, same. For others, how we cover? That way only. From examination point of view, for you to consider this as an easy one, you remember central government properly. For state government, it is a general rule that we are following. Clear? For asset and income, both PA only. The moment it stops giving me income after 9 days, I will consider it as NPA. Advances under consortium. Sir, what do you mean by advances under consortium? Consortium means what? One borrower, many banks. Clear? Kingfisher, one borrower, many banks. Now in that case, how do we audit consortium? There will be two characters will be there. One is called lead banker, one is called participant banking. In case of consortium, it is a lead banker who is going to take initiative. Clear? Who is the lead banker, sir? Generally, the one who has the highest share in the consortium. Right? Okay. Now, sir, borrower will pay. Clear? Borrower will pay to lead banker. Will he pay to participant bankers? No. Who should pay to participant bankers? It is a lead banking. Clear? But lead banker and participant bankers should have an agreement between them as to when will you give us our money, right? Now comes the peculiar part here. Sir, borrower has given money to consortium lead banker. Okay. My question to you, for lead banker, am I a performing asset or non-performing asset? I am a performing asset because I have paid my due. But participant bankers has not gotten their money. Who am I for them? PA or NPA? I am an NPA for them. Clear? Now you might ask, borrower has paid? No, sir. Correct. Rule says on the basis of individual recovery, you have to treat that person as PA or NPA. Clear? No problem, sir. For you NPA, yes, in the audit, sir, who is this NPA? Sir, consortium only, money is with lead banker. Lead banker is not giving me. Clear? Now, this is what is there in the theory. Practically what they'll do, they'll have an agreement. Clear? They'll have an agreement as to, sir, how will they share the EMI?
On the ratio of
On the ratio of how much money they have given, on that ratio only we will be considering it as our recovery. Clear? But understand this, individual recovery basis is the basis for us here to consider whether it is PA or NPA. Understood? Clear? Yes. Okay, that's your consortium. Sir, who sets the drawing power in case of consortium? Everything lead banker. Everything lead banker only will set the powers. Clear? Right? Okay. Of course, they will take consent from participant bankers. It is not that leader means will do whatever he wants. Consent will be taken because they have also given their money. Right? Accounts where there is erosion in the value of security or fraud committed by borrowers. What do you mean by this? Erosion means what? Reduction. Reduction, or can I say loss? Loss. So loss in the value of security. Sir, can I say security value will always increase? No. Due to the circumstances, due to the economic factors, could be there is a decrease in value of security. Now in this case, how should I consider? I have already given loan. I have already given loan. He has given security, but the value is reducing now. What to do? Simple. Check how much is the loss. According to that, consider it as doubtful or loss asset. Now there is a formula for this. Sir, what is that? See, I straight away classify it as doubtful or loss. But which one doubtful, which one loss? That is a question here. That's a big question mark. Which one should I consider as doubtful? Number one, erosion in the value of security can be reckoned as significant when realizable value of the security is less than 50% of assessed value. Clear? Realizable value is less than 50% of assessed value. Now this assessed value, who will assess, sir? It will be either the bank or RBI. Clear? So if logic you put, bank has assessed one amount, I am realizing less than 50% of that value. Imagine bank has put a value of 50 lakh. They have assessed how much? 50 lakh. 50% of 50 lakh is how much? 25 lakh. if realizable value is less than 25 lakh, consider it as doubtful. Clear? Imagine you get 15 lakhs. Is 15 less than 25 lakhs? Doubtful. Clear? Consider it as doubtful. Sir, one more question you might get. Doubtful means what, sir? We still have the security. No, correct. You still have the security. But if you sell, how much are you realizing? 50 lakhs. Sorry, 15 lakhs. Correct? This is what you are realizing. You are losing value. The security value is eroding, getting eroded, getting lost. So you have to consider it as doubtful and create a provision of 100%. Clear? Why are we classifying for creating provisions? So for doubtful, 100% provisions will be created. Second one, if the realizable value of the security is less than 10% of outstanding amount, meaning what? Sir, let us say outstanding amount is 40 lakhs. How much? 40 lakhs. This is outstanding amount. Sir, I am going to realize how much? 3.5 lakhs. Okay, outstanding amount is how much? 40. Security I have is good value, but how much am I realizing? 3.5. Now tell me, is 3.5 less than 10% of 40? Then you consider you don't have any asset only. You consider as if security is not even there and straight away classify it as loss. Now, fun fact, whether you classify doubtful, whether you classify loss, provision is 100 only. Clear? So in the examination, very rarely, but if I have to think as an examiner, if I ask you a question by giving an amount and tell what is the provision that I have to create. Clear? For you, in your mind, you know that provision is 100%. Whatever is the outstanding amount, no, that one is the provision. Easy way to think the answer, but don't write that. Don't write that. Write the formula, calculate, and then give the answer. Understood? Clear? Yes. Right, sir. Next, advances against term deposit. Term deposit means what? Fixed deposit. People usually take loan on fixed deposit. Clear? So whatever fixed deposit you have, that only you give it as security and take loan from the bank. So for that, what is the rule? Advances against term deposit, bank has to provide adequate margin. They will not give you 100% loan. They will have some margin so that they will also not lose their money. Then we have agriculture advances affected by natural calamities. What is the natural calamities? Tsunami, floods, etc. So if it is affected by natural calamities, what do we need to do? No problem, reschedule it. Reschedule means what? Restructure the loan. And from after that, whatever is your NPA rule is there, no, it is based on now new terms. Because old terms are gone. Clear? In such cases, NPA classification would be governed by such rescheduled terms. Right? Advances to staff. Now, what does this advances to staff mean? For employer giving loan to their own employee, bank people. Now, you can give in two capacities. What capacity? One as employer, another one as banker. Now, if I give you as a banker, you and I are not employee-employer relationship. You are a borrower, I am a lender. So you fall under general category. But if I give you loan as employer, then although you are my employee, you are still my asset only. Generally, if I give loan also, you are an asset. As an employer, I give you loan, you are still my asset. But disclosure classification will be different. Right? What is the classification, sir? If I give you as a banker, you will come under my advances portfolio. But if I give you as an employer, you will be coming under others. Clear? This is very important. Very small topic in this, but very different. Right? If I give you as banker, then you will come under general portfolio. If I give you as employer, you will come under other advances. Okay. Next is agriculture advances. We have long duration crops and short duration crops. Now, what is long duration crops? More than one crop season. Short duration crops, less than one crop season. Clear? Now, how do we classify NPA, sir? For short duration crops, if it is overdue for 2 crop season, NPA. For short duration, overdue for 2 crop season, NPA. And for long duration, overdue for 1 crop season, NPA. Sir, here don't apply your 12 months. Do not apply 12 months here. Why? Here it is not months. Here it is crop season. What is crop season?
6
Based on the crop. Meaning, bank has told crop season means will tell you till the time it is harvested. What do you mean by harvested? CBL. Separated. Clear? Till the time it is separated, it is crop season only for us. Now that could be more than 1 year, could be less than 1 year. Here, students will go with a basic assumption that it is less than 1 year, more than 1 year, because your long term and short term is matching with that concept. Clear? Here we are not going by months, here we are going by harvesting season. Clear? When do you harvest? That is what is important for us. Now, who tells us what is the crop season? Sir, not RBI. State level bankers committee. Why? Each state has different geographical features. Climatic conditions different. So, state committee will tell us what is crop season. According to that, who gave the state committee the power? Pakka RBI only. RBI only will give them the power. Clear? So, they will tell us what is it and then we will go by that crop season. Right. Next is drawing power. What is drawing power, sir? What's the concept of drawing power?
Limit for withdrawal.
Drawing power is like a working capital limit, where every month you need working capital. Now, why do we need working capital? Now, you calculate drawing power and correct. But what is the concept of drawing power? Why do we need working capital? We need to understand that the nature of business is such that when you're doing credit business, cash sales also you'll do, credit sales also you'll do. But when you do the credit sales, no, the rotation, the credit period is different. So I may not realize money quickly. My money might get stuck. Yes, there could be service where you are giving services to some organization. They release payment after 2 months. But for those 2 months, how are you going to manage? We do not know. Which is where I need to run my office, I need to run my entity. Therefore, I will go for drawing power, which is nothing but a working capital limit. I need to handle my admin expense, my salary, my employees' salary, electricity bill, so many things I have to handle. So what I'll do, I will go to bank and I'll tell I need some amount. But that amount depends monthly. The bank will tell, no problem, I'll give you, but definitely not for free. Why will I give you for free? Do one thing, give me something as security. Now, for 1 month loan or 2 months loan or monthly loan, should they give building as security? No. That is where they give current assets as their security. What is current asset here? Debtors and inventory usually. Clear? Other things they will not give. Loans and advances will not give. It is usually the debtors and inventory. But, sir, I have 10 lakh worth of debtors, 20 lakh worth of inventory. I'll get 30 lakh loan? No, sir. You will get 10 plus 20 minus margin. So, who deducts that margin? Bank. Bank will deduct that margin. My another question to you, bank will deduct the margin, right, sir? Who tells them how much to deduct? RBI. Because for the entire banking sector, who is a regulator? RBI. Clear? So, sir, is drawing power and sanction limit one and the same? No. Sanctioned limit is a ceiling, max you can withdraw. Your drawing power is fluctuating because drawing power basis is your current assets value. Drawing power basis is your current asset value. Depending on your current asset, we will calculate your drawing power. Okay, right? Okay, sir. Sir, stock audit, one point is there which is important. In case of stock audit, every entity or every bank, what they'll do, if their borrower or any accounts has an exposure means what? Total money exposed. How much exposure? For example, if I have given you 5 crores, what is my exposure? 5 crores. I'm supposed to get 5 crores is exposed to risk now. Clear? So total exposure of more than 5 CR, mandatory stock audit. Clear? Bank will appoint an auditor. Bank will tell the auditor, go to the client's place. This is the stock. Do the stock audit. Report now, you tell me boss. Clearly, you should think and tell me who should get the stock audit report? Bank or client? Bank or client? Whose inventory we are auditing? Client. So who should get the report? Who should get the report? Bank or client? Client only? Bank, huh?
In the third party.
If you remember, appointment of auditors, whoever appoints, we are supposed to report to them. Who appointed us? Bank. Who should we give it to? Bank. Clear? Understood? Yes, sir. Sir, assurance engagement. Do you remember first chapter? Practitioner, user, criteria. I am practitioner. Clear? Responsible party is there. User is there. Right? Responsible party is management. User is a bank. They appointed me. They gave a criteria or stock audit. Went, checked that, came, gave the report. Understood? Clear? Okay, sir.
Second, drawing for increase.
Yes, drawing power can be increased, provided you have to request for it. Okay. Now we have 2 months here, month 1, month 2, and one exam questions. Again, we'll solve it. Clear? Now, how do we calculate drawing power, sir? I've given a formula here. I've put it in the formula base. That is stock minus creditors. What is the logic behind this minus creditor? Why should we reduce creditor from the stock?
Stock is not available with us.
No, stock is with us only. No. Creditor means raw material. They give us raw material. Okay. So we have raw material with us. So, but why are we reducing it?
We have to pay to creditors.
Correct.
Payment is-
So how does it make a difference if payment is pending? Why should we reduce? What is the logic?
They have control over this.
Exactly. If I don't pay, what will they do? What will they do? Won't they take that their stock and go? Now imagine this stock you're giving at the basis for bank. Bank also defrauded. You're also gone. So the bank says, don't keep cauliflower on my ears. Out of total stock, no, you take creditors. So tell me, what is your stock in this? Clear. Tell me what is your stock. So 10,000 units are there. Out of that, 2,000 units are creditors, meaning based on credit. Remove that. 8,000 units is yours. You are paid for it. Clear. So out of that, I reduce margin. Clear. Out of that, I reduce margin plus book debts minus margin. This is the total of drawing power. Here, this is the total of drawing power. Now, if you see here, stock we have 35, creditors 10, book debts 25, margin is given. What is the drawing power for month 1? Let's calculate. Similar question was asked in May 22. CA Inter May 22. What is the drawing power here? Put the formula 35 minus 10, 25 minus margin. How much is the margin for stock? 25% is equal to 25 minus 25%. That is 18.75. And what about book debts? 25 minus 40%. That is 15, no? Yeah. So total, can I say 33.75 I'm getting. What is your sanction limit? 50 lakhs. Sanction limit is how much? 50 lakhs. Is drawing power coming below sanction limit? Yes. Can I draw 33.75 then? Drawing power means I want to take my money this month. Can I take 33.75? Yes, sir. Not an issue. Month 2, 55 minus 10 minus 25%. How much is that? 45 minus 25%. That is 33.75. And we have debtors. How much? Debtors is book debtors 35 minus 40%. 35 into 60% will be 21. Total will be 54.75. Can I withdraw 54.75? Yes, sir. Yes. Sanction limit is 50, no loss. So maximum 50. This is what I want you to understand. If the drawing power is going beyond sanction limit, you can't withdraw. Up to sanction limit is only you can withdraw. But I want more money, sir. Go and request for increasing sanction limit. So they will look at your capability. Then if they increase the sanction limit, next month onwards you can take as much as possible according to the formula. Understood? Clear? Now same problem if you see here, May 22 problem. How they have given? Stock is 50,000 rupees. Clear? So 50,000 minus how much is the creditor given? Yes, 15 is equal to 35. What is the margin on stock? 20%. 35 minus 20% you do. So 35 into 80%. will be 28. 28,000. Yes. Now what is the debtor value? 45. But you can't take all the debtor. If the debtor is outstanding for more than 90 days, you have to exclude it. Clear? You have to exclude it because we can't trust it. Clear? It might become bad debts for you. So we will not take, you are not taking that risk. Why are you putting that on my head? So 45 minus 5 is 40 minus, what is the power? 50, you have to reduce. So 20. 20 plus 28 is 48. What is the sanction limit, sir? 45. So how much I can withdraw? Maximum 45. Understood? Clear? That's your drawing power calculation. Right, sir. Now, audit of advances. Of course, how do we audit the advances? General procedures by documentation. Clear? Check whether whatever amount is put in the balance sheet is amount receivable for the bank. Loan documentation should be checked. There should not be any amount left out of the books. Everything should be covered. Valuation should be appropriate. Who should do the valuation? Registered valuer. Empaneled valuer in case of banks. You could be a licensed valuer, but if you are not registered with the bank, you can't do valuation. Clear? So you should be an empaneled valuer, right? The advances are disclosed, classified, and described as per the accounting practices, and provision should be made as per RBI norms, right? So these are your normal points. Clear? Next, sir, internal control for advances. How should internal control work for advances? Number one, credit worthiness. Clear? Credit worthiness. What do you mean by credit worthiness? Whether he is eligible to take this much loan or no. Number two, execution of documents, signature, hypothecation agreement, loan documentation, processing should be done. Third, compliance. All the compliance of rules and regulations should be done in documentation. Margin, sufficient margin should be kept, like how we calculate for drawing power. Similarly, sufficient margin should be kept. Control of security. If security has been given, land, building, shares, debentures, take control of it. Otherwise, what if they defraud you and you don't have the security? Clear? Registration, inspection, DP register. Every month, whatever amount they are withdrawing, you're supposed to update in your DP register. Limits. What do you mean by limits? Always keep it within sanctioned limits. Clear? Recently, during audit and all, recently in the sense, in the last 5 years, they have found that managers who have approved loan beyond the limits. Now, in that case, it is your risk. And if they find out, there are managers who are removed from their work. And imagine you lose your bank job. They'll give you till the case is, now you can go to the case, till the case is solved, you will be given half salary. But once it is done, you're done for life. Clear? So ensure it is within the limits. Irregularity and review. So irregularity means don't think that we should do irregularity. Check for irregularity. Clear? Right. Revenue items. Sir, point number 3 is important. Point number 2 is important. Which revenue I should consider on accrual basis? Which revenue I should record on cash basis? Which revenue I should consider on accrual basis? RBI has told, if any income which exceeds 1% of the total income of the bank, if you are checking this on gross basis, then if you are checking it on net of cost basis, 1% of the net profit before taxes. Meaning what? Sir, RBI says two things. Number one, if you are taking on gross basis, if you are taking on net basis, if you are taking on gross basis, what are they saying? Any income which exceeds 1% of the total income, any income which is more than 1% of total income, and here any income which exceeds 1% of net of cost, then you have to record this on what basis? Accrual basis. That means anything else apart from this, on what basis? Cash basis. Clear? Any income, if it is not coming up with this particular criteria, record on cash basis. Which income you record on accrual basis? Those income which is more than 1% of either total income or net of cost depending on the basis. If it is gross basis, total income. What do you mean by, what is the difference between total income and net of cost? Total income means in your, if I have to give a visualization, total income means in your P&L, I'm talking about total credit side. Net of cost means net profit. Net of cost after removing cost. Clear? Depending on what methodology you are following, 1% should be seen. Any income, if it is more than 1% of this particular criteria, accrual basis. Other than that, cash basis. Clear? Yes. Alright, sir. Now, sir, for example, these two things also will become important for us to discuss. Bills purchased and then bills for collection. First of all, tell me the difference between bill purchased and bill collected. Bills purchased means we have purchased a third party bill, we have given money, purchased, we have given money and taken that bill and we have given discount. Correct? Discounted, bills discounted is called bills purchased here. What is bills for collection means then?
We received it from the one.
From someone else, on behalf of someone else. I, as a bank, as an agent, I went to some party. Let us say, for example, Rajnikant appointed me, I am the bank. Clear? Rajnikant has a bill. Now, Rajnikant gave me the bill and he said, see, one party is supposed to give me, go and collect. Now, I went to that party, I collected money and I came and gave it to Rajnikant. Here, discount I am charging? No, I am charging a separate fees for that. Understood? Bills purchased is Rajnikant has a bill of exchange. He's supposed to receive, but he's supposed to receive after 3 months. But he can't wait for 3 months. So he'll come to me and he'll tell, bank, I want money today. Now, bill is of 1 crore. Now I will tell, I will not give you 1 crore, I will give you 1 crore minus discount. So I will give you less than 1 crore. But how much will I collect? Somebody has to pay you, no. Now that person has to pay me. How much will I collect? I'll collect 1 crore only. That difference is my income. And in banking language, we call that as a spread. That spread is my income. Understood? Clear? Right, sir. So in case of bills collected, I wanted to put your logic and answer. Leave the text alone, put the logic. Someone else bill I am collecting, which means I am supposed to pay him, no? Yeah, I am supposed to pay him. Rajnikant's bill I am going and collecting. I am supposed to pay Rajnikant, no. When should I make the payments? Should I pay him first and then collect? Or go, collect, get the money, then pay? First pay? Then go and collect. You're saying first collect and pay. Now, if you say, which is riskier here for me? First option is riskier for me. Why? I pay him. What if he does not give me? I am gone. Rather than that, I am an agent. No. He's my principal. No. I will go and I will tell you're supposed to pay him. No. Give me. You give me money. Then I will get it. Then I will pay him. This is less riskier for me than my first transaction, because there, if this is not coming and this only is going out, I am at loss. And if that is allowed, everyone will do like this only. No, do one thing, you draw a bill on me. 4 months bill you draw. 4th month, I will tell the bank, I will authorize my bank for collecting the bill. I will tell him, he will give me money. Then you don't give. We will partner this particular income. Accommodation of bill. Clear? We don't want such things. That's why they're saying procedure should be what? See here. For creating the party, procedure is usually such that customer's account is created only after the bill has actually been collected. That is much, much safer. Otherwise, sir, banking's backbone will be lost. Someone's money, we simply are drawing a bill of exchange. Bank does not know. Yes or no? And who does not do things for money? If I tell him, hey, Murari, you do one thing, you draw a bill. Okay, you draw a bill for 1.5 crores. Whose father's money? You draw a bill, no problem. I'll go to bank. I will go to bank and I'll go collect and come. Now bank will tell, okay sir, take 1.5 crores. Okay, take 1.5 crores. He is not there. Now I will tell him, take 50% or 50% money. We are getting money out of nowhere. And who's losing? Bank. Now you tell me, will people go and deposit money in the bank? No. Why? You're losing money like share market. Derivatives like how people lose money. You're simply giving money to everyone like it is free money. And people are misusing it. That's why the procedure is that first you collect. Now tell me, in this case, bank has to go to him. Unless he pays, will I get money? No. What will bank come and tell me? He did not pay. Over. Transaction ended there. Clear? Renegotiation. Sir, in case of renegotiation, what is renegotiation? Remember natural calamities, agricultural and all. So in case of renegotiation, new terms will be there. Clear? Rescheduling will be there. So NPAs will be calculated as per our new scheduling. Clear?
So the China Pakistan will be a renegotiation or
No. This is renegotiation with bank, borrower and the bank. There it is between two parties. Clear? Here it is with the bank. So I go to bank and I tell, can you please reschedule this? Right? For example, now I have a 10-year loan. I tell I want to take extension of loan. So reschedule this loan. We'll reschedule for another 15 years now. So there now EMI will change. Clear? Interest also might change. Principal will change. So things will change. The terms will change. Reversal of income, one particular formula will be following. What is reversal of income? Income that we have recognized, we are de-recognizing it. Clear? Income that we are recognizing, we are de-recognizing it. Sir, what is the income for banks?
interest. Interest.
Interest is the main income. Yes. From whom? Borrowers. Basically advances. Advance is my asset and interest from advance is my income. So, whatever income I have received, no problem for me. Usually accrual system means what? You record as on the due date. Irrespective of whether you receive or no, you record it, correct? My question to you, in case of NPA, can you do that? No. Why? What is NPA? Any asset that ceases to generate revenue for you, right? So the moment asset becomes NPA, whatever, listen to my words carefully, whatever amount you have recorded, accrued, recorded, but not received. Accrued, recorded, but not received should be reversed. Accrued, recorded, received, don't do anything. Accrued, recorded, but not received, reverse. Because that's when it will become NPA. This is nothing but consequence of NPA. The moment it becomes NPA there, the moment, sorry?
They can't post the entries.
Who can't post the entries?
Once it is NPA, they no need to do that entries income, right? That time itself they can reverse it.
No. Why? Because see, SMA 0, SMA 1, SMA 2 is there. That time it is still standard. So for standard assets, we record on accrual basis only. Although they are giving us stress signals, for those 90 days you would have recorded no, and now we have not received. So the moment it becomes NPA, we reverse it.
Maybe income may come on that 90 days.
Exactly. They can become PA again. Right? So let us say now SMA 0, which means outstanding up to 30 days. He's become SMA 1, outstanding up to 75th day he pays. He'll become performing asset. So reversal is happening only for NPA. After 90 days, whatever income I have recorded, which is accrued, recorded but not received, reverse that. When will you record it? Record it when you receive it. Clear? So for you to understand in simple language, NPA is like bad debts for us. In general language, for us it is bad debts. When do you write bad debts income? When do you record income of bad debts? Once it is received. Yes or no? There you create provision, no? Same thing here. You reverse the income. Whatever you have recorded, reverse the income. Because logic is, you know it is not going to be received. And when are you going to receive if I ask the bank? When will they say? We don't know, sir. When they give, we record. Apply that logic in the books. Reverse it. Whenever you get, the time you record. Clear? So NPA income is always recognized on cash basis. Always. Reverse and recognize on cash basis. Clear? Right, sir. So in case of any asset that has become NPA, the moment it has become NPA, you reverse it and then you record it on cash basis, sir. Right? So on partial recoveries of NPA, what we should do? How much you have recovered, that much you have record. How much you have not recovered, don't record that part of your income. Clear? Right, sir. Income from investments, it is just like transfer to P&L, like other income only you have to treat it. Right? All the expenses, what am I supposed to do? What is the biggest expense?
Interest given to.
Both are same. The interest received also is big chunk only. Interest paid also is big chunk only. What am I supposed to do? Take a list of FD available, savings bank available, how much is the interest they are charging, right? And how much disbursement they have made. Take like a menu card. Clear? Check arithmetical accuracy. Whether payment has been done properly or no. If yes, how much have you done? Compare with the previous year. Last year interest expense, how much? This year interest expense, how much? Clear? See whether it is corresponding, and if there is any huge increase or decrease, ask for reasons. Why? What is happening here? Clear? Right. In case of changes in rate, sir, RBI sometimes will change, repo rate will change at times. Yes or no? That time interest rate of loan will change, interest rate of FD will change, interest rate of savings bank will change. That time our expense also will change, income also will change. Here, that has to be authorized. Okay, practically everything is taken care by automation, CBS. But who gives input to CBS? Human beings only. We only. If we don't tell the computer the data, how will computer calculate the data? Clear? So all the calculation is done through CBS. Input information should be done in the right manner. Clear? It should be supported by RBI circulars. For all other expenses, we go by the regular expense procedure, where every month is it authorized? Clear? Is it for 12 months have you paid? Last year and this year, check the differences. Okay. This one note is important here. We have something called as prior period item. Do you remember? Yeah, prior period item is 5. Remember? I mean, you know the, at least there is something called as prior period item in accounting standard. Clear? Now, in the format of P&L account, prescribed in Form B does not specifically provide for disclosure of impact of prior period items on current year P&L. Meaning, generally in our P&L account, we see something called as prior period items. General P&L, which is generally we use prior period items, one line item will be there. Clear? In your foundation, there used to be one particular concept where overvaluation or undervaluation of closing stock of last 2 years, last year or previous to that year, one adjustment will be there. For that, you adjust that particular mistake in the current year. But when you disclose, you tell this particular amount is not related to current period. It is a prior period item affecting now. But in bank's format, there is no specific disclosure for prior period items. If there is no specific disclosure required by banks, we do not have to do it. Clear? It will not be considered as non-compliance. It will be considered as compliance only. Why? Because specifically bank has told we do not want a separate disclosure of prior period items. Clear? Understood? Yes, this is what we call as compliance framework. What is compliance framework? What has been told, we are doing it. But if you still want to tell fair presentation. Understood? 90% of the times in our country, you follow fair presentation. Which is exactly why in the audit report, you'll see audit report words will be true and fair. Clear? True and fair. If they will not just say true. They say true and fair only. We follow fair presentation only. Clear? Yes. Now, bank audit approach on small topic. One question can be asked from that area. So let's do that. Where we are talking about how we should approach the bank audit, sir. What are we supposed to do here? First, you have to draw an audit plan. Clear? Every audit, not only bank audit, every audit you have to draw an audit plan. We have to check the control environment. What is control environment? Internal control system environment. The surroundings of internal control system we have to check. Right. What are we supposed to do? Ask some questions. Who performs the control? Does he have requisite knowledge? What evidence is available? With what frequency? That is consistency. What is the consistency? Whether it is enough to prevent, detect and correct. What is the evidence of performance of control retained? How long the evidence is retained? Is it available for us? Because sometimes expiry will be there. for retention of some documents. Clear? Right? Engagement team discussion, sir. Important from bank audit perspective. Engagement team discussion. What is the benefit or what discussion I'm supposed to make in my team, sir? Number one, errors that are more likely to occur. Meaning, sir, as an auditor, I will get to know in banks what could be the likely error. I will not say error will happen, but these type of errors may happen. So that discussion, when I give it to my team will get to know, okay, I have to be careful in this area. So they'll be more alert. Number two, errors which have been identified in the prior periods. Previously, whatever errors have been identified. Number three, method by which fraud might be perpetrated by bank personnel. Perpetrated means performed by bank personnel. What type of fraud bank people can do? Unless you have knowledge about it, no, you won't be able to discuss this. Clear? So you need to understand bank audit from practical perspective to understand what all frauds bank people can do. Audit responses to risk. What risk? Engagement risk. Engagement risk means what? The audit that I am doing. Specific risk, specific to the transaction. Pervasive risk. What do you mean by pervasive? In SA 700 there is this word called pervasive, where it is a spreading effect. It doesn't affect just one place. It affects many different places. Clear? Need to maintain professional skepticism and be alert for all the conditions. Right? Advantages, specific emphasis will be there. What does specific emphasis mean? Because I told them, now they are alert in these areas. Clear? If I tell this area is very risky, you will check more. So specific emphasis, stress on some areas. Enables the partner to delegate the work. I can divide it the work based on the competency level. And last one, review the need to involve specialist. If I get to know that here I need some expert, I can involve him whenever I want during that time. Understood? Clear? Yes. So these are the important topics in bank audit. Focus more on advances. Clear? Advances, NPA, reversal, right? Including your drawing power. But having said that, do not ignore the initial part of auditors. Clear? How should we discuss? What should be the team discussion? Don't get confused between benefits of team discussion and what should be the discussion. Right? Okay. With this, our bank audit chapter is done. So let's start and finish one more topic. That is your strategy. Quickly, you can finish this off. Three things. Strategy, planning, and program. Now, in this, first of all, set the order, which is broader, which is narrower. Program is broader or program is narrower. Now, perspective is very important here. Broader and narrow, in what perspective we are talking about? Are we talking about coverage of the area or are we talking about the concept here? Which comes first? Planning comes first or strategy comes first or program comes first? Strategy first, then planning, then program. Yes or no? Program last. That we know. Program last over no. But which one comes first? Strategy comes first. Planning is detailed of strategy only. Because if you don't have a strategy, you don't know what plan. For example, sir, strategy is to score 2 exemptions. When I write both groups, strategy is to score 2 exemptions and clear it. That's a strategy. Now, what plans you have for that? My plan is which subject you are targeting now. Now for that, which material to refer? Clear? Now that is planning. I will refer these materials. Now, program means in that which concept to study more, which concept to study less, which question to study more, how many questions to study. That is program. So it goes strategy, planning, program. Although here planning comes first as content wise, concept wise strategy comes first. Because without strategy there is no plan. Can I say if you change strategy, plan will change? If you change strategy, plan will change? Yes, why? Plan depends on strategy. Good. If I change plan, will the strategy change? If I change plan, will the strategy change? Yes, sir. That is what I want you to understand. You are thinking planning is totally dependent on strategy. It is interdependent. Both are interdependent. Changes in one will lead to changes in another. Simple. Strategy is to score 2 exemptions. Okay, you have selected a particular subject. You are studying that. Now, that's a plan. You changed your plan. You're telling that, no, I don't want to score here. I want to score in other subjects. Now, plan changed. Now, according to that, your strategy also should change. What if you want to score 2 exemptions in group 2 only? Yes, so these are interdependent. Not one is not totally dependent on other. Both have equal. See, it's like seesaw. Both have effects. You get up, that fellow will go down. He gets up, you will go down. Clear? So it is interdependent. Although when we think, sir, strategy can be same, no, can be same. Will it be same? No. So little change in the plan is okay, no problem, as long as you're sticking to the strategy. But there could be changes in one will affect the other. Understood? Clear? Yes. Now imagine you change your plan. Plan is to score 40, 40, 40, 40. What is the strategy? To score 2 exemptions. Now we have to change that also. Right? So if you change strategy, anyway you have to change the plan. But if there is an effect to the plan also, strategy will change. Clear? So what are the benefits of planning, sir? You can devote attention to important areas. Which area to audit? In my client's company or in my client's entity, I can devote proper attention. Identify and resolve potential problems that on timely basis. What do you mean by timely basis? Within the right time frame. Because there is no point of solving the problem after the problem has given enough effects. So timely solution of the problem is important. Helps in systematic organizing and managing the audit. Meaning we have put a plan. Like for example, sir, 6 to 9 I will study this, 10 to 1 I will study this. You put up a plan, but it has to be implemented as well. So plan will also help you in systematic organizing. Now managing studies will become easier with respect to timetable. If timetable was not there, how will you manage your studies? When you study, what you study, God alone knows. So timetable will help you. Timetable is nothing but a planning technique. Helps in selection of team members with appropriate level of capabilities. If I know what plan I have, for example, if you know what plan you want to follow, which book to refer, which classes to go, which notes should I write, how should I write, it will help you. Directing, supervising and reviewing team members work, basically monitoring. I can tell him exactly how you're doing because my plan I know, no. If I know my plan, my team member is not working as per the plan, I can go and correct him. Last one, helps coordination of work. What do you mean by coordination? Working together so that, yes, synchronization, so that our ultimate goal has been reached. Clear? Questions, many times questions are asked on benefits. So these are the questions that have been asked on the benefits of audit planning. Easy question, don't leave it if it is asked. Right. Sir, next concept. Is planning one-time process or continuous process? Why continuous? Why can't it be one time?
We may have different findings during the audit.
Correct. Planning is done on assumption. And sir, what nonsense? Assumption on what? You talk to client, no. Planning is done not only on assumption, planning is done on assumptions also. And with the limited information that you have, you do planning. Now that information can change. Yes. Process can change? Yes. Plan will change. Clear? So it's a continuous and iterative process. When does it start? From the end of current audit, it starts. It will continue till the end of its audit, which means nothing but all the time it will be there. It will be processing only. Clear? Right, sir. Sir, do we need expert? Do we need expert involvement? Sir, planning will help you in understanding that. Do we need expert involvement? What procedures I have to apply? Clear? Which procedure I have to apply? Should I apply analytical procedures? Should I apply some other procedure? It will help you. Right? Engagement partner and other people should be involved in planning the audit. Not just engagement partner. It should be other key members, not everyone. Other key members of the team. Right? You may decide to discuss elements of planning with the entity's management to facilitate conduct and management. Why I put an I here is very important. Why? You will not see this point, but you'll see a question. What is the question? Question is, they will give you a case and they'll ask you, should auditor discuss with the management his audit plan?
Yes.
Should I discuss with management? My audit plan is my audit plan. Now you'll say, independence. Why should I discuss? I should not discuss with management about my plan. I should keep it with myself only.
They need to coordinate with you.
Sir, imagine you don't tell them. Suddenly you go and tell, today we have come for audit. They need to arrange for the files. They need to arrange for the information. You should tell them no. Point here is, tell them what we are doing our audit. Tell them, today we are auditing purchase. Tomorrow we are auditing sales. Day after tomorrow we are auditing expense. Tell them the plan. Don't tell which bill you are going to see, what techniques you are going to use, with whom you are going to talk. Don't tell that. Just tell we are going to audit purchases, so that you will get purchase books of accounts, ledger they will have to give you, purchase invoices they will have to give you. Yeah, this will be helpful for you. So tell them here, students will come and write, no, we do not discuss anything with the management. Your independence is lost. Management influence is there. Then they start writing independence, of familiarity, threats, this threat, that threat, and all. 0 marks you get. Clear? Just on this one point, I can ask you a question. You have to discuss, but not everything. The purpose is this: to facilitate the conduct and management of audit engagement. Next, planning process, 2 things: preliminary activities and planning activities. This is exactly SA 210. Now you will appreciate 210 reference. Preconditions. Remember? Performing procedures regarding acceptance and continuance. Yes. Integrity of the management, obtaining information. Then evaluating ethical requirements, IPCCO, and independence. Threats to independence, safeguards to independence. Yes. Evaluating compliance with ethical requirements. My team should meet with ethical requirements. If not, I should evaluate the threats. If threats are there, try to put safeguard. If safeguard is not possible, try to withdraw. Clear? Yes. Right, sir. Then, third one, establishing an understanding of terms of engagement. Audit engagement letter. Do you remember? Yes, Pakka SA 210. Now, if you go to study chapter number 1 and then come to chapter number 2, you will take a lot of time in studying chapter number 2. Why? These 3 pages only you will spend 1 full day on that. Understanding what is. Why is it relevant here? It is there in planning, correct, but why is it relevant? How is it connecting? So, study after chapter 1, study chapter 11. Then come to chapter 2. So that right away you will be done 1 shot, 2 chapters are done. Clear? Planning activities. In this, first of all, establish strategy. Now, if you see in your module, you will be under an impression that planning comes first. Right? Now, see here, in planning they have told, in planning activities, under planning activities they have told, first you establish strategy. That is resources. With respect to resources, what type of resources I need, how many or how much resources I need, amount of resources, when do I need this, and how should I manage it. On these also, they have asked quite a lot of RTP mock test paper. In mock test paper, they have asked questions.
Sir,
Yeah.
Audit plan and planning of two identical different.
Sorry?
Planning of audit and audit plan are identical different.
Planning of audit and okay. Now, if I'm asking in a context where if I say audit plan, the first thing that comes to my mind is I'm talking about entire audit. If you're talking about I'm planning the audit here, then in that particular, let us say for purchase what plan you have, for sales what plan you have, for expenses what plan you have. Clear? But that's what I'm telling. On what perspective you are thinking, that it depends on that. If you say generally planning the audit and audit plan both are same. But if you say audit plan, plan for what? Continue the sentence. Right? Clear? So technically both are same. But on what basis you are asking? What is the context behind your question is important. Factors for overall strategy. Number one, applicable FRF. If I have to put a plan, I should know what statutes are applicable for you. Yes or no? Sir, if I have to decide how should I teach, I should know what syllabus I'm teaching. No, that is FRF only. Syllabus is FRF for me. Number two, nature of business segment. What business you are in? What is the nature of your business? If I do not know that, how will I put a strategy? Third, industry specific reporting. For example, in case of banks, if they are asking me some specific report, I have to put it. Insurance specific report, I have to give. Hospitals specifically they are asking, I have to give. Clear? Expected use of evidence obtained in previous audit. Can I use whatever evidence I obtained in previous audit in the current year?
Whatever is relevant.
Whatever is relevant. Now, how do I know what is relevant? That depends on work. When I am doing it, I get to know can I use this or no. Clear? And if the factors are same as last year's, obviously I can use it. If the factors are different, people have changed, information is different, environment has changed, then I may not be able to use it. Ascertain reporting objectives. What is my objectives of the audit? Clear? This will help me in timing and nature. Where if I get to know what is my reporting objectives, who should I report it to? What procedure I have to put, I will get to know. Because if I'm reporting at the end, maybe this procedure I can put at the end rather than now. So that is again a strategy. So I have to talk to him now. I'll not put this procedure now. Later on I will put. Maybe external confirmation I will ask before I go and report. Clear? Some of the instances, entities timetable for reporting. What is who is this entities timetable? Entity means whom? Client. Firm means we. Clear? So entities timetable for reporting means what is their timetable? Do they have any timetable for reporting? Number two, organization of meeting to discuss with management. Do we need to discuss with management? Do we have to meet them and talk? Discussion with management regarding expected reports. What type of reports we are supposed to give? That type of discussion will help us in analyzing what procedure I have to apply now. See, how should I teach? How will I get to know? Only when I talk to management. Yes, what is their culture? What are they expecting? If they say, sir, I don't expect you to teach full in detail and all, then I get to know how I should go and teach. But if they say, I want you to cover everything, then it will give me a sense of information that this is how I'm supposed to teach. Right? Then discussion with management regarding expected communication on status of audit work throughout the engagement. So we can tell them, see, this is how we are going because that's your timetable. This is our work. So we can tell them discussion with management regarding what? Expected communication on status of audit work. Expected. Don't expect us to come every time. We may communicate with you. Expected nature and timing of communication among engagement team members, including nature and timing of meetings, timing of review. How we should meet, how we should review our people's work. What if they are not proper? Yes or no? And they keep on working on the same methodology. Imagine 20 days audit. First day of audit, one of my team member performed his work, but that work is not right, and I don't review. What will he assume? Same. For the next 20 days, same. Imagine 21st day I review. Hey, full wrong. Now he will also tell. First day only you could have told no, sir. At the end of this thing, exactly. Now that is my responsibility. I have to review. Clear. Now this is where staff and articles might feel that why the CA is coming and seeing it and doesn't trust me. It's not about trusting you. Who is signing the report? CA is signing the report. So he is more responsible than you. Clear? Right? Okay, sir. Factors that are significant in auditor's judgment should be considered, which will contribute in team's effort. Like for example, sir, huge volume of transaction. Will my team effort be different? If the transaction volume is huge, will my team's effort will be different? Yes. Significant industry development. If there are amendments, will it affect my team? Yes. Significant changes in reporting framework. Sir, from years to Indias, will my team be different now? Yes. Changes in legal environment. Acts are different. 1956 gone. 2013 came. Not amendment, repealing. Will my team's effort be different now? Yes, sir. Consider results of preliminary engagement activities. What is this preliminary engagement activities? In the same chapter we have seen SA 210. Understood? Preliminary engagement and planning activities. Right? Okay, sir. Sir, should I change my plan or should I be fixed with my plan? Should I change or should I fix my plan? Like one plan only throughout. One plan?
Plan should be flexible, but constant changing also lead to confusion.
No, constant change is different. My question is it fixed or is it flexible? It should be flexible. Why? Again, plan is on what? Initially, we have put one plan. Simple logic here. Simple logic. In audit, not audit, in CA, day 1 you had a plan. Day 10 you had a plan. Day today you have a plan. Plan is not the same. Yes or no? Sir, let us say now, foundation cleared. Okay, foundation results came cleared. You join inter. Day 1 you had a plan. I'll write both groups. Yes or no? You had a plan of writing both groups. Slowly, imagine account started. Okay, imagine accounts went for a month. Okay, both groups. Then tax started. Tax went for a month. Now, when tax starts, no, you will think, oh, so much is there to remember. I think both groups is little difficult now. We'll stick to one group. Yes or no? So slowly, when that information is given to you, your plan settles at the end. Not in the beginning. In the beginning, you go with one assumption. You go with your perspective. But when you face the actual reality and actual information given by the management, your audit plan changes. Clear? So plan should be kept flexible and not a one-time thing. Clear? Because there are many unexpected events, condition changes, right? Our environment changes, information changes. Suddenly you assume management is straight and honest. Management turned out to be fraud. Now your plan is different. Clear? Right. Next. Program. What is audit program? What is audit program? It is nothing but a series of verification procedures. What do you mean by series? Continuous, one after the other. Clear? So series of verification procedure to be applied, and we have to check everything in audit program. Can I say this is a sample and all? Or I have to check everything in audit program? Audit program is the most detailed thing. Clear? Everything is what question to ask. Yes, column will be given for you. Whether to answer yes, no, not applicable. Right? Every question that is there should be asked in the audit program. So it gives you a comprehensive list as to go ask these questions and come back. Enough. Nothing more, nothing less. Clear? Yes. Okay. Some important points let's consider. One program not practicable. Why? Tell me the concept behind this. Why is it not applicable? Sir, one program not applicable for every client. Imagine you go to a doctor. One medicine, can you give it to everyone? Same tablet, same syrup. Same prescription, everyone. Headache, this only. Blood pressure, this only. Stomach pain, this only. Dolo 650 everywhere. Possible to give? No, no. Not practicable. Depends on the disease. Similarly, here depends on the business. Depends on the client. Right? Sir, same industry, two different clients, two different program will be there. Why? Environment is different. The way they're running the business is different. Clear? So that's why these are the factors which are varying. Nature, size, and composition. Work which is suitable to one business may not be suitable to others. Efficiency and operation of ICS and the exact nature of service to be rendered. Depending on that, you put your program. Keep an open mind. I like this point. Why? Later on I'll tell you. Why they are telling keep an open mind?
We shouldn't be fixated on it. Boundaries.
Yes, why?
We should be open to changes.
We should be open to changes. The thing is, even if we don't want to be open to changes, no. Changes are such that if you don't be open to changes, your audit will become ineffective. You will end up giving wrong report. So you should have an open mind as to this answer will lead me to some other indication also. Clear? So keep an open mind, absolutely open mind. As experience is gained by carrying out the work, program may be altered. Different information I got, change your program. Different management explanation I got, change the program. So keep an open mind. Don't say like this only. Don't limit yourself. Keep an open mind. Right? Sir, the person who is working with me, should I tell him keep an open mind? Assistant. If you get to know any important matters, come and tell me. I should tell him. Reason, if I don't tell him, whatever list I gave, he will go and ask the question and come. What is the point of such robo procedure? Clear? So this one they said keep an open mind, but later on you see one point. Next, periodic review. Why should I review this, sir? 20 days. Example. You should review this. If you don't review, your assistant might be following an obsolete, pattern. Clear? So, to assess whether the same continues to be adequate or no, on the basis of obsolete program, your whole audit may be held negligently conducted, and ICA might even dismiss you. So that's why keep reviewing it. Don't ignore it. Keep reviewing it. Construction of audit program. Stay within the scope. Clear? Stay within the scope. Don't go beyond the scope. You should not go beyond the scope. Program should be in writing. You have to get enough evidence. There is nothing but sufficient and appropriate audit evidence. Apply only those procedures which are relevant in the situation. Irrelevant procedure don't apply. For example, sampling procedure is relevant there. Apply sampling procedure. Don't apply analytical procedures there. Here, include the objectives for each area and sufficient details which serve as a set of instructions for the assistants involved in the audit. So for every area of audit, set up an objective. Tell them this is what is the objective. For purchase area, this is the objective. Sales area, this is the objective. Clear? Go and ask these particular questions or perform these procedures. Because if you tell them the objective, they will understand it better. Example, standards when we learn, every standard first starts with objective. Why do they tell objective of the standard? Next part, in case if you get confused, you have to go back to objective. What is the objective of doing this? Automatically, you will be able to connect the concept. Imagine objective was not there in standard and you do everything apart from objective. You will be wondering, why am I doing this? So objective is important there. Clear? Consider all possibilities of error and coordination of steps. Now, sir, advantages and disadvantages. Leave advantages. Now, disadvantages you see, they said it may become mechanical. How?
Do what I say.
Then what is keep an open mind there? If you say do what I say, then why did you tell me to keep an open mind there? Correct.
Open mind means it need not be mechanical.
Correct. It should not be disadvantage then. See, when I say disadvantages, it may become mechanical. Then you are asking me to keep an open mind there. Boss, how you have to read this is keep an open mind. If you don't keep an open mind, it may become disadvantage. So this can be converted into advantage by keeping an open mind. Understood? That's why they said, see here, it may become mechanical and the work may be carried out without any understanding of the object in the entire audit theme. Which is why here, look at this. Point number 5. Include the objectives in the program. Tell them why are you doing so that you are avoiding the disadvantage there. See, advantage is there only when you take it. You don't take it, there's no advantage. Clear? But you can avoid disadvantage also. If you set the objective and tell them why they are doing it, you can say, okay, no problem. You found that disadvantage, I did not find it. In my program, that was not there. Clear? Next, second, becomes too rigid and inflexible. Again, when? Read this. In case of changes in business operations, staff, and internal control, which is exactly why periodic review you should do. If you do not do periodic review, sir, in the client place, people got changed. I did not review my program. These fellows doing the same thing. Exactly. And if it becomes obsolete, your audit will become inappropriate, negligible. And they will tell you did the work negligently. And legal consequences you'll have to face. So we can avoid this by following the previous few points. Clear? Inefficient assistants may take shelter behind the program. See, in a group of 10, 7 are doing extremely good. 3 are not doing good. But as a group, they are doing good because majority of them are doing good. That could be a disadvantage. We will not know who is doing what. A hard and fast program may kill the initiative of efficient assistance. This also can be changed by keeping an open mind. Remember, I told you I should tell my assistant, if you find anything wrong, come and tell me. That will not do this. If you do that, this is avoided. Clear? Right, sir. Now come to advantage. What could be advantage? Clear set of instructions. I have told you what to do. Clear? Provides a total perspective. What work to be done, one overview you will get. Selection of assistants become easier because I know in which area, which people I need. Clear? If I'm going for this ground, I know which batsman, which bowler I need. This area, which batsman, which bowler I need. So I can pick up my team. Reduces danger or overlooking of books and records because I'm covering everything in the program. Every question is covered. So there is no point of, or if there is no chance of me leaving out any procedure. Accountability. I can hold them liable if they are not doing the work because I've allotted the work to them. And if I can see, no, I can see they have not done it. I can call them. Here, the auditor can have control over the progress of various audits. Since I monitor everything, I have a control. I can change the people also. Serves as a guide in succeeding here, serves as evidence in case if somebody charges the auditor saying you have not done anything. Take. I have planned and performed my audit properly. Clear? So basically in audit plan, what is important? Benefits are important and how do we develop a plan? Development of plan. Clear? Then in case of strategy, overall audit strategy is important. Changes in one will lead to changes in another. Audit program. In audit program meaning, yes, and developing audit program, staying within the limits, including objectives, yes, and some 3 points we had seen very important. Keeping an open mind, periodic review, and program should be flexible. Understood? Clear? See here it is there. One is keep an open mind. One program is not practicable, and third one is periodic review. Clear? With this, our chapter number 2 revision also is done. Clear? So we'll stop here today. Tomorrow we start with standards. Clear? Today we did only 3 standards. Basic standards 210, 4 we did 210, 220, 230 SQC1. Right? Tomorrow we start with daddy standards. That is SA 500 series, SA 700 series. Clear? That is more important for us once our basic concepts are covered. So basically we know in audit we want planning. Yeah, planning is important. Program also is there. Then we understood essay 210. Quick recap of what we did today. Okay. In first chapter, what did we see? Definition we saw, objective we saw, yes, features we saw, limitations we saw. Correct. And then we got to know assurance engagement and where we use SA, where we use SRE and all. Then we moved on to the last chapter, chapter 11. What did we see there? We saw ethics, what qualities should be there for auditor, independence, skepticism we saw, yes, safeguards to independence we saw. Then we did SA 210, agreement in terms of engagement. There we saw two things. Before, what is the objective? Preconditions we saw, and then last one was audit engagement letter, clear understanding. Then we saw recurring audits. After that we saw SQC 1, which talks about quality control for the firm, SA 220, quality control for particular engagement. And then we went on to see audit documentation, SA 230, why documentation is important, what documentation we have to do, significant is professional judgment, significant judgment we have to document. Then we went on to see bank audit. In bank audit, we had seen different advances, NPN norms, provisioning percentage, yes, computation of drawing power, various type of advances, consortium advances, right, agricultural advances, everything we had seen. Clear, right? Okay. So tomorrow we'll start with our audit evidence chapter itself, so that we'll cover bigger standards first, and then we move on to the reporting standards. Clear? Cool. Thank you so much. See you tomorrow.
Once we complete the post-presentation, can we look at the mock papers, like 10 minutes?
You have not seen the video? Mock papers? You've seen, no? Mock paper 1, 1.5 hour video I've done. Let's start with basic standard, foundation standard of audit evidence, SA 500. Now, in this entire chapter, we have many standards to cover. SA 500, we have 501, 505, 510, yes, and then we have 520, 530, 550, right? These things we are having. So let's start with SA 500 audit evidence. If you remember the cycle, we started with the data, information, examination, procedure, and after procedure is what we get, evidence. Clear? And that evidence is what we call is supporting our auditor's opinion. And after this evidence, we go to conclusion, we go to opinion, and give that particular report. And we have remembered that the report we give it in writing. Right? So to give a report, we need something called as our main objective of auditors, obtain reasonable assurance. Correct? Now, reasonable assurance you will be able to give only when you have evidence. You do not have evidence, reasonable assurance is waste. You will not get reasonable assurance because there is no basis to give your opinion on. Right? So what are the sources? What are the sources of our evidence? See, if you look at the cycle again, source, the evidence, the previous part of evidence comes to procedure. Clear? So unless you do procedure, unless you do this procedure, you will not be able to get your evidence. So basically we have to do procedures only to get evidence, and procedures usually are divided into two. One is audit procedures, one is other sources. Now in audit procedures we have two things that we will talk about it later, right? So we have two sources primarily in SA 500. One is audit procedures where auditor is going to do some procedure and get evidence first hand, and then we have other sources. Other sources means what? Last year audit we have done, that is also an evidence for us. But last year audit we could have done, or some other auditor would have done, maybe from our firm only, but it's still an evidence for us, right? Audit documentation, SA 230, if you had seen, everything, whatever procedure we have performed, we will keep a documentation of it. And that serves as a future reference for us. But this is not a first time. This could be a first time if I have done. Clear? Number two is entities records. Now, what is entities records here? Entities records means what? Could be books of accounts. Yes. Could be any document that they have. So basically, entities records means where entity owns the record. It is under the control of entity. So it is also a source. Sir, why can't we consider that as a primary source? Yes, it is a primary source. But books of accounts, when we perform procedure on books of accounts, is our primary source. And the entire documentation will be in their control. Third one will be management experts' work. Now there are two types of experts in the audit. In your syllabus, only management expert is covered. Right? There is something called as auditor's expert as well. But it is not covered in your syllabus. In your syllabus, only management expert work is covered. Sir, who is management experts work, sir? Example, in case of insurance actuary, in case of companies, valuer, if they have to value any shares, if they have to value any particular assets, we need registered valuer. So he is an outside person. He is a management expert. So wherever we need to create provisions, wherever we need to create expertise type of amount where judgment is involved and management is not able to take the judgment, in those areas management should rely on an outside expert. Now that person is called as management expert. Sorry? In-house legal counsel is not management's expert, it is our people. We are in-house means what? We employ them. But same thing if management has taken decision based on an external legal counsel who is again management only has appointed him specifically, then again he'll become management's expert. Clear? Now management expert, again good question, we have two things. One, he could be an employee only, he could be an outsider also. So basically the source is, did management appoint him? Right? If yes, they are from management side. Clear? So evidence is both for us, this is important. Evidence is both which supports the assertion, which does not support the assertion. What do you mean by assertion? Representations made or statements made or claims made by the management. For example, if they say building is worth of 10 crores, that means management is claiming that the building value is 10 crore. So we have to verify that. Now evidence means both, which supports, which goes against. This is important. Sir, in MCQ they have asked this particular concept. Clear? One, now, which means now supports the assertion is simple language. Professional language is what we just told, corroborates. Right? But not everyone will understand what is this. They might write collaboration also. Right? Supports the assertion, does not support the assertion. Both are evidence only for us. Right? The most important concept in audit evidence is sufficiency and appropriateness. Now, what does sufficiency means? Sufficiency is always measured with respect to quantity and appropriateness is always measured with respect to quality. Right? One document, qualitative document is good enough for us rather than having 10 documents which is not quality enough. For example, sir, exams will get postponed. So many people told we had quantity, but did we have quality? No. When ICA give one notification, that is a qualitative evidence for us. Clear? So sufficiency and appropriateness both should be there. Sir, quality evidence, at least one should be there. One is a quantity, right? So both should be there for us to decide whether we have to give conclusion based on this or no. So both are very important factors, sufficiency and appropriateness. What factors will affect sufficiency, sir? Number one, materiality. If it is very important, I will try to take more evidence. Clear? Second one is risk. High risky matters, I will take more evidence. Higher the risk, higher the evidence for us. Important, materiality means importance level. If it is an important amount for me, important area for me, I will take more evidence. Size and characteristics of population, sir. If it is a homogeneous population, I will take less evidence. Reason, all items are same. If it is heterogeneous population, I want more evidence because items are different, characteristics are different, and ultimately the effect will be different. Clear? Then comes your appropriateness. Sir, appropriateness is a matter of quality, correct? Number one question I'll ask you, do you rely on outside evidence or inside evidence? Do you rely on outside or inside? Both? First one, step number one is inside evidence. But if our person is not fine, then we rely on outside. Right? Which means, if management internal control system is weaker, we have to look for outside evidence. But if management's internal control is robust and very strong, then we'll have to refer to internal evidence, which is better for us. Clear? So, primary source and source for us. Now we said audit procedure is our primary source. First hand evidence I told. Yes. What are the different types of procedures I have? Primary procedure is risk assessment procedure. Now what is risk assessment procedure? Procedures done to understand the entity, the environment and its internal control. Whatever procedure you do for understanding the entity, understanding the environment, understanding the internal control. If these three things, if you are covering and trying to know your client, where is he, what is the environment, how is the internal control, that is called risk assessment procedure. For example, like how doctor asks patient, what did you eat? Where are you feeling more pain? How are you feeling it? Right? Now that is risk assessment procedure. He's trying to assess what risk you have in your body. Based on that, he will order scan. No doctor, first time only when you go, I have a headache, take scan. Nobody will tell that. He will first ask, how is your pain? What did you eat? What did you do last night? Where did you go? What did you drink? Everything he'll ask, and then he will go for the next step. And that is what we call as risk assessment procedure. Clear? So done to identify. Why do we do this? Why do we do risk assessment procedure? To assess the risk assessment, evaluate the risk. Now, if I get to know the risk is high, my further procedure should be in depth. If I know that risk is low, I can design accordingly my further procedure. Devotion of time will be managed if I know what is the risk. If I do not know the risk, then time devotion also won't be right. For example, imagine students do not know which area is important, which area is not important, which area is difficult to understand. If I don't tell that to student, how will you study? You will study all the concepts in the same manner. And ultimately, you do not know now which one is important, which one is not important, where to focus more on. Right? So risk assessment is that. Then comes your further audit procedures where we have test of controls, and then we have substantive procedures. What is test of controls? Test of control is nothing but testing the internal control system. Now comes the main point here. Sir, testing the internal control system, correct, sir. Should I test internal control system all the ICS that is there in the entity? No. I will test only those ICS which is relevant to financial statements and relevant to my audit. Not everything. This we have to tell management in SA 265 also. Communication to TCWG. There we will tell them, boss, internal control system I examined, not because I wanted to, because it is relevant for financial statements. You have segregation of duty, I have to test it. You have segregation of duties in sales department, I have to test it. Why? Because that amount is sitting in the financial statements. For that, I need to check your internal control system. Clear? Whether security is eating proper food or no, you may have internal control system that. I am not going to check that. Why? It is not relevant for my internal control system. Clear? So only those internal control system which is relevant for financial statements or which is relevant for audit is important for me. Then we have substantive procedures. What is substantive procedures, sir? Going further, substantiate. See, usually they say substantiate your answer. What do you mean by substantiate your answer? Explain, go into the details and tell me your answer. So substantive procedures means get into the detailing of the transaction, which is why the first procedure is called test of details. Now, what is test of details? In test of details, we will usually have two things. One is verification of transactions and verification of balances. Verification of transactions, verification of balances. What is this verification of transaction means? Transactions means class of transaction, P&L items, income, expense, direct income, direct expense, indirect income, indirect expense, etc. Verification of balances means assets and liabilities, basically balance sheet items. Both when we go into the details and check the transactions, what is the journal entry, what check number has been given, what is the narration, that we say test of details, getting into the depth of the transactions or the balances. Then we have analytical procedures, which is dealt under SA 520, clear, which talks about analytical procedure. What is analytical procedure? Analytical, meaning analyze, analysis. So we tend to analyze the transactions and get to a conclusion. For example, in your childhood, you would have been compared with one of your classmates. He is scoring this much, you are not scoring this much. Analytical procedure, comparison. Through is comparison good? In life, I do not know. But in audit, yes, it is good. It is good. Why? That will tell you how your competitors are doing when compared to you. How your inter-department only, sir, intra-firm, sales department versus purchase department. I have given 10 lakhs to both of them. How they are using it? Analyze. Standard costing in your costing subject is a great methodology for analytical procedure, analyzing the variances, trying to find out why this variance is there, and because of that, what reason, what is the reason for this variance. That is a good analytical procedure, right? So this is how we obtain our evidence. What procedures we have to do, sir? Go to RIO for audit evidence. That's the mnemonic for you. Go to RIO, RIO-AE. Sir, inspection is there, inquiry is there, observation is there, recalculation. What is inspection means? Checking the documents. What is inquiry means? Asking questions and getting to know the answer. What is observation means? Looking at the procedure and understanding it. Recalculation. What is recalculation? Arithmetical accuracy. Checking interest calculation is fine, depreciation calculation is fine or no. Then we have re-performance. What is re-performance? What, yes, whatever employee has have done, I'm only doing it and checking. Clear? Then we have analytical procedure, external confirmation. Here we have relevant essays for that. SA 520, SA 505. Right? Evaluation of audit evidence, whether it is SAE to reduce the risk or no, who will take a call, whether simple logical one question I'll ask you, whether evidence is enough or no, whose call it is? It's an auditor's call. So your perspective may be different, my perspective may be different. Clear? Now this is where you have to draw a line. Sir, previous year evidence should I use or no? If some other auditor has done that, then for him, it is his judgment. Based on his judgment, he said, for me, this is enough. But your judgment could be different. So don't conclude based on previous year audit. Previous year audit, take it as a source. But conclusion should be from your point of view only. You should not conclude from someone else's point of view. Relevance and reliability of audit evidence, sir. Sir, evidence should be relevant. Irrelevant evidence will not give you good conclusion. Of course, you will reach to a conclusion point, but the conclusion will not be of a qualitative in nature. Right? So relevance means what? Deals with logical connection. Deals with what connection? Logical connection. Sir, what do you mean by logical connection? Whether simple logic, I'll tell you. I'll give you important questions. Okay, but after the exam. Is it relevant? No. Same thing if I give you before the exam. Same information. Same information. But now logically if you see, before examination it will be relevant, after examination it will not be relevant. So management has given you some information after your audit report date. Irrelevant. Before your audit report date, relevant. Which is where your subsequent events will come into the picture. Facts known after audit report date, I am not responsible. After I give my audit report date, I am not responsible. You are responsible. You change your financial statements, I will change my report. You don't change your financial statements, I will not change my report. That is because of this only. Clear? It is not relevant for us. Next, provides AE related to only certain assertions but not all assertions. Sir, one evidence can give you at a time one or two assertions. For example, you want to check building. How will you check building? Now, physical verification will give you evidence for what? Existence. Valuation will it give? No. For valuation, what are you supposed to do? You have to go and check purchase deed or sale deed, right? So one evidence will target one or two assertions, but not all assertions. Clear? Or I can put it this way. Alt evidence will support some of the assertions, but not all of the assertions. Clear? Now, when I check the document, it will give me two evidences. One, title, right? One is title, that is in the client's name. Second is valuation, but it will never give me evidence about existence. For existence, I have to go and check only whether the building is there or no, right? So these things is how you're supposed to think. One evidence will not give us evidence for all assertion, right? Obtaining evidence for a specific assertion is not a substitute for other assertion. Meaning, for the relevant assertion, you do your procedure and take evidence. Do not substitute. Sir, deed is there. Purchase deed, sale deed is there. Our building should be there. No, not necessarily. So just because you have a deed, don't substitute this for physical verification. Go and check. Clear? Inventory valuation. They will give you a document how they have valued the inventory. That is an evidence for valuation, but not evidence for existence. For existence, you have to go and check. Sorry? Now, during COVID, that was the only option left. Photograph. Now, my question to you. As an auditor, would you be okay with giving an opinion based on a photograph? Yes, photograph is there, but will you trust the photograph? It will be like that comedy scene where I'll show you a girl, but reality, I am getting you married to someone else. Yes, so your perspective will change there. So photograph, correct. When did you take it? Right? That is evidence for me. Now, during COVID, inventory valuation was not physically verifiable. So that time my only option was photos, videos, right, or documentation. There, my assurance level will come down. But I will mention in the report. Due to lockdown restrictions, I was not able to physically verify the inventory. Clear? Yes. Next is reliability. Reliability depends on three things. Very important three things. Source, nature, and circumstance. Right? Sir, if it is internal source, can I rely? Internal control is strong, you can rely. External source, if ICS is weak, my only option is external source. Nature and circumstances. Sir, circumstances means can I rely on coerced information, threatened information? No. Right? No, consent was given, but through undue influence, through misrepresentation. Can I rely on that? No, because it is not a reliable information for me and I can't draw conclusion based on that. So independent sources is usually better than dependent sources. Now look at how they have told. They have not mentioned in point number 1, it is internal or external. They have clearly told independent or dependent. Clear? Now tell me, if banker certificate you believe or do you believe in passbook? Why? Both are external source only, no? See, passbook you don't put, bankers only put. Clear? Then why go for certificate? Sir? Sorry? Yeah, but why? Passbook also saying the same thing, no? Why? How does it enhance? Correct. How does it enhance? Now, listen to this carefully. In passbook, there could be 31st March one entry. Clear? In passbook, 31st March, there could be one entry. Clear? Now, 31st March, look at this, I'll write here. 31st March, you write 10,000 rupees on entry is there. Okay? Now, after this, or imagine, I'll put here, 1 lakh is a balance. Sir, you gave 10,000 to someone on 31st March only. You received that 10,000 after 2 hours on 31st March only. What is the balance? 1 lakh. But in your passbook, what if only till here it is recorded? These transactions are not recorded. Balance is same. But when you go to banker certificate, no, you specifically tell him, as on 31st March, what is the balance? Give me. Now he takes a real-time update. Manager has real-time update in his system. So he will print in his letterhead what? Real-time balance only. Yes, sir, it is 1 lakh only. But this 1 lakh and this 1 lakh, there is a difference. You may forget to print passbook because passbook, although they are printing, it is with you. Certificate you don't print. Clear? So we rely basically on banker's certificate rather than the passbook because these chances are there. Clear? What if passbook is not updated? Right? So that is much better for me in that case to go for banker's certificate rather than passbook. Clear? Yes? Right. So independent source is always better than dependent source. The next one, internal source is always better than external source. Why? I have written something in the bracket. If ICS is effective, if ICS is not effective, I will go for external source only because internal source is lying to me. Clear? If you lie to your parents, they will never trust you. They will trust your friends, even though your friend is a liar in Zoom. Clear? Next, direct is always better than indirect. Asking questions directly is always much better than asking questions indirectly. You send it through someone, that person will ask, what he'll tell, God alone knows. It's always better if I only ask. I get a first information of it. Then, document is much better than oral. Reason? But sir, Indian Contract Act says oral contract is valid. It says a lot of things, but let's put practical things in place. How many of you trust oral contract? Sir, in our country, forget oral contract. Written contract only is not followed. Yes or no? Written contract only is not followed. What you give it in writing only, tomorrow you don't do it. And then you have an attitude, let's see what you'll do. Oral contract is valid, correct as per Indian Contract Act, and that was prepared when 1872, 19th century. We are in 21st century. So they say it is much better than oral contract. Written contract is much better than oral contract. It is always better. Original is always better than photocopy. Clear? So why, sir? It could be mocked. It could be adjusted. It could be rectified with the current technology. Earlier, at least, that would have been a difficult task. Now you have AI, you have software, you have people to do it. You just give them money, they'll do it. In fact, there are tools where PDF font is there, no? It will be same. They can edit the information in such a way that PDF font also is same. Sir, in one of the documents, imagine they have written like this. 23 Jan 2026 is the expiry. Okay, they will remove this 23 in the same font, not 2023, sorry, I'll remove this 2026, they'll remove and they'll write 2030. Now, you can't make out only. So, it's always better than, original is always better than photocopy. Clear? Because photocopy, I cannot trust. Yes, take it, but don't form an opinion just based on that. Sir, one question, sir. What if original they are not giving? They are not giving original, they are giving only photocopy for me.
We should request for it. If not, you can ask for it.
Now management will tell, sir, original if I give you, what if you lose? Now imagine you come to me and you say, sir, I want your original CA certificate as an evidence. I'll give. What if you lose? What will happen to my profession now? I won't be able to prove it. In that case, what you do? You can have one solution. Sir, original you have no. Give us a photocopy, but show original. Keep it with you only. Show me. I will check. I will verify. Now, if you see at the end, no. When I go to office people will see only photocopy. On photocopy you came up with the conclusion, huh? No. I came up with the conclusion, the original only. But original is not with me. They never said retain original copy. They said rely on original more than photocopy. So did I rely on photocopy? No, I relied on original. But to ensure that this is the document I have seen, I need a copy of that. There is a difference. There is a difference in interpretation here. Clear? They never said retain original copy. Yes, if they give you original copy, first preference. But if they don't, at least verify whether original copy is there. Clear? Yes? Right. So, next, select an item for testing. Sir, how should I select? Should I select sample? Should I select 100% or should I select specific items? Three things are there. You can select 100% also when, first of all, it is not appropriate in case of test of controls. Why? Controls are same everywhere. Yes or no? For example, let us say now in ArivuPro, I am teaching, right? Now, let us say system is here, camera is here, mic and all is here. Isn't the same control there in other classroom also? Now, if we have 10 classroom, isn't the control same in all classroom? Yes. So, should I check everything? No, I should check only one is good enough for me, because if it is working, if it is not working here, it is not working everywhere, because it is system, it is not human being. It doesn't have prejudice. It doesn't have a bias. If it is not working in one place, it is not working in other places also. Yes, but yes, there could be exceptions, sir, where there is some glitch. Tell me, generally, what is the rule? Glitch is generally happening everywhere, or everywhere it is a software? Specific situation, no. Wherever there could be somewhat one or two errors, only those situations there could be some glitch. But otherwise, generally software is working in uniformity in every department and every classrooms. So if it is not working in one place, it is not working in other place. You don't have to do 100% checking in TOC. So that means, can I say in TOC is less than 100%? And if it is less than 100%, it's called sampling. That means in TOC, which is more appropriate? Sampling. In TOC, more appropriate is sampling rather than 100%. Clear? It is common in case of TOD. What is TOD? Test of details. There it is common. Sir, why should we do test of details, sir? We have that much time. Your audit starts then after 31st March. So you have that much time. No. So for that, they have told, where is it appropriate? If the population has small number of large value items, what do you mean by small number? Quantity is less, but the value is more. For example, population is 10 bill. Each bill is 1 crore rupees. What is the total value? 10 crore. But how much is the value? How much is the quantity? 10 bills. Now there, can't you check all 10 bills? Yes. But if you have 10 crore bill of 1 lakhs, now 100% possible? Not possible. So small population, large value. Then significant risk and no other means of obtaining SCAAE. So this is the only way for me to do it. I can't do sampling because sampling is not fine here. Clear? Now in that case, no other option, they say no. No other option is what this one is. The risk is high and I have no other option other than checking 100%. Clear? Then repetitive nature or other process performed automatically by information system. Now this particular point in your module when they are given, no, students will not be able to crack what is the concept behind this. The concept behind this is, see, this is what I'll highlight. Now what does this automatically by ICS mean? So information system, we just have to give the data, everything it will perform, sir. Isn't that helpful for me to check 100%? If system was not there, what I would have done? I only would have sat, checked everything, which is time consuming. When I have a software, when I have systems doing it for me, all I have to do is give information. It will give me evidence. That is when you have such sort of information system, it is always better to do 100% rather than sampling. Of course, it is your call, but they are telling it is appropriate. See, audit will never tell you do this. They are just saying it is appropriate for you to do it. Clear? So three situations where it is appropriate for you. Population is small number of large value items. Risk is there but no other option. And third one is your IS performs automatically. So repetitive functions. Now depreciation calculation. You have like 1,500 assets. Clear? Now you will evaluate on 10-15 assets and say, okay, it is okay. But if you have an information system which will calculate depreciation automatically, you just have to give the data. Which one will you choose for? IS only. Clear? Yes. Okay. Next, selecting specific items. When should I select specific items, sir? From the population, when should I select specific items? Number one, consider the factors like entities understanding. What do you mean by entities understanding? Get to know the entity. Number two, assess the risk. If the risk is high, then select that specific item only. Clear? And characteristics of population. Characteristics of population means what? Is it homogeneous? Is it heterogeneous? According to that, you select which item you want to take. Specific items means which ones are high value items. Diamond in case of jewelry. High value items. Platinum. Select only that. Number two, items over a certain amount. Debtors. Debtors. I don't want all the debtors. You have 500 debtors, but I don't want all. I want to select specific group of debtors who are there in your books, sitting as a debtor for more than 1 year. So over a specific time or over a specific amount, everything more than 50,000 you check. Now elections are going on. Check posts are there. Yes. Why are they standing in check posts?
To check if they are carrying cash.
What cash? No, I am also carrying 100 rupees I have. Will they stop me? Then above 50,000. Clear? Above a certain limit. So that is exactly what we call as selecting specific item. They are not checking everyone. Check post is there, but they're not checking everyone. They're checking only few vehicles, few four-wheelers where they're telling, say, I want to check. That's called selecting specific items. Clear? Then examining items. Why? To obtain information like nature of entity, nature of transaction. So any information or any items which will give me information with respect to entity and transaction, I will select that. Why? This forms a basis for me to move ahead. Nature of entity, it's a very basic part of my procedure. Nature of transaction. If the transaction is risky, if the transaction is related party transaction, if the transaction is outside normal course of business, I need to verify more. Clear? Then third one is sampling. We have a separate standard for this. We will talk about sampling there. Clear? Right? This is your SA 500. Clear? Right? So it's a completely revisional chart for your entire SA 500, but revision in such a way that all the nucleus of different concepts of SA 500 is included in this particular chart. Clear? Next we'll go to SA 520 or 510, initial audit engagements. Initial audit engagements. Very good standard. When initial audit engagement, sir, why do we need, what is this initial audit engagement, sir?
Previously, audit has not been there.
No, two scenarios. Yes, two scenarios. One, the financial statements for the prior period is not at all audited. What do you mean by not at all audited? Now tell me, not audited means, is it contravention of law?
No.
Are they contravening law if they don't audit? No,
Not necessary.
not necessarily. Audit is
Voluntary.
voluntary as well as Mandatory. So my question to you, if it is audit is mandatory or voluntary, in this case, there could be a reason where till now it is not applicable for them. Now it is applicable.
They became eligible.
They became eligible for audit when now. Now in that case, they have to get audited. It is an initial audit engagement. Second one, the financial statements for the prior period were audited, but not by me, by someone else. So all in all, in nutshell, if I have to put this in one particular sentence, number one, audit is happening for the first time for him as well as for me. In this case, audit is happening for the first time, not for him, but for me. So in both the cases, if I have to still filter it, first time when I am doing audit, for the first time, SA 510 will be applicable. That first time could be for him also, could be for me also. Yes or no? So think like that. First time I am doing audit, that is where SA 510 will come. But in two situations, SA 510 will come. One is for him only it is applicable first. Second one, for him it is not applicable. Sir, how does it make a difference? It makes a difference. It makes a difference because in second scenario, that fellow knows what are his responsibilities. He should maintain books of accounts. He should maintain documentation. He knows his responsibilities. In this case, sir, that fellow is only doing business. So he may not maintain books of accounts. He does not know what is books of accounts. He just knows business. Right? So he got one notice from income tax, get your accounts audited. Now he does not know what is audit. He'll come to me. Now in that case, my work will be more. In this case, he knows his responsibilities, so my work may be reduced. Yeah, it's a different factor that whether he is fulfilling his responsibilities or no. Clear? Practically, there are different things that we are going to face, but we are studying as per the standard what they are supposed to do. Now, who is this predecessor auditor? In simple language, previous auditor. Clear? Previous, his client's ex auditor. That fellow's report, we will still read it, so that what he has told, we will get to know. Clear? So, yes, ma'am.
Will this apply even if the terms of engagement are different but the same auditor is there?
No. If terms of engagements are different but the same auditor is there, no, it is not applicable because SA 510 is pretty clear about the applicability. It's only in these two situations. Clear? Why in your case, see, terms are different. Client is not changing. Client is not changing. Terms are changing. Engagement is same. Just the terms are different. From now onwards, I will, instead of working for 10 days, I'm working for 15 days. Just the terms are changing. Remuneration is changing. Team is changing. Facilities are changing, but the engagement is same. Clear? Here our target is opening balance and accounting policy. Is that changing there in your terms? If the terms are changed, will the client change their accounting policy? No. If your terms are changed, will they change opening balance and all? No. That is not applicable there. Okay? Right. So what is the opening balance, sir? What is the meaning of opening balance? Because if you see, main objective here is to obtain psi. In all the standards is to obtain psi. I told you again, when do you pick up SA 510? When do you pick up the standard? Remember the visualization concept. SA 510, I will pick only in two situations. These situations. That is, previous auditor, not audited only, previous financial statements not audited, previous financial statements are audited, but by someone else. In these two situations, when a client is coming to you, open the drawer, pick up SA 510. Clear? What is the objective? To obtain psi, whether what? Opening balance has any misstatement or no. Second one, whether accounting policies are reflected in opening balance and consistently applied. Sir, what if I want to change my opening balance, accounting policy? Allowed. As per AS1, it is allowed, but in two scenarios. AS1 says you can change your accounting policy in two scenarios. Requirement of law, better presentation. Clear? Sir, why is it not covered here? Covered here, boss. Covered here. Sir, last year I was following SLM. This year I am following WDV. Will it have an effect on this year balance sheet? Yes. Why? Opening balance might change? No, opening balance will remain same. Closing balance will change. Understood? Closing balance will change. So last year you had followed SLM, this year you are following WDV. There is a change in accounting policy. And accounting standard says whenever there is change in accounting policy, it should be properly presented, properly disclosed, properly accounted for. Right? Give proper effects in the books of accounts. I am fine with it. Right? What is opening balance? Sir, it is not only that. Look at the way they have explained. Balance is at the beginning of the period. Now, what does this beginning of the period means? It need not be last year closing balance. Meaning, sir, 1st April I started my work. 1st April only one transaction happened. There are two things. One, amount is coming from 31st March to 1st April. Second, 1st April only one transaction happened. Yes or no? Now then series of transactions are happening. In that case, what do you say? Hey, what is the opening balance of this particular ledger? You will go to 1st April and say, oh, this is the opening balance. But that 1st April opening balance is not 31st March closing balance. Are you getting my point? Yes. Second one, closing balance of previous period. This is from 31st March coming to 1st April. Understood? Loan balance. Clear? What if I have taken loan on 1st April only? For example, let us say, sir, 1st April I took 1 CR loan. Okay. 31st March I took 1 CR loan. Now, if this comes on 1st April, 1 CR, this is my second scenario in the chart coming from last year. This one is not there. 1st April only I had taken loan from bank. This is balances at the beginning of the period. Clear? Right? So students generally say, what is the difference? There is a difference. Conceptually, there is a difference. Entering into a transaction and already having a balance and coming, both are considered as opening balance here. What does it reflect, sir? It reflects three things. Transaction happened in the last year. Events happened in the last year. Accounting policies followed in the last year. Clear? Right? For example, sir, I have a building balance of 1.5 crore rupees. What does it depict? I don't want building is there and all. With respect to that balance, what does it say? It means building was purchased in the last period. Yes, number one, transaction happened, event happened. Right? Second one, accounting policy. What depreciation method you followed, that also I'll get to know from balance. Clear? Now, if the balance, if you see, you will find out, okay, this balance is there. No, what is the depreciation of it? And based on that, you'll say, okay, they're following SLM, they're following WDV, they're following whatever is the appropriate method. Clear? Right. Fourth, matters requiring disclosure also will have opening balance. What is that? Contingencies. Won't contingency have opening balance? Contingent liabilities? Yes. Last year, this was the contingent liability. This year, liability increased. More cases have come this time. Clear? Sir, last year, I am a Red Bull company. Last year, somebody told, you didn't give me wings, so I put a case on you. Okay. So I changed. Red Bull gives you legs. This time again, more case came because it is not giving legs. Contingent only. So contingent liability will increase. Contingent liability commitments also will have opening balance. Clear? Next, objectives done. Procedures. How do we need to handle this? Number one, first check whether closing balance have been properly brought forward. Now, what is properly brought forward means? See, nowadays you have software. In software, you just have to click import. Import amount from last year. That is much better because if you write manually, sir, what if closing balance was written, last year closing balance was 1,08,697 lakhs. Okay. Now leave this L for now. Let's focus on the digit now. What if manually when you're carrying forward, you will write 1,80,967. Possibility is there. Data entry might go wrong. Now in this case, is there a difference? Yes. So this is what difference? Opening balance difference. If opening balance difference only is there, current year closing balance also will differ. Balance sheet will match? No. Balance sheet will not match. Clear? So in closing balance, there are three aspects. Or two aspects rather. In closing balance, there are two aspects. Number one is your opening balance, and second one is during the year transactions. One is opening balance, one is during the year transaction. In this case, if any one of the things go wrong, closing balance will be wrong. Are you getting my point? This plus this is equal to this. If any one factor is wrong, your entire closing balance will go wrong. That means, sir, during the year transaction is right. If opening balance is wrong, closing balance automatically will be wrong. Sir, opening balance is right. During the year transaction is wrong. Still, closing balance will be wrong. Clear? That's why they say first to see whether it is correctly brought forward or no. Not everyone can use softwares. What if they are still using manual books? Possibilities there. Yes, I have seen in manual books brought forward, carry forward many mistakes because human beings, they tend to make errors. Next, Any adjustment, if it is there, disclose as prior period items. Now, last year, any disclosure you have to make, you got any mistakes, you want to correct it. Can you go to last year and correct your financials? No. So what are you going to do? In the current year, in prior period item, disclose it. Make the adjustment, show it in the prior period item. So that users will get to know this particular item is not this year's amount. This is last year's amount. Clear? Right, sir. Then, if there is any changes, like I said, should be APD, accounted, presented, disclosed. Clear? Think it like a process. First you account, then you present, then you disclose. Right? Next. Opening balance should reflect accounting policies followed. Yeah, that's what I told you here. It reflects accounting policy. Opening balance will reflect accounting policy. Then do one or more of the following. If the prior period, PPFS means prior period financial statements were audited, study the audited copy. Who audited last year? Study the copy. Sir, if I only audited, should I study my own copy? If you have forgotten, study. But here when they say if it is audited, sir, the way you read this standard makes a lot of difference. When I say if PPFs were audited, my question to you, am I talking about my audit or someone else's audit? Someone else's audit. How do you know? Sir, first objective, the coverage. Coverage says what? Audited, but by someone else. So logically, there's a connection between this point and that point. Clear? So if I have audited, is it initial audit engagement for me? Put logic into this. If I have audited last year, is this initial audit engagement this year for me? No. SA 510 will come. No. So when they say if it is audited, it means what? This means by previous auditor. So if he has audited, then go and read his financials. Clear? Read the audited copy. Second, procedure for opening balance evidence. Perform some procedure for opening balance evidence. What procedure, sir? What accounting policy they have followed? Right? What is the nature of ABCD? What is ABCD here? AB means account balance, balance sheet items. C means class of transaction, P&L items. D means disclosure, notes to accounts. Clear? So check what is the nature of these transactions. Significance of opening balance in relation to CPFS. CPFS means current period financial statements. Last year there is closing balance. Clear? This year there is opening balance. Should I check this opening balance? Is it relevant for current year financial statements? Meaning what? Sir, 1st April we had one 10 rupee balance. Now, classic example will be March month GST payable. When do you pay GST? Every month GST, when do you pay? Next month. Right? May month GST paid in June. June month paid in July. July month paid in August. So this month GST is paid in the following month. Now March month. April. As on 31st March. Payable. March month GST is payable. Showed in the balance sheet as current liabilities. Yes, that means closing balance is there. Opening balance also is there. Now, is that opening balance coming and sitting in current year closing balance? No. Why? It is paid in April, no. If it is paid in April, sir, look at this. 22-23. 31st March 23. 10,000 rupees GST payable. Liability. This is paid when? By 20th April it is paid. Right? But on 1st April, it will be shown as opening balance. On 20th April, this 10,000 is paid. Yes, sir. Sir, 31/3/24. What is the balance of GST payable? Is this 10,000 coming and sitting here? No. Why? It already has been paid. Clear? So I need to check when I'm checking closing balance. Is this opening balance relevant to my financial statements now? Yes, as on 1st April, it is relevant. As on 20th April, also it is relevant. I will check how much it is paid. Clear? Reason. In Caro, statutory dues, if it is arrears for more than 6 months, I am supposed to report. They will become relevant. Clear? Next. Right, sir. So, second one is perform procedure for opening balance. Third one, perform specific procedure. What specific procedure? That depends on nature of transaction, nature of misstatement, nature of balances. What procedure I have to do depends on the type of transaction that I want to get evidence on. Clear? For current assets, sir, inventory, what procedure you can do? Physical count you can do, valuation you can do, gross profit and cutoff procedures you can do. For Current liabilities, separate procedure. Fixed assets, separate procedure. Clear? So depending on the type, transaction, misstatement, balance, do your procedure. Clear? Now, look at this and read what I have written. Usually, we doubt only if in current period, while auditing, we get indication of opening balance misstatement. Sir, why are we writing this? Why are we writing this? See here. For these 3 points, no, when do we do the procedure? Here. When we have doubt, only then we do it. See, predecessor auditor is their boss. Correct. I am also an auditor. He is also an auditor. Do you doubt him? Do you doubt him? No. Why?
He's as qualified.
Both of us are equally qualified. Now that's the advantage of ICA. Right? When they say there is no bias in results, both of you are equally qualified. So both of you are equally there. Nobody is superior, nobody is inferior when it comes to qualification. Clear? Now the question is, we usually don't doubt him. But while performing in the current year, if we get any doubts, then we start. Okay, it's an indication that opening balance is wrong. Let us go and read it. That is when you start doing procedure. Clear? So logically, these procedures which we just discussed, these 3 points, we will not do every year. We will not do every time. We will do only during that time where we get to know there is an indication that opening balance is misstated or something is wrong in opening balance. Clear? Yes? Right, sir. Reporting. Sir, with respect to accounting policy, consistently you're supposed to follow. If you don't follow consistently, then I will conclude that accounting policies are not consistently applied, or you have made the changes, no problem. If you make the changes, you have to account for it. APD, account, present and disclose. You have not done that also. In that case, I will give you qualified or adverse opinion. Clear? In these 2 cases, I will give you either qualified or adverse opinion. Whereas, with respect to opening balance, if I conclude that, sir, I am not able to obtain evidence about opening balance. Sorry? Qualified or disclaimer. Because if you remember in modifications, you are not in modifications standard yet, but in modification standard, I am very sure you have studied. Disclaimer will come in one situation where evidence only is not there. Clear? Evidence is not there, effect is material and pervasive, I will give disclaimer. Evidence is not there, effect is material but not pervasive, qualified. That's exactly why qualified and disclaimer is coming here. Clear? Then, sir, I have an evidence that opening balance is affecting current period financial statement and such misstatement is not accounted, presented, disclosed, meaning correction is not done and is affecting my current period financial statements. I will give qualified or adverse. Clear? This is your essay 510. Let's go for the next essay 520. That is analytical procedure. What is analytical procedure?
Analyzing using various data.
Analyzing using the data. What type of data? Only financial information? Financial, drawing relationships, acceptable relationship between financial data and non-financial data, and that type of procedure is what we call as analytical procedure. What is the objective of this? Objective of analytical procedure is number 1, always to obtain SAI. My objective will never change. In every standard, my objective is to get SA, AE. Second objective is using this information in forming my overall conclusion. What do you mean by overall conclusion? At the end of the audit, if I have to conclude on something, I will analyze and conclude. For example, debt equity ratio current year 4, last year 2. Won't you form a conclusion? What is the conclusion? It has doubled. That means debt has been increased. Because of increase in the debt, interest payment will be increased. If interest payment increases, profit will decrease. If profit is decreased, taxation has come down this time. If taxation has come down, deferred tax, my asset or liability accordingly will have an effect. Provision for taxation will have an effect. Yes or no? Payment for taxation also will have an effect. So it is nothing but giving me an analysis as to what conclusion I have to draw upon. Right? Then we have others. What other objective I have? To evaluate the reasonableness of the amount. Sir, last time salary was 10 crore. This time salary is 15 crore. Reasonable or no? No, we do not know. So when we compare, now we have 5 crore difference. 5 crore difference means, sir, 50% increase. Differential percentage is 50%. Right? So can I say from last year 5 crore has been increased. On what now 5 crore you have increased? So I'll go and check number of employees. Probably promotion have happened. Yes, probably I would have appointed some reputed person who's asking for more salary. Yes or no? Like for example, you appoint some normal wicket keeper in your team and you get MS Dhoni. Who is more expensive? Who is expensive now? Dhoni only is expensive, right? So I will give more money. So on what basis you have appointed him? Clear? So that will give me analysis and tell me whether this amount is reasonable or no. Clear? Simple logic, sir. Sir, last year, employee expense, employee benefit expense. No, don't want employee benefit expense. Traveling expense. Last year, traveling expense was 10 lakh. This year, traveling expenses shot to 20 lakhs. Now, reasonable or no? Doubled, sir. Now, you will go and ask, sir, why? What happened? Sir, last year, people were coming in public transport. Because of COVID, nobody is coming in public transport, so everyone is coming in their vehicle. We are giving petrol reimbursement, sir. And they'll provide all the bills. Now, is it reasonable? Yes. Although it is double, it's reasonable for you. Clear? Same thing. Sir, you are seeing only the increasing part. I am seeing the decreasing part also. Last year, traveling expense was 10 lakh. This year, traveling expense is 5 lakh. Now you'll go and ask, sir, why, sir? People have stopped traveling, no? That time they'll tell. So last year, they were actually using public transport. So 10 lakhs. This year, what we did? We are tired, sir. Because people say they have to come in train, they have to come in buses, they have to come in flight, this, that, and also what I did. Gestures for others, right? Yes, very good. Work from home, sir. This time around, we did work from home. Clear? This time around, sir, if it is work from home, traveling expense should not be there only, no, sir. Sir, hybrid, sir. Hybrid. 2 days in a week you come. 3 days in a week you come. There could be another reason. Sir, we have one vehicle, sir. We have only bought one vehicle. Let it go. We have only spent one X amount. We have bought a vehicle. Yes. Now, we are only spending on traveling. We are only picking them up. We are only dropping them after office hours. Now, that is our expense only, no? We are not reimbursing to everyone different amount. Yes. Now, that will give you an evidence. Because of this, you are getting that, oh, you have one vehicle. Open the balance sheet and see. Is there vehicle under the assets? Clear? So, it will give you an idea whether it is reasonable or no. Then make comparison, like I already covered this, intra-firm and inter-firm. What do you mean by intra-firm? Between our departments. Clear? Inter-firm means between competitor. Comparison, if you do, it will be a great knowledge for you to move ahead. See, if you don't have how good they are, how will you know how bad you are? Right? If you don't see, okay, they are so good, we are not able to do it. So it will start working more towards quality. Clear? Then, to find reasons for variance in P&L items. Sir, why can't we do this for balance sheet items? Why only P&L items? Why can't we do this for balance sheet items? Any idea? Because in balance sheet items, they give us net effect. Net effect they give. Sir, net effect will not give me a clear picture. I will know the difference, but it will not give me a clear picture. P&L is for the year. Balance sheet is as on one particular day. P&L, the entire year transaction I will get to know. So there, analysis is better. I can exactly know what happened when. Whereas in this case, in balance sheet items, I just know 31st March 23, what is the balance? 31st March 24, what is the balance? What is the reason? What is the reason? We do not know. For that, you will have to go into the transactions only, no? Which is nothing but you will go to year transactions, right? So in P&L items, it is much better than your balance sheet items. Clear? Then to find unusual transactions. Sir, what is this unusual transaction? See, last year this was not there. This year it is there. It's pretty unusual. For example, last year this traveling expenses was there. No, it was less. This year it is more. What hint is it giving me, sir? Unusual transaction means, see, reasonable variance, I understand every year there will be variance. But from 10 lakhs, this year it has shot up to 30 lakhs. 30 lakhs, unusual transaction. Sir, let us take one example. Byju's one of the years, net profit was around 2,400 crores. Okay. They spent on advertisement About 2,200 crores just on advertisement. Is it unusual? Yes, because nobody spends that much on. That advertisement is a direct or indirect. It's an indirect expense. On indirect expense, you're spending such a huge amount is pretty unusual in nature. So you tend to ask more questions. Sir, why do you do this? What is the objective of this? What's your plan? So you get more into the details whenever you see unusual transactions. Clear? And that comes only when you analyze.
So they justify that very backwards.
They justify. I'm not saying it is wrong, but it will give us an idea as to it's pretty unusual. I want to know why. That is why in the first stand, audit evidence I told you, conclusion is your call. Whether it is sufficient and enough, it is your call. They will give you. But in analytical procedure, we can analyze this. This is unusual. Let me see why it is unusual. It will give me an idea as to why this particular transaction is not in line with usual transactions. Okay. What are the techniques we have? Trend analysis we have, ratio analysis we have, reasonableness test we have, structural modeling we have. What is trend analysis? Pretty common technique we use, right? What is the upward trend, downward trend, mixed trend? Clear? Sir, goodwill valuation you have done, right? In goodwill valuation, you have to calculate average, right? Simple average and weighted average. When do you take weighted average? When do you take simple average? When there is no specific pattern, simple average. When there is a specific pattern, weighted average. Now, isn't that trend analysis? Aren't you using that in valuation of goodwill now? Yes. Clear? Comparison of current period data with prior period data to know the trend, how it is moving. Clear? Then, ratio analysis. FM, full chapter only is there. Clear? Ratio analysis. Intra-firm, inter-firm comparison. Competitors happens. Clear? Sir, useful for analyzing income and expense, asset and liability. Here both. Ratio analysis, current ratio, debt equity ratio. These are all balance sheet ratios. Clear? Interest coverage ratios, gross profit ratio, net profit ratio. These are all P&L items. So it is usual, it is applicable for both. Clear? Then we have reasonableness test. Now here, it's a purely judgmental call. Whether it is reasonable or no. How do you say? Matter of professional judgment, sir. You ask your mom how much 1 kilo mangoes will cost. Your price will be different, her price will be different. Yes, shopkeeper's price will be different. Shopkeeper will tell 100, your mom will tell 30 rupees per kilo. That is what reasonable is for me. Yes, because her reasonableness is different. Clear? So it depends on non-financial data. Whereas these two things depends on the data. Here it depends, but not on financial. It depends on non-financial data. Clear? Remember I told you traveling expenses due to COVID. Now that is reasonable for you based on non-financial data. Clear? They working from home is not a financial data for me. They having a hybrid mode of work is not a financial data for me. It is non-financial data for me. Clear? Then we have structural modeling. So structural modeling, we use techniques like regression techniques, like linear regression. Clear? Multiple linear regression. You know what is linear regression? In the graph, we have a line. Yes. Dotted patterns we see. Yes. So we use that to see, is there an upward trend going forward? What forecast? What could be the stock price? In stock price, there's a website called tickertape.in or .com. In tickertape.com, you have for the next 12 months, what is the sale projected? That also they will tell. How will they tell, sir? Trend, trend also they will consider. They use this source. Study. Statistical method they use. Not just judgment. Clear? They use this method while forecasting financials, doing multiple regression to know how changes in certain assumptions will impact revenue or expense. Clear? See, of course, forecast includes assumption, data as well as assumption. Shark Tank would have watched now. Now in Shark Tank, when they ask, what is your projected sales? On what basis they're telling? Past information plus assumption. Clear? Now imagine I project next year, this year 1 crore, next year 2 crore. COVID happened. So forecasting is on assumptions. Clear? Anything can happen in future. But we use some data, we use some statistics, we use some techniques, and then we say this is a forecast, not accurate. Could be differing. Clear? Right. What are the factors influencing for analytical procedures? Availability of data. Higher the availability of data, better the analysis. Sir, less data, what will you analyze? Simple. I have students coming and asking, sir, in May 24, what is the weightage of the chapters? How can I give weightage of the chapters? Sir, based on old syllabus, you can give, no, there are only 13 chapters, here it is 11 chapters. Boss, there it is 13, here it is 11. Inside content, some chapters are merged. For example, in old syllabus, chapter number 6 is merged with chapter number 3. Audit in automated control, automated environment. It's included in risk assessment chapter. Sampling and analytical procedure, we had a separate chapter as 7 and 8. It is included in audit evidence only, no? Right? They've merged it. They've merged it. Some standards are new standards in completion and review. There was a chapter only called completion and review. Right? So how will I be able to give you weightage, boss? Not possible, because data is not available. So I tell them, okay, let's wait for 2 series of mock tests. Let's wait for 1 more attempt. Let's wait for November attempt also, or November or September or whatever is applicable for us. Clear? So we will get a good sample size to at least analyze something. Without sample size, sir, what will you analyze? Clear? You would have seen commentators in cricket also telling it is too early to judge him because the sample size is small. 2 matches if he plays good, sample size is small, we can't judge him. Right? We need a bigger sample size. Availability of data will improve our analysis. Clear? Second is disaggregation. What does disaggregation mean? The level of division. How much we can divide. How deep we can divide this information. Because more the division, better the detailing, better the analysis. Clear? Now, for example, blood test. They take one 5 ml, no. But do they test all 5 ml? No, they do. They take one drop under microscope, they disaggregate it. Yes, one drop they put on that particular sheet, but they will put another sheet on that which will spread that particular dot. Yes or no? So the way you divide it, the more you disaggregate it, the better the detailing will be. For example, can you exactly tell me, if I now zoom out, how much gap is there between in that R letter, in disaggregation on R letter is there? No. How much gap is there? Will you be able to tell? No. But if I zoom in, you will be able to tell. Yes, that zooming in is what we call as disaggregation. Give me more details. Clear? The way it is divided, more the division, better the analysis. Clear? Then we have account type. It is suited better for P&L items rather than balance sheet items. Why? Why? Because same logic I am telling you, balance sheet items gives me net effect. But I don't want net effect. I want to know the entire transaction, what has happened. Clear? Then source, non-routine and significant transaction involves management judgment, sir. Sir, in this case, analytical procedure won't suit. Why? What will you analyze with? Last year judgment was different, this year judgment is different. Last year judgment only was not there. What will you analyze with? Non-routine transaction. Non-routine means what? Rare transactions, occasional transactions. Clear? In these cases, we are not able to judge. Next, predictability. What do you mean by predictability? Forecasting means those transactions that are reasonably expected to exist and continue. Salary. Can you expect to exist and continue? Yes. Traveling expense. Depending on the nature of the transaction, of course. If I am a person, we are people where in our environment, we have to keep traveling. Traveling expense, can you forecast? It will exist and it will continue. Yes, sir, Karthik sir, let's say you are doing audit of my entity. Now I am a teacher. Okay. Now if you have to analyze me, traveling expense is my part. Yes or no? Otherwise, how will I go and teach? Yes. So reasonably, those expenses or those items which reasonably you are expecting to exist and continue, both, not just exist. Clear? Reasonably expected, sir. Salary is expected, right? Interest expense is expected. Clear? Bonus is expected because we have an actor, right? Sir, suddenly one extraordinary expense happened. For example, insurance claim. Insurance claim, can you expect it every year? It will exist and continue? No. Abnormal loss happened. Can you expect it to happen? No. Normal loss? Expected. Clear? So that is what we call as predictability feature. Then we have nature of assertion. What assertion you are targeting, depending on that, you can use your analytical procedure. Sir, it will not be useful for analyzing disclosure or rights. Now, rights and obligation, one assertion is there. How do you analyze rights and obligation to analytical procedure? Not possible. How do you analyze rights? Last year this was the rights, this year this is the right. So, but it is more suitable for assertions like valuation, completeness, cutoff. Clear? Then, inherent risk, what can go wrong approach will help in designing audit procedures. Why have you put it in quotes? Because that is the approach. If you imagine what can go wrong, your analysis will be better. For example, when I'm teaching, I always go through this approach. What if they ask? Now, if I see with that mindset, my analysis will be different. But if you don't have that mindset, what if they ask? Then my analysis will be wrong and my teaching will be wrong. Clear? That's why, what if they ask when you think? Similarly, as an auditor, what can go wrong when you think? Your analysis will be better. Here, this can go wrong. So check more. This might be an issue. Check more. Clear? So what can go wrong approach also will help you in analyzing inherent risk, because inherent risk is not in our control. It is under management's control. Their behavior, their way of dealing with things. These are called inherent risk for us. Clear? Right. So how do I use, sir? How do I use this procedure? First one, determine the suitability. Which procedure to apply? Who will take a call? Auditor. Then evaluate the reliability. Whatever data we are getting, we should evaluate the reliability. Can I rely on this data? Because if you are not, if the data is not reliable, your analysis will be wrong. Your conclusion will be wrong. Therefore, your opinion will be wrong. Clear? So, source, comparability, nature and relevance, and control over preparation of data. These are the factors to evaluate the reliability. Clear? Then, develop and evaluate the expectation. Sir, in analytical procedure, you have to develop expectation. If you develop expectation, only then you will be able to analyze. Clear? Let's take one example. Don't you put budgets in the entities? What is budgets then? Expectation only, no. We are expecting to reach this. We are hoping to have this much expense. Now, if you don't have the budget, what will you do with standard costing technique? Because in standard costing, two important things. Budget, actual. Standard, actual. If standard only is not there, what variance will find out? And if you don't find variance, how will you analyze things? Clear? So need to have expectation, develop an expectation. Clear? Then evaluating results of audit procedure. If the results are not consistent with the relevant information, meaning we got the information, when I did my procedure of analytical procedure, the evidence of AP versus information not matching. That time, what you should do? Inquire and obtain evidence for their response. Go and ask them. Ask them, sir, why is it not matching? This is the information you give, but as per the evidence, I see this. You're telling traveling expenses 5 lakh. But I analyzed, I got to know it is not 5 lakh, it's 10 lakhs. Give me more information about this. Clear? Inquire and obtain evidence. Perform other procedures appropriate. Who will take a call? Which procedure to apply now? Auditor 2. Auditor will take a call. Clear? Yes, simple standard. In this, focus more on these two things, techniques and factors influencing. Clear? Right? Okay, sir. So, 500 done, 510 done, 520 done. Right? Let's move on to 530 sampling. Right. What is audit sampling, sir? Checking any items or any population, not 100%, less than 100%. Example, sir. I gave you a general example. In regular class, I gave you a general example where blood test. Blood testing is a sample basis. Clear? They don't take every drop of blood from your body to test you. Clear? They take small sample of it. Even it could be for malaria, it could be for sugar. Yes or no? Similarly, we cannot take practically 100% of all transactions. Imagine if you are the auditor of Tata Group of Industries or Reliance Industries. Can you do 100% checking? No way you will finish audit. Clear? Now there, what is the most appropriate method? Sampling. Less than 100% sampling. Clear? So here it means application of audit procedures to less than 100% of items in a population. Now what is a population? Select units from the population in such a way that every unit has an equal chance. Now this is telling me have no bias. So every unit should have equal chance of selection. Clear? We should not be like an biased person, right? Partial person, partial auditor will take only what we want. No, unbiased things you have to select from the population. Clear? Now, what is population? Set of data from which the sample is selected. Set of data means what? Collection of data from which we select the sample. What is sampling unit? Every unit in the population, every unit that makes up the population is called sampling unit. Sir, ocean, correct. But ocean is made of drops of water, right? Now, every drop of water is what we call a sampling unit. And the entire ocean is what we call as population. Clear. Next, what are the characteristics of population, sir? It should be complete. It should not be incomplete. We have to cover all the elements of that particular population. Number two, appropriateness. Sir, what do you mean by appropriateness? As per your objective, select the right sample. Sir, I want to check indirect expense. I will go and check direct labor. Appropriate characteristics should be there. Then, reliable information should be complete and accurate. Reason, based on this, if I imagine sample is wrong, what will happen? Conclusion will come wrong. Clear? Imagine in my example, sample, I have to go for a blood test. Okay, but I don't give blood. I give ruafza. I give the rasna. Imagine they test that. What report will come? Normal. Nothing is there. Normal. Now that report I will go and give to doctor. Sugar is there, right? That report I'll go and give it to doctor. Now what doctor will do? Prescribe me medicines based on the report. Now I took the tablets based on the prescription. Clear? Now actually the disease is different. Tablets are different, right? And if something happens to the person, the patient, who will you blame first? Doctor. You will blame the doctor first, generally. But technically, who should you blame? The person who gave the sample. Why? Sample was wrong. Clear? Sample was wrong. Now to avoid that, they will tell, blood we will only take. You don't give, no problem. We will only take. Why? To avoid that risk. Clear? So you have to select the right information. If you don't select the right information, your entire audit will go wrong. What approaches we have? Statistical approach and non-statistical approach. What is statistical approach? By using statistical methods. Clear? Where it is more mathematical, where we use probability theory, more reliable. What is non-statistical? Judgment based. Totally judgment based. It is personalized. Clear? Customized. What is my methodology and what is your methodology could be totally different. Clear? It is always advised because it's defensible. Tomorrow you can defend yourself. But I am not saying you should not use non-statistical. If you are able to prove your non-statistical method is better than statistical method and you are getting the same results, then you are okay to go ahead with it. Clear? So it determines based on the basis of personal experience and knowledge. Clear? Very simple to operate. Why? Who will use formula and also? Who will use formula and all? Simply go based on a judgment, take a call. Clear? But there's a criticism that it is neither objective nor scientific. Right? Involves personal bias and cannot be eliminated. You can tell, sir, God promise, I will not use any bias. You can tell, how will I believe? Is there any formula? No. Clear? Sample may not be true representative because of personal bias. Whereas in statistical, true population only we will give. True picture only we are going to get. What are the advantages of statistical, sir? Testing does not increase in proportion to population. Just because population increased, my testing will not change. My testing will still remain the same. More objective and defensible. Sample associated with specific risk and precision. So I know what risk I am taking in particular unit. Calculated risk. Can I eliminate the risk? No, I can't eliminate, but I can take a calculated risk. Better description of large mass of data. Meaning, when it comes to statistical sampling, I am sorting and filtering the population. So I get a better description of a mass data and a widely accepted way. Reason, people can defend themselves. Clear? Now, which method to use? Professional judgment. If you can defend yourself, you take a call. Right. So, extent of checking. How much I should check? Depends on factors. Number one, size of the organization. If the organization is huge, different businesses they are doing, my sample size will be more. Clear? State of ICS. ICS is strong. Sample size will be less. ICS is weak. Sample size will be, extent, more I will check. Adequacy and reliability of books of accounts. If books of account is not there, I have to check more. If books of accounts and records are there, reliable, I will check less. Tolerable error range. If I can tolerate more error, I will check less. If I can't tolerate more error, I will check more. So that I will, sir, small deviation I can't tolerate. That means you are a perfect man. Go and check more. Clear? Desired confidence level. Sir, what is the desired confidence level? If I want more confidence, I will check more. If I want less confidence, I will check less. Now, don't come to a conclusion that who will tell I want less confidence, sir? I don't know. Probably you might be having that mindset. Clear? Standard says, depending on a desired confidence, you check more. Clear? You don't have more confidence in the population, still check more. You have good confidence in population, check less. I'm confident about this population, sir, don't worry. Now we're checking less on in that. Clear? Understood? Yes, sir. Sample design, size and selection. Sample design. What do you mean by sample design? How you have to design the sample based on certain factors. Consider specific purpose. Why do you want to do this sampling? Clear? Number 2. Consider nature of evidence obtained. What type of evidence we are going to obtain from that particular procedure. Consider possible deviation and misstatement and evaluate expected rate of difference and divide the population. Sir, here in case of sample design, concept is why do you want sample? Why do you want sample? That is the important thing you have to ask. Clear? Now, I am going back to the general example of blood test. Sir, if it is what do you say, sugar testing and all, they'll take 1 drop, still a sample. Yes, but if it is a serious skin disease and all, they'll not take 1 drop. They'll take 10 ml, 15 ml. Sample to sample only, but design of the sample is different. One is 15 ml, one is 5 ml, one is 1 ml. Clear? Why? Because of the objective. Similarly, how many units I should select? Sample design. How many units should be there? Clear? How many items should be there in that? Depending on your objective and your purpose. Then we have sample size. How big the sample size should be? That depends on certain factors. What factors? Sampling risk will directly determine sample size. Higher the risk, higher the sample size. Lower the risk, lower the sample size. Right? Now, so factors affecting sample size. In case of TOC, how is it going to affect? In case of TOD, how is it going to affect? In TOC, how big the sample size should be? Let's talk just about controls first, then we'll come to details. Clear? Now, extent of reliance on ICS. If you're relying on ICS too much, less sample or more sample? Less sample? Yes? Because ICS is? No. You're telling extent of reliance. You are relying more. I'm not saying reliability of ICS. Extent of reliance. You want to rely more on controls. Do you want to check more or check less? Check more. Because I want to rely on ICS. If I want to rely on ICS, I have to check more to get that confidence. Understood? Clear? See, for example, you want to rely on me. Okay, you want to rely on me. Won't you ask me more questions so that you get your answers? Yes or no? Won't you test me more to get your confidence in your mind? Understood? Clear? No?
Sir, I was thinking that we are relying on ICS because it is reliable.
No. Here we are selecting sample. No. We are yet to select the sample and test controls. Clear? We are testing controls now. To test controls, I have to take a call how much I should test here. If that is important for me, if I am relying on that, I will test that more. If I am not relying on that, I will test that less. For example, take an example here. 1 mic, 2 mic. Yes. Which am I relying more on?
Both.
This one. Why? If this is not there, now see, how will I talk? Should I put more efforts? Yes. Now, if this is there, less effort. This is important for me. No, why? Whether I do this, this will anyway be taking it. So where am I relying more on? This. Which one should I test more? This one. Understood? Although this is also ICS, this also is ICS. Where am I relying more? This. So I will keep testing this. Got it now? Yes. Next, tolerable error. Again, if you want to tolerate more error, you will have less sample size. You want to tolerate less error, sample size will be more, inversely proportional. Clear? Number 3, deviation rate expected. You are expecting more deviation. What do I mean by that? You are expecting more deviation. Sir, mistakes I am expecting more. Will you check more or check less? Check more. Clear? Assurance level desired, meaning I want more confidence. If you want assured desired level of confidence, I want more confidence. Will I check more or check less? More. I want less confidence. Will I check more or less? I want more confidence. Check more. Less confidence. Check less. Clear? Same thing for your TOD on the opposite side. Reliance on other procedures. Sir, you are relying on some other procedure and not on sampling. What will you do? Will you check more or check less? You will check less. Why? You are relying on other controls rather than this control. Clear? Number two, tolerable misstatement. There it is tolerable error, here it is tolerable misstatement. Same logic. If I want to tolerate more misstatement, I will check less. If I don't want to tolerate more misstatement, I will check more. ROMM evaluation. Higher the risk, higher the checking. Lower the risk, lower the checking. Assurance level decide, same concept. Sample selection methods are random sampling. What is random sampling? Random number sampling. Do you remember? Random number generated. Randomly I will pick up, no bias. That is called simple random. Then we have stratified random. What do you mean by stratified random? In the entire population, divide the entire population into subpopulation. Clear? From there you pick up random. That's called stratified random. Then we have interval or systematic sampling. What is interval or systematic means? Every 50th unit I will take. Every 10th unit I will take. Every third unit I will take. That is called interval or systematic sampling. Monetary unit sampling based on amount. Datas based on amount. Clear? Haphazard sampling. What is haphazard here? No structured technique at all. Very similar to random. Very similar to random. But here, one thing is you should avoid personal bias. Clear? And last one is block sampling. What do you mean by block sampling? Sir, here block sampling means, let us say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Clear? Right? Now these are population. Now in this population, how will I do block sampling? Sir, this is one block for me. This is another block for me. This is third block for me. Clear? Now this is called block sampling. So divide the entire population into blocks. Right? But 1, 2, 3, 4 is very close to each other. Clear? You can't say 1, 5, 9, 12 is one block. Clear? That is not block sampling, that is random sampling. Block sampling is where adjacent units you are considering. Clear? Next, sir. Sampling risk and non-sampling risk. What does sampling risk mean here? Very important concept. Risk that my conclusion based on sample is not equal to the conclusion if the entire population was tested for the same procedure. If I had applied same procedure of sample on population, I will get one result. That result is not equal to this result. That is a risk I am taking. Meaning, my sample can go wrong.
We
Huh.
never know what the result of the complete thing is.
That's what. See, the way I am saying is, let us say now one rasam you are preparing. Okay, when you are preparing this rasam, you take sample. Yes. Now, how do you take sample? One teaspoon, 1 tablespoon you take and you taste and tell. Correct? Now, imagine you take only the upper layer. What is the conclusion? Only water and it is very good, fine. Yes. But what if there is this pepper powder and all these things are settled down? Yes. So the way you select sample should be in such a way that risk you are reducing. That is why you see your mother, when she takes a sample, she mixes everything and then she takes. So that my conclusion on the sample should be same as conclusion on the population. Although I am not checking the population. Result is there, no. When others eat, they will tell me no. Yes. So that risk is what I call as sampling risk.
Sir, this is an inherent risk also.
Like
This already inbuilt, right? If we use sampling methods, we are not checking 100% population. So
correct.
this is an inherent risk, inbuilt, right?
It is not inherent risk. You are selecting sample. Nobody is asking you to select sample. You can taste entire vessel of rasam. You are not selecting that. You don't have time. So you are going for sampling method. Correct? Right? You can select 100% population But sir, time constraint is there, resource constraint is there, so I'm going for sampling risk, sampling methodology. So conclusion based on sample is not equal to conclusion based on population. If the entire population were altered in the same manner as a sample. Clear? Yes, you are right that we are not going to value the population more, but if the population was valued, one result will get that should match with this. That's a totally judgmental call. That's why selection of sample is very important. You don't select the sample, your population will not give you the right picture. I mean, sample is not talking about population then. So can I say sample is not representative of population? If you select the wrong sample, sample is not representing the population now. In a school, 100 kids are there in the class. You select only 5 best to go to quiz competition, and your class gets the prize. For what? That means all the people in the class are as good as that fellow. No. So how they should select 5? They should select 5 in such a way that 5 are random people. Only then it will be a representative of population. Right. So sampling risk will lead to 2 types of conclusions. Number 1, with respect to TOC, with respect to TOD. With respect to TOC, you are telling controls are effective. Whereas what is the actual scenario? Controls are less effective. And you have to read like this. Clear? You have to read like this. So they're telling you are concluding that controls are more effective than they actually are. And in case of TOD, you're telling there is no misstatement at all, but actually there is misstatement. This will lead to inappropriate opinion. It will affect your audit effectiveness. Clear? It will affect your audit effectiveness. Next, sir. You conclude that TOC, that is test of control, is less effective, but actually they are more effective, and you end up telling material misstatement exists, but actually there is no material misstatement. This will lead to additional work, meaning you have to prove your previous conclusion wrong and do it all over again. This will lead to inefficiency of audit, because one work you're doing twice, efficiency reduces. Clear? One work when you do twice, efficiency reduces, right? Okay, sir. Now, I'll give you one shortcut to remember this. One logic you have to understand. Sir, just to remember TOC. Just to remember TOC. Try to understand this very carefully. Super concept this is. Just to remember TOC. Now tell me, if controls are wrong, can I say the information entered by that control also is wrong? If ICS is not good, whatever information that ICS is processing also will not be good. Yes, so just remember one column. Just remember one column. If you end up saying test of controls are more effective than they actually are, meaning actually they are less effective. So actually definitely exist material misstatement exists, but you are telling it is more effective. If it is more effective, what does it mean? Material misstatement do not exist. Clear? On the other end, you are telling ICS control is less effective. Less effective means what? Ultimately, material misstatement exists. Clear? So you don't have to sit and see, sir, what this TOD is or how is it like this. Logic is, if TOC is good, mistake will be less. If TOC is bad, mistakes will be more. And that you can compare here with this one. With this one you can compare. With this one you can compare. Here. Whereas, same thing for here. Same thing here. In this case also you can compare. Here. So it's a direct relation between TOC and TOD. If controls are good, misstatements will not be there. If controls are bad, mistakes will be there. Clear? Yes. All right. Perform procedures. So select the item, take the item, perform procedure on that. Clear? If it is not applicable, replace the item. So that item we call it as replacement item. Clear? If a particular procedure is not applicable on some item, we call that as a replacement item. If you are not able to apply any procedure, then there is a difference. That is a difference. What do you name that difference, sir? Sir, in case of TOC, I found some mistakes. What do I name that mistakes? It is called deviation. What do you mean by deviation? Shifting from what is a standard. Clear? Shifting from what is standard. Next one, in case of TOD, what do we call them? Misstatement. Clear? TOD is misstatement, TOC is deviation. Projecting misstatements. Sir, what is projecting means? Projection, forecasting. Clear? Forecasting the or predicting the misstatements. Sir, out of 100 units, I got 10 mistakes. Clear? Out of 100 sample units, I got 10 mistakes. But the population has 1000 units. Okay? Out of 100, I got 10. That means what is the percentage? 10%. Now, this particular misstatement I found in this sampling now. If I apply this on population now, how much will be the mistake? 10% if I apply on population, it will be 100. That is what I call as projecting misstatements. So I am forecasting, I am predicting that in sample only 10 out of 100. Imagine in population. That will be 100. Now based on that, I can decide whether should I go for sampling or should I go for 100%. Understood? Clear? Yes. Now while projecting this, there is a term called anomaly. Exclude anomaly. Who is this anomaly, sir? Exception. Anomaly means what? Exception cases in the population. He is not representative of population. So exclude him. Clear? Exclude him because he is a non-recurring item. He is not a recurring item. Right? So no need for explicit projection in case of deviation. Why? I told you test of controls when I started only. If control is wrong in one place, control is wrong in every place. So sample deviation is equal to population deviation there. Whereas in case of units, misstatement, sample population might be different than your, sample deviation, misstatement is different than population deviation. Clear? Of course, we are projecting, but the projection may not be accurate. Clear? Right, sir. Nature and causes, once you get to know what is the deviation, what is the misstatement, see why the deviation has come, why there is difference. Clear? And then go and there could be a common feature, pattern you can see. Clear? That will give me an idea as to, all right, this is what it is. For example, you buy snacks, right? You buy snacks, you buy chocolates and all. Now behind that, you have something called as batch code. Yes. Now in that batch code, there is a design of that batch code. Imagine in every chocolate, you get one chocolate extra in the wrapper. One candy, Mentos candy when you buy, one candy extra you're getting. Imagine that's a sample, no? Yes, based on the sample like that, many candies, many shops, candies are like that only. Now company will tell, hey, get the sample back. Now they will check, sir, in 3 shops, I found 30 chocolates like this. Imagine in all the shops that we have given, how many will have? Projection. That's called projection. Now they have a common feature. What is the common feature? Extra candy. Each candy has extra candy, sir. They will open the batch code and they will see when it was manufactured, what time it was manufactured, who was the person in charge. They will go and ask him, what did you do that day? Where were you? Clear? So I can understand the reasons better if I have a common pattern. Clear? Next, evaluation of results. Sir, simple logic I'll tell you. If evaluation of result means sample should give me good results. Clear? Now, if my tolerable misstatement one side, sample misstatement another side. Based on the sample, whatever misstatements I got, it is more than my tolerable limit. Is sample helping me? Is sample helping me? Based on sample, the misstatement is 10. I can tolerate only 6. Is the sample helping me? No, sampling is not helping me. So here we are talking about evaluation of result. In case of TOC, high deviation rate means high risk, meaning it is not recording amounts properly. In case of TOD means high misstatement means what? Sir, my financial statements will be wrongly entered. Misstatement means what? Difference. If the misstatement only is high, financial statements will be misstated. Clear? So, what is my best estimate, sir? What is my best estimate in case of TOD? Projected misstatement plus anomalous misstatement is my estimate. Because projection only is estimate, no. So, projected misstatement plus anomalous misstatement is my best estimate. If projected misstatement plus uncorrected misstatements, what is UM? UM means uncorrected misstatements. If it is increasing tolerable misstatement level, my projection plus uncorrected. If it is increasing my tolerable misstatement, sampling is not providing me appropriate basis to conclude. I can't rely on sampling now. I have to check 100%. Right? If PM, what is PM? Projected misstatement is more than expected, unacceptable sampling risk is there. Meaning projection only is more. Projection only is more. I am expecting, let us say projection comes up to 100. I am expecting 70. I am expecting 70. Projection is 100. Sir, unacceptable for me. Unacceptable for me. So in this case, unacceptable sampling risk that actual misstatement will be more than tolerable. Clear? You have to go through this with calm mind. Clear? You have to go through this with a fresh mind. Because there are three factors here. One is projected, one is actual, one is undetected. Clear? Yes, and that is what we see the relation between these things. Clear? So quickly, I'll just wind up with these two things. Point number D and point number E. Point number D says what? If projected plus uncorrected misstatements is more than tolerable misstatement, sample is not providing me appropriate basis. So in this case, I'll have to go for 100%. In this case, I'll have to go for 100%. Second, if projected only is more than my expectation is before I start sampling. Projection comes after I finish sampling. Projection is more than expected. Unacceptable sampling risk is there. Therefore, again, I'll have to go for 100%.
So increasing the sample size is not a
Increase in the, how much will you increase?
maybe 70, 80.
Huh.
Instead of going 10.
Now, when you do 70, 80, is 100 difficult for you? Fine. No, I will come to your point. You can do 70, 80% also. Now, after 70, 80%, again you have to do same formula. See whether it is coming below your limit or no. If it is not coming, then again, better to do 100% only. Clear? Ultimately, we are talking about that. How many ever sample you take? Number of samples, number of evaluations. If you take 10 samples, 10 times you have to evaluate. And ultimately, you will have to come to a conclusion, is it providing you appropriate basis or no? If it is providing you appropriate basis, then you can go ahead with it. Absolutely no issues. Clear? This is your essay 530. 500 done, 510 done, 520 done, 530 done. Clear? Now, quickly let's wind up with 550, external confirmation. Now, 550 external confirmation, sir. What is external confirmation? Going and asking from outside people. Clear? Going and asking information from outside people. Direct response from a third party to us. Third party respond to us directly. Don't come through management. Directly come to me. What are the different types of confirmation we have? Positive confirmation we have. What does positive confirmation means? Meaning?
Verifying the returns. We shall ask a question stating that this is the exact balance.
Okay.
There is no negative questions.
So their response is like supporting the evidence.
The response is supporting the evidence. Okay. Now, here, I know when you say positive, you're talking about a positive response. Like you said, it should support. No. In positive confirmation, response is important. It could be matching with my evidence. It need not match with my evidence. So here, the party directly, I have put one box for a specific word called respond. Response is important for me. Party directly responds to the auditor, indicating both agreement as well as disagreement. Either you agree, tell me. If you don't agree, tell me. Understood? You agree, tell me. You don't agree, tell me. Clear? Next. Non-response. What is non-response? No response. Simple. No. I mean, question won't be asked, but again, failure to deliver, failure to respond, or, sir, whatever request I sent, it came back to me only as undelivered. Clear? Then we have exception. What is exception? Yes, there is a difference between information given and information asked. Whatever information I am asking, I am not getting that information. I have a difference in information received versus information requested. Negative confirmation request, meaning?
You don't take reply. They don't reply.
Okay, they don't reply usually. right? Reply only when they they respond only when they disagree. Where is it? They respond only when they disagree. Only when the party disagrees, they respond to us. Clear? Only when they disagree, they respond to us. Right? Okay, sir. Next.
Sir,
Yes.
what if we send negative confirmation request? They didn't see only.
I'll come to that. I know that question is there. Sir, negative confirmation is not giving me evidence. Clear? So that is why don't send negative confirmation. Suitable situations. In these situations, you send negative confirmation, absolutely no issues. Like what? Risk is very low. In the area where risk is very low and you have some other method, you would have already got evidence. Clear? You have done some other procedure, you have got evidence, but the risk is very low. You are going and asking the debtor anyway. For example, I have a debtor, 5,000 is the amount due. For that 5,000, I got all the evidence. Invoice is there, payment is there, everything is there. I will still send a negative confirmation to debtor. If it does not respond, does it make a difference? For me, does it make a difference? No. Why? I have evidence. So you send negative confirmation, no problem. You see, you don't see, no problem for me. Clear? Chuma, to finish off my procedure. Clear? Next, population as homogeneous item. Same item. Sir, same question I'm asking you, same question I'm asking him. You answer, no problem. He will not answer, no problem for me because I have an answer from you. Clear? Exception rate is low. Again, exception rate means what? I am not expecting difference here. Everything is same. Clear? Low exception rate I am having. Sir, I am not aware about the party now. See, this is one practical thing. I do not know whether this fellow will respond to me or no. So I will send him a confirmation request and I will tell him, if you disagree, you send. What if I don't see only? I don't know about his negligence. Clear? Which is why what you should do for this point only, select the appropriate party. Ask management, sir, this guy will respond, no? Now management will tell, sir, that fellow doesn't pick up my calls only. What will you send him? So don't send negative confirmation to these people in these scenarios. It is always better to send confirmation to people who are responsive. Clear? It is also much better, sir. Can I go and ask for confirmation with the letter? Yes, personally is much better. Clear? Right? What is the procedure, sir? First decide whether you want to ask the information or confirm the information. Clear? First you ask what? Should I confirm or should I ask? Because there is a difference. Confirm means you have the information. You want confirmation. Requesting means you give me information. Sir, Mr. Karthik, please give me debtor balance. That is requesting. Mr. Karthik, your balance is 1 lakh. Please confirm. That is confirmation. Clear? Selecting the appropriate party to confirm so that I will send it to the right person. That's my second point. Third, designing the confirmation request. Design in such a way that it is helping your cause. What is that? How, sir? First, identify specific risk. Clear? Second, layout and presentation. How I should present my request. Third, do I have prior experience in handling such things? That's a factor for me. Number 4, assertion addressed. Assertion addressed. Sir, what do you mean by assertion addressed? Do you want valuation? Do you want rights? Do you want obligation? About what you want confirmation? Is it about valuation or is it about some other thing? So assertion address. Method of communication. Should I send email? Should I send a message? Should I go and talk? How, sir? Then management authorization. Sir, I have a question here. Why management authorization is a factor? I can directly go and ask no. No, I mean, why management authorization I want? I can directly go to debtor and ask no. SA 210. Unrestricted access is given to internal people, not for external people. That is why it is coming as a factor here. Management authorization or encouragement. So if they don't encourage me, what will I do here? Clear? Then ability of the confirming party. So the party should be able to confirm now. If that party does not have the ability only, why will I send? My effort is wasted. Clear? Send a follow-up request. What is follow-up request? Reminding them, sir, respond. Sir, respond. What happened? I sent you, respond. Clear? Fifth one, sir, what if management refuses? Management refuses to allow the auditor to send the request. Possible? Yes. Management will stop, don't send. No. Number one, don't report. First ask why. Inquire as to why are they stopping us. Number two, evaluate the effect on the risk and audit procedure. Meaning, if you're not giving me the permission, that means now I'm getting a doubt. I think this is high risk area. Sorry? Reassess your risk. Also, based on my procedure now. Now, see, I thought of asking from Mr. A. I thought of asking confirmation from Mr. A. If you're stopping me, I have to change my procedure now. I can't select A. I have to select some other person. I have to do some other procedure. So, evaluate the effects on your risk assessment and your audit procedure. Nature, timing, and extent. Now I have to change my audit procedure. Timing I have to change. Extent I have to change. Because you have stopped me. And that gives me an indication. Clear? Perform alternate procedure. Because you're not allowing me. I need evidence anyway. So I'll perform alternate procedure. Sir, if you feel the refusal that they're giving, the reason that they're giving is totally unreasonable, sir. What should I do, sir? No problem. If it is unreasonable, talk to TCWG. Clear? Talk to TCWG, or also you can evaluate SA 705. What is SA 705? Modifications to your audit report. Clear? Modifications to your audit report. Right, sir. Sir, this is one case. What if I am not able to obtain evidence from alternate procedure? Because you asked me to do alternate procedure. I did that also. They are also not getting evidence. What to do? Do you have any other option? See, one, going to debtor. Management is not allowing. Second, alternate procedure, checking the documents, everything. I'm not getting evidence. What to do? Say, go and talk to TCWG or modify. Now the question is, who is TCWG? TCWG means the people who are there in the control of policies, who are making policies, who are governing policies, who are making rules, administering it. Who is management? Following whatever policy has been done. Clear? So, can I say TCWG and management are two different functions? Yes, it could be interested in one person only you could have given, but the concept is TCWG means I am not involved in execution. I am involved in planning. I am involved in telling this is how it should be done. Clear? But management means whatever we have decided, they have to follow it. They have to execute it. Right? And you are talking with management. Right? They are not letting you execute. You come to me, no. I will see what is wrong with management. Clear? But if management and TCWG both are same, then SS 260 is not going to be relevant for you. SS 705 will be relevant. Understood? Because we are going to the person who ignored you in the first place only. Who is not giving you permission, you are going to him only. So there, 260 will not help you. 705 is better. Understood? Yes, this is SA 505. So, which are the standards pending? 550, and we have SA 610, internal audit function. Correct? In 5 minutes break will take. Standards for SA 550. Let's talk about related parties. Now, SA 550, which talks about related parties, here relevant AS also is there. We have a relevant accounting standard 18, which is very closely related to related parties. Right? Now, it's not that we should follow AS, but SA 550 says you follow whatever framework says you, tells what is related party. Clear? So, main topic here about related party is who is related party. Procedure is very subtle and small here, but the problem is to identify who is related party. What is the relation? Definition to define who is related to who, in what sense. That is the main challenge here. So SA 550 is very clear about it. SA 550 says first go and check your relevant framework. Whichever framework asks you to follow what type of relation is equal to related party relation, follow that. But if your relevant framework is silent or establishes minimal existence, minimal to zero, then SA 550 says, I will tell you what is related party, and in that they're telling there are two things. One is called reporting entity, one is called other entity. Reporting entity means, now this is A Limited. This is A Limited, and we are the auditors of A Limited. Clear? If we are the auditors of A Limited is reporting entity for us. Clear? So that with keeping that in mind, we will be talking. So in case of A Limited, reporting entity having C or SI, C means control, SI is significant influence. So reporting entity having control or SI over other person, both are related party. So A Limited having control over B Limited, A and B are related parties like holding subsidiaries, joint ventures, associates. These are all related parties. Other person having control over us, meaning we are subsidiaries of someone else's, right? We are also being controlled by someone else. Someone else is holding shares of our company up to 20% or more than 20%, coming under significant influence. Here, so one is reporting entity having control over others, others having control over us. Then we have common control, that is common ownership. Same parent, two different subsidiaries. Sister concern is what we call. Clear? Close family members are owners and common key management. Now, sir, what if nothing has been told? No problem. SA 550 says at least know the meaning of control or significant influence. Because if you know these two things and anybody who is having relationship with these factors, then they are related parties. What is control? Control means power to govern the policy. Govern means rule, make the policy, administer the policy, right? Implement it. First of all, to implement, you have to create it. Clear? So creation, who has the power? That's why we call it control. Power to govern. What is significant influence? Power to participate in decisions. Here you don't have power to make the policies. You just have the power to participate in the decision. Yes or no, that's it. You can't change the policy there. Changing policy is called controlling. Clear? What are the other ways, sir? Equity holdings. That's what I told just now. Equity holding is what? Buying shares. Entities holding in other entities. Share capital. Being part of TCWG, you are a key managerial personnel. So company and KMP having transactions is ArP transactions. Having significant business relationship with whom? TCWG only. With, sir, I am having business relationship with director. Director and me, we are related parties. Clear? What is the procedure, sir? Very simple procedure. Inquire about management. With the management, what should I ask them? How many related parties you have? Do you have a list? What are the identities? Clear? Including changes. Sir, will the related party change? Yes. This year I have a subsidiary. Next year I may not have a subsidiary. This year I have one subsidiary. Next year I may have two subsidiaries. So there will be changes. Nature of relation. Is it subsidiary? Is it joint venture? What type of relation you have? Subsidiary, JV, associates, etc. Clear? Any transaction that you guys have entered into. So do you have any transaction which you have entered into? That also you'll have to understand. Obtain understanding of ICS. Entities internal control system will be there. No, you have to obtain an understanding of ICS. Will that ICS, is that ICS recognizing related parties? Clear? So to identify RPT, RPT means related party transaction. RPR, related party relationships. Clear? So whether ICS understands and identifies these two things. Number two, is there any process for authorization and approval of transaction? For which transaction? Those transactions which are done outside the normal course of business. Those transactions which are done with related parties. So approval and authorization means what? In companies, we have something called as section 177 and 188. 177 talks about audit committee. 188 talks about related party transaction. So do you have any person from whom you have to take authorization before entering into a contract? Do you have to take approval before entering into any arrangement with RP? So that is what we are asking here. Do you have any authorization and approval procedure, or is it random? For smaller entities, it is not relevant. Not relevant means what? Sir, do you have any formal system there? Smaller entities, proprietorship. Do you have any internal control system for related party transactions? No. So there, owner only is the manager, manager only is the owner. So there is no specific process here. There is no formal methodology there. So what you do, whatever is the documentation, they will not maintain, but whatever documentation is there, you see, and the only possible appropriate procedure here would be observation and inspection. Clear? Apart from that, for smaller entities, you can't have ICS. They will, it's costly, sir. Having proper ICS is costly. Why will small entities say, sir, I am surviving here. You want me to put ICS just for audit? I will not do, sir. No problem. I am happy here. So ICS will not be there. When ICS only is not there, how will identification will happen? Right? Then we have nature of RPT. Now, nature of RPT is always risky. By default, it is risky. But if you do it in the normal course of business, there is no risk. Why? Why there is no risk? Because you and my stranger both are same for me. Clear? I sell it at 10 rupees to you, I sell it at 10 rupees to them. There is no risk. But I sell it at 10 rupees to you, I sell it at 3 rupees to them. There is a risk. Clear? So here, this is important. Point number B. In following cases, this is high risk areas. Which are those? Involved in complex transaction. Sir, related party and others, they are involved in complex transaction. Companies and RP, they are involved in complex transaction. We are not able to understand the transaction. Confusion. When there is confusion, no, it's an advantage for them. They will include more and you will not get to know what is going on. Clear? Number 2, IS may be ineffective in identifying your internal system, that is information system. Sir, does your computer know who is your relative? Unless you tell? No. So you should tell. See, clear? So only when you tell, information systems will identify. RPT not conducted under normal market terms, meaning going outside the course of business and doing it. Everywhere we give 10% discount, but for one person we are giving 30% discount. And that is very wrong. You will give only to selected people, and we have a doubt that that selected people is related party. How do we verify the existence, sir?
What's the purpose of finding related parties?
What is it?
Purpose of finding related party transactions.
Huh?
Like if the management is doing the normal transactions without any reductions to price,
Okay.
if they do that, why should they still disclose that they are doing a related party?
Why should they do is because the nature of the transaction is there. No, that is risky. Clear. So this is not a general transaction, it's a specific transaction. See, if I am doing a transaction with my holding, there is a inbuilt confidence that I can do whatever I want. Clear. So by default, what users will think? Simple logic I'll tell you. Simple logic I'll tell you. Let us say in my office now, I want to appoint an article. Okay. Now, let us imagine, no, not me. I am an article. That's a better point of view. I am an article with you. You and I are articles. Okay. Now, our principal appoints an article who is principal's son or daughter. Okay. Working in our office. Okay. Now, first day when that person works in our office, what is our by default thought process? Influence will be there. Yes. Now, tomorrow, let us say that article has done something wrong and principal has not punished. What is the mindset? Which is why exactly he will tell, I don't care, even if you are my son, you are equal to others. No need to tell, no. Why are they telling?
So that they appear as next.
Exactly. Right? But if they tell, they are shouting at us, will they tell? Will they tell it to us? No. They will shout and they will finish up. But for others, they'll tell, I don't even, when general people, when you talk, they'll tell, sir, he's my relative, I still don't care. Why should you tell? To give you an impression that don't be under the default impression saying I have bias. Clear? I am doing wrong things. I am doing right things. Clear? That's the reason we have to tell the user that, see, these are having related party transactions, but in the ordinary course of business. Don't think that it is outside normal course. Because generally when you have relative transactions or related transactions, you will go with an assumption that both are having benefits out of it. So don't think that, and that's the reason disclosure we have to give. Okay, right. Verifying existence. How will I verify existence, sir? Management will know. So directly go and ask the management, give a list of RPTs. Now, management will do it. Prepare a list. When they know RPT is there. Two things in RPT. I'll write here. Focus here. In RPT, we have two things. One is RP and one is T. Two aspects are there. What is RP? Related parties. And what is T? Transactions. Now, sir, if some framework says you have to record, this is how related party looks like, management will know who is RP. Clear? Now, in this case, we have seen indirect holding, direct holding, involvement in TC privileges, so they know who is RP. But if nothing has been told, in framework, will management have a list? Think and tell me. None of the framework talks about related party. Okay, will you know what is the relation you have to see? No, but you will enter into transaction anyway. So transaction pakka will be there. RP is questionable here. Now RP, how will I know? Sir, framework is not there correct. SA 550 is there, no? Now tell me, who should study SA 550? Management or auditor? Auditor. They will not know. I will know what is relation. Yes or no? Reporting entity, control, significant elements. I know. Now I will go to management. I will ask them, management, give me a list. Management says, list, no, I don't have boss because there is no requirement. Okay, sir. There is no requirement. But can you tell me, is any entity having control over you? Anybody is holding more than 20%? Man, yeah, yes, one company is there. Whatever transaction you've done with them, please give me. Clear? Then I'll ask, any company holding more than 50%? Yes, sir, 3 companies are there. Then do one thing, give me transactions with respect to you and those 3 companies. Now I have to explain because they do not know who is. But I know that they know that relation is there, no? So when I tell them this criteria, they'll think, yes, sir, these many companies are there. That is how I take existence. That is how I verify existence. Clear? Yes, this is how RPT existence is evaluated. Next, sir. If framework does not require, that's what I explained. If framework does not require, management may be aware about relationships, but they may not be aware about the transactions. Clear? Then they may not have a list in that case. So in that case, what they should do, they should focus on giving me relations. I will tell them what is relations, you give me. I will explain you 20% whoever is holding, give me the transaction of these. Clear? Do you have any directors and company transactions? Yes, if it is, please give me the list. Prepare and give me the list. If they know RP, they will prepare a list and keep. If they don't know RP, you should guide them in asking this particular list. Clear? Then also check for, is there anything under common control? Is there any subsidiaries under? What is common control? Same parent company, sister concerns. Clear? So focus on sharing resources with each other. Now S1 and S2. H is there, S1 is there, S2 is there. Now when S1 and S2 is there, S1 and S2 are related parties. But we will consider them a related party only if they are sharing resources. Only if they are sharing resources. But sharing resources, how small? No, in significant manner. If they are sharing resources in significant manner, then I will consider them. Otherwise, I will not consider them, even though they are RP. Understood? Clear? Yes, sir. This is your SA 550.
The significance is a matter of judgment.
What significance is a matter of judgment?
Like the transaction between.
It's not a matter of judgment. You will see, let us say now, out of inventory that I have, out of inventory of 1 lakh units that I have, my subsidiary is supplying me 70,000 units. Is it significant? No. So significant, there is no specific metric, but again it goes by the judgment, but not totally judgmental. Okay. Right, sir. New standard SA 610, new syllabus and new standard. This was not there in old syllabus. What is SA 610 talking about? Using the work of internal auditors. Sir, whenever we talk about auditors, in our mind, we usually have 2 types of auditors. Who are these? Internal auditor and external auditor. Internal auditor and external auditor. So my question to you, in this standard, are we discussing about external auditor or internal auditor?
So far, we are talking about external.
So far? Okay. And in this?
You are in
Both are? What's the title?
external.
External auditor using the work of internal auditor. So we are supposed to talk about both. How external auditor uses and what is he using. Clear? So here we have to discuss both. Just because you have internal, sir, what is the nature of the work of internal auditor and external auditor? Both are very similar. So in this case, we have to understand that since work is similar, we have to see external auditor, you are liable for your opinion only. You are not liable for anything else. You are liable for your opinion only. So what both will do? Both will work and report. But internal auditor will work and has to report to external auditor as well as the management. Whereas external auditor will work and report to whom? Management or users. That's, I am not responsible for internal auditor. Clear? So every company will have something called as internal audit function. Clear? Every company will have something called as IAF, internal audit function. What does that function do? It will evaluate. It will evaluate. Now, if I have to see, function does three things. Function does three things. What is that? Number one, sir, internal control system is handled by IAF. Clear? Risk assessment is handled by IAF. Safeguarding of assets is handled by IAF. Now here, most important concept to understand, internal audit function does not just audits. It will also help to the in the management to achieve their objectives. Business objectives. We are bothered only about financial statements. IAF will help them in doing business operations as well. But are we bothered about that? No. We want IAF. Where are you working? In audit department, if you are working, I want only that work. I don't want anything else. Clear? So if we have to do that, we have to evaluate three things of IAF: objectivity of the IAF, competence level, and do they have approach. What do you mean by objectivity? Sir, they should not have personal bias. They should not have conflicting responsibilities, meaning conflict of interest should not be there. Clear? They should be able to give independent opinion. And then we have competence level. What does competence level mean? Capability. Do they have enough skills and knowledge to perform the function? Systematic and disciplined approach means, are you going through a haphazard manner or do you have a plan in your work? If you have a plan in your work, then it will be easier for me, right? Now, if they are present, if they are not present, I cannot use it, sir. It is unacceptable for me. I will not use it. If they are present, what will I do? Discuss with them. How much can I use? Can external auditor use now? Yes. If these three things are present, external auditor can think of using it for your purpose. Clear? Where can I use, sir? Sir, instead of me obtaining evidence, they have already obtained evidence, I will substitute that. Clear? Rather than me doing it again, they have done it, I will use that evidence only. So I have to check, first of all, I have to check relevance with strategy and plan, whether their plan and my plan is matching, whether that work is matching with my plan. If it is not matching with my plan, then there is no point of using their work. For example, imagine now I am a teacher, I am an external teacher, okay? You have an internal teacher. Now your internal teacher's documents, workings and notes, can I use? Can I use? I can use. It's not about feeling anymore here. I have to check how is his planning, how is my planning of subject. For example, imagine I teach chapter 1, chapter 11. Second chapter I teach chapter 11. What if your internal teacher teaches 1 and 2? Can I use his notes now? No. Why? My plan is different. My strategy is different. So plan and strategy should be matching here. If it is different, I can't use it. Clear? Then areas where work of IAF is used less and EA is working more. Who is EA? So which are the areas where I am using less work of IA and I am only performing more? Now this can be asked in the exam as a question. Case study based question also can come on this. Clear? Do not ignore SA 610. Now where can I use? Where will I not use him more? Wherever judgment involved is more. Why? Why, sir? Judgment is mine. I can't use someone else's judgment. So wherever judgment involved is more, in what? In planning the procedure, evaluating the evidence. Sir, this one, evaluating evidence, SA 501 box in the chart we had written, it is professional judgment. Whether an evidence is enough or no, it is professional judgment. Then, if in areas where risk is high, right, and functions objectivity is less, I will not use you more. Clear? And competence level also is low. So here, they never said objectivity is not there. It is there, but it is less. Similarly, competency, they never said it's not there. It is there, but less. Okay. Next, using the internal auditor as direct assistance. Can I use him direct assistance? What do you mean by direct assistance? Mark it as important concept. Questions substantially can be asked in this. If I have to be an evaluator, no, I would want you to test in this particular area where we're talking about direct assistance. Sir, what is direct assistance? In the first point, IAF means I am using your functions work. In the second point, when I say direct assistance, I am using you only, not your work. I am using you only. So you come and work for me now. Now this should not be prohibited first. Nobody should prohibit me. No law should prohibit me. Number two, evaluate that follows three things again: objectivity, independence, competence. And before using the work, take it in writing. Two things you have to take it in writing. From entities representative, meaning from management's client's point of view, one representative should sign and give what? He will follow your instructions from now onwards and I will not intervene. Sir, this is a perfect example of Shivraj Kumar in Jailer movie, where he is telling his punters, from today onwards, I am not your boss, Rajinikanth is your boss. So take it in writing. Clear? Number two, from internal auditors, from that person only you take, who alter, that he will keep the matters confidential and any threats to independence is there, you will come and tell me. Clear? So even if your management is telling you, see, I'll give you more salary, don't work, come and tell me. So come and tell whatever is the problem. Okay. Now, do not use direct assistance if where objectivity is not there, clear, and competence is not there. This is same for even IAF. If objectivity and competence is not there, I'm not going to use his work. Sir, do not use only for the following. What is the difference between this and this? In the first case, do not use at all. In the second case, use, but do not use in these areas. This is where there is a big trap in the exam for you guys. Clear? This particular part is where you are supposed to focus. Where I am using him, but for these areas I am not using him. Which areas? Number one, in making significant judgments, I will not use him. Why? Other areas I use, procedures I will use him. Judgment wise, I will not use him because that is my evidence. Number two, areas related to higher risk assessment. Wherever risk assessment is high, I will not use him. You know why? Risk assessment forms one of the your part is coming from your client only, and you're using him only. That risk is there because of client. You're using his representative only, not allowed. Third, areas where judgment is needed to perform procedures to evaluate evidence. I will not use him. I will use my evidence or my judgment only. Work where internal auditor is involved and this work is yet to be reported. Meaning, sir, should I use him in a work where he is only involved? He gave a judgmental call. Okay, he put one amount. He entered some transaction. Should I ask him only to check? No, I will not use him. Last one, decisions regarding IAF and use of his work. Meaning, IAF is there, no. I am taking a decision as to should I use their work or no. To take this decision, I will not involve him in decision making. So because you are a part of IAF, there is a conflicting responsibility. If I ask you, imagine I take a decision, you are a part of IAF, and I ask you, should I use their work? You will tell no. Why? If I use their work, probably I might get to know a lot of things. Clear? So I will not involve you in decision making only. So in these four areas, you will not use direct assistance. But apart from these four areas, you will use direct assistance. That is the second branch. In this branch, you are not using direct assistance at all. Not even for a single work. Clear? Understood? Right? This is your essay 260. So if you actually see here, I can use the work in three ways. Whose work? IAF work, I can use it in three ways. One, information I am using. Clear? Second, I am using the work only here. Clear? Third, I am using the auditors only as assistants. Alright. But in essay 610, they have discussed only two things. One is using the work, one is using the assistants. They have not spoken about using the work of IAF. Clear? Sorry, information from IAF they have not discussed, only work of IAF they have discussed. Clear? Try to understand the scope of essay 610. Scope is only about two. Work of IAF, IA only. They are not talking about using information from IAF. You know why? Logically? Work of IAF includes information. Logically, you think if you get information only, then you will work. No. If work is there, information is already there. But if only information is there, work is not there. May not be there. Understood? Yes, this is your essay 610. With respect to this, your chapter number 4, audit evidence except essay 501. That is the last priority. Clear? Next. Essay 510, WR, completion of review, WR. Sir, what is WR? Written representation. Very good. Now, in written representation, why should I take it in writing? Evidence to prove tomorrow that you have told this. Clear? So, my objective is to obtain WR from management, and also to support other audit evidence. Sir, concept number 1 in WR. WR is a supporting evidence and not conclusive evidence. I can't take decisions solely based on WR. WR is like a finishing touch for me. WR is a supporting evidence. It's not independent and it is not conclusive. Clear? To respond, third objective is to respond appropriately. If you have given WR, what should I do? If you don't give WR, what should I do? In both the cases, I need to take decisions. Clear? From whom will I take WR? Sir, usually from management or usually from people who are responsible for preparation of financial statements. Sir, sometimes in the financial statements, experts will be there, sir. Can I take WR from them? Yes, you can, because they are a party responsible to prepare financials. Clear? Usually it is the management, but if you want, you can ask some experts as well. Okay. Now, what is the date or period covered in WR? In the WR, what date I should ask them to put? Nothing. Any date before audit report date is good enough for us. Because after audit report date, our audit ends the moment we report. There is no point of getting WR. Clear? Right. If you remember, relevance and reliability in audit evidence were studied. This is no more relevant now. Clear? If you take it after audit report, there is no relevance. The date shall not be after the date of audit report, and WR shall be for all financial statements and periods referred in the report. Now, in your audit report, if you say 3 years I have referred, for all 3 years take WR. 2 years, for all 2 years take WR. Clear? Right. Content of WR, we have primary, secondary, and specific assertion. Now, what is primary? I want WR with respect to these two things, pakka. Which are those? Management's responsibility. What is their responsibility? Information? Yes or no? SA 210. Financial statements is their responsibility. ICS is their responsibility. Access information, additional information, unrestricted access. That is their responsibility. Clear? So that you have to take, and auditor may request management to reconfirm their responsibilities. When? Reconfirm their, sir, they have already given responsibilities, but I want them to reconfirm. When should they reconfirm? Number 1, those who signed no longer responsible. Meaning the people who gave me WR, they are no more a party. They are not there in the management. How? Management left, management fired, person resigned. Someone else will come in his place. So the WR is no more valid. Number 2, terms prepared in previous year. Last year terms and current year terms are different. Number 3, indication that management has misunderstood their responsibility. Meaning I communicated something, but they misunderstood it. I need a fresh confirmation now. 4th, changes in circumstances. Law changed, clear, requirements changed, location changed, work changed. So different situations will be there where I can take WR. So secondary WR. Secondary WR means what? To support other evidence, I can take WR. Clear? So if you feel that I need more than one evidence, you can go for more than one evidence. That more than one evidence is going to support your other evidences. Clear? What are such matters, sir? It could be liability, it could be title or control over the assets. Clear? Plans and intentions affecting assets and liabilities. I'm planning to go for purchase of new machinery, sir. Or you have told, give it to me in writing. Clear? So for these things, selection and application of accounting policy, these are not primary, these are secondary. Clear? Following matters, aspects of law, contractual agreements affecting financial statements. So in these cases, you can take secondary written representation. If you don't take this, is it going to affect you? No, because this is secondary in nature. But if you don't take this, is it going to affect you? Yes, because tomorrow they can blame it on you. Now this is totally left to you, because the content only starts with if auditor determines. If you feel. Next. Sir, about specific assertion, if you want, you can ask. Clear? About specific assertion, it provides NAE. What is NAE? SAE, I know. Sufficient appropriate audit evidence. What is NAE? Necessary audit evidence. Clear? It provides necessary audit evidence, but not SAE on its own. So solely it is not going to give you SAE, but it is definitely an audit evidence. Okay. So you may request on specific assertion like what? Valuation, management's judgment. Now these things, provision for bad debts, management judgment it is, right? They're telling it is appropriate. I feel it is inappropriate. Now they're telling no sir, it's appropriate. Give it in writing, sir. Clear? That is called specific assertion WR. Clear? Right. So while evaluating their judgments, what should I consider, sir? Entities' history of such intentions in the past. Have they taken such decisions where it is totally based on judgment? Reasons for choosing the actions. Why are they doing it? Ability to pursue the action. Action you chose, but do you have the capacity to perform? Clear? And fourth one, existence or lack of information obtained that may be inconsistent with management's judgment. So whatever information which is available in front of me, is it giving me an indication that it is not matching with management's words? Then again, I'll have to take WR for those things. What you say, what is there should match. Clear? If it is not matching, I have a doubt now. Whenever I have a doubt, I can take WR in writing. Okay, right? Okay, so SA 50580. Now, let's talk about SA 450. Evaluation of misstatements identified during the audit. Standard says only one thing, evaluation. Are we talking about performing procedures? No. Here, we have already performed. We have collected. Now we are evaluating. We are judging it now. So what are we judging here? We are evaluating misstatements. Which misstatements? Identified or not identified? If you not identified, how will you evaluate? So it's only identified misstatements. But where did I identify? During the audit, not later on. Clear? During the audit, if you have found any misstatements, then I'll have to evaluate that. Clear? Now, what is my objective? Evaluate two things. Number one, effect of identified misstatements on the audit. Clear? Second one, effect of uncorrected misstatements on the financial statements. Meaning, in the first case, what they're telling, effect of identified misstatements. What do you mean by identified misstatements? In my audit, I have identified a lot of misstatements. Is it going to affect me or no? Clear? Second thing is uncorrected. What do you mean by uncorrected here? Identified, reported, but not corrected. Identified, reported, but not corrected. I have told management, but they are not correcting it. What is the effect of that also? Right. So what is the procedure that I'm going to do, sir? Number one, accumulate the misstatements. Clear? Accumulate all the misstatements and keep. Right? Not one by one. Once you accumulate, then go and ask. Misstatement may arise from various factors like factual. Factual means what? Invoice is there, entry is there, but it is wrong. Judgmental. There is no invoice in here. It's a judgmental call. Projected, futuristic. Misstatement can arise from three things: factual, judgmental, projected. Clear? So consider, as the audit progresses, you have to consider identified misstatements. As and when you go ahead and audit, you keep on accumulating more and more misstatements if you find. What am I supposed to do? Consider whether strategy and plan needs revision. Do I need to revise my plan? Because now misstatements are going overboard. So should I revise my plan? Because when I planned, I had only 10,000 misstatement I can handle. Now I'm getting more than 10,000. Should I change my plan? Number two, request management to examine relevant ABCD. What is AB? Account balance. C, class of transaction. D, disclosure. So relevant expenses you go and check, sir. See, I found a sample misstatement. I will tell management, go and check the entire population and see whether it is fine or no. Clear? Third, if management has corrected the misstatement, sir, they will come and tell me, sir, I have corrected, sir. Okay, no problem. I will still do my procedure to see whether you have made the correction or no. I will not just say okay and go back. Even if you told you have corrected, I will check whether you have corrected or no. Right. So when should I communicate? On timely basis. Now, what is the timely basis? Who will take a call? Auditor. When should I communicate? You take a call. Clear? Now, once you communicate it to them, request the management to correct the misstatement, ask them to correct the misstatement, and then perform procedures on that as well. Sir, what if they say, I'm not going to correct? No problem. They can say whatever they want. What you should do, ask them, why are you not correcting, sir? What is the reason behind it? Clear? That will give a clear picture as to what are we supposed to do here. Clear? Should we still consider or should we not consider that? Right? Right. Next, evaluation of uncorrected misstatements. Is uncorrected misstatements affecting our audit or not affecting our audit? Clear? Reassess the materiality, sir. Sir, I told them uncorrected, meaning detected, reported, not corrected. Clear? So reassess materiality already set as per SA 320. Check if uncorrected misstatements are material after considering these two things. See, if it is immaterial, no problem for me. But that uncorrected misstatement should not be material in nature. And evaluate whether it is material or no. If it is material, take appropriate action. If it is immaterial, leave it out. No problem for you. Clear? Where should I communicate to whom? With TCWG. What should I communicate? Uncorrected misstatement and their effect on my opinion. I told the management, sir, they are not correcting. I think I'll have to change my report, sir. It will have an effect on me. Go and tell TCWG. They're not correcting it because it's a bad behavior. Even after telling the mistake, if you're not correcting, it's a bad behavior. Number two, identify the material uncorrected misstatements and ask them to correct. This I'm telling it to whom now? TCWG. Because I've already told management, boss, correct it. They have not corrected. I'm going and telling TCWG now, correct it. Clear? Third one, effect of uncorrected misstatement related to prior period. This year, no misstatement, but last year's misstatement has affected current period. Go and tell the management about it. Management here means TCWG, right? Take a WR and then document it, right? Easy standard. In completion and review, especially except 560, all standards are small and easy. 560, I'm not saying it is not easy. 560 is also easy, but it is tricky. More than easy, it is tricky, right? SA 260. Let's talk about SA 260. Communication with TCWG. What should we communicate, sir? Good morning. How are you? How do you do? No, what should we communicate with them? Two things. One, first of all, my responsibility. Clear? Second of all, my scope and my timing. Third, my significant finding. Basically here, you can remember it like I am going and complaining to TCWG. Clear? I am going and complaining to TCWG. What is the significance, sir? Significance is first thing. It will assist in four things for us. Help. What is that? If I communicate, how it will help us? Do you think communication to TCWG will help us? Yes. In how? In what manner, sir? Number one. Sir, it will help in understanding the matters. Both. I will understand their matter, they will understand my matter. Clear? Number two, to develop a constructive working relationship. What do you mean by that? Sir, there will, if he will know how I work, I will know how they work. So we can work in tandem with a good understanding. Third one, obtain relevant information for audit. He will give me some information which is relevant for me, which management does not know. And in the communication, I will get to know. Oversee. What do you mean by oversee? What do you mean by overseer? Yes, supervise or monitor. Monitor or supervise. Clear? Why? Because who is supposed to prepare financials? Management. Who is supposed to oversee the preparation? TCWG. Clear? Be very careful. Management prepares, but who supervises? TCWG. So if management has not prepared properly, I will go and tell TCWG. So when they monitor, your entries are automatically corrected before the error has happened only. Clear? Next, sir. Objective. What is my objective? My objective is to communicate my responsibility, my scope, my timing. Clear? Obtain information for audit, provide timely significant observation, promote two-way communication. Sir, point number B and point number D are coming from here. Clear? Right. Let's talk about what matters I have to communicate. Number one, what is my responsibility? What is my responsibility? Forming and expressing an opinion on financial statements. And who prepares financial statements? Management. Who monitors financial preparation? TCWG. Clear? Second, scope and timing. I should tell them what is my scope, what is my planned scope and timing, not unplanned. Of course, plan will keep changing. Okay? Next. Significant findings. In significant findings, number one, qualitative aspect I'll have to communicate, significant difficulties I'll have to communicate, and some management related matters. Clear? Now, what is qualitative aspects I have to communicate, sir? Qualitative is not measured with quantity. It is descriptive in nature. Clear? So qualitative aspect, like what? Accounting practices, accounting policy, accounting estimates, financial statement disclosure. These are qualitative aspects. I can't judge this by numbers. This is totally by explanation and behavior. Clear? In case any practice is applicable under AFRF but not appropriate in the circumstance, meaning AFRF says FIFO, AFRF says FIFO, but in case of petroleum industry, what is the raw material for us? Raw material is petrol, crude oil. From crude oil, we get different variants. Yes. Now, if you remember, inventory will be there for three: raw material, work in progress, finished goods. For all three, we have to evaluate. We have to have valuation. Now, what type of valuation we use, sir? Cost or NRV, whichever is lower, correct. But in cost, we have two different methods: FIFO and weighted average. Can we use LIFO? No. Can we use FIFO? Yeah, allowed. But here, can I use FIFO? Is it appropriate to use FIFO? No. What is appropriate here? Weighted average. So even though FRF is saying FIFO is applicable, we are not following FIFO. We are applying weighted average. Is it okay for me? Yes, it is okay for me. Clear? Look at this, what I have written. But if valued on FIFO basis, it is inappropriate but acceptable under AFRF. AFRF never says no. It says okay, evaluate. But what is appropriate? Weighted average. Clear? Next, significant difficulties. Meaning, sir, I am asking for information. Management is not giving me only. So many times I am asking for, they are not giving me information. Clear? Unreasonable brief time. Sir, they came and they told in 4 days I have to finish audit. What to finish audit in 4 days? Can't. Clear? Subject only can't be finished. We are still talking about practical audit. Clear? Unaccepted or unexpected efforts to obtain sign. Sir, unexpected means how much time it will take for a management to take a printout and view. But so much I am asking, sir. From last 1 week I am asking, they are not giving me. These are unexpected efforts. Clear? Restrictions imposed by management. In what? Do you remember I told you? Yes. Debt task confirmation. Designing. If management does not let you to go and ask confirmation, comes here. Go and tell to TCW. Remember SA 260 and SA 705. 260 only. Management's unwillingness to assess GC assumption. Sir, I am telling them to reassess it. Management is saying I will not reassess. No problem. I will tell TCWG. Clear? Next. Management related, unless TCWs are also involved, any matters with respect to management, go and tell TCWG. Basically, complain about management. Unless management is involved in TCWG. That means you're complaining about him only to him only. It is like me talking to me. Clear? We don't want that. Next. Auditor's report. Circumstances that affect the form and content. Any circumstances that will affect my reporting content, I will go and inform TCWG and any other matters. Now, important in case of listed companies. You shall communicate compliance of relevant ethical requirements regarding independence, including all relationship between firm and entity. What relationship we are having? Are we having any business relationship? We have to disclose it. Clear? Number 2. Safeguards to eliminate threats. Go and communicate that also to TCWG. What threats we had and what safeguards we had put to eliminate those threats. Clear? Communication process is same in writing, timely basis. Clear? Two-way communication should happen, right? And document. Whatever you have communicated, document. If you have communicated orally, when and to whom, document that. If you have communicated in writing, retain a copy of that. That's SA 260. SA 265. Communication with deficiencies in ICS. Now here, I'll tell you the logic. Logic is very simple. You understand the logic, standard is done. Communicating what deficiencies in ICS. Now, what does deficiency mean? What does deficiency mean? Simple. Deficiency means, sir, ICS is there. If ICS is there, they are not doing their work. ICS is there, they are not doing their work. That is also deficiency only. Number 2, not there only. One, it is there. One, it is not there. One, it is there, but it is not working. It is not effective. Clear? Whereas, second one, control is not there only. Totally missing. That is also deficiency. What is significant deficiency? Significant deficiency means those deficiencies where I need TCWG's attention. See, small deficiencies, I don't need TCWG. For example, let us say, this cable is there, no? Okay, this cable is not working fine. Is there control? Yes. Is there a deficiency in this? Yes. Should I go and tell the founder about it? Huh? Should I go and tell the founder about it? No. Staff is good enough? No. Are you getting my point? Clear? I know I don't have to tell the management about it. I just have to tell the respected faculty or the not faculty, relevant staff member here. But sir, if this is not working, this is not working, this is not working, this is not working. Now, staff, no, I will escalate it. Clear? I will escalate it. So what is significant deficiency? Read. Accumulation of deficiency which will lead to requiring attention of TCWG or a single deficiency which will lead to their attention. It could be accumulation. In my example, I told accumulation. Second is single deficiency which will lead to their attention. Clear? Single deficiency only. For example, sir, I am the faculty here. Okay. Now I am not keeping well. I am not able to continue for the next 2 months. In this case, is there a deficiency now? Yes. Single deficiency? Yes. Who should I tell? TCWG or staff? TCWG. Clear? Yes. Okay, sir. Right. It also depends on likelihood of misstatements. What is likelihood? Probability. Future. See, tell me, am I testing all ICS or only those ICS which is relevant? Relevant. Now, in that relevant ICS, I can be finding a lot of deficiency. But does that mean other ICS has no deficiency at all? Will be there. So that is why they are telling likelihood of deficiency, right? Okay, sir. What are the indicators? What are the indicators that there are sufficient significant deficiency? Number one, RAP is missing. What is RAP? Risk assessment procedure is missing. Number two, risk assessment procedure is there but not effective. Third, ineffective response to risk. So whatever risk is there, you're not responding to it properly. Deficiency is there, significant deficiency is there. Clear? Misstatement not prevented, detected, corrected by ICS, meaning ICS is there, not effective. Fifth one, disclosure of material misstatement due to fraud or error as prior period item in the current year. Sir, I have to go and ask management, what is this? What is this? I have to tell management. Last year, did you know there was an error? It is disclosed as PPI in the current year. Number 6, management not monitoring FS preparation, overseeing. You are not overseeing your FS preparation, significant deficiency. Number G or 7, control environment is ineffective. Now, if control environment is ineffective, what is going to happen? Transactions where management is financially interested, it will happen. Why? Your controls are not effective. Management will do whatever they want. They only bypass. Number 2, management fraud not prevented by ICS. Does that mean ICS is not there here? It is there, but it is not preventing the fraud. Why do I put ICS, sir? To prevent and detect or correct. Clear? Then management failure to implement remedies on old ST. What do you mean by old ST? Last year some significant deficiencies were reported. You have not corrected that also. In that case, what does it mean? Control environment is ineffective. Clear? Right? These things, I am expecting them to ask you questions on indicators. Clear? Reason being, in your textbook, they have given it in form of an example, saying example of indicators. And students generally what they do is they leave out examples. And they say examples, no, it's okay, leave, who will read it? Sometimes that examples only will be formed as a question. So be careful here, right? Okay. Communication with TCWG, how should I communicate? Again, timely basis. Communicate to management. What? I am telling management, see, I am talking to TCWG also. Clear? I'll give a distinction between 260 and 265 later on. Also, communicate with the management other deficiency which people have not communicated. Who people? Sir, staff should communicate it to management now. For example, let us say this camera is not working. Who should tell management? Staff. Now, when I understood this, I got to know that there is a deficiency. I went and asked management. Management said, I have no idea about it. Should I tell them now? Yes, I should tell them because your staff did not tell you. I will tell you. Clear? Then, communicate in writing 2 things, description and explanation of the defects, enough information to understand the context. Meaning TCWG management should understand what am I talking. Clear? So give them proper explanation, description and explanation, and also context. Don't just randomly talk about things. Specifically, what you should explain, specifically you should tell, what is my purpose? My purpose is to express an opinion on financial statements, not to express an opinion on ICS. Very, very important word you have to tell. My purpose is to just tell opinion on FS and not ICS. Then management will TCWG will ask, then why did you do ICS? I did ICS for what? Only for audit purpose and not for anything else. For audit purposes, whatever was required, I did only that. Clear? So reported matters are limited to only those deficiencies identified and not the entire deficiency. So I do not know whether your other ICS is working or no, but for sure these ICSs which I have considered in my audit is not working in my opinion. So report this. This is very, very important. This point is explained specifically. Focus a lot on this concept. Clear? Right. Now, what is the difference between SA 260 and SA 265? What is the difference? SA 260 and SA 265, what is the difference? In SA 260, I am talking only to TCWG about management's difficulties. What are the difficult times they have given? I am being a complaint box there. In SA 260, I am becoming a complaint box. I am telling everything to TCWG, not a management. In SA 265, I am talking to both. Because in SA 265, management or maybe innocent also, they also have no idea about how internal control system is working. Clear? That's the difference between SA 260 and 265. Clear? Right. We'll take a 5 minutes break. Right, let's continue. SA 560 subsequent events. Now here, to study the audit topic of SA 560, you need a background. You need a background of AS4. I hope you know what is AS4. Do you know? Do you know AS4? No? AS4 talks about events occurring after balance sheet date. Okay, so that is AS4 for you. So without AS4, it will be little difficult for you to handle this SA 560. So little difficult. I'm not saying totally difficult because the concept is coming from AS4, right? But again, I'll just mention what is required here, right? So we have 3 dates here. One is date of financial statements, one is date of audit report, and one is date of AGM. Why AGM? Because in the AGM is where we issue financial statements to members. Clear? We say this is the financial statements audited one, and then when they adopt it, we start circulating in the AGM. Clear? So in the between the date of financial statements, that is 31st March. Let us take one example. 31st March is the date of financial statements, and date of audit report is 30th July. Okay. Now anything between 31st March and 30th July, these events, what are we supposed to do? That is discussed in SA 560. From 30th July, so let us say 30th September is date of AGM. Between 30th July to 30th September, what we are supposed to do, that we'll be talking in SA 560. Clear? Right. Now, between date of financial statements and date of audit report, what are we supposed to do? We are supposed to obtain evidence whether these events, there are 2 types of events. One is called adjusting events, one is called non-adjusting events. For adjusting events, you have to adjust in the financial statements. Clear? You have to give adjustments in the financial statements. For non-adjusting events, you don't have to adjust, you have to give disclosures. Just disclosure for non-adjusting event. For adjusting event, you're supposed to give adjustments. Non-adjusting events disclosure, adjusting events adjustments and disclosure both. Clear? What are we supposed to obtain evidence whether they have adjusted or they have been disclosed, as the case may be. Clear? Next, for facts, what are we supposed to do? Respond appropriately. Had it been known to the audit report before the audit report date, I would have changed my reporting. So these facts are what facts? I will mention that. See, you told me a fact after audit report date. My audit ends here. My audit ends here. I am not responsible after that. But after that, if you tell me anything, I have to respond appropriately. I don't have any obligations, no responsibilities on me, no obligations at all. But if you have told me this before, I would have changed my audit report. Only to those facts I am supposed to respond. Clear? Right, sir. Now, one by one, for this, events occurring between financial statements date and audit report date, what am I supposed to do? Determine whether nature and extent of AP, consider risk assessment, include these things. Obtain understanding of how management has identified. How do you, we'll ask management, how do you identify such events which occurs after balance sheet date but before audit report date? How do you identify? Second, inquire management or TCWG about events that affect the financial statement. Ask them, is there any adjusting events? Do you have any adjusting events? First question I should ask, how are you identifying? Second question I should ask, do you have any adjusting events? If yes, have you adjusted it accordingly? Now they will tell no. Should I believe them? No. So go for the next step. Read the minutes book. Clear? Read the minutes book. Tell them, I want minutes book. Please give me. Read it, because in the minutes book meeting it will be discussed. Understood? Clear? Yes. For example, let us say now short circuit happened. Okay. Now management is not there here. Correct? Staff is there. Staff will not tell management. Now when I talk to management as an auditor, management will, no, nothing happened like that. But in the meeting, they would have discussed, no, see, short circuit happened, we have to change so and so, so and so. Now when I read the minutes book, I know the fact. Clear? Next, read entity's latest interim financial statements. Could be quarterly financial statements. Q1, Q2, Q3, right? So quarterly financial statements you can read. Understood? Clear? Which class?
The new class.
Now we have to set up entire thing.
That
Uh,
link all meanings. Dilip's asking this.
Dilip is asking this classroom. Where should I go now? That classroom. Farin sir.
Farin sir, next. Left side.
Left side. I'll finish this topic.
Okay.
AC is there, no? AC is there, no?
Is it?
And latest interim financial statements like quarterly financial statements, we ask. Okay, so that we'll get to know the facts. If the event is identified, what do you mean by the event is identified? That event is, between financial statements and audit report date. If it is identified, check whether it requires adjustment or disclosure. You identified, see whether adjustment is done or not done. Yes, sir. Huh? Subsequent event, example, as on 31st March, you have a debtor of 10 lakhs. 31st March is a debtor. 10th April, you got to know that debtor is insolvent. But as on 31st March, he is not insolvent. 10th April is insolvent. But did I finish my audit? No. So what I will do, it is before my audit report date, after financial statement date, it is adjusting event. Why? Because there is a debtor which is existing, that fellow's amount is going to be affected on 10th April. So when I am giving my audit report, I know the fact, no, this debtor is not going to be recovered. I should tell the users that this fellow is not going to be recovered. No, it will fall. It will fall. But what is the criteria you have to check? You have to check is whether that thing which I got to know after 31st March, is it affecting any condition which already existed? If it is already existed as on 31st March and this is affecting that, then adjustment is required. But there is non-adjusting event. For example, 10th April, they are issuing fresh share capital. This is non-adjusting event. Why? It is not going to affect my 31st March balance. Clear? So if I want, I can give disclosure for that. Understood. Whereas that debtor becoming insolvent, it is directly affecting my financials. Why? Users are thinking, debtor is there, no 10 lakhs. But actually, what is the fact? Insolvent. So that requires adjustments there. Clear? Sorry?
With the next year,
You can adjust with the next year. But my question to you, did you know about it? He's going to be insolvent. Did you know about it before you finished your work? Makes sense, no? You know that debtor is not going to pay you. But what will you tell your users?
then he will pay.
He will pay. That means you are actually lying. Right? Where is fair presentation? It's only compliance that you are doing. Clear? That's why AS4 says these type of things which is going to affect, and you know it. You adjust only, no? There's nothing wrong in adjusting it. But those things, sir, that are becoming insolvent, you got to know after I give report. Now, after I finished my audit report, you got to know that debtor is becoming insolvent. We can't do anything. Next year only we have to adjust. Clear? But again, there also we have, sir, if management now they revise their financial statements, I'll have to revise my audit report because my audit report is based on financial statements. Clear?
So if they are reluctant to give the information to you before 31st.
No, they only got to know after that. That time we can't do anything, no. Clear?
So the previous,
Huh?
they were reluctant to tell you that such an insolvency existed before 31st March. Why would they tell you after 31st March?
No, they also got to know after 31st March only. As on 31st March, debtor is there. 10th April, court passed an order saying debtor became insolvent. Now that time nobody knows about it, no. Okay? Right. So request WR for that. Clear? If it is an adjusting or non-adjusting, you put adjustments or disclosure and then see whether take a WR saying whatever they know they have disclosed it to us. That will give a sense of responsibility for them as well. Right? Now come here. For these facts which is arising between date of audit report and date of AGM. Now in this case, as on the date of AGM, two events will happen. One is financial statements issued, financial statements not issued. Clear? In both the cases, I don't have any responsibility because I told you my job ends where? Audit report date. Clear? So discuss with the management whether they are going to amend the financials or no. If they are going to amend the financials, how are they going to amend their financials? Clear? So let's talk about one by one. If the financial statements are not issued, audit report done, AGM not done. Meaning in the AGM you yet to give your financial statements. Okay. So I am asking them, will you rectify your financials and then give financial statements, or you are not going to rectify your financial statements? Now, logically, you tell me, you got to know some fact. You got to know some fact that if I had known about this fact before audit report date, I would have changed my report. This fact you got to know now. Now you'll go and talk to management. You will ask management, boss, are you changing your financials? Because there's a fact which you know now. If you don't change your financials, see, people will rely on my report. I know for a fact that this information we have to disclose. We have to make adjustments. Okay? I will go and ask management, are you making adjustments? If they say yes, I need to change my report. If they say yes, I need to change my report. If they say I am not changing my financials, then I will tell people, do not rely on my report. Why? Financial statements are wrong. They are not adjusting it. When adjustment is required, they are not adjusting it. Clear? So if management amends the financial statement, extend the audit procedure, amend the audit report to include additional date of amendment or provide a new report. Basically consider in your report. Either in the existing report only put a new date of the amendment. When did you amend it? Clear? This is called actually dual dating report, not there in your syllabus. Clear? Not they don't, the concept of dual dating report is not there, but this is called as dual dating report. In one audit report only two dates will be there. One is of old, one is a new amendment. Or cancel the old entirely, give totally new report. Clear? That is one thing. Second thing, if they do not amend the financial statements, absolutely no issues for us. We will, if we have not given our audit report, we will modify the opinion. If you have already given our audit report, we will tell the users through public notice, do not rely on our report. We are not talking about financials. We just said don't rely on our report. Understood? Clear? Now, we will also tell management, boss, you have not given financial statements now. Give only your financial statements, don't give our report. Give only your financials, don't give our report. Sir, what if they still give our report? Then last resort public notice. Tell people don't rely. Clear? Step by step. I will tell management, if management amends financials, I will change my report. If management does not amend their financials, I will tell them don't give my report. But if they still give my report, I will tell them, tell people don't rely on my report. Clear? Right. That's it. That's it. That is your, if financial statements are issued, same thing. Clear? Right? So with this, I think your completion and review except essay 570. So 501 and 570 is pending. Right? Okay. Online, hold on. The class will be restarted. Let's start with the risk assessment, third chapter, fourth chapter. Third chapter, sorry. Risk assessment and internal control. So let's talk about audit risk here. So in case of risk assessment, first topic will be audit risk. Now, what is the audit risk? What is audit risk here? Risk. What is risk first of all? Risk is associated with positive thing or negative thing?
Negative.
Always negative. Clear risk. There is nothing called as positive risk. Clear. Is there a say? Have anyone heard that if you study there is a risk of passing? No. But if you don't study there is a risk of failing. So risk is always associated with negative impact. So it impacts, but in a negative manner. Adverse risk. I mean, adverse impact will be having, right? So hold on. What is this? Right. So what is the meaning of audit risk? Risk that auditor may not be able to find errors or a mistake. When we are talking about audit risk is my risk. I am involved in this, not management. Management is anyway there. I am involved in this. So risk that auditors might not be able to find errors or a misstatement in a company's financial statements when they conduct an audit. So whenever we are conducting an audit, the risk is we may not be able to find any misstatement. That type of risk is called as audit risk. So what is audit risk? Auditors, that is we, may not be able to find errors or misstatement in financial statements when we audit. Meaning, we end up giving unmodified when there are misstatements. Now, two things. See, conceptually we have to understand rather than the text. Conceptually, if financial statements are wrong, is there a chance of you telling financial statements are right? Yes. That is audit risk. But will you ever tell when financial statement is right, will you ever tell it is wrong? Chances of you telling that is much lesser than chances of you when the financial statements are wrong, you going out and telling it is right. Correct? Because to tell that you need evidence. And if this particular thing, if the entry is wrong, they can hide it. But if the entry is right, what is there to hide? Nothing is there to hide. Clear? So whenever financial statements are materially misstated, there is a risk of you going out and telling in your opinion that financial statements are absolutely right. That risk is called as audit risk. Clear? And that is what we are going to deal with in this chapter. Clear? We are not talking about the risk where financial statements are right, where we are going and telling it is wrong. That will talk about us. No, not businesses. That is about us we are talking. Business risk is their risk. Economic factors, socio-economic factors, political factors, environmental factors, that is business risk. Competitors, that is their risk. I am talking about as an auditor, what opinion will be more practical here? When financial statements are wrong, for example, let us say a plant and machinery you have purchased worth of 5 crores. Okay, what is the entry? Entry should be plant and machinery to bank. But what you have done, management has told P&L account debit to bank. So 5 crores is sitting in P&L account. Now you forgot to see this. And you tell financial statements are free from material misstatements. On the other hand, if P&L was not there, this entry in P&L was not there, it was plant and machinery to bank only. Would you tell financial statements are free from material misstatement? Yes. But in both the cases, where is it more affecting? In the first case. In the first case. That is what audit risk is about. So to reduce risk, what am I supposed to use various procedures to find the mistakes? Try to put more procedures and see where is the mistake and is the mistake found, if yes, corrected. Clear? So this has 3 components: inherent risk, control risk, detection risk. Inherent risk means what? Risk where I am not involved. Management said it is there. Clear? So level of risk or error in a financial statement even before you start your work. Like for example, management is fraudulent, inherent risk. Behavior wise, inherent risk. Clear? So here we'll get to know what is risk of material misstatement at 2 levels later on, not there in your syllabus. Clear? But for your understanding, it is there. Right? So that is the inherent risk, like nature of business. Nature of business is an inherent risk. Company's financial health is inherent risk. Company's internal control system, not having internal control system is inherent risk. Clear? Right. So high inherent risk means chance of error and fraud will be increased. Right. Then comes control risk. Control risk means what? Your internal control system is there, but it is not going to prevent, detect, correct what errors or fraud. Right. So high control risk means again chance of errors or fraud will increase. Then we have detection risk. What is detection risk? Detection risk is risk that auditor may not be able to find despite doing procedures. Here, so the risk that auditor may not be able to identify or detect irregularities in company's financial statements during audit. So, which risk is under my control? Detection risk alone is under my control because I can only control that. I can't control anything else, right? So, therefore, audit risk is equal to the IR, that is inherent risk, into CR into DR. Right? Now, IR and CR is nothing but risk of material misstatement. Inherent risk and control risk combined will be risk of material misstatement. And that is exactly what we do in audit. We try to reduce risk of material misstatement by putting more procedures. Clear? Yes, sir. Right. So, what is risk of material misstatement? This will be at two levels. Here, this will be at two levels. One will be at financial statement level. One will be at assertion level. Now, what is financial statement level as a whole? Financial statements as a whole. So, it refers to the possibility that errors or inaccuracies in the financial reporting, not statement, reporting, could significantly impact the financial statements. Like, how will it come, sir? What are the factors? Number one, errors in accounting records, books of accounts maintained wrongly. It will affect the entire financial statements. Number two, misinterpretation of accounting standards. Now, cost or NRV, whichever is less, but you misinterpreted that. You don't know what is cost, and you went and put a wrong amount there. Third, fraudulent activities. Inherent risk will contribute to risk of material misstatement to financial statements. Inadequate ICS and external factors. These will contribute to our financial statements entirely. Clear? So to manage the above risk, what are we supposed to do? Robust means strong ICS, conduct the audit, clear, adhering to standards and compliance with regulation and requirements. If we do this, our risk of material misstatement at financial statement level will come down. Clear? Then we have at assertion level. Assertion means what? Representations. At every claim level, how can we reduce? How can we reduce? Conduct tailored audit procedure to each HSN. What do you mean by tailored audit? Customized. For income, separate audit you do. Like asset audit is there, inventory audit is there, stock audit, inventory audit, stock audit only. Clear? Then you have financial audit. So specific audit you can do to reduce the risk of assertion. Evaluating ICS, evaluating fraud risk and ensure accuracy and completeness of FS. Now this particular information is not there in your module. Here, this is just for your understanding as to how risk of material misstatement will be there at different level. Understood? Clear? So, recorded people, YouTube, pause this, write down, and then whenever you want to study, you can go through it for a better understanding. Clear? Now, what is not included on audit risk? We have already discussed this business risk. Business risk is not our risk. You advertise wrongly, not our risk. Clear? You go and do publicity wrongly and your business is affected, not my risk. Clear? Next is expressing an opinion which says financial statements are wrong when it is correct. Right? Now, most importantly, should I rely on, not rely on controls? Auditor has to take a call. Since we are talking about risk assessment here, we are in the initial stage. So, should I rely or should I not rely on internal controls? Factors to be considered is ICE. I squared CE. I is influence. Does the control environment influence on the control? Environment influence is very important because you are as good as your environment. If your environment is bad, you are bad. Clear? So if internal control environment is bad, no matter how strong is your ICS, it will be waste. Clear? Number two, IT process. Evaluate related IT process, information technology process. What systems you have put, what softwares you have put. Because if it is giving you accurate information, I can rely on it. If it is giving inaccurate information, I can't rely on it. Third, controls over SCOT. What is SCOT? Significant class of transactions. So, bigger class of transaction, what are the controls you have placed? Authorization is there, approval is there, review is there. What controls you have placed? Expectation of effectiveness of controls based on entity's understanding. So, when I talk with my client, when I get to know his business understanding, I can understand should I expect more effectiveness out of ICS or less effectiveness? Because he'll tell me, sir, I have this software, I have that software, correct. Now based on that, I can develop an expectation, right? So when deficiencies are identified, what to do? Number one, don't directly say I will not rely. When deficiencies are identified, first evaluate your effect on risk assessment procedure and your audit strategy. Is it going to affect it? If it is affecting, next step. If it is not affecting, don't worry only, you carry on. Right? Now, second one, see whether there are any substitute controls for it. For example, for let us say for sales, what is the control? You have a software. Now that software is not working. Should I say I will not rely? No. See if there is any other alternative for it. If there is any other alternative for it, then go for the alternative. If there is no alternative, then come to the end conclusion that I will not rely on the control. Clear? In audit, don't jump to a conclusion right away. You always have to look for substitutes, alternate procedures. Right? What are the different types of audit procedures? I'll be covering here only. SA 330 will be covered here itself. Clear? SA 315 and 330 will be covered here itself. SA 315 talks about risk assessment procedure. What is risk assessment procedure, sir? It is a procedure to obtain entities, environment, and ICS understanding. Why do I need to understand my client? To evaluate ROMM, to evaluate risk of material misstatement, whether it is due to fraud or whether it is due to error. What is the difference between error and fraud? Intention. Fraud is always intentional, error is unintentional. So to achieve this procedure, to understand the entity, to understand their internal control, what procedure I have to put? One is inquiry. One is inquiry, second one is observation and inspection, third one is analytical procedure. And analytical procedure we have seen in SA 520. Clear? Next. Right. So observation means what? Observing the process. Inspection means what? Checking the documents. Documentation, whatever management has, you have to check. What is inquiry? Asking questions. To whom? To management, internal audit personnel. Remember SA 610? SA 610, we can ask him. Clear? Then employees who are involved in transactions, who are entering into transactions, who are in data entry, ask them. In-house legal counsel, lawyers, sales and marketing people, risk management, IS personnel, inquiry, ask questions, that time they will tell about their department. Clear? For example, I want to know how, let us say, I'm working in your academy, ArivuPro Academy, I'm working in your academy. Now in your academy, you are CA, CS, CPA, CFA, ACCA. I want to know in every department how teaching works. Who should I talk to? Management. But will he know everything? No. So I will talk to him also. I will talk to teachers who are teaching. Sir, how is he experienced teaching? That will give me an idea, okay, this is how things work. Clear? Right, so that is your test of controls, risk assessment procedure. Now, once you plan risk assessment procedure, why do you do risk assessment procedure, sir? There you understand the risk. To understand the risk and identify the risk, we do RAP. But what is the benefit of doing RAP now? It will help in applying further audit procedures. It will help in for us to get further audit procedures in place. And further audit procedures is decided in SA 330. Right? So while designing this, we have to consider three things. When we put further audit procedures, we have to consider three things. One, likelihood of material misstatement. What is likelihood of material misstatement? Probability, chance. Because in RAP, we got to know the environment and understanding. Now with that, see what is the probability of this misstatement happening. Based on that, we can put procedures. Number two, risk assessment takes relevant ICS into account. So not everything, again, SA 265, not every ICS I am taking into account, only relevant ICS I am taking into account. And third one, obtain more evidence. Right? So we will say, okay, our client is into cash business. So he is doing more of cash business rather than banking transaction. So obviously risk is high. Now based on that, we put further audit procedures. Based on that, we put further audit procedures, and we tend to do in further audit procedures, we have two important types: test of controls and substantive procedures. And under substantive procedures, we have test of details and analytical procedures. Now, what is test of controls? When do we do test of controls? We do in two cases. This is important. We do in two cases. One, when we expect that controls are operating effectively. Expectation. not confirmation, expectation. When we expect that controls are operating effectively, we want to go and check it. Second, when substantive procedures are not giving me any evidence, so I will be left only with the POC now. In these two scenarios, I will be doing further audit procedures. Clear? So this expectation comes from where? It comes from risk assessment procedure. When I talk to my client will tell, these internal controls I have, sir. These are the procedures that I have in my place. Right? So I will tell, oh, okay, so these are the procedures you have. Now I develop an expectation. Now this is his environment. This is his environment. That means they are telling that this internal control that I have in my entity, let us take one example. Sir, in my entity, I have for sales, I have one team, for marketing, I have one team, for accounting, I have one team. Is that a part of internal control? Having separate teams, segregation of duties? Yes, segregation of duties is a part of internal control. Right, sir. So, now I understood this from their risk assessment. When I was talking to my client, he told me this. Now, based on this, I will develop an expectation that if you have teams separately, that means they are working good. Now, I should test them. Where will I test them? Under SA 330 test of controls. Clear? Right, sir. Now, nature, timing, and extent of TOC. What type of TOC I should do? Perform other audit procedures with inquiry. Don't just do inquiry, perform other procedures with inquiry. Meaning what? Observation you do, re-performance you do, recalculation you do with inquiry. Okay? And inquiry of what? How? How do we do, sir? How do we go and do this particular internal control system? Consistency. How to do this? How many times management has done? You have internal control, correct, but have you followed it consistently? For example, in academy, let us say we have biometric. Is that ICS? Is that ICS? Yes, that is ICS. Now I need to understand how to operate that. Second, I need to understand, sir, I'll ask management, have you operated this consistently? Or is it one time? Because one time I will not get any evidence. Consistently, only when you do, I'll get evidence. Then we have by whom? Who did it, sir? Who is the person authorized to do it, and or by what means? By what means means by who means person, by what means if we do not have a person, do we have any software doing it? Clear? Then we have timing. When should I do? Could be at a particular time or could be throughout the period. Particular time is whenever you want or throughout the audit you can do. Extent. Extent depends on these things. Factors to decide how much should I verify test of controls depends on the frequency. How many times I am going to use it. Number 2, reliance period during the audit. Now 14 days I am there. 14 days I am wanting. In those 14 days, am I relying on ICS? If the answer is yes, test more. If you are not relying on ICS, don't test. Number 3, expected rate of deviation. If the deviation rate is more, test more. If the deviation expectation is less, test less. Next, relevance and reliability. Is that internal control system relevant and reliable for me? If the answer is yes, test. If answer is no, don't test. Evidence from other controls. If I am getting evidence from other controls, control A is there, control B is there. I am getting evidence from control B, I will not test control A. But I don't have any other option, I have only control A, I will test only control A. That is your essay 315 and 330 with respect to that. But in 315, let's discuss more. Understanding the entity and its environment. Why should I understand the entity and its environment? Going back to the same loop again. Why should we understand entity? Why should we understand the environment? Why should we understand internal control system? Huh? For doing audit. That means, can I say for further audit procedures only? Doing audit means what? Audit procedures. Now, to do further audit procedures, we need risk assessment procedure. So, what is risk assessment procedure? Why are we doing? To identify and evaluate ROMM at financial statement level, assertion level. I hope that financial statement level in box I had given. Remember that, right? Understand that. Financial statement level, assertion level. Whether the risk is due to fraud or error. So, risk is there. Risk is there. Error risk is different. Fraud risk is different. Which is more dangerous? Fraud risk. Why? When they make it intentionally, they will also hide it. Error, it is easier to find. Clear? Whereas frauds, they think a lot behind that and they hide it. There is active concealment of fraud. Error, there is no active concealment of it. Clear? Right. What should I do? First, identify the risk throughout the process. Throughout the process, in fact, throughout your audit, you have to keep identifying the process. Evaluate the identified risk. Whatever risk you have identified in step number 1, evaluate that. Third, relate the risk to what can go wrong. What could be wrong here? And last one, likelihood of misstatements. Likelihood means probability, chance. Okay. Now, RAP, we understood what is RAP. Procedure to obtain understanding of 3 things: entity, environment, internal control. How do I understand the entity, sir? Understanding is a continuous process. It's not a one-time process. Okay. Understanding the entity is a continuous process. Now, this understanding will act as a reference. Why, sir, if I get an understanding, how will it help? It will help in point number 1, assessment of risk. When I understand the entity, I understand what is the risk. Number 2, determination of materiality. What is materiality? Importance level. Which transactions are important? Which activity is important? Which location is important? I'll get to know. Third, areas, identify areas where special attention is required. Meaning, when I talk to my client, he will tell me, sir, only for Chennai branch we have cash transactions, but all other branch bank transactions. Now I know my attention should be more on Chennai branch because cash is involved. Developing expectations in analytical procedures. If you remember, SA 520 we have spoken about developing expectation. Clear? So we can also develop expectation in audit procedures here. Right? Then evaluating AE2 concludes a normal point. What is the understanding I need? Yes, we have told understanding of entity. What understanding do I need? Number 1, relevant factors including AFRF. What factors? Industry factors. Which industry you are working in. Number 2, regulatory factors. What do you mean by regulatory factors? SEBI could have changed their law. RBI could have changed their law. Yes or no? So Competition Commission of India had changed their law. So regulatory factors. And number 3, external factors. External means other than these. Local government, political, right? Competitors. These are the factors I need to understand. Then, nature of entity. Number 1, operations. Operations means what? Business. Operations means business. Understand the business. Number 2, ownership and governance structure. Is it government owned? Is it private owned? Right? Ownership and governance. Who is governing? Is it PCWG here? Number 3, types of investments made. Investment will talk about your risk ability. Your risk appetite is known through your investment. Higher the risk, higher the return. That means you are a risk lover. You like to take risk. Lesser the risk, lesser the return because you don't like to take risk. Capital structure and how it is financed. Is it more debt oriented or equity oriented? Here, so if it is debt oriented, we know that the risk is more. Interest cost will be high. Definitely profit realization will be less unless you do extravagant profits. Clear? Then, selection and application of accounting policy, its appropriateness, consistency. What accounting policy have taken? Depreciation. Okay. Which depreciation? SLM. Is it appropriate? Is it consistent? That I have to check. Entities, objectives, strategies, and businesses. In their business, what is their goal? That will tell me where they are heading. Okay. And last one, entities' financial performance. How do I know their financial performance? Read previous financial statements. Previous financial statements you read. Next, we need to understand internal control also. What is internal control? It is a process designed, implemented, maintained. By whom? TCWG, management, owner or other personnel to provide reasonable assurance about entities' objectives. What are entities' objectives? 4 things. Reliability of FR. Number 2, effectiveness and efficiency of operations. My business should be run properly. Number 3, safeguarding of assets. And number 4, compliance. Now in this, what is our area? Where should we see? We do not have one particular branch. Because in reliability of FR we are involved. Yes or no? Safe operations we are involved. Money is involved there. Yes. Safeguarding of assets we are involved. Compliance also we are involved. So there will be many controls here. We don't have to choose everything. We have to choose only what is relevant for our audit.
Give an example for safeguarding of assets.
Okay, for safeguarding of assets. Now, if you say information is an asset. Information is an asset for us? Yes, sir. Now, for information of asset, I will put on internal control, wherein, let us say, classic example, I'll give you our ArivuPro only. Now, in ArivuPro, videos are given in the app. Yes, videos are given in the app. Can you take a screenshot? No. Can you record it? No. Now, in that case, there is a information technology behind it. Why? They are safeguarding the asset. For them, what is the asset? Videos. Is that relevant for my audit? Is that relevant for my audit? Or the cost included for that is relevant for my audit? Cost included is relevant for my audit. Now, they put ICS for many, like for videos. Sir, let us say now recording is done. They put some password, internal control system. Clear? Now, that is relevant for me? No. What is relevant for me? Out of this, how is it relevant for financial statement? Which control is relevant for financial statement? That is relevant for me. Second example of safeguarding of asset. Sir, cash, hard cash, kept in locker. Clear? Hard cash kept in locker. Keys, lock, they have put a lock. Two keys will be there. One will be with the owner, one will be with the manager. Right? Now, every time they have to open the lock, they have to put it in a register. What time? Who did it? Is it internal control system? Yes. Safeguarding of asset? Yes. Relevant to me? Yes. Why? Cash. You can deposit cash, you can remove cash. Relevant for me. So like that they put so many internal control for safeguarding of assets. CC camera also is not, CC camera is an internal control. But is it safeguarding an asset?
It gives us the information as to who's trying to steal or something. Right?
Correct, but is it directly related to financial statements for us? No, now that is internal control system. We don't have to check that. Unless it is, if CC camera is there in locker, then I will check that. Sorry? Inventory area, yes. Perfect. Inventory area, if it is there, I will check. Why? Relevant, sir. Relevant. Because now let's say in that classroom there is biometric. In this classroom there is biometric. I am relevant for which classroom? This classroom. So I will check only this classrooms, not that classrooms. All those same control. Clear? Next. What are my objectives? My objectives are to check whether transactions are executed under management authorization. Without authorization, I should not execute any transactions. Number two, transactions are recorded in the correct amount, proper account, in the right period, and in the right asset or maintainability of asset, accountability of assets. Next, assets are safeguarded from unauthorized access. Like we said, somebody steals. Now that is why internal control system is there. Now, students, when you are studying this topic called internal control system, have a mindset that you are not studying ICS relevant for financials. You are studying ICS generally. Clear? You are studying ICS generally. I am repeating again, in internal control system of risk assessment chapter, you are not studying ICS relevant for financials. You are studying ICS as a whole. From there, once you get to understand what is the entire ICS, then you pick up only what is relevant for you and audit. Clear? Because students get confused here because they'll ask, sir, ICS is not relevant. No. Not all ICS is relevant. No. Then why are we studying? We are not studying for that. We are studying to understand what is the entire concept of ICS. From there we pick up. Next. What are the benefits? Benefits is we can identify mistakes easily. Clear? If CC camera was not there, how do we identify mistakes? We do not know. Clear? Second, identify factors that will affect the risk. Clear? Risk is there, but risk is not alone. No, somebody has helped the risk. Who is that somebody? CC camera is not working. Risk of stealing is there. So CC camera not working is a factor contributing to it. Second, third, designing NTE of further audit procedures. Of course, understanding internal control will help me in test of controls. TOC is there in SA 330. Right? Limitations. What are the limitations of ICS? Sir, ICS cannot give you absolute assurance. It can only give you reasonable assurance. Human judgment in decision making will be there. Right? Of course, bias might be there. You never know. Right? Then we have lack of understanding purpose. Meaning, see, employer, your purpose may not be understood by employee. An employee will tell, sir, I am okay with my salary. You give me my salary, I will do my job. He will not understand the purpose. For example, let us say internal control system is there where you have to take attendance and upload on some website. Okay. Now, the moment you upload on some website, the attendance will tell their parents that your kid has not come to school, college due to the following reasons. Right now, I have to key in the reason. Right now, that is the internal control system. Yes. Now, what will the student do? Student will come to me. Student will tell, sir, don't mark me absent. I was late today because I fell down, I met with an accident, this, that, and all. Fine. I am a human being. Now I will tell, okay, no problem, and I will not put the attendance. Did I understand the purpose of ICS here? Did I understand the purpose of ICS here? Or there is a lack of understanding? There is a lack of understanding because the entire purpose of ICS is whenever a student is absent by whatever reason, you have to tell their parents. Now this particular student is not telling their parents, we do not know. So it is simple that we'll mark it as absent. Of course, parents will get to know you have not come to school, college. So that they will get to know. That is the purpose of ICS. Similarly, here in client's ICS, so if whenever you are putting the ICS, there is a limitation there. People may not understand the purpose. So if they don't understand the purpose, they will not follow it. They will do whatever they want. Yeah. Next, collusion among people. What do you mean by collusion? Joining hands. People become a team. And then, sir, I will steal, you will share. Collusion, what can we do? Then, management judgments. Wherever judgments are involved, risk is always limitation in case of smaller entities. What do you mean by this? There is no ICS only. What ICS you have? Sir, you go to a tea shop. What ICS you have there? General store. What ICS you have? That one is everything. He'll only sweep, he'll only clean, he'll only collect the cash. Everything he will only do. So in case of smaller entities, there is a big limitation. Right? Which controls are relevant? Sir, you said no relevant controls. Which controls are relevant? These are the factors. Okay. These are the factors to decide which controls are relevant. Number one, materiality. Number two, significance of risk. If the risk is high, I will check it. Third, entity size. Smaller entities, not relevant. Bigger entities, relevant. Entities, nature of business. Risky business, yes, check. Clear? Organization and ownership. Nature of organization, nature of ownership. So if owner is government, of course, I should see whether the ICS is working properly or no. Next, diversity and complexity of operations. Too many businesses, too complex business, check properly. Because complexity will give a window to make frauds. Next, nature and complexity of systems done. How control in combination with other control prevents, detects or corrects. Meaning, one control will not do, but it is merged with another, it is combined with another. These both will prevent and detect. Meaning, there is control A, there is control B. There is control A, there is control B. Now, control A on its own is not going to prevent it. But when it is merged with control B, these both can prevent, detect and correct. In that case, I will have to check both. Control A as well as control B. Clear? Right. Next. How much control the employee has over completeness and accuracy? Meaning, does the management has control over information production? If they are having control over production of information, then that means there could be personal bias. Clear? So I will be checking more there and not less. ICS over safeguarding of assets. Like you said, ICS over safeguarding of assets. If it is over safeguarding of assets, I will check. Then some statutes or regulation may require to report on compliance. Example, Companies Act requires auditor to report on internal control over financial reporting. ICOFR. Right, sir. These are components of ICS. 6 components are there. Environment of ICS. Environment means how you are operating, what is your surroundings. Clear? Second one is entity's risk assessment process. Does the entity has any risk assessment process? We have, but like we have, you also should have risk assessment process. Do you have? If yes, how strong it is? Clear? Third one is our information system. Information system is softwares. What type of software your entity has, right? It will have for these things. Class of transaction, which is significant for financial statements, procedures to initiate, record, process, correct, transfer to ledger. These are the softwares, accounting softwares, right? How entity communicates the roles and responsibilities to whom? To their employees and to outsiders. Next is monitoring. Next is monitoring. Monitoring means what? Supervising. What process do you have in your internal control system to supervise whatever is happening? Because if supervision is not there, correction won't happen. Errors will keep on happening. There is no correction happening. Right? Now, 2 types of monitoring is there. One is called ongoing evaluation. One is called separate evaluation. What does ongoing means? As and when the work is done, we will be checking it. Separate evaluation means once the work is done, we will check it. There is a difference between these two. Here, now in ongoing evaluation, real-time correction will happen. In separate evaluation, real-time correction does not happen. Clear? Next is control activities. What do you mean by control activities? See, these are policies and procedures ensuring whatever management has told, we should be following it. Now, management has told anything above 10,000, we should ask approval. Are you asking? Control activities will ensure you will ask. You should have certain people which will say, ensure and ask. Right? Now, what activities are relevant here? Any activity for us, what is relevant? Related to significant risk. Any control activities which is related to significant risk is important for us. Number 2. Related to those risks for which SP, who is this SP? Substantive procedures do not provide evidence. So, any area where, any risk where substantive procedure is not going to give me evidence. Next. Relevant as per auditor's judgment, take a call. Whichever you feel is important, go and evaluate it. Then we have 4th one, as per auditor, if there is any risk, is a significant risk. Now, what is a significant risk? We do not know. Who takes a call? Auditor takes a call. But generally, these 3 blue points will be important for you. That is the risk a risk of fraud? Fraud risk is always a significant risk. Clear? 4th one, transactions with related parties is always a significant risk. Clear? 6th one, transactions outside normal course of business is always significant risk. Other things is not always. But these 3 is always significant risk. Which are those? One is with respect to fraud, one is with respect to related parties, and one is with respect to outside normal course of business. These 3 are always risky. Right, sir. Now, for the following areas, risk is always significant. Which areas? Non-routine transactions. So here, focus here. This is where you need to understand high risk area question. Now, which area is it high risky? Non-routine transaction. What is non-routine transactions? Unusual, non-recurring in nature. Once in a while. What are those? Management specifying accounting treatment. So imagine if management should come and tell you how to put accounts. Something is wrong. Number 2, manual intervention in data collection and processing. So not anything else. Data collection. When you collect the data, you should have right people there. Otherwise, whatever data was collected, if you don't give, it will be very, very dangerous. So, in case of data collection, you need to have the right control. Complex calculations and transactions are such that ICS cannot be placed. Meaning, ICS can be placed for recurring things. For non-recurring things, you cannot place any ICS because you do not know when it will come. ICS you can place for when it will come, but you cannot place for certain transactions when you can't expect that. Lotteries are transactions which you can't expect. Abnormal loss, how do you place ICS for that? Normal loss you can place. Abnormal loss, how do you place control? No. For example, remember, look at this. I am in a juice shop. Okay, I'll continue that example. I'm in a juice shop. Sir, let us say, we'll take different fruit now. Dragon fruit. We'll keep it simple. We'll take watermelon. Okay, watermelon juice we want. Now, in case of watermelon juice, what is the normal loss here?
The pulp will go
When you cut the skin, the pulp also will go. One. In case of watermelon juice, what is the next normal loss? Sir, when you filter the juice, some juice will fall out, drops will fall out. Yes, sir. Now, for that, what controls can you place?
proper vessels.
Bigger vessel with a bigger filter so that it will not drain out. Correct, sir. Now, what is abnormal loss here?
What is
Abnormal loss. Whenever you are putting in the glass might fall down.
rotten
Rotten watermelon I can still control because I can place one person to approve which watermelons you have to bring. I am talking about abnormal loss which is not controllable only. Sir, when there could be a reason where one person is there, one glass will drink before delivering. There's an abnormal loss. Yes, I can control that. How? By putting someone there. But sir, by mistake glass falls. What control will put there? No control. Right? So for abnormal loss, you can't expect also. Do you expect, now he's putting watermelon in the glass, it will fall now. No. But drinking watermelon juice, you can expect. Whenever he's preparing, he drinks. You can expect that. Clear? So for some of the things where expectation only can't be placed, how do you place ICS for such cases? Clear? That's why for these transactions where it is not possible only for us, we can't place any controls for that. Transactions are such that ICS cannot be placed. For example, discount received. Let's talk about financial transactions. Discount received from creditors. Usual or unusual? Or regular or irregular?
Regular.
Creditor giving discount is regular?
Maybe for faster or cash payment.
Those things I understand. Rebate already spoken, yes. But rebate not discussed. Out of happiness, creditor gives discount. How do you put ICS there? How can you put ICS there? You can't put ICS there. But if it is already agreed, you can put ICS by checking in the agreement, asking a person to go through the authorization process and all. Yes, understandable. Clear? Next, judgmental matters. In case of judgmental matters, we won't be able to put any controls. Why? Judgment is totally based on us. Clear? Accounting principles, estimate. See, example, GCA. In ITC, when you read the audit report, clear? In that they have mentioned something called as key audit matter. Clear? In that key audit matter, they have explained about revenue recognition. Usually revenue should be recognized when the goods are transferred, the risk and rewards are transferred. But in that case, they used to recognize before risk and rewards are transferred. Now in that case, that is a judgmental call. There is a judgmental call. So, simple example I'll tell you. Let us say, generally in your business, when you sell goods, you will record when the goods are sold. Okay? Now, you sell goods to me. Okay? Now, do you know me personally? Yes. Let us say you know me from 15 years. You sold goods to me on accrual basis. What basis? How do you record in accrual basis? Sale of goods Act has told three things. Risk and rewards will transfer in three cases. Number one, once I accept. Number two, time has expired. Number three, I have done some other act. Right? I have not done any of this. You have given me 10 days time. Here, 6th day you record. 10 days time you have given me. 6th day you record the revenue. Now, is this usual or unusual? Unusual. Your judgment. Now, auditor will come and ask you, why did you record in 6 days? Now, you will tell, sir, he will accept, I know. How do you prove that? How do you prove? It is your judgment that you are taking on me. Yes or no? So, for that, what ICS I can place? Understood? I can tell them, see, from now onwards, you should not record anything like this. You should record only if he has accepted it. Clear? So, for judgmental matters, we cannot place ICS. Going concern assumption is purely judgment. We do not know whether we will survive tomorrow or no. Clear? Next, subjective or complex assumptions about future. We can't put ICS for that. Clear? So for these matters, it is always, the risk is always significant. One is non-routine transactions and one is judgmental matters. Clear? Alright, sir. Next is materiality. SA 320 materiality limit. What is materiality importance level? What is important, what is not important, it is our call. How much is important, how much is not important, our call. Professional judgment. Clear? So, how do we, why is this materiality important? What is materiality? It is important because based on this, users' decisions will be affected. Right? Now, users what decision? Life decisions? Economic decisions. Who they are getting married, God alone knows, let them get married to anyone. But we are talking about economic decisions here. Clear? So, generally, materiality means what? Number one, if it is influencing user's decision, it is called materiality. Number two, it depends on three things: circumstance, size, nature. Circumstance means what? Situation. So, it depends on situation. What is important, what is not important. Number two, size. Sir, 10,000 rupees may not be a small amount, it may be immaterial amount. But the same 10,000 was stolen. Now, becomes important. Why? Because of behavioral aspect. Clear? Because of behavioral aspect. Nothing but circumstantial. Clear? Right? Okay. Common financial information needs of users as a group. So anything that is important for general users is important for us. Profit, sales, assets, liabilities. Clear? Generally these are important for general crowd. We will be considering them as important also. So this will provide a basis for what? Once we get to know the materiality, it provides a basis for three things. One, to put RAP in place. What is RAP? Risk assessment procedure. Second one, to put further audit procedures. And third one, for assessing risk. This will help in three things: assessing risk, putting procedures. So determining materiality, whose call? Auditor's call. Now comes a main important question. Sir, whenever he takes a call, is it a judgment call? Yes or no? Yes, sir. It's a judgmental call. So if he has to take a judgmental call, he has to take some assumptions. What assumptions are valid if he takes? Number one, he can take an assumption that users have an understanding to make reasonable decisions. So when I make judgment, I will tell that I assume that users know how to take economic decisions. I am not training them. I will assume they know. Number two, simple in marathon when I teach, what assumption I should take and is valid?
Everybody has already knowledge of the subject.
Sorry?
Everyone has knowledge of the subject.
Everyone has knowledge of subject. Now, when I did my CA finals for the first attempt, I went and sat in a place where a CA final audit was finished in 5 days. Here, now, I thought this is how audit is gone. I will never become CA. Because I had a 1000 page book in my hand. And from that book, in 5 days, class got over. Now, then I understood that was like a crash course, like a marathon only. Now, first time I am studying, first time I am writing exam, I have never studied audit before, directly went and sat in the class. Will I be able to crack the subject? Will I be able to crack the subject? No way. No way. Can I blame the teacher now? No. Why? Can I blame the teacher?
No.
Why?
He did what he intended to do.
What assumption he took?
Prerequisite knowledge was there.
Prerequisite knowledge was there. So he will take an assumption that a student will understand whatever I am teaching. At least they know what I am talking about. Yes or no? If you see the regular class, professional skepticism only will take half an hour. Definition of audit will take 2 to 3 hours. Just definition. What is independent examination? Everything in the regular class we talk about for a minimum 2 hours. Only definition. First chapter only we take so much time to finish off. Yes or no? Why? Because there the assumption is you don't know anything. Whereas when it comes to crash course marathon, what is the assumption? At least you know what I am talking about. Maybe you don't know the text, but you know the concept. Clear? The second assumption I will take, users have a reasonable knowledge about business and economic activities. To study the financial statement, at least on assumption, they know how to read financials. That assumption I will take. Third, understand auditor has prepared financial statements based on materiality. Well, that's exactly why when I say our opinion, financial statements are free from material misstatements. So I will take an assumption that you know I am auditing based on materiality and I can't check 100%. Here. Next, they recognize. Now here, classic example is from students' perspective. When you come to marathon, you should understand that we teach based on materiality concepts, not everything. Can we cover everything in 2 days? No ways. 2-3 days you can't cover anything. Okay, that's why the focus should be only on material concepts. What is going on here? Right? Next. They recognize that there are uncertainties while measuring any amount. So I will take an assumption that my users know that they have basic knowledge of judgment. Clear? So for example, provision not accurate, estimates not accurate, contingencies not accurate. Clear? Right. Next is performance materiality. What is performance materiality, sir? A different materiality limit which is less than overall materiality limit. For overall materiality limit for financial statements, it is at 10 lakhs. That means any amount which is affecting my entire financial statement, if it is more than 10 lakh, I will not tolerate it. That's my materiality limit. But performance materiality means I should not be tolerating small amount also in any expense income account. Let us say, for example, I have put here example, 10 lakhs is my materiality limit for the financial statement as a whole. Now, let us say I am going in auditing. I took one expense. I got one materiality, I got one difference, and the difference is 6 lakhs. 10 lakh is my overall limit, okay? 6 lakh is my first mistake I got. Should I consider this? No, I will not consider. Why? This is my limit. Anything less than that I will not consider. Correct? Huh? So 6 lakh will I consider? No, sir. 7 lakh will I consider? No. Now I got one mistake as 6 lakh. One mistake as 7 lakh. Now aggregate this. Is it exceeding my overall limit? Yes. Now for that, what should I do now? This materiality limit is there. No, set it at as low as possible. So whatever expenses you are auditing, set a less materiality limit. Meaning, let us say 10,000 I will set. So anything less than 10,000 I will ignore. Anything more than 10,000 I will not ignore. Now, is there a formula for this? No. How much materiality to set? Who will take a call? I like the subject for that only. Because it is your logic. You use, sir, can PM be different for different items? For expense different, for income different? Yes. In expense only, for different head, can I have different materiality limit? Yes, not an issue. Clear? Right. Look at this. What is performance materiality? Depends on the item the auditor wants to evaluate. Now, look at this. This is not there in the model for your understanding. If item, that is account balance, class of transaction, disclosure. If the item is high risky, your PM will be low. Why? You will not tolerate more risk. Here, number 2. If ABCD is less risky, your PM will be high. Why? Risk is very less, so I can set good level of materiality. Number 3. Medium risk, if it is there, your call. No risk at all. Now you will tell, don't set materiality limit only. No. Set, but obtain high level of certainty to ignore. Get full confirmation that there is no risk only here. Clear? Verify twice to ensure that you are not going to check that. Clear? Understood? Yes, sir. How to determine? Apply benchmark. Benchmark means what? Standard. Clear? For example, if I have to consider what is important, what is not important, what is the benchmark for me? ICAI's module. Right? So that is a benchmark for me. I apply that. Clear? Right, sir. Sometimes materiality of lesser amount may be affecting better, more. Right? So you don't need chili powder only to make you go and drink water. You just need one small chili. One small chili will affect you, no? Yes or no? In Bajirao Mastani, one dialogue is there. If a thorn is small, it will still prick. We don't need a bigger thorn. We need a small thorn to prick. Yes or no? For an organ to be septic, a small thorn if it prickles is good enough. So sometimes materiality is like that. Some materiality, even if it is at a smaller amount, it will affect. Clear? Now, what factors will indicate? Number one, whether financial reporting framework affects users' expectation regarding disclosure. Now, in this disclosure, even smallest to the smallest misstatement if you have, it is important for me. Why? It is going to affect users. Clear? Your parents, you without telling them you go out. Without telling them you go out, and when you come back, you will have a drama at home. That time, they will focus on one statement. It's not about you going out. It's about you telling me. You should have told me. I am okay with you going out, but you should have told me. That telling is what you call as disclosure. So sometimes that disclosure will affect the users. If the disclosure is affecting the users, then we can't tolerate a smallest to smallest mistakes. Let's take a simple example, sir. Amalgamation happens. One company takes over another company. In return, that company pays purchase consideration, correct? Yes. Purchase consideration, amalgamation is there for you? Yeah. Purchase consideration you pay. How do you disperse purchase consideration? Now let's say 15 lakh rupees you have to pay. 15 lakhs you have to pay to company. How do you pay? What are the methods of dispersal? Huh? Don't know? Prakasha? Forgot. Number one. Number one, shares. Number two, cash. Clear? Debentures also you can give. Right? Now my question to you. You give shares, but there is something called as notes to accounts. Let us say 15 lakh you are giving, divided by 100 rupees you do. Okay? How much? No, we will say 10 rupees. 15 lakhs divided by 10. 1 lakh 50,000 shares are giving. That's it. 1 lakh 50,000 shares are giving to P limited shareholders. Good. Now, in your balance sheet, share capital will increase by 15 lakhs. Yes or no? Because you give share to them. In my company, I am purchasing your company. I am giving 1 lakh 50,000 shares to you. My share capital will increase, no? Yes, sir. Means what? Understood or not understand? So my share capital will increase because the entry would be business purchase to share capital. So credit side share capital will increase. But in most of accounts, I will not disclose out of the above 1,50,000 was given for consideration other than cash. That disclosure will make a huge difference. That is materiality for me. Telling is materiality. You don't tell that nothing is going to happen. Nothing much is going to happen. Financial statements are still fine. There's a fraud there. But you did not tell me. Because of that, perspective might be different. Assumptions might be taken. Clear? Next. Key disclosures with respect to industry. Sir, when it comes to banking, NPA is a very, very important disclosure. Pharma, whether you have done a testing, right? There are many things. Whether you have taken certification or no, all these disclosures are very important. With respect to your specific industry, what industry-wise what disclosure is there? You have to check that. Clear? Focus on a specific aspect during major event like purchase of business. You have to tell people that you have purchased business, that is why our assets and liabilities have been changed. Yeah? Right. Is materiality fixed, sir? No. Can it change? Yes. Due to what? Circumstances, new information, understanding of the entity changed. Here, and because of that, I need to change my materiality now. Earlier, I used to think errors are less. Now I got no, fraud is more. My materiality will be lowered. Clear? Yes. So document all type of materiality, full materiality, performance materiality, on materiality if you have revised. Document and keep everything so that next it will be helpful for you. Right. So this is with respect to your risk assessment and internal control chapter number 3, except for your automated controls. Now in automated controls, one thing I will discuss and finish it off. So your information systems should be robust. Why? If the information processing is not right, the output will be wrong. And if the output is wrong and people are using that output, their information will be wrong, and that will have a spreading effect everywhere. So we can't afford to have that. Clear? So inaccurate processing is also risky for us. Inaccurate data is also risky for us. Unauthorized changes also is risky for us. Clear? So in that one particular concept is there where what are the risks involved in IT? Study that properly. Inaccurate processing of data, processing inaccurate data, or both. Unauthorized changes made in the system, unauthorized access given in the system. All these are very important risks involved in internal control, that is information system. So study that part very, very carefully. Clear? With this, our chapter number 3 is done. So we are left with, in standard wise, we are left with 700, no? No, series wise reporting series. That is my last priority. Clear? Series wise, only 700 series is pending. That is reporting standards. Clear? CSA 570 here. Right. Let's talk about SA 570. SA 570 talks about going concern assumption. Now, what does going concern assumption means?
They assume that company
They may be ready for foreseeable future.
A company's business will be alive for foreseeable future. Don't say company will live forever. That is perpetual succession you are talking about. Very wrong. It's business which is going to be there for a foreseeable future. Now, what is foreseeable future as per SA 570? Minimum for the next 12 months I should be able to survive. Clear? So my objective here would be, sir, obtain SAAE. My objective is still the same, obtain SAAE regarding what? Appropriateness of management use of going concern basis. Clear? My objective is still the same, getting evidence. Not only that, I should also get evidence about whether material uncertainty exists related to events or conditions that may cast doubt on the going concern. So I need evidence about two things. GC is appropriate, there is no uncertainty. I need evidence about two things. GC is appropriate, uncertainty is not there. Clear? Now, my responsibility is different, management's responsibility is different. What is management's responsibility? It is their responsibility to do what? Prepare the financial statements, and for that purpose, whatever GC assumption you have to take, it is your responsibility. Even if law does not ask you to do it, even if framework is not asking you to do it, you have to evaluate GC assumption. Sir, nobody told us, still do it. Somebody told us, do it. Sorry? This is fair presentation framework. You can consider this under fair presentation framework. Clear? It involves making a judgment at a particular point about uncertain future outcomes. You have to take judgment about future outcomes. Right? For that, what are the factors? Degree of uncertainty increases significantly the further into the future. Meaning, if you read the sentence, no, it is very vague for you in the first reading, but it is actually good. They are telling the more you think about future, higher the uncertainty. Now, simple example. Tomorrow, what are you doing? Can you tell me? Approximately.
will come to class.
No, you will know tomorrow what you will be doing approximately. Day after tomorrow. Somewhere. You will know something. You will know. This week what you will be doing? Something you will know. Maybe Friday I will go here, Sunday I will go here. Sir, can you tell me 6 months down the line what you will be doing? No. Article check. Where? What time? What audit you will be doing? You do not know. 1 year down the lane, where will you be at the given same time? Do not know. If you keep traveling into the future, uncertainty keep on increasing. Clear? Today what you will be doing? Exactly you know. Tomorrow what you will be doing? Okay, that accuracy will come down. The more you travel into the future, accuracy keeps on coming down, and therefore uncertainty keeps on increasing. So rather than thinking too much futuristic, let's take only up to the next 12 months whether we will be living or no. Clear? Next, size and complexity of the entity. Depending on the size and complexity, you take your call. Nature and condition of business. And any judgment about the future which is based on information available at the time when the judgment is made. So today I am making a judgment based on today's information. Tomorrow information will change. If information changes, judgment changes. Clear? Next, what is my responsibility? Sir, my responsibility is very simple. Obtain SAI about what? Appropriateness of management's use of GC. I just want sorry. That's it. That's my responsibility. Number two, my responsibility is there even if there is no explicit requirement, even if nobody is asking me to do it, I still have my responsibility. Third, I cannot predict the future events due to inherent limitation. Point number 5 in inherent limitation, future events. Because of that, I may not be able to give you futuristic view. And last one, the absence of any reference is not a guarantee. Just because I am telling company will live for the next 1 year, next 6 months only company died, don't blame me. Because it is not my responsibility. Clear? Yes. What procedure I have to do? Simple, talk to management. Whether management has already performed any assessment, talk to them. Number 2, if yes, what are their plans to address them? Ask them, what have you done? Tell me, because it's their responsibility, not mine. I just have to get evidence. So for getting evidence, I am doing inquiry here. Clear? Now ask them what evaluation you have done. For that evaluation, what assumptions you have taken, what are your future plans and whether these plans are feasible or no. Clear? What are your future plans? Whether those plans are feasible. Next, period of assessment minimum 12 months. Clear? If management has covered less than 12 months from the date of financial statement, request them to extend it to at least 12 months. At least 12 months you have to do. Right? Why 12 months, sir? Basic, sir. Not 6 months, 7 months and all. Right? Okay. It is not my responsibility to rectify lack of analysis. Sir, it's not my responsibility to rectify. I will just go and tell them, do for the 12 months. I will do it for 12 months anyway. I will report it for 12 months. You do it, you don't do it. Clear? What are the indicators, sir? 3 indicators are there: financial, operating, and other indicators. In financial indicators, related to your financial statements or finances, liability, borrowings, creditor, cash flow, clear? Financial ratios, dividends, inability to pay the creditors, and then loan arrangements, clear? Suppliers, all these are your financial indicators. Then we have operational indicators, meaning business wise. You are not able to do the business, like how? Intention to liquidate. Management you lost. People are leaving you. These are all operational indicators. You are losing the market. Employees are leaving you. Shortage of important supplies. Resources are not there. Clear? Emergence of a highly successful competitor is another indicator. I am not saying you will die, but there is an indicator that if you are not performing because of that, then there is a risk. Clear? And other things which are not financial and operating, like what? Non-compliance with requirements. You are not complying with laws and regulation. Pending legal proceedings and changes in law expected to affect the MP negatively. For example, recently in Karnataka they said hookah bars are banned. Now if you're bringing new law which will affect my business now, going concern assumption is not there. Clear? Right. These are additional procedures. The main part is reporting. What should I report, sir? Now 3 things are there. Number 1 is this: use of GC is inappropriate in my judgment. Clear? That is my first thing. Second thing is, if you see, use of GC is appropriate, but uncertainty exists. In that case, how should I report? And third one, management unwilling to make or extend the assessment. Remember I told them to extend for 1 year, they are not doing it. One by one we will see. In point number A, sir, use of GC is inappropriate, what should I do, sir? Number 1, if it is inappropriate, number 1, what should we do? Express adverse opinion. Why?
Pervasive.
Huh?
Pervasive.
Not about pervasive. Why should I express modified here? Because I am telling it is. I am telling according to me it is inappropriate, and you are telling it is appropriate. No problem. My opinion is inappropriate. No. To get inappropriate, you need evidence. Yes or no? You need evidence. And here they have told. See here. Financial statements have been prepared using GC, but in the judgment, management use of GC is inappropriate. That means you have evidence that it is inappropriate. Go and give adverse opinion. We have qualified adverse and disclaimer. When do you give adverse opinion? When there is evidence, material, and pervasive. Clear? Next. Sir, When the use of GC is not appropriate, management may be required to record on what basis? Liquidation. Liquidation is what? Receipt basis now. No accrual basis. It's only receipt basis now. My question to you: in case, if management says, okay, sir, we will change our basis of accounting, we will convert into liquidation basis now, right? If they do it, did they listen to you? You asked them to change it, they changed it. Yes, now they are good boy. If they are good boy, what opinion will you give? Unmodified opinion you give. Because going concern assumption is not right, they accept it, they are telling people that yes, they are accepting it. Basically, we are accepting the truth, we are honest, unmodified opinion. Okay? Then, but in EOM, you tell them that GC is not fine, who you alter. In EOM paragraph, you go and tell them that we have used liquidation basis and not going concern basis. Second one, sir, going concern is appropriate, but there is uncertainty. Currently it is appropriate, but there is uncertainty hovering around our mind. Now in that case, what should you do? Two things. Either you should disclose or you should not disclose. You should tell to people that there is going concern is fine, but uncertainty is there. There are two things. If you tell, if disclosure is made by management itself, what opinion I will give? You have to give unmodified opinion. Clear? You have to give what opinion? Unmodified opinion. But sir, they are not making disclosure. No problem. You don't make disclosure, I will either give qualified or adverse opinion. Because you should tell people. You should tell people whatever is happening. Because they will be thinking that you will be living forever now. Clear? Next. Sir, management not willing to make assessment only, or they are not extending also. What to do? Number one, consider the implications on the audit report. They are not, see, I am telling them 12 months, they are telling 8 months is good enough for us. I am telling them extend it. At least 12 months you have to do. We will not do, sir. No problem. You will not do, I will do. What is that? Give qualified or disclaimer. Here, give qualified or disclaimer. Why? Now this qualified or disclaimer is for what purpose? Very good. This is for absence of evidence. This is for absence of evidence. I am unable to obtain evidence. This is crazy. Very important. This qualified and disclaimer is different. Here, qualified and adverse is different. Here, adverse is different. Here, I have evidence. Here, evidence is there. Whereas here, this is due to absence of evidence. Clear? Yes. So, in SA 570, reporting concept will be very, very important. Two things are important here. One is your indicators. Second one is your reporting. Okay. Procedures are usual. See, audit procedures are very less. Why? I just have to check your documents, ask you. You are most important. Management is most important here. Clear? So, management's responsibility, go through it. Indicators, you go through it. Reporting, you go through it. Clear? So, with this, we are done with our completion and review. Yes, SA 500 series. Everything is done except SA 501. That's my last priority because you can manage on your own if you know SA 500. Because for that SA 500 is a base standard. Clear? Then SA 500 series done, SA 300 series done. So we are left with, in standard, we are left with only reporting standards, that is SA 700. Clear? 700, 705, 701, 710, 706. Clear? We'll continue tomorrow with that. Cool? Thank you. Right. Let's go with the next standard, SA 600, which talks about branch audit. Right? It comes under your reporting chapter. Right? Karo comes in the same chapter. So let's talk about branch audit now. Now, what do you mean by branch audit? See, when a company has, apart from their main offices, they have many branch offices. Then we call that office the branch office. Now, for every branch office, whenever we talk about companies, see, in the reporting chapter, they have covered companies, right? They have specifically covered companies because section 128 and 143 is covered there. So, whenever there is branch office involved, we need to appoint auditors as well. Now, the question is, should we appoint the same auditor as for our main office, or should we appoint a separate officer or auditor for the branch office? Here, so we have two types of auditors here. One is called principal auditor, yeah, and one is called other auditor. Yeah. In standard language we call it other auditor. General language we call branch auditor. Clear? So we have principal auditor, we have other auditor. In both the cases, the concept of SC 600 is when other auditor, that is the branch auditor, uses does his work, I am supposed to use, because we can't give two reports. We have to give one report, and one report is given by the principal auditor. Now, when principal auditor gives his report, of course, he is giving for the client. So, client has branches as well. So, if he is reporting for branch as well, how he is supposed to report, sir? In that case, SA 600 says, if you are using branch auditor's work in your report, then I will tell you how to use it. And that is the concept of SA 600. Yeah. So if we are using branch auditor's work, how we are supposed to use that is what SA 600 tells. Because if you remember, right after this we have SA 610, which we have already done, using the work of internal auditor. Using the work of internal auditor. This is using the work of other auditor, not internal auditor, other auditor. Okay. Now the question is, SA 600 you have to use correct, sir. What does SA 600 say? SA 600 talks about roles and responsibilities here, but I have covered qualifications as well here. Now, if you say, what is this qualification, sir? In case of branches in India, then the same person, how we appoint him for our principal office, the branch office also we can appoint him. Here, same type of competent and person who has the same your degree, same competence, same skill. Then, or you can appoint principal auditor himself. The main auditor you can go and audit, no issue. But if the branch is in abroad, principal auditor, accountant, or qualified as per their law. Why as per their law? Because let us say now the branch is in US, right? When the branch is in US, you will have no idea. You will have no idea about US laws, correct? You will have no idea about US laws. Now, in that case, boss, you need to understand US laws and then go and audit there. Clear? Now, SA 600 talks about roles and responsibilities, sir. First, roles and responsibility, PA. Now, here PA means principal auditor, OA means other auditor. Clear? Now, principal auditor may visit the branch. So, if he wishes to, he may visit the branch. Absolutely no issues with that. Clear? Then I said you may visit the branch. If not, if you are not visiting the branch, what other option you have? Rely on other auditors' work unless there is a special circumstance for PE to visit and check the books of accounts. So generally, if you want, you may visit. If you don't want to visit, then whatever other auditor work he is doing, you will take his work and you will perform in your final auditing. Yeah, unless any special circumstances where you have to go and visit the books of accounts. Special circumstances, they are not defined what is special circumstance. Right? Now, when I am using his work in my work, whose work, other auditors' work, if I am using in my audit, that is my final compilation, I am supposed to do certain procedures. Clear? So, I am supposed to do certain procedures for what purpose? To obtain SAI. Obtain SAI about what? About the work of other auditor. Is it adequate for my purpose? Clear? I have to obtain, do procedures, obtain evidence to understand whether branch auditor's work is enough for me or not. Now, what are those procedures? Those procedures are these. There are two procedures here. Okay? Number one, this is important. This is the crux of SA 600. What procedures we are supposed to do? Clear? Now, we here there is a mnemonic called PA, cast, OA. Casting generally means appointing, right? But we're not appointing it. Just to remember, mnemonic PA will cast OA. So cast is important for us. Now, number one, advise the other auditor about the use of his work. Now, why we have to advise? Logic is simple. If I don't tell you what am I doing with your work, how will you know your seriousness? Right? So I have to tell you, see, if you work like this, that work I am using it in my final audit report, which I used in giving it to members. So if I advise the other auditor as to what is his purpose of his work, then he will be more serious about it. Number two, make arrangements for coordination at planning stage itself. What is coordination? Sir, communication, come and tell me what is the complication, right? Coordination, communication and sharing of things should be there when not after the audit, during the planning stage itself. So at a planning stage, I will tell you, once in 3 days you have to report to me, or once in 7 days we'll meet and talk, right? That's called coordination. Inform other auditor regarding special consideration. Now, branch accounts one concept was there, right? In accounts one branch account one concept is there. In that particular concept, what happens is, not only in that concept, let's say general, main office and branch office. Main office and branch office will have transactions between them. Like inter-department transactions might be there. Right? Let us say now I have inventory. Branch office does not have inventory. I will send inventory to my branch. Now in those cases, I have to tell him there could be inter-component transactions. Be careful. If there are inter-component transactions, if you remember in branch accounts and all those things, unrealized profit and all we cannot consider. We have to eliminate those things. Now main office can't sell it to its own branch office at profit. Although in the books you can show, but when we compile, you have to remove those inter-component transactions. Mutual indebtedness. Branch owes a main office 1 lakh rupees. Now, in that case, sir, your father and you, if you owe your father owes you. Do you consider that as a loan? No. But generally, for the remembering purpose, we say you owe me. But when it comes to actual transaction, we don't say you owe me. Right? So, inter-component transaction, I have to tell him. Timetable for completion of audit. Timetable for completion of audit. You have to have timetable. Just like how you have timetable in studies, similarly, you need to have timetable in audit as well. Next, advise the other auditor. Advise the other auditor about requirements and obtain representation. Now, why should I tell him? See, if companies that specifically require something, I should tell him because he is the one who is auditing that branch. Right? If accounting requirement is there, auditing requirement is there, I should tell him. And obtain representation. What is this representation? WR, written representation. SA 580. Obtain WR from him. Clear? That is my first procedure. Second procedure is this. I should discuss with other auditor about 3 things. What should I discuss, sir? What procedure have you applied? Now, if that is not possible, he is not able to explain what procedure he has applied, then at least you would have had a written summary. Give me that written summary. I will read that. I will read that. Clear? And I will get to know your procedures and your findings. If required, visit the authority. If required, they are not saying go and visit only. If you feel that there is a need to go and visit, you better visit. The procedures of principal auditor will depend on NTE of knowledge about other auditor's professional competence. Logic is simple. Now, if you read this, NTE, now my job is dependent on how competent other auditor is. If branch auditor is not competent, my work will increase. I have double work. But if he is very good, my work will decrease. So about his competence, if I have the knowledge, my procedure will have a effect, direct effect. If he is not doing work properly, I will have to do double work. If he is doing absolutely fine, then my work will be reduced. Clear? So if I have to put it in short, this is the formula. OA's competence if is more, PA's procedures will be less. If OA's competence is less, PA's procedures will be more. Right? This is your SA 600 branch audit. Now, next let's talk about SA 299 joint audit. Now, what is this joint audit? There is one firm called CA Karthik and Associates where we have 2 partners. Okay, then you have CA Rajat as a separate person, CA Sudeep and Co is another firm. Right now, we are going to audit Loose Tools Limited, which is a big company. It's like Reliance Industries, it's a big company. Now, such a big company can we handle alone? We won't be able to handle alone. Now, they may have so many transactions, sales, purchases, different businesses they may have. Now, I alone cannot be able to handle it. So, what SA 299 is or what audit in audit one concept is where we call as joint audit, where 2 or more auditors come together and work for one client. Yeah, where 2 or more auditors come together. And these 2 or more auditors could be combination of firms, could be combination of individuals, could be combination of individuals and firm. So two individuals, more than 2 individuals. 2 firms, more than 2 firms. Individual and firms, not an issue. Yeah, that's why if you see this is a firm. Yes, ma'am. In which case? In joint audit, there is no WR. In joint audit, we are all a team. In branch audit, you are a separate auditor, you have different responsibilities. For you, responsibility is only for the branch.
So at that time, the WR in which company?
Where?
3 parties, right?
Here.
3 associates.
Correct.
Written representation from which audit firm's name?
No, here okay, I got your question. Maybe you're trying to ask, sir, now Karthik and Associates, Rajesh and Sudeep and Co. Sir, who will take WR from management? Now, it depends on, see, in joint audit, we are not yet done with the joint audit, we have different areas of responsibilities. Our area of responsibility is WR, we will take. Well, if, for example, Karthik and Associates are expertise, they are taking taxation matter. WR with respect to taxation matter, these will take. Clear? WR with respect to common areas, it will be given in the name of everyone. Basically, management will write and give to everyone. Okay, right? In branch audit, it works as such. The same responsibility what I have in main office, same responsibility you have in branch office. Clear? How I am reporting about fraud, you will also report about the fraud there. Audit part, yes, it will be mentioned. It will be mentioned. One report will be given. One report, but all joint auditors' name will be there. Okay, right. So this is how. See, we have CA Karthik and Associates. Clear? Then we have CA Rajat. Then we have CA Rajat. Then we have CA Sudeep and Co. Now these are called as joint auditors. These are called as joint auditors. Together they will go and audit Loose Tools Limited. Right? Now the question is, what is SA 299? What is joint audit? Joint audit is nothing but pooling together the resources, of what? Not only resources, expertise as well, of more than one firm of auditors. Sir, your firm of auditors means what, sir? Here, you just said individual. Sir, individual also will have a proprietorship firm. Your partners also will have partnership firm. LLP also will have LLP firm. Right? So, pooling together means bringing together the resources and expertise of more than one auditors to render an expert job. Rather than giving non-expert job, we'll appoint auditors only, where we'll get expert job. Of course, cost will increase, but quality will remain good. Right? Okay. What are the advantages? Advantages is sharing of expertise. Sir, both of us can share our expertise. Advantage of mutual consultation. We can consult with each other and solve our problems. Now, I have taxation issue. You have compliance issue. So, I am good at compliance. You are good at taxation. I will consult with you. Sir, in this particular taxation matter, what am I supposed to do? In this particular compliance matter, you can ask me. Right? Mutual consultation will happen. Lower workload. Lower workload means what? Since the work is shared between all the joint auditors, stress will be reduced. Better quality of performance. We are doing only our expertise job, so quality will be increased. Improved service to the client. Ultimately, the beneficiary service your client only, because everyone is giving expert service. In respect of MNC, you can use local firms, which is a much better. Like for example, if I have let us say the company is in China. Right now, I can appoint a Chinese firm only because they exactly know in their area how the local customs are, how to handle certain laws and regulations. It's better if you have local firms. Sir, let us say now the company has one more undertaking in Chennai. Now in Chennai, how things are, we do not know. Right? So we'll appoint one firm in Chennai only, so that you audit the Chennai undertaking and you will get to know the localites, you know how to handle the issues there. Right? Then lower staff development cost. Yes, sir. See, we have to appoint a staff, we have to groom the staff, we have to develop the staff rather than appoint an expert only. Sir, he will come and do, pay whatever is his fee. Lower cost to carry out the work. Of course, see, not expert doing the job for 10 days versus expert doing the job. He will not take 10 days, he will take less than 10 days only. So, for the remaining number of days, I am saving the development or cost to carry out the work. Could be the administration cost, stay cost, whatever it is, I can save that. Healthy competitions towards better performance. Now, CA Karthik and Co, Sudeep and Co and Rajat, they will perform in their expertise. So, there is a healthy competition, there is no unhealthy competition. They will prove to the client that we are best in their particular area, which is good. Disadvantages. Fees being shared. Sir, I don't consider this as disadvantage because I see this one. When workload is lowered, I can't expect more fees. Right? When work is less, I can't expect more fees. And that is, they say it is disadvantage, but if lower workload is there, automatically fees will be lesser. Yeah. Then psychological problem between firms. Yes, sir. Experience-wise, firm will have that, where they have a mindset that ego will be there, inferiority, superiority complex will be there. So psychologically, they'll have a problem. Because of that, superiority complex will come into the picture. Right? And because of these two problems, they will not coordinate. It's actually one problem only. Right? And because of that, common area will be neglected. They'll be like, I'm an expert. I'm expert in this area, I'll be doing only this. So common area will be neglected and uncertainty about the liability. You know that there is liability, but you do not know how much. What are the consequences? You are unaware about the consequences. The limit I'm talking about. In that case, you will be telling, let us try and see what will happen. They just told liable, no. What liability they have not told. So when there is uncertainty, in liability, probably you will be end up doing wrong things, which is a disadvantage for you. Right? Okay, sir. Now comes to the main topic here. How do I? What are the special considerations? Now, in exam, very particularly, so there are two things. If they ask you special considerations in joint audit, you have to write these 7 points. You have to write these 7 points, but not only such a small box, including this one. Including this one. That's why that arrow mark. Here, that's why that arrow mark. If they ask special consideration, you have to go there and come back. But if they are asking only joint audit plan, then you write only this. Joint audit plan. If it is only joint audit plan, write only 5 points. But if it is special consideration, write all 7 points. Right? What are the special considerations? Engagement partner and other key members should be involved in planning. Of course, everyone should be involved in planning. Everyone? Wrong. No. Engagement partner and key members only. Why will I keep freshers in planning? They have no idea about it. So I'll keep only key members in planning. Joint audit should jointly establish strategy. Of course, chapter number 2 we have studied for every audit, we have to put planning, strategy and program. Similarly for joint audit, put an overall strategy. But by whom? Whoever is involved in planning. Joint audit should discuss and develop a joint audit plan. Now, what is joint audit plan? What they have to put, sir? Number 1, identify division of areas and common audit areas. What are your expertise areas? What are the common areas? Divide it so that people will get to know their responsibilities. Number 2, ascertain reporting objectives. What is our objective of reporting? Who do we need to report? What is the objective of this audit? Based on that, planning will be made. Consider and communicate factors that are significant in directing team's effort, like let us say transactions. Now, if you remember, a similar topic only was done in audit planning. Consider the factors which will be influencing our team members, where transactions, if it is huge, new amendment has come. So plan that. It's the same exactly like your chapter number 2. So you can right here, refer chapter 2 as well. Then, results of preliminary engagement activities or similar engagement activities performed earlier. If you remember preliminary engagement activities in chapter number 2, we had 3 points. In getting to know independence, if there is any threats, we have to talk, getting audit engagement letter, right, compliance, all those things we have to check here. Ascertain NTE of resources necessary. Now, this is directly talking about our strategy. Of course, strategy we have set, but in chapter number 2 strategy, 4 points about resources are there. What type of resources we need, when do we need, how do we need about that, and how to manage this. Clear? So same thing will apply here as well. Right, sir. Next we'll talk about liability. Sir, usually they are liable for their own work, but in some areas they are jointly and severally liable. Most of the times, no, examiner loves this type of questions, where they are jointly and severally liable. Number 1, if the work is not divided, they are jointly and severally liable. Number 2, if the decision is taken by all joint auditors, they are only liable because they knew the fact and they still took the decision. If you take the decision, face the consequences. Number 3, matters brought to the notice of the joint auditors by any one of them and there is an agreement on the same. So everyone, matters they know, matters brought to the notice, it means they know. They would have ignored it, but they know. For example, let us say in my example, Rajat got to know some information. Rajat came and told Karthik and Co, Sudip and Co, saying, sir, there is a problem in this area. Now Karthik and Co said, hey, it's okay, we'll manage later, don't worry. And later on we forgot to manage it. Now in that case, everyone knows about that. All the joint auditors knows about it. And we agreed on the same, but we ended up ignoring it. That time, everyone will be liable. Then, for compliance, everyone is liable. Compliance of financial statement with the statutes, compliance of presentation of financial statement with AFRF, and compliance of audit report with standards. So, for compliance, we can't hold one person liable. Why? Because one report is given in joint audit. One report, one set of financial statements are there. So, everyone will be liable for it. Now, reporting. So, usually one report will be given, but in exceptional circumstances, we will be giving 2 types of report. But what is that? If there is no disagreement, we give common report, only one report. But if there is disagreement, sir, express your opinion in a separate report. But for which one? Sir, I agree, 100 matters are there. Okay, Karthik and Co, Rajat, Sudeep and Co, 100 matters they are discussing. Out of 100 matters, 90 matters they have mutual agreement. Sir, for that, you give common report. Sir, for 10 matters, CA Sudeep and Co is not agreeing with the opinion of CA Karthik as well as CA Rajat. No problem, we will give one report. You give a separate report for only those 10 and then give cross-reference. So in the common report mentioned for these, you have other report. Now public will know, users will know that for this 10 matters I have to read both the reports. That will be easier for them. Right, sir. Now, there are some matters, now this is a very important note, if a joint auditor comes across a matter which requires discussion, disclosure, attention, judgment, any matter which requires these four, you have to communicate to other joint auditors in writing and before completion. The timing is very important in writing and before completion. Clear? Easy standard. Now, come back to joint audit special consideration. Now, once we have developed the joint audit plan, consider and assess risk of material misstatement and communicate it to other joint auditors. Then, discuss and document the NTE of AP for common and specific areas. How we have to perform for common areas, how we have to perform for specific areas. Obtain common engagement letter, common EL and common MRL. Work allocation document should be signed by all joint auditors. Now, this is what will make them liable. Because when they sign the work allocation document, we know that they are accountable. They are accountable for their work and ultimately they will do their work properly. Right? And of course, communicated to TCWG. Communicated to TCWG, sir. Done. This is your essay 299. With that, you are in reporting chapter, no? Students divide reporting chapter into two. Clear? Don't study reporting chapter as 1. Study reporting chapter as 2. How? Number 1, first side of the reporting chapter, if you have to divide that. Now, in case of reporting chapter, if I divide it into 2, first part of the reporting chapter will be essay series. Essay series. Second one will be others. Now, in essay series, we will be having essay 700, 701, 705, 706, 710, 299, 600. This is your first part of your reporting chapter. Second part of your reporting chapter is your company's audit report, specifically company's audit report. Now, under that we have CARO 2020. Clear? Now, in this, you may have different sections. Section 143, entire thing was discussed in that, right? So, you can do that. So, divide into 2 chapters. Divide into 2 chapters and then study. In fact, I can get into more details and divide into 3. Now, in third, if I want, what we can do is, this I will put here and I will take it from here. So that you get a clear idea that, okay, there are 3 parts here. One is essay 299 and 600, we'll do that first. Then we can do company audit and HARO if you want, and then we can go to 700, 701, 705, 706, 710. This way, if you have a mental plan to divide the chapter and study, it will be easier for you to cover the syllabus rather than looking at it as one big chapter, because it's a very big chapter. Reporting is a big chapter, right? So divide that into 3 parts, right? So this we complete our CARO is done, 299 is done, 600 is done. Okay. Now let's go to essay 700. So audit syllabus completed. Audit syllabus completed, 1 round. Revision? Okay, and revision is required. If you can come, they come from far away place. From they said they have to catch the train by 5:55. What time? 7. Okay. They take around they said where the place starts from P. It is no, not Palawan. They come from. No. I'm getting irritated if I don't get the name. This fellow comes from there. Our staff comes from there. Tamram Tandi. Very lucky. They come from there. So they said they have to catch it for almost 6. And today it's like one session, right, to finish it off. Maybe recording their watch because most of the important standards are done. Only reporting standards are left. So maybe that's where they're coming. My voice is gone actually. Totally out. Yesterday I had class evening. Morning 7:30 to 5:30.
You are not taking off on water and everything.
Yeah, I.
Some hot water you can drink in.
Yeah, but I don't usually drink in between. When I start the class and I keep on teaching, in between I don't. That's my problem.
That should be your habit because Arivu's right.
Yeah.
We often drink that hot water.
Okay.
That will soothe your voice. That is your asset, right? Safeguarding the asset.
Safeguarding this internal control.
Yes.
But I feel if the flow is broken, it's difficult. In practical subjects, I can drink when you're solving the problem. In theory subjects, I have to keep talking, especially this subject. This subject requires a lot of talking. Right. So I'll start with essay 700 series, aspects to be covered in, see this is my main material, but the main material is not looking like main material in the revision classes. This is all chit-chopped. Here, we have done with this, we have done with this, we have done with this also. Actually, point number 9 comes in point number 8 only. Here, so now we have to do essay 700 series. Now in this we'll be moving fast, we'll not be moving slow, we'll not be doing like a regular class, right? We'll be moving fast and what I'll be doing is I'll be covering the important elements only. Here, I won't be able to cover the entire thing, right? Okay sir, quick, let's just understand the quick concepts of these things. Sir, we always tell that our responsibility is not to maintain financial statements. Our responsibility is to audit that. So it's whose responsibility to prepare is always the management's responsibility. So when they have that responsibility, they should also accept for internal controls. It is their responsibility. Financial statement is their responsibility. Internal control is their responsibility. Not only that, now providing us proper information is also their responsibility only. Right? Now, what is my objective of SA 700, sir? SA 700 objective is simple, to form an opinion. If you remember my cycle from first class, data information comes about opinion and comes about report. So to form an opinion is my important objective. And for this, I will obtain reasonable assurance about what? About financial statements. Whether they are free from material misstatement. This material misstatement could be due to fraud or could be due to error. Right. And when I conclude that, when I obtain reasonable assurance, I have to take 3 things into consideration. Whether sufficient appropriate evidence has been obtained, whether uncorrected misstatements are material, and I have to do some evaluations. What evaluations? 2 types of evaluations. Number 1 is qualitative aspect. Number 2 is specific evaluation. What is qualitative aspect? Which is descriptive in nature. Number 1, amounts and disclosure in the financial statements, whether they have been disclosed properly or no. SA 260 talks about communication of with the TCWG. Some of the quality aspects I'm communicating there, evaluate that. Possible bias in management judgments. For example, in case of provisions, what if they have their own bias? Now 10% provision for bad debts you have to do. You have increased. For example, classic example, sir, you create a data. I'm not saying you have a data, you create a data. Right? Fake data you create. That means credit sales will increase. And what you do, now when credit sale increases, revenue shoots up. Right? You create a data, revenue shoots up. Now what you do, next year, after the period ends, you will create provision for bad debts at 100%. Now that way, you are removing your debtors as well and slowly you will write it off. Now in that, could be bias might be there. What if they are doing it, they are creating a debtor for their benefit only, right? And they will tell, they can create fake creditors also. They can create fake creditors and tell the management, sir, we actually owe them, give me money, we'll pay it to them. Here, we'll take money from management, we'll give it to creditors from management side. But who is a creditor? We only. Or it could be our friend only. These are all fraud things, which actually previous there was a chapter called SC 240. Now, under that it was covered. Now, actually it comes under fraud only. Right? But of course, when bias is there, fraud comes into the picture. Clear? Then, sir, lack of neutrality. What do you mean by lack of neutrality? They are not unbiased, sir. How do we know? Selective correction of misstatements. Sir, we tell them all misstatements. We tell them 10 misstatements. They corrected only 3. selective correction. Then possible management bias in accounting, estimates, budgets, forecasting. Bias could be there, saying we'll put the budget, sir, once we get the amount, we will take it. Then specific evaluation, whether accounting policies are selected and applied properly, whether it is consistently applied, estimates are reasonable, information is relevant, reliable, comparable and understandable, disclosures have been given, terminology used. Terminology means whatever wordings you use in financial statements, it should be appropriately used. For example, sir, when you give discount allowed, it should come in indirect expense only. It cannot be sitting in direct expense. You can't name as per your convenience. Clear? If financial statements are prepared as per fair presentation framework, consider the following. What is it? Overall presentation, content and structure. Is it achieving fair presentation or no? Right? Now, what is general purpose financial statements? Where generally users understand. Okay? General purpose financial statement means generally users. Who is general users? Sir, traders, government, investors, right? Banks. These are all general users for us. Now, specific users means what? Specifically, now bank might tell, see, I want this type of financial statements. That is specific financial statements. General purpose is where everyone uses it. Overall, as a public, what they see, that is called general purpose financial statements. Then we have general purpose framework. What is general purpose framework is? For to prepare general purpose financial statement, whatever framework we are following, that framework is called as general purpose framework. Now, it may be a fair presentation framework, it may be a compliance framework. Now, what is fair presentation? We had discussed this when we began the marathon itself. I told you fair presentation means going beyond compliance. Compliance anyway will do it. But we are going beyond compliance. Sir, what is compliance framework? What has been told, we are doing it. We are not doing more, we are not doing less. But fair presentation means we are doing always more than what has been asked to do it from us. Clear? Then, what are the different types of opinion we will be giving? Unmodified opinion. What does unmodified means? Everything is absolutely wonderful, nothing is wrong. Then we have modified opinion. When do we give modified opinion? SA 705 talks about modified opinion. Okay, then auditors report, sir, elements, title will be there. Title is independent auditors report, addressee, members, or it could be anybody who has appointed us. Clear? Then we have paragraph called audit opinion, auditor's opinion. Here we give unmodified, or modified, or unmodified, what type of modifications. Clear? Then basis for opinion. In basis for opinion, you tell why have you given the previous opinion. So in the previous opinion, you just tell adverse, disclaimer, unmodified, etc. Right? But in the basis for the opinion, you explain why are you giving that particular opinion. The explanation, the reasoning is given in basis for opinion paragraph. Clear? Right. Then going concern. Next, sir, going concern usually will not see audit report because if going concern is, it's a basic assumption that every entity has going concern assumption. If going concern assumption is not there, if it is inappropriate, then I will put it in my report. But generally, it will be fine. Clear? Next, key audit matters. SA 701 talks about key audit matters. What are, I will cover it here only concept. What are key audit matters? Key audit matters are those matters which are communicated to TCWG. From there we pick up. From there we pick up only those important which we feel is important for users' understanding. Now, we do audit. We see 1,000 matters. Out of 1,000 matters, we will not communicate all 1,000 to TCWG. We will communicate only 100. Now, out of that 100, in this paragraph, we may put only 10 or 2 or 3. Here, many key audit matters will be there, but we will not be putting everything. Then we have responsibilities for financial statements. This is management's responsibility paragraph. You can remember it like that. Management's responsibilities paragraph. Right? What is their responsibilities? Are going concern, financial statement, ICS, information, giving access, all those things. Then we have auditor's responsibilities. This is our responsibility. We have 3 sections here. Section number 1 talks about you have to obtain reasonable assurance. Clear? You issue an opinion that includes your opinion, auditor's opinion. Clear? You should tell that reasonable assurance is a high level of assurance. We can't give absolute assurance. Misstatement can arise from fraud and error. Right? Then also you have to tell whether identifying and assessing ROMM is due to fraud or error, what audit procedures you have performed in response of those risks. Obtain evidence that is sufficient and appropriate. The risk of fraud is higher than risk of error. So about these things, you have to tell your responsibility, what you have done. Obtain understanding of ICS relevant to audit, not for everything. To evaluate the appropriateness of policies used and reasonableness of estimates. To conclude on appropriateness of GC. Who's GC? Management's use of GC. Right? Then we have third, responsibilities for third section, sir. In this case, state that the auditor communicates with TCWG the planned scope and timing and significant audit findings. Sir, this is exactly what we have done in SA 265. Do you remember? Deficiency, significant deficiency, same thing. Clear? Then, for audits of listed entities, we have taken care of independence, right? And any independence threats are there, we have taken care of that. We have put safeguards for all these independent threats. This is applicable for listed entities as well. Here, location. Location, sir. Sir, what do you mean by location? Where do we put this? Within the body of report only. This auditor's report should be in the auditor's report in only, not outside audit report, not as an annexure or something, but as a main body part. Okay. Then, other reporting responsibilities, this is where CARO comes into the picture. This, they give it in annexure usually. They give it in annexure 1. Clear? Then, signature of the auditor. Sir, who should sign? Sir, 20 partners are there. Who should sign? Responsible partner, engagement partner only. Clear? Report is signed by auditor, that is engagement partner in his personal name. Now, sir, in case of firm has appointed, any person can sign, sir. Sign in the personal name of the auditor, in the name of the audit firm. But practically it is much better than if engagement partner only signs, because he will be knowing about those things. But nothing wrong in other partners signing. But technically it is better if he signs. Under unavoidable circumstances, maybe for the firm, any auditor can sign. Here, right, sir. So in this case, you have to put firm registration number, membership registration number, UDIN, unique documentation identification number. Here, place of signature, meaning which place, wherever audit report has been signed, that place. Here, and date of audit report. This is important. No earlier than the date on which auditor has obtained sufficient appropriate audit evidence. So only after getting evidence, you should be able to put your date. Before getting evidence, you should not put any date. Right. That is your SA 705. SA 705 talks about modifications. What do you mean by modifications here? Sir, by default, which opinion we give? Unmodified. But if there is any evidence that something is wrong, then we go for modifications. Now, two things here. Sir, not only when we get evidence, when we don't get evidence also, we go for modifications. Number one, when is modification required? When is modification required? Number one, when you conclude. What do you mean by conclude? Sir, you come to a conclusion. You reach a conclusion based on evidence. That means in point number A, evidence is there. In point number A, evidence is there that the financial statements are not free from material misstatements. Meaning, in point number 1, you have evidence that things are wrong. Things are wrong and you know you have evidence about it. That time we give modification. Number 2, we are not able to obtain any evidence, sir. So that time you can give financial statements are good? No. Why? Is there evidence? No. Can you give financial statements are bad? No. Why? There is no evidence again. So until you get evidence, you can't do anything, you can't tell anything. So number 1, you have evidence. Now I ask you questions, answer. You have evidence that everything is right. Which opinion? You have evidence that everything is good. Everything is good. Unmodified opinion. You have evidence that things are bad. Modified. You have evidence that things are good. Unmodified. Evidence things are bad. Modified. No evidence only. Still modified. Still modified. That is very important. In modifications, in unmodifications, there is only one scenario where you should have evidence that things are good. In modifications, anything apart from that is modification only. You have evidence that things are bad, you don't have evidence only to tell whether it is good or bad. In both cases, modifications will come into the picture. Right. Now, there is one particular definition or word and your terminology called pervasive. What is pervasive? What is pervasive? Sir, generally people will not, students will not understand what is pervasive in nature. Let's take one simple analogy and then from there we'll build up the concept. Sir, imagine on one hand you have a bucket, in front of you have two glasses, okay, transparent glasses, and let us say I'll give you one bottle of Ujala. You know Ujala, you get that blue color bottle, and one bottle of oil I'll give you. Now, in first glass you put oil, one drop of oil. In another glass, you put 1 drop of ujala. Now you tell me, in which glass the water doesn't stay as water anymore? Ujala. Why? The color has changed now. The color has changed. But if you put 1 drop of oil in one glass, you can just take that drop and throw it. Your water will still be water only. There is no effect to the water. Yes, whereas in case of ujala, can you now extract ujala and take out? No, you cannot. Now that ujala has pervasive effect. It doesn't stay in one place. The effect doesn't stay in one place. The effect keeps on spreading and it will affect the entire financial statement in such a way that users will tell, now we will throw this water. That type of effect if you have, it is called pervasive effect. Now that is generally how to understand pervasiveness. If we come to financial statement, so any mistake which is not affecting one area, it is affecting assets, if it is affecting profit, it is affecting income, it is affecting expense, everything it is affecting, sir. In those cases, we will call it pervasive effect. So term used in context of misstatements. So any mistakes I am talking, generally I say mistakes, but in all we say misstatements. What is misstatements? Difference between what has been told to do, what you have done. Right? Now, pervasive effect are not limited to specific elements, accounts or items. Keeps on spreading. Number 2, if it is limited also, it will represent substantial proportion of the financial statements. Meaning, sir, sales are misstated. Pervasive? Yes. Why? It will affect my GP, it will affect my net profit, it will affect my so many other things. Yeah? Now, sir, inventory. Inventory reporting is wrong, misstatement. Everything is a valuation and all is correct, but in the balance sheet you have put it wrong. Pervasive? Yes. Yeah, so pervasiveness sometimes you have to see, it may not be have a spreading effect, but it is so important that substantially it is covering the financial statements. Major area of financial statements are misstated. Then, in relation to disclosure, they are fundamental to users' understanding. You are not giving them the right understanding, it will have pervasive effect. Simple, sir. Let's take one example. If I don't give you examples, if I don't give you examples and concepts, will you come to my class? No. Why? Sir, you're doing only what is there in the book. You're not telling me how exactly it works. Right? Now, don't judge me on marathon, because in marathon you can't expect me to tell one concept, 10 examples. But in regular classes, we discuss a lot of examples. We take more than 100 hours in regular class, and their in-detail discussion will be done. So in those cases, it is fundamental for users' understanding. If that understanding is not there, there is a pervasive effect. That effect will spread on. Now imagine you have less confidence in audit in group 2. Now that will affect on your costing paper, that will affect on your FMSM paper also. Ultimately a group. Now because of that group 1, because of that CA, because of that life. So it has a pervasive effect. Yeah? Now, what is the objective of auditor? If you conclude that financial statement as a whole are not free from misstatements, meaning you have evidence that there is mistake, or you are unable to obtain SAE, that time you give modifications. Now, which modification to give? Very important. This matrix will be done on your done with SS705. So, what opinion to give? Number 1, see the nature of matter giving rise to modifications and whether it is material or pervasive. Right. So, if financial statements are materially misstated, can I say here, you have evidence? Because you're telling financial statements are materially misstated, not may. So, when you say financial statements are materially misstated, that means you're telling that, yes, I have evidence that there are misstatements. In those cases, you will be giving either qualified or adverse opinion. When do you give qualified? The misstatements are material but not pervasive, you give qualified. Misstatements are material and pervasive, you end up giving adverse. Clear? The next one, you have no evidence at all. If you have no evidence, then which one to give, sir? Either qualified or disclaimer. When do we give qualified? When it is material but not pervasive. But sir, you just said I don't have evidence. No. So if I don't have evidence, how will I know it is material but not pervasive? Which is exactly why I am highlighting something. Judgment. It is my judgment. If I feel it is material but not pervasive, I will give qualified opinion. But if I feel it is material and pervasive, I will give disclaimer of opinion. In this, disclaimer of opinion is the worst type of opinion a company can or a client can ever get. Because beyond it, there is nothing. Meaning, I am telling the users, boss, I don't know about this company. You take a call. Now, imagine an auditor is saying that. How will you feel? Imagine I come and tell, hey, this subject is very difficult, leave it. How will you feel now? No, right? So if an auditor is only saying, I am not responsible for your decisions, then obviously they will have some doubts going on, right? Next, sir. Now, this we have covered in the previous topics only. Imposed limitation after the auditor has accepted the engagement. Your chapter 11, ethics, acceptance of engagement. If they have imposed limitation, what am I supposed to do? Number one, request the management to remove the limitation. Very good. If they have put the limitation, go and request them, please remove. Now, there are two options. Either they will remove, they will not remove. If they remove, you proceed with your procedures. If they do not remove, communicate with DCWG. If you keep on performing your procedures, you go and tell, but you keep performing your procedures. Now, even after putting that, if you are not able to obtain evidence, and now you take a judgment, if it is material but not pervasive, give qualified opinion. It is material and pervasive, try to withdraw. Try to withdraw. If withdrawal is not possible, give disclaimer of opinion, and obviously go and communicate with DCWG. Okay? Right, sir. Now, so one thing here, now in basis for opinion, in case of modifications, what should I specify? Because of something I'm giving modification, there is a mistake, but what type of mistake? If it is amount, put amount. If it is disclosure, explain the disclosure, narrate the disclosure. Clear? So if you can quantify it, you quantify it. If you can't quantify it, then explain it. That is what they have put in this particular paragraph. Okay? Alright, so if you are not able to obtain evidence, at least tell why are you not obtaining evidence. What is the scenario? Basically, in basis, now explain them. Explain why are you giving that particular opinion. That explanation could be due to amount, could be due to evidence, could be due to disclosure, could be due to anything. Tell that. Clear? SA 706 EOM and other matter paragraph. In simple logic, two paragraph concept I will tell you that is more important here. In emphasis of matter, when I say emphasis, emphasis means what? Stress, attention, focus. Now, if there is nothing, what to focus? When I say emphasize, emphasize on what? On those matters which is already there in the financial statements. Clear? Drawing line between EOM and OM. The difference between EOM and OM is if the matter is in financial statements disclosed already and you want people to stress on it, you want people to give more attention to it, put it in EOM paragraph, emphasis of matter paragraph. But those things which are not a part of financial statements, but if you still want to disclose it, put it in other matter paragraph. Clear? Right? For example, so do you remember going concern assumption? Going concern assumption, or best example, SA 560. In SA 560 subsequent events, we told that if facts are known after audit report date but before issuing financial statements, if management does not amend, put it in other matter paragraph. Put in other matter paragraph, and that is more important for us. And I think, remember, predecessor auditor concept we did. Initial audit engagement, predecessor auditor. Now, in that case, sir, last year, whatever the auditor has done, I want users to know where will I put other matter paragraph, because that is not a part of current year financial statements. Clear? Now, that I will put in other matter paragraph. In SA 510 initial audit engagement, sir, prior period financial statements not audited only. First time it is getting audited. What to do now? Put it in other matter paragraph. Tell that it is not audited. Clear? Right. That is the difference between EOM and OM paragraph. But sir, if any matter is key audit matter, you will not put it either in EOM, you will not put it in OM. Reason, you have a separate paragraph called key audit matters in audit report. Here, take it as a thumb rule. If it is a key audit matter, it will never be sitting in EOM or OM. Why? It has a separate place. It has a reserved place. It will go and sit there only. Clear? Now in EOM, what are the examples, sir? Uncertainty related to future outcome of litigation. Contingent liability. Put in EOM paragraph. Clear? Significant subsequent event. See, that occurs between date of financial statements and date of audit report. Clear? Put in EOM paragraph. Why this is in EOM paragraph, sir? Can you tell me the difference why this is in EOM paragraph? Subsequent event, correct, but where is it occurring? Between financial statements date and audit report date, which means AS4 will come into the picture here. Either you have to disclose or you have to adjust. Both adjustment and disclosure will come in financial statements only, which is why comes in EOM. But if the event had occurred after the date of audit report, it will not come in EOM, it will come in OM. Understood? That's a difference. Because that doesn't come under financial statements. I hope you're able to connect it. Clear? Early application of new accounting standard. So there are some accounting standard and Ind AS was notified. Not all Ind AS was applicable once for all for everyone. So they used to notify phase wise. So in that phase wise, wherever applicable, they will anyway do it. But for those who are not applicable, if they voluntarily take it from them, that time, no problem. You will put an EOM paragraph and tell that we have followed so and so early application of accounting policy. Major catastrophe, disaster, natural calamity happened, act of God happened, it is affecting my financials. And that will be under emphasis of matter paragraph. Clear? Then in other matter paragraph, what are we supposed to do, sir? Like I told in other matter paragraph, which is those matters which is not a part of financial statements, not a disclosure other than presented disclosed in the financial statements, which is not disclosed in the financial statements, put it in other matter paragraph. Again, for EOM separate name you have paragraph, don't put in one paragraph, EOM and OM together, no. EOM separately, OM separately. Sir, if it is a key audit matter, will it come in this? No, it will come as a separate paragraph called key audit matters paragraph, right? That comes to SA70. That brings us to SA701. What is key audit matter? Key audit matters are those matters which is important from my perspective. I will communicate with TCWG. Small things I will not communicate with TCWG. Bigger things, riskier things, significant things I will go and communicate with TCWG. Now out of that, I will pick up some information and put it in auditor's report, and that I will call it as key audit matters. Why do I need to communicate this? This is important for you to understand why key audit matters, sir. What is the purpose of it? 3 points are there. Can be asked for 2 to 3 marks. What is the purpose? Purpose is to enhance the communicative value. Meaning, enhance means what? Increase. Of course, my report is talking, but if I put key audit matters, users will get greater transparency. Clear? Provides additional information to intended users. They'll get to know more about the company, how I have performed my work, what difficulties I have faced. They may also assist the intended users in understanding the entity and also taking judgmental call. So basically 3 purposes is there. 1, communicative value will increase, transparency will be given. Second one, sir, they will understand my work properly. Third one, they will understand the entity properly. Here, you pick up any audit report, if there is a key audit matter, do one thing. After exams, if you want to do, no problem, that you read the entire report. But before exams, if you can get time, just read any audit report, key audit matter you read, you will get an understanding, oh, this is how it works. Now that will improve your understanding of client. Okay, right, sir. Now, this is important. Communicating key audit matter is not a substitute for what? Meaning, these you have to do irrespective of whether you put it in key audit matters or no. Like what, sir? It is not a disclosure as per FRF. Sir, if your AFRF says you have to disclose certain things, that means your standard, act, statute, anything says you have to disclose. You go and disclose in financial statements first, not in key audit matter. Clear? Now, how you have to remember this? Sir, if I disclose something in key audit matter, which is supposed to be disclosed regularly, but I did not disclose there, I disclosed it in key audit matter, wrong you're doing. But if you're supposed to disclose in the main financial statements, but you're not disclosing key audit matter, not an issue. Reason, key audit matter is auditor's judgment. Clear? Whether I should put or no, it is your call. But let us say, for example, disclosures, they said no. Now, should you disclose debtors in balance sheet? Yes, you should disclose debtors in balance sheet. Now, share capital in case of amalgamation. You have to write a note, you have to give a clear disclosure that out of the above so many shares I have given for consideration other than cash. Correct, sir. Now this disclosure you have not given in the financial statements, you are giving in key audit matters. No, wrong. Give it there. Sir, I have given in financial statements, but I forgot to give key audit matters. No problem. But you forget there and give here, problem. You give there, don't give here, no problem, because this is your area. You can choose to take information, put information, but you can't do that in the financial statements. So now imagine, in key audit matter I have told, out of the above, after the so many shares are given for consideration other than cash. It is wrong, because you are supposed to give there. Sir, there also give, here also give, okay. But priority is always in the financial statements. Second one, if you are giving modified opinion, don't put it in key audit matter. Put it in your main opinion matter only. Just because you mentioned here doesn't mean you should not mention in the report. Sir, SA 570 with respect to going concern. If it is a going concern, if you remember, going concern has a separate area in audit report. Separate paragraph called going concern is there you communicate. Clear? And then separate opinion on individual matters. So if you have a separate opinion on individual matters, you express in report directly, not in key audit matters. Clear? 4 marks, important concept. Okay. Then SA 710, 700 done, 701 done, 705, 706 done. Okay. Now 710, comparative information. 2 things. One we have corresponding figures, one we have comparative financial statements. Sir, one concept in SA 710 and you're done with it. What is the difference between corresponding figures and comparative financial statements? In corresponding figures, sir, in the current year financials, you add last year amount for comparison purpose, that's it. And your opinion is on current period financial statements. In corresponding figures, the essential audit reporting difference, this is the crux of SA 710. For corresponding figures, your opinion is on a financial statement refers to current period only. Sir, what do you mean by that? This year, imagine like this. This is previous year, this is current year. I will say salary. Previous year 1 CR, current year 1.5 CR. Right? Now, I have put for comparison purpose. My opinion is for current year only. Let us say current year is 23-24, previous year is 22-23. My opinion is only on 23-24. Then why did you put this, sir? This I put for comparison purpose. Clear? And sometimes statute will ask. Now, for example, in tax audit, you have to put comparison. Last year, what was the amount? This year, what is the amount? Clear? So, my opinion is only on current period and not on previous. Which cases is in case of corresponding figures. In case of corresponding figures, my opinion is on current period and not on previous period. Sir, okay, sir. Now, then, sir, so last year there was some expense. This year there is no expense. For example, let us say puja expenses is there. Okay. Last year there was, let us say 10,000. This year I stopped believing in God. Okay, and I don't do puja. Now this year no expense only. Yes. Now in that case, should I put previous year expense and current year expense? Now tell me, which should be my importance? Which should be my looking first point? Where should I see first? Previous year or current year? I have to see first current year. The relevance is current year for me. Clear? The relevance is not previous year. The relevance is current year. In the current year, sir, salary, these things are okay. Put last year's amount here. Put last year's amount here. So last year one expense is there. This year it is there. No, sir. Then leave it. Only relevance is from current year perspective. The perspective should be current year. So if I will see current year amount and I will tell last year's salary, you tell me, okay, compared. Last year traveling expense, you tell me, compared. But if you come and tell me, sir, last year one expense, this year is not there. I need not put, but if you still want to put it, put it. Clear? Perspective should be from current year. Okay? Next. That is the corresponding figures. So in case of comparative financial statements, your opinion will be on all the financial statements included. So let us say I am auditing current year 22, 23, 24, previous year 22, 23, I am only auditing. I have to give report. In report, how many ever financial years you are mentioning, for all those financial years, you are supposed to give separate reports. Clear? That is your comparative financial statements. Clear? The auditor's opinion to refer to each period. Clear? So each period means it could be quarterly, it could be annually, whichever year you are referring to. Okay? Right, sir. Sir, now my question to you, what if, now this year we are doing audit. What if last year audit was not done? Should I put last year's amount now? Let's go to corresponding figures. In corresponding figures, last year audit was not done. So should I put that amount only? What should I do now? Should I audit that year also now? No, then I am auditing this year. Now in this year, let us say like this. Previous year, current year, okay? Salary, 1 CR, 1.5 CR. Traveling expense, 2 CR, 2.5 CR. Now my question to you, this year I am auditing, okay? Previous year, it is unaudited. Should I put these amounts? But if I don't put that amount, corresponding figures requirement is not matching. What if the law says I want previous year amount? Now what to do, sir? In that case, you put previous year amount. You put previous year amount in the current year financials, and in your current year report, in other matter paragraph, go and tell last year's figures are unaudited. Give them the disclosure. Because you have to put, because law is asking you, framework is asking you, you put it. But in other matter paragraph, tell them it is unaudited. Why are you putting in other matter paragraph and not in emphasis? Because it is not a part of financial statements. Clear? Whether last year financials were audited or no is not a part of current year financials. So in other matter paragraph it will go and sit. Clear? Now, if you see here, when corresponding figures are presented, auditor's opinion shall not refer to corresponding figures, meaning current year opinion only I am bothering about, last year opinion I am not bothering. But there are three exceptions, very, very important, three exceptions. Sir, previously it was audited. Previously it was audited, but auditor gave qualified opinion, disclaimer or adverse, meaning he gave modified opinion. Last year, sir, current year is 23-24, last year is 22-23. In last year, 22-23, auditor had given modified opinion. Okay, in that case, what should I do, sir? Now, if you have given modification, because of some matter you would have given modification. Right? Now, I have to see whether that modification, the matter which gave rise to modification, is it resolved? If it is resolved, then give unmodified opinion in the current period. So last year there was modification, there was some matter. I will go and check if it is resolved. Everything is resolved. This year unmodified opinion. If it is not resolved, you also give modified opinion only. Why? Because if it has affected last year, it will affect the current year as well. Give modification. Let us say, for example, last year there was cash transactions. Okay, there was a lot of cash transactions, and auditor went and reported to the management that you had spent more than what is required by income tax. Now management said, okay, sir. Now they did not correct it. So auditor went on to give modified opinion last year. He went and told, let's say, adverse opinion he gave, saying because of cash transaction I am not able to give proper opinion on this. They are not following AFRF. Okay, sir. Now, modified opinion is there. I read it. I went to the management and I asked, sir, last year this modification was given because of cash transactions. Have you rectified it? Like in the current year, what are you doing? Then now management, if they say, sir, yeah, last year there was a problem, then we changed the management. This year, we are not dealing in cash transaction at all, sir. Good for me. Yes, matter which gave rise to modifications, I went to management and I asked them. They said, yes, sir, we have rectified it. That time, this year, I am giving unmodified opinion. Clear? But if they say, no sir, this year also we are following cash only. Okay, last year he gave modifications because of that only. This year also that problem is there. Give modified opinion. Clear? Next. If the auditor obtains evidence that a material misstatement exists and he had given unmodified opinion, very good sir. This year I got to know there was a misstatement, but this misstatement is related to last year. And when I saw the report, last year, despite having misstatement, the auditor had given unmodified opinion, which is wrong. So in this year, what am I supposed to do? I will modify, but before I modify, I will go and check whether misstatements have been corrected or no. If misstatements have been corrected, it has been dealt with properly, then in this year I will not give modified, I will give unmodified only. But if it is not resolved, this year also I will give modified. See, verify whether misstatement has been dealt with. If not, express qualified or adverse. Clear? Why? Sir, in this case evidence is there. In this case evidence is there. In this case evidence is there. Clear? Sir, last year financial statements not at all audited. What to do? What to do, sir? Like I said, in other matter paragraph, you mentioned it is unaudited and you can't give any opinion on the last year financial statements. Clear? Right. Then comes to comparative financial statements. Sir, same thing. Comparative financial statements, number one. when reporting on prior period in connection with the current period audit. Sir, if the auditor's opinion on such a prior period financial statements differs from opinion the auditor previously expressed, meaning last year I audited, this year also I audited. Now, last year I only gave unmodified opinion. This year, about last year, I am giving modified opinion. I am only changing my opinion. In that case, sir, disclose the substantive reasons for different opinion. In what paragraph? Other matter paragraph. Clear? Right? Okay. Now, prior period financial statements audited by predecessor auditor, meaning someone else had audited in the last year. What am I supposed to do, sir, there? In that case, first of all, see who audited someone else. Okay, check for is there any material misstatements existing. Clear? Type of opinion, whatever he has expressed, and if the opinion was modified, what are the reasons for it? And the date of that report, unless predecessor audit report on the prior period financial statements is revised with the financial statements. Three things. Check this. Financial statements were audited by previous auditor. In other matter paragraph, you have to tell these. Because auditor got changed. So his opinion is different, my opinion is different. So in the current period audit report, in other matter paragraph, I will tell these three things. That it was audited by someone else, and what was his opinion, and what is his date of report. These three things I will mention in what paragraph? Other matter paragraph. Okay. Sir, what if it was not audited at all? Still, in other matter paragraph, go and tell it is not audited. Clear? But just because it is not audited, you can't assume that my responsibilities have been relieved. You still have the responsibility of getting evidence about opening balance. You still have to do your SA 510 concept, initial audit engagement. Clear? Right. So with this audit reporting chapter comes to an end. Clear? So basically we are done with all the standards, no? We are done with all the standards, I think. Audit evidence is done, risk assessment is done, completion review done, reporting done. All standards are done. And even ethics are done. So all standards are done. Yes. Right. Now, chapter number 9, one part, let me cover cooperative societies. Now, sir, in cooperative society audit, in your chapter number 9, audit of different entities are there. Now, let me tell you, it's a big chapter. I know students see it as a, sir, such a big chapter, how do we study? Sir, important technique to understand in this chapter, I divide this chapter into 3 parts. First part is your cooperative society part. Second part is your government audit part. Third part is your other entities part. This is how I divide this chapter into parts. Clear? 9A, 9B, 9C. 9A talks about cooperative society, 9B talks about government audit, 9C talks about other entities. Because in case of government audit and cooperative society, the framework is different. Clear? Whereas in case of other entities, generally the framework is same. Clear? So if I have to put it in easier way for you to study, sir, chapter number 9, when I say divide into 3, first one is cooperative society, second one is government audit, 3 is other entities. Now, I can't be able to cover everything in marathon, right? So I'll be doing cooperative society now, right? Now in other entities, I'll tell you what is the technique to study. Now in other entities, you just have to remember 5 heads. Clear? You just have to remember 5 heads, right? So whenever you are studying, revising, thinking of how to write own answer, basically this framework you should have. Number 1, first is your preliminary. Preliminary means, sir, in this case, what is the entity type? Is it partnership? Is it company? If partnership deed is there, if company MOE, AOE is there, if trusted deed is there, what are the applicable FRF for that? What is the hierarchy of the management? Right? Getting to know the competence of the management. This comes in a preliminary. Clear? Getting to know the client. KYC. Know your client. Clear? Then second comes your income. So for every entity there will be income. Even for NPO, there will be income, donations will be there, subscriptions will be there, right? So under income, for that entity, just think about income. Clear? Then the next heading will be expense. Corresponding income will have corresponding expense. Think about that. Then you have assets. So every entity will have assets. Now write sensible assets. Like for example, for hospitals, don't write, sir, projector. A projector might be there as a meeting room. In a meeting room, in conference, a projector might be there. But don't put theater screen on a hospital entity. Yeah? So think what assets every entity can have. And then you have liabilities. Liabilities usually for most of the entities, common points would be loans. Loan will be there, short-term loan will be there, long-term loan will be there. If it is a company, debentures could be there, right? So try to understand these things and then jot down points. If you see in every heading, even if you can write three points, three points, preliminary 3, income 3, expense 3, asset 3, liability 3. Done. Done. 1, 2, 3, 4, 5. 5 headings, three points, 15 points done. Minimum to minimum. Logically, if you think, rather than studying, such a huge sheet is that you'll keep on studying, keep on studying, keep on studying. Yeah? But if you feel, sir, I am good with that approach, please carry on with that approach. Yeah? Definitely carry on with that approach. This approach is for those who find it difficult to crack. Sir, I'm wasting more time on this. I am not able to remember it. For them, structure-wise, you can remember it like this. These are the points that are the general points. Yeah? You don't need more explanation in that. Right? Okay. Now, let's talk about cooperative society audit. In cooperative society, we have two things. One is single state cooperative society, one is multi-state cooperative society. Clear? Now, let's talk about cooperative society. Number one. Sir, audit under section 17 we have to do. Clear? Who should do the audit? Registrar. We have registrar of cooperative society here, we call ROCS. Clear? Registrar of cooperative society, you have to go to him, right, and get your society registered. Now, who can audit, sir? He will order for audit. Who will audit? These are the qualifications of auditors. Either a chartered accountant can audit, or if you have government diploma, you can audit, or you have served as an auditor in the cooperative department before, experienced auditor already. Who appoints him? Registrar will appoint him, and who should I submit the report? Submit the report to him only. Who is paying the fees? Fees is paid by society. But who sets the fees? Registrar. Clear? Right, sir. Restriction on shareholdings. Sir, a cooperative society is on a belief that many people should come and do for the benefit of the society. So here shareholding restriction is very strict because the value is very small. Clear? So with any member, no member of a society other than a registered society, for them the limit is 20% or 1000 rupees. Clear? 150 they say, 20% and 151 and the same. So individual member other than registered society, for them the limit is 20% of the total number of shares or rupees 1000. Restriction on loan. Sir, can they give loan to anyone? They shall not make loan to any person other than a member. However, with a special sanction, they can make loan, they can give loan. Make loan means give loan to other society. Society to society, sanction required. Society to member, no sanction required. Society to outsiders, never, not possible at all, even with sanction. Clear? Restriction on borrowings. Can I accept borrowings from outside, sir? The answer is yes. Shall accept loans and deposits from persons who are not members. Sir, hypocrisy, no. We can't give loan to other than members, but we can take loan from other than members. Sir, logically, if you think cooperative society wants loan from some other bank, now what will you do? If you put restrictions, how will they grow? Not possible. But funds going out, we can control. Clear? The funds coming in, we have to be a little lenient. Yeah, because if you want any financial assistance, you should be able to take it from outside. Because, sir, are your members rich? Are your members rich enough to give you loan? No, they are only taking loan from you. So we need to have that sort of mentality as well. Then investments of fund. Whatever funds you have, where can I invest? Basically, government securities, government bank, wherever the investments are safe. Yeah, you should not be risky. Equity not allowed. Share market not allowed. Stock market, capital market not allowed. Appropriation of profits, meaning you have to transfer to reserve fund. Yes, how much? Prescribed percentage. How much ever they say, transfer to reserve fund before distributing the profits. Contribution to charitable purpose, maximum 10% of net profit, not more than that. Clear? Investment of reserve fund. Sir, whatever reserve I have created, where can I invest? Sir, bring it back to your society business only as a working capital. Clear? Get it as a working capital, or invest in government securities, or use it for your promotion of your objects. Contribution to education fund. Should I give? Yes. Contribution to education fund is a charge on profits and not an appropriation. Highlight this. This can be asked. This can be asked. Whenever in MCQ this can be asked. Clear? Contribution to education fund is a charge on profits. What do you mean by charge? You can claim this as an expense in P&L. Clear? Not an appropriation. right? Okay, sir. Sir, single state cooperative society is monitored by that particular state law. Whereas multi-state, we have a central law. Single state, state law. So whatever your state law says, you follow that. Now one state law may say, donation you should not give. One state law will tell, donation you should give. According to your state law applicable, you do your job. Clear? Special features, overdue debts, we have to divide the entire debts into two. One, 6 months to 5 years and more than 5 years. Clear? Certification of bad debts is important. Clear? You cannot write off bad debts unless it is authorized by auditor or managing committee. Verification of assets and liabilities. Verify whether ownership is there, existence is there, valuation is there. How do you value fixed assets? Cost less depreciation. How do you value current assets? Cost or market value, whichever is lower. How do you value liabilities? At known price. That is known value. We can't revalue liabilities and all. Okay? Right, so this is nothing but the same that we studied. Special report, important. Sir, in what case I will be giving special report, sir? Remember, mnemonic is PMFD. Our Prime Minister made FD. Clear? And that is a special report now. Now, what is special report? In cooperative society, registrar, you have to submit to the registrar a special report in 4 cases. Personal profiteering. Sir, members are looking at their benefits and not society benefit. Special report. Mismanagement. Mismanagement is what? You are not following the principles. You are misusing your principles. Then special report. Fraud detection, in that case special report. In case of urban cooperative banks, disproportionate advances to vested interest group. In simple language, sir, for my people, I have given disproportionate loan. Their eligibility is 1 lakh, but I am giving them 10 lakhs. Disproportionate loan. Reckless advancing is what we call. Reckless means what? Careless. Clear? Right. Okay, sir. Distribution of profit schedule. Now we will come to multi-state cooperative society. This is very similar to company. Provisions are very similar to Companies Act. Provisions are very similar to Companies Act. Okay. So let's directly dive into qualifications. CA only should do it. Whereas in single state you have CA, government diploma, experienced person. Here it's only CA. Who appoints? Sir, members only. Members only appoints in their AGM. That is your subsequent. First auditor is always appointed by board, just like our company. Clear? Powers and duty, same like company, right to access at all times, books of accounts, clear? Accounts, vouchers, everything, right? Inquiry, same like again company's account, matters of inquiry 143, subsection 1. Loans and advances, if it is properly secured or no. Transactions are not prejudicial. Personal expenses are not charged to revenue. If the shares are allotted for cash, cash has actually been received. If it is not received, whatever position you are disclosed, it should not mislead people. Clear? Right. Special audit, sir. What is a special audit? Sir, if the registrar is not happy with the main audit, he is not happy with the main audit, or he wants more information from the main audit, that time he will order for special audit. Right? When, sir, if central government is of the opinion that affairs are not being managed as per the principles or managed which is likely to cause serious injury to the trade, financial position is going towards insolvency. In these 3 cases, they can order special audit. Who will do special audit, sir? The same auditor, or they can appoint new one? They can appoint me only, they can appoint any new auditor, not an issue. Next comes inquiry and inspection. We will be doing it simultaneously because we have to understand the difference here. What is inquiry? Inquiry is asking questions. Inspection is checking of the documents. But provisions, everything is same. Clear? Here also same thing. Federal cooperative to which it is affiliated. Federal cooperative means a board where these multi-state cooperative societies are affiliated. It's like how many colleges are affiliated to university. University is called as federal here. Clear? How you have Bangalore University, Annamala University, Mangalore University, where all the colleges are affiliated. Here federal means I'm talking about the university, where every cooperative society is affiliated. Number 2, criteria of the cooperative society. Number 3, 1/3 board members. Don't get confused because they put member. 1/3 board member. Then at least 1/5 total members of MSCOS. You can go for inquiry. You can go and request to central registrar. He will hold an inquiry. But 15 days notice is given to society because you have to prepare for the information. Clear? Right, sir. Inspection also exactly same. Inspection also exactly the same. But what is the difference? In inquiry, I can't ask for any documents. Clear? I can't ask for any documents. I can only ask questions. Whereas in case of inspection, I have a right to check documentation also. Clear? In fact, I can take a copy of it if I want. Right? Right, sir. With that, your cooperative society revision is done. Clear? Alright. Now let's talk about government audit. Let's talk about government audit. Right. So what do you mean by government audit, sir? Government means central government, state government, government organization, government companies, everything that comes under control of government, we call it government audit. Departments also. Here, for example, ministry, some department is there. Can we do audit of that? Yes. Who does the audit of government, sir? CAG, Comptroller and Auditor General, who is nothing but he's IAS, clear? Who comes from UPSC background only, right? So this fellow, this person will appoint, either he will only do, but sir, try to understand, under him we have so many things. I'll show you the structure here. Right. If you see, this is CAG's website. Clear? Now, if we go here, now let us say, let's go to organization chart. Right. Now, so this is our CAG. This is a main CAG. This is a main CAG, Girish Chandra Murmu. Right. Now, under him, see, we have secretary to CAG, Shri Ashutosh Sharma, and then we have look at how many people they have under them. These many people you have, right? So one person cannot do everything. That's why what he'll do, he will appoint us. He will appoint us. What we will do, we will be going, doing our work, coming back and reporting to CAG. So for us, CAG is the boss. Whatever he says, we will be doing and submitting the report to them. Clear? So who is, so CAG is appointed by whom? President. Can we remove him? We can't remove him unless on two grounds, proven misbehavior or incapacity. He should be removed by majority of at least 2/3 of members present and voting in both the houses. Clear? He can resign anytime he wants. What is his remuneration? Equal to Supreme Court judge. Okay? Right, sir. Now come directly. Powers and all you read. It's self-explanatory. Supplementary audit. What is supplementary audit? Sir, additional audit. Okay? Apart from the main audit, he wants to know more. In that case, he can order for supplementary audit. What will he comment on? Sir, CAG may order conduct a supplementary audit of financial statements of any company. Supplementary audit shall be conducted as may authorized by CAG. Whatever CAG says, we will be doing it. Whatever information he wants, we have to give him. Clear? Right, sir. This is for government company, applicable for company. Clear? Applicable for company. Now, various items under government audit. Expenditure audit, revenue audit, inventory audit. Only three things. Expenditure, revenue, inventory. Clear? So in expenditure we have 5. What is that? Audit of rules and orders. Meaning what? Sir, here in government audit, don't always think about money. It's about policy here. So audit of rules and orders means your superior authority would have given you some rules, would have given you some orders. Have you followed that? If not, we'll be reporting here. Clear? How to use the funds, some order, whatever responsibility you have given, have you followed that? Clear? Objective is to ensure the expenditure is in accordance with laws and regulations. Whatever amount you have spent, have you spent based on the orders given to you, or have you spent recklessly? Clear? Next, audit of sanctions, meaning grants given to you, sanction given to you. So whether that sanction, whatever is given, is it appropriate? Clear? Whatever expenditure you are doing, since we are talking about expenditure audit, we are talking about spending alone. Clear? So spending as per the rules have you done? Second, spending as per the sanction, approval is given to you, only then you can spend. Clear? So properly covered by a sanction, it could be general or special, but it should be authorized to do it. Clear? But for this, you should know what is sanctioning power. No, you should know what is sanctioning power. So there are a lot of things which you are supposed to know. Only then you can go and do the audit. Then we have something called as audit against provision of funds. So whatever provision, appropriation you have made, you should be able to spend only within that framework. Then we have propriety audit. So concept of propriety audit, I'll tell you. Propriety audit means if I give you 10,000, if I give you 10,000 as a gift, where will you spend it? You might spend it lavishly. But if you are earning 10,000, will you spend like that? No. That sense is called propriety. They're telling government, you use money as if this is your money. If it was your money, would you spend like this? even though it is within the rules and regulations. Is it needed? For example, let us say you want to construct one building. Okay, you want to construct one building, a kind of monument. Now, with sanctions, with everything what you are doing, but is it needed? Is it needed? Like your father say, no, is it needed now? It can be done later also, no, is it needed now? Now, just because to spend, you should not spend. Clear? That's what they're telling. Just because you're supposed to spend, don't spend. Why? If it was your money, would you spend like that? No. That is the concept of propriety audit. Wasteful expenditure should not be done, even though it is within the laws. Even though sanction is given, but is it required? Is it beneficial? Is it needed at the current point of time? If it is wasteful, improper, then don't put it. That is what we see in proprietary audit. Clear? See, sanction, a transaction will satisfy all the requirements, but may be highly wasteful. If it is not needed, why are you even performing that? Leave it. No, not necessary now. Clear? Right. So take into examination public financial morality by looking into the wisdom, faithfulness, and economy of transactions. Clear? Then we have performance audit. What is performance audit? Sir, whatever programs, now government will come with schemes, programs, and all these things. How is it performing? Is it giving you 3 E's? Efficiency, economy, effectiveness. Is it performing properly? Go and evaluate. Otherwise, you don't have to spend money on that. Clear? Now they'll tell, let us say I will come up with a scheme. For every CA students in the country or in my state, I am going to give them free education. Now for that I have to spend from government's pocket. No. So when you're spending, now government auditor what he will do? He will check whether this particular project is giving me fruit. Is it giving me benefits? Only then it will be useful. He will go and report it to CAG, saying yes, it is going fine. If it is not going fine, CAG will give a report to central government. Now you take a call. I have given report. You take a call. Yeah? Right. Then we have audit of stores and stock inventory. Sir, inventory you should not. In case of government audit, what happens is government they buy inventory now for below poverty line or for some freebies if I have to give, I have to purchase. So don't purchase low quality. Don't have uneconomical purchase. Right? Think if you are using it, would you be using it? That way, if you think, then you will be doing very good to the country. But all these sometimes is just words. Clear? Ascertain whether the internal controls over purchase, receipt, and issue of stores are well designed. Clear? Bring to the notice any deficiency. Purchase of stores is conducted in the same manner as the order of expenditure. Clear? Now, certificates. Sir, Nayak movie, 1 day CM, Mudalvan movie, Nayak movie, 1 day CM. He will go and check, what is the quality you are giving here. Yes, that magnet and all they will put. Yes, why? Because government's inventory I want, and later on I will sell. I will create fake lack of supply, then demand will increase, then I will sell it and I will make money. Those things should not happen. Clear? So excess stock or idle stock should be mentioned in the report, otherwise it will be misused. Then we have audit of receipts. Sir, what is receipt for government? Tax. Yes, revenue, tax, property tax, income tax, GST, everything comes under revenue. This is what we call as revenue department. Clear? So what this particular person will do, this department will go and check. See, internal checks are imposed for prompt detection and investigation of irregularities. Internal procedures ensure proper accounting of demand collection, effective check on assessment, collection, and proper allocation of revenue. Regulations and procedures are actually being carried out. Actually being carried out, not on just paper. Only on paper you will tell, I gave notice, where you have given, I want to check. Clear? So Department of Revenue will handle this. Department of Expenditure will handle those 5 things. Clear? All revenues have been correctly assessed, realized, credited to government account. There is no leakage of revenue. So these things, revenue department, if you have seen in the news, they'll tell revenue department raided. Yes, they came to seize the properties. Why? Because they are doing this. This is based on the report. Clear? CAG will perform and give a report. Revenue department will take action. That is central only. Central agency will take action. Clear? Right. With this, government audit also is done. Clear? Now, see, I hope you understand in marathon we won't be able to cover each and everything. Clear? So, we tried to cover as much as possible. Clear? The focus was mainly on standards. Right? Because if you see chapters like other entities, other than cooperative society and government audit, it is most of the students can actually, if you have thinking capability and if you have little bit of knowledge of accounts and other things, you will be able to do it easily. Clear? Same thing with chapter number 5, audit of items of financial statements. That chapter I call it as a DJ chapter. It is a masher. There is accounts in that, there is law in that, sometimes there is costing in that, there is FM in that, and then comes audit. Clear? So it's a mixture of all these things. So, and what that chapter has done is that chapter has given the Schedule 3 format and spoken about each and everything. There are so many things which are not there, but practically it is there. Clear? Now they have not spoken about abnormal loss. They have not spoken about abnormal gain. Clear? So there are many things which are not covered also. Meaning what? Institute is trying to tell you, see, through this chapter, try to understand for share capital what are the points that are there. So they have put everything. It's a 100-page chapter. They have put everything. What you do for a share capital, what are the things that could be applicable? Clear? For CSR, what are the things that could be applicable? Clear? Now for that, you have to read at least once. At least once you should have read. Then you will get a fair idea as to, okay, this is what they are telling. Out of that, if you can write 10 to 12 points, good enough, great. There are also like different entities, we have assertions, existence, valuation, cutoff, classification, right? Think about that heading, and under each heading you write 3, 3, 4, 4 points, matter is solved. Right. Now the next one. So how should I study the every entity or every item at one single shot? I say you do your other chapters. So for you in syllabus you have 9 chapters, not 11. Think it as you have 9 chapters, excluding chapter number 5 and chapter number 9. That chapter, what you have to do is every day one entity you take, one items of financial statement you take with your regular studies. You keep doing chapter 1, chapter 2, keep on doing as usual. But every day, take one entity, take one items of financial statements. That way, you will be able to complete easily and not with too much of stress. Because one day, if you sit and do items of financial statements, nothing will enter your head. Nothing will enter your head. So this way, you can maneuver the syllabus. Clear? Right? I hope I have delivered to the best of my current ability at a given point of time, considering the schedule and everything. Clear? I wanted to cover the standards especially, and that I have covered as much as possible. Wherever concept is required, I have delivered it. Wherever difference is there, I have told it. Clear? So from here onwards, I want you to take it forward. Right? Now again, I'm telling for YouTube students, if you are watching this marathon for the first time, don't watch it as a first timer. Clear? Watch if you have already done one round of studies. Clear? Don't start with marathon. Clear? Sir, isn't it implied? It is implied, but sometimes it has to be told. Clear? Don't just go on the basis of marathon. Come on the basis of studies. Clear? Come to marathon on the basis of studies. One round of study should be done, one revision should be done. Only then marathon will be useful. Clear? Sir, I will see marathon and then I will study. That time you will say, sir, you are so fast. Marathon should be fast. Clear? We have to cover things in 2 days or in given number of hours, set number of hours. It is not possible for me to cover each and everything in detail. Clear? So what you do if you want. Now for example, if you are watching after this, you are not there in live session, you are watching later on, you finish off that chapter, see where that chapter comes and accordingly study it. Clear? Yes? Now, so this is only I could touch upon, brushing upon, right? For in detail, in regular class, we take almost 110 hours. And where we discuss everything in detail with multiple examples, discussions, questions. Now that we cannot do in marathon, but as much as possible, doubts we have tried to solve here. So if you want regular classes, you have to go to the website and check it out. Here we are just doing a revision purpose for your examination purpose. Clear? So I hope we have done well, right? And all the best to you. Try to score more than 60. Clear? So 60 is a new 40 and 40 is a not new 60. Clear? So people think about 40, think about 60 anymore. Like have a confidence of getting 50 to 60. From there, you will be just moving forward. Clear? Study well and do not have an implication or do not have an impression that audit is a theory subject, because without theory you won't be able to do audit. Those who have done audit, they'll vouch for it. If you don't know the theory part, you will not be able to go and do audit. Just like direct tax. Without knowing law, you won't be able to solve problems. Clear? So this I consider it as a theory-based practical subject. Clear? So thank you so much. All the very best, guys.